The GIFT Nifty is implying a positive start for our own markets. Crude prices continue to rebound, with Brent now hitting $74 a barrel following the Fed's rate cut and rising tensions in West Asia. Gold prices are also ticking higher following the rate cut from the Fed. Israeli warplanes carry out dozens of strikes across southern Lebanon, hours after Hezbollah leader Nasrallah threatens tough retribution for attacks which targeted the group via exploding pagers and walkie-talkies. The RBI has lifted curbs on the gold loan business of IIFL Finance effective yesterday. The company can now resume sanctioning gold loans in compliance with rules and regulations. It's the final trading day of the week, and we are here on Power Breakfast on CNBC TV18 in the Mumbai News Centre. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have started off, and it is a very positive start across the Asian screen after that solid handover that we received from Wall Street. The Japanese indices were leading the gains yesterday. They're leading the gains today as well. The Hang Seng is up 0.7%. The Taiwanese index is up over 1% in today's trading session. The Hang Seng too, as we mentioned, is trading with gains. The Japanese indices, the Nikkei, is up 2% as we speak. Gains coming in from South Korea as well. The Kospi is trading with gains of close to 1%. And the Shanghai Composite is the one, the underperformer, trading slightly below the flat line this morning. But overall, the Asian screen looks very positive. Pull up the GIFT Nifty as well, and that will give you an idea of how the Indian markets are likely to start off. 51 points in the green is what the implied open is suggesting as of now. So a positive start likely for the Indian markets as well, considering the strong handover from Wall Street and positive cues from Asia. Now over to the US markets then, where Wall Street ended higher after that 50 bips cut from the Fed. The S&P 500 gained over 1.5%, closed above the 5,700 mark, and the Dow Jones also rose 500 points, posting its first ever close above the mark of 42,000. The tech-heavy Nasdaq also rose 2.5%. CNBC's Seema Modi gets us a wrap of all the action on Wall Street.
Markets rallied across the major indexes after yesterday's half-point interest rate cut by the Federal Reserve, with the Dow and S&P hitting all-time highs, and the Nasdaq surging almost 3%. The Dow up 522, the S&P 500 closed up 95 points, and the tech-heavy Nasdaq up 441. The National Association of Realtors reported today that sales of previously owned homes last month hit the slowest annual pace in nearly a year, as a decline in mortgage rates failed to overcome record-high prices in the market. That mortgage rate decline continuing last week. According to Freddie Mac, the rate on a 30-year fixed mortgage was 6.09% last week. And despite the interest rate cut, mortgage rates were actually up fractionally today, as the two are not directly linked. In other news, Amazon announcing a new generative AI tool. It's a virtual assistant called Amelia, and the e-commerce giant says it can offer to help sellers on the platform by investigating account issues, and includes plans for the future where Amelia is able to file claims and other documents to cut down on seller paperwork. Amazon says the software that powers Amelia isn't trained on seller-specific data, and that is a story Wall Street will be watching. That's what's happening here in the U.S. Back over to you in Mumbai.
Let's also now listen into some important reactions coming in on the Fed's interest rate cut decision and what comes next for the central bank.
While they say the risks are balanced, I think you're correct. And 50 strikes me as acting as though they put a little bit more weight on the unemployment side of things. I do not think yet that they're in panic mode, so I don't think this was an emergency 50. But he said something else that was really important. It was a very strong start, and he very much was clear that, quote, he didn't want to fall behind. So I believe this one is a little bit more in the camp of, okay, we say the risks are balanced, but it's really the labor market that we're looking at. So far, so good, but let's jump ahead of this.
If I'm looking at the futures market, and by the way, I think right now the Fed dot plot is in almost complete sync once you make that risk premium correction, with 25 basis points, not 50. I mean, clearly, if the data gets really bad over the next few months, we will get some 50s. But right now, they will be happy 25 at the November, 25 at December, and then in each of the first 4 meetings of next year, you do another 25 at each of those. That's all you need to get 200 basis points. That brings you down to 3.3%.
We saw yesterday the Fed pivoting pretty obviously towards a more future-oriented approach to monetary policy. Now, as Chair Powell said yesterday, they're trying to look forward and to avoid a slowing labor market turning into a deteriorating labor market. So that's number one. Number two, a lot of people, myself included, rather thought that the first cut in July, in my case in June, would have been appropriate. And so I think in some respects, the 50 basis points was an acknowledgement of that and a bit of catching up. Obviously, Chair Powell wasn't going to say we're behind the curve, and they're not really behind the curve, but I think it was just a way of trying to get themselves on this path to a preemptive strategy.
That's the global market action that we have. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news today. First up, Vamakshi joins in to get the market cues we need to watch out for. Vamakshi, good morning. Another day, another record, but we could not sustain.
But absolutely, Hormaz, you rightly put it. In fact, the markets opened on a positive note in line with global cues, but the Nifty and Sensex hit record highs intraday, but subsequently faced some selling pressure. And this trend has been consistent over the last couple of days, wherein Nifty makes a record high and then reverses course. In fact, indices, despite that, ended marginally in the green. The Nifty Bank too witnessed a similar trend. Nifty Bank retracted after almost touching its record highs. Nifty Bank ended comfortably above the 53,000 mark. HDFC Bank and Kotak Bank contributed the most to its gain. The broader indices, however, continued to remain in pain. The Nifty midcap as well as small cap indices were down for the third straight session, with the losses yesterday amplified on the Nifty small cap index. Vodafone Idea and Indus Tower saw a very sharp fall in the trading session yesterday after the SC rejected plea on the AGR dues. Vodafone Idea posted the biggest single day fall since Jan 2022, while Indus Towers posted the biggest single day fall since June 4th. The US markets, on the other hand, saw very strong momentum. All three benchmark indices ended the session on a very strong note. S&P 500 as well as Dow Jones hit record highs yesterday, and the Nasdaq composite too advanced nearly 2.5%. So that is how the markets performed yesterday. But as far as the cues today are concerned, Bank of Japan's interest rate decision will be an important one to watch out for. The Asian markets are mostly trading higher, and the GIFT Nifty too is suggesting a positive start to the trading session today.
Positive start indeed. We'll see if those gains sustain though. Vamakshi, thanks a lot for that. Over to Winnie now, who would list out the stocks you need to watch out for this morning. Winnie, good morning. What's on your list?
Good morning. I'm going to start with Phoenix Mills because its arm, Casper Realty, has emerged as the highest bidder, and this is for centric property plots which are there in Mohali in Punjab. Combined value of that is approximately 891 crores, so important to watch out for that. Reliance Infra, the board has approved fundraising plans of around 3,000 crores via QIP. This is going to be the issuance of 12.56 crore shares or warrants that we should be watching out for at a price of 240 rupees per share, amounting to 3,014 crores. Moving on, NTPC, the board has approved investment plans, couple of investment plans in its plans. One is around an 11,000 crore investment and the other is around a 9,700 crore investment. So surely that capex plan is something we are watching out for. IIFL Finance, RBI has lifted restrictions that were imposed on the gold loan business of the company. So yes, after a long time, we'll be seeing these restrictions are going to be lifted. So positive for IIFL Finance. EMS Limited, they've received a tender from Kolkata Municipal Corporation for an order value of around 681 crores. Keep an eye out on that. And two pharma names, we have Zydus as well as Lupin, that's going to be in focus after the US Court of Appeals for the Federal Circuit has vacated US District Court's judgment that favored the generic companies. So maybe some bit of a pressure on Zydus as well as Lupin because they launched this drug which was patented at risk recently. So keeping an eye on that. Lastly, board meetings. Godfrey Phillips board is going to be meeting for bonus issue. So keep an eye on that. And Mankind Pharma board meeting for fundraising plans. So important to watch out for all these stocks.
Winnie, thanks a lot for those updates. And lastly, Mangalam is joining in with cues from the FNO space. Mangalam, good morning. It's been a range-bound trade for the Nifty, but the Nifty Bank has been the one to watch.
The Nifty Bank has done extremely well, and overnight cues coming in from Wall Street, powering the GIFT Nifty ahead as well. So that's the one that should come up for you on the screen right now. Saw a great amount of traction on all the frontline Wall Street indices, and a 50-point uptick is what the GIFT Nifty is indicating. If you look at the trade yesterday as well, the Nifty, while it gave up from highs, it did still manage to close above the 25,400 mark. And for the Nifty Bank as well, it managed to hold on to that 53,000 mark itself. What was interesting is that the mid-caps, which continued to underperform, did that yesterday as well. But towards the last hour, if you look at the intraday chart, you would see that there was some recovery from the lows, so not all was lost. And add to that, we had The India VIX, post-events saw a bit of a decline as well. So those are a couple of factors that worked out. What I like the most about trade today is that a lot of the excesses, some part of it may be taken out right now, because the FIs who are building their positions gradually on the long side have now decided to, unwind some of those positions. Yesterday we saw 924 crore worth net sell in index futures by the FIs, where they unwound about 7,000 contracts and added about 7,000 contracts on the short side as well. And as a result of which, while they're still net long to the tune of 2.23 lakh contracts, it's a slight moderation. That's a positive. The other positive is that the FII selling was lapped up by the clients. Now, clients and HNIs are basically the ones who know the near-term pulse of the market. They added about 17,000 long contracts, and this at a time when they are net short on the index as well. For the next week's expiry, it is the 25,500 mark, which will be a bit of a fulcrum, because we've seen action on both the 25,500 call and the 25,500 put. And if you look at, what the option writers are expecting for the next 1 week is a broad range of 25,350 on the Nifty at the lower level to about 25,650 at the upper level itself. The index, like you pointed out, is the Nifty Bank to watch out for. Yesterday went perilously close to its all-time high. Can it, close that loop today or not is the big question, because this week has definitely belonged to the banks. The Nifty Bank is up 2% this week at a time where the broader markets have seen a decline of 2 to 3% at the index level itself. And speaking about the broader market stocks itself, just watch out for Chambal Fertilizers, National Aluminium, which is NALCO, and SAIL. All three of them have entered FNO ban, and out of FNO ban is Balrampur Chini.
Nifty Bank, the week has definitely belonged to the banking stocks. Mangalam, thanks a lot for that update. Thanks. Well, it's time for a short break here on Power Breakfast. Up next, the RBI has lifted restrictions imposed on IIFL Finance's gold loan business. We get you more on this on the other side. Stay tuned. We'll be right back. Welcome back. Now, in some relief for IIFL Finance, the Reserve Bank of India has lifted restrictions on the company's gold loan businesses. Ritu is now joining in to tell us more on that. Ritu, good morning. Finally, some good news for IIFL Finance.
Yes, Hormaz, and it's coming after a 6-month ban. So yes, big relief for IIFL. with RBI lifting the restrictions on its gold loan business. And that means that IIFL Finance can now resume sanctioning, dispersal, assignment, securitization, or the sale of gold loans after this ban. Remember, RBI had first placed restrictions on the company's gold loan business on the 4th of March because of material supervisory concerns, and that included deviations in the certification of purity of gold, breaches in loan-to-value ratio, cash dispersal, and collection of loans in excess of the limit allowed, and so on. Now, the impact of the ban has been significant. Their gold loan AUM shrank from 26,000 crores before the RBI ban to less than half, about 12,162 crores by August. That's a 53% drop in just 5 months. Their share of gold loans in the consolidated AUM dropped from 32% before the RBI action to 21% as of the first quarter, and more than 1 million customer accounts were closed during this period as well. In addition to this, there are about 12,000 employees that IIFL had across its gold loan branches, about 2,745 gold loan branches. And the prolonged ban had also raised some concerns that there could be layoffs if this were to continue. So the lifting of these restrictions, it removes key overhang on the company and also its stock, which has lost about 14.5% since the ban was first imposed.
Ritu, thanks a lot for that. We'll keep an eye out on IIFL Finance, of course, possibly the stock of this morning. Time to get your CNBC TV18 exclusive. Earlier, we spoke to Chris Wood of Jefferies, who said that he was surprised at the 50 basis point cut taken by the Fed. But he also added that he did not expect the Reserve Bank to aggressively cut rates in India. He also discussed his top sectoral bets in the Indian markets. Listen into a slice of that conversation.
But the key point here is what the Federal Reserve believes is the neutral rate. So my guess that is probably in the 3 to 3.5% range. So even if the US achieves the soft landing, so to speak, we're probably going to be at between 3.5 by the middle of next year. But in terms of the short term, I'm surprised I'm surprised it's 50 basis points. Anybody who can read and listen is contrary to the messaging going into the meeting, so my guess at the margin is political. I mean, all Asian central banks can cut rates today, including the RBI. But my colleagues here, we believe the RBI is not going to be aggressively cutting, i.e. the RBI is going to behave in a different way from the Fed. And actually the RBI in recent months has been actually counter-cyclical because they've been doing these preemptive regulatory measures as regards the banking system. And so I would assume the RBI will cut rates once before the end of the year, but I could be wrong. I've got 19% in real estate stocks in my India portfolio. Now, if I was starting the portfolio today, I might be a bit nervous putting 19%, but given the fact I have 90% that have done well already, I'm not going to actually reduce them. But if I want to have a more cash, let's say I can't own cash, but I wanted to be more tactically cautious because I've got more short-term tactical considerations, and you want to own the stocks which are more neo-cash proxies, which I would say are like the banks. The whole infrastructure story here in India, the energy story, these seem to be at the centre of the action, at the centre of the capex cycle.
Chris Wood there in an exclusive conversation with CNBC TV18. Time for a short break. Up next, we get you cues from the commodity space. Stay tuned, back on the other side. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. It seems that there is finally some profit booking in gold.
Oh, well, yes, but not too far away from its all-time highs. 2,600 is an all-time high, and we seem to be holding around that $25.70, $25.80 ounce kind of mark. So we're just about $20 away from those all-time highs that we saw in this week itself. Well, the gains also have come back in case of crude oil prices. 74.5 is a two-week highs that we saw in case of crude prices. Also, with the geopolitical tensions and Middle East yet again erupting in an escalation, seems to be adding premium to prices. We also have seen gains come back in case of metals. You have copper now trading at a 2-month highs, steel prices trading at a 3-week highs, and there is also gain hormones that we've seen in case of sugar prices. From a low of almost 19.5, we are trading at around 22 cents a pound. Strong gains on the back of Brazil drought and fires there, and India, even as it is looking at a good crop, is not going to export. It's something that's taking the global sugar prices much on the higher side, so that one also trading at multi-week highs.
Manisha, thanks a lot for that update. Sugar prices surging to a 5-month high there. Now, the much anticipated iPhone 16 has hit the Indian market today. Now, eager customers have already lined up outside the Apple store in Mumbai for the new iPhone 16 series, which was unveiled on the 9th of September during Apple's Glow Time event. Now, the new series includes the iPhone 16 Plus, the iPhone 16 Pro, and the iPhone 16 Pro Max. Now, the launch follows a pre-order phase that began on the 13th of September, and the iPhone 16 will come in 3 storage options: 128 GB, 256 GB, and 512 GB. The prices start at just 79,900 rupees for the base model, rising to 89,900 and 1,09,900 for the higher storage variants. iPhone enthusiasts queuing outside the Apple store there. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call up next to set you up for today's trade.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, so I think it's customary to say thank God it's Friday. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Mangalam. Guys, hi, good morning.
Good morning. You know, I just thought I'll try this on TV and see whether it works or not. Guys, it's Friday.
Yes, it is.
All right. Yeah, exactly. So basically, earlier was a little confusion and then you gave a bit of a response. That's exactly what happened in the markets as well. First, yesterday, day before yesterday, there was a bit of a reaction, and now there is a response. So yesterday, there was a bit of an uptick in the global markets.
Oh, last night was better.
Sea of green. So I think finally they made up their minds that yes, it's a happy cut, as Prashant called it, right?
It is a happy cut, but you know, I think yesterday the markets here, and I was out and was not looking, but I think yesterday was not a happy situation in the market, right? Mid caps and small caps, and I think Mangalam was mentioning this yesterday. There was a fair bit of pressure in the broader market. So. We'll get to it in just a bit, but let's just sort of take you through what you need to know, beginning, of course, with what last night threw up. So US markets rebounded and rebounded in a good way. So labor market data came through, jobless claims essentially, which essentially were very low, which is good news. So labor market is strong in the US. That is the indication. So you add the strong labor market, which is the one point of contention for the US Fed. I mean, they don't care about inflation. I mean, they care about inflation, but the big sort of one, if there's one dominating driver, it's labor data. And that seemed to be pretty good. And then you throw in the 50 basis point rate cut. It's, as I said yesterday as well, kind of a very happy situation, best of whatever you want to put it. But it's strong economy and rate starting to come off. That's the backdrop. Now, S&P went up 1.7. NASDAQ was up about 2.5% as well. So that's the US for you. Now, S&P 500 also, and this is just a sort of piece of information, hit its 39th all-time high of 2024. So that's quite something. 39th all-time high of 2024. This is, I think, we've only had so many all-time highs in a year. Back in, I think, the last time was 2016. All right, dollar index, that was weakish, so about 1/3% lower, 100.69 is where we left off. And it's basically bang in the support zone, which is between 100.42 and 100.79. It's a 20 weekly moving average. It's a 2023 lows. So a break below this perhaps accelerates the downside for the dollar, which is good news for emerging market flows. Swiss franc and yen, these are essentially safe haven currencies. When there is a sort of drawdown, markets are looking nervous. They go up, they were down. Oil prices are back at about $75. So we're not looking at, it's slowly creeping back up, and it's added about $5 quickly in the last fortnight or so. And today we have the Bank of Japan, which will meet for decision, but no changes expected. We'll see what they say about what they'd like to do in the future. So guidance will be important. Nifty yesterday cooled off very significantly from the day's highest level. And it's the same level which I've put out now for the last 10 days. 25,475 to 25,530. It's the end of the ending diagonal on the Nifty. And that is acting as a strong, looks like it's acting as a strong resistance. So in this zone, actually the high yesterday was 25,610 and change. So there was a kind of a throw over, and then the market sold off very steeply. So you need to cross this on the upside. Because, I mean, index has done very well. The bar goes up a little bit in terms of what it needs to do before we can sort of chart a course even higher. The Nifty must, on the downside, hold 25,120. It must not break it. It's, easy 300 points away from where we left off. Nifty Bank continues to outperform the Nifty. It nearly tested the all-time high. Support here comes in at the 40 hourly, 52,345. And in the way up, the high of 53,357. So yesterday, the Nifty Bank almost, I think it fell short by about 4 points, 5 points, almost went to the last all-time high and then sort of pulled back a little bit. So let's hope, I mean, you're able to cross that sort of meaningfully, and then we look like, we do what the Nifty's done on the Nifty Bank as well. Some chatter, as always is, when you go back to the previous high and the market is not able to cross it in the first attempt of a double top, etc. But I think it's too early. You need to give it 2 or 3 more days, because it's only now that the Nifty Bank has been able to come up to those levels. 35-point higher start is where the GIFT Nifty is indicating open, and lots of individual stocks where there'll be fair bit of action, which we will get to in a bit. Surabhi.
Yeah, absolutely. Lots of green. I mean, continuing the handover from Wall Street over to Asia is actually pretty good, because most of the markets are up and about, and we've got 2 central bank decisions. One is done, the other is awaited, and that's Bank of Japan. And actually, we've got some inflation data out of Japan as well ahead of that announcement. Not that it'll have a bearing on, immediately today's decision, but that data is basically telling us that core inflation, core consumer inflation in Japan continues to inch higher. That's something that the Bank of Japan will be very, very mindful of, because the numbers for August are at 2.8%. versus 2.7% in the previous month. Nonetheless, I mean, today we're not expecting any moves on the hiking side from the BOJ. The anticipation is the BOJ will probably take that call at its October end meeting, and maybe onwards in December. In China, no change. The loan prime rate in China has been left unchanged by the central bank over there as well. Let's look at some of the other key parameters. Now, if we talk about the market this week, then the interesting contrasts are very, very apparent. The Nifty is virtually unchanged. I mean, a gain of 0.2%. It's the Bank Nifty. That sector rotation has been very pronounced this week. And let's see if we get more of that today as well, because even yesterday in a topsy-turvy market, banks were really standing fine. Nifty Bank is up 2% already this week. And the correction in the broader market is very, very clear. Midcap index is down about 1%, and the small cap down almost 2%. So very clear changing trends brought out by this week so far. Fund flows yesterday. We had a pretty big sell figure from the FII fraternity, 2,500 crores sold. Domestic institutions were a neutralizing factor as usual, buying up about 2,000 crores worth of stock in the cash market. I'm watching for 2 stocks in particular, both on regulatory action, one from RBI, one from SEBI. Now, there's good news for IIFL Finance. Remember, yesterday the stock was down 6-7%. There was a lot of chatter about whether there can be a ratings downgrade, etc. Well, suddenly it's got a fresh lease of life, because the RBI has restricted all the restrictions on the gold financing business, the gold loan business of IIFL Finance. So they can go ahead with disbursals, securitization, sale of loans, all of that. So that should be a huge relief. And this is coming after a whole 6 months. The ban came in effect in March. So good news over there. Axis Bank, this is a bit of a curveball coming through, because SEBI yesterday said that Axis Capital will have to stop all its merchant banking activities in the debt market with immediate effect until further notice. It's a pretty complicated issue surrounding the placement of NCDs that Axis Capital had done with a hedge fund, or an outfit which is linked to hedge funds. We'll get you more details as we go along, but let's just see if there's any sentiment negative on Axis Bank because of this. So 2 interesting corporate developments that I'll watch out for. Mangalam, how are you looking at things?
Well, 2 things. One, when you guys were talking about the US markets, the broader markets in the US are doing so well. 7 days of a rally in Russell, and that, is totally different from what our markets were. Earlier, we saw our large caps underperform and our mid caps do extremely well. And in the US, everyone is talking about a very narrow rally. Out there now, the frontline indices are doing what they are. The broader markets are doing extremely well. I was looking at Russell having done 7 days of gains. And that last time that happened was in March 2021, a little before, the rate hike cycle began itself. That's one. And the second thing is Nike. I don't know whether you guys noticed or not. Overnight, there was a development there where the current CEO has announced his retirement. And
the shares rallied, and I wondered why.
Because the earlier CEO, who is coming back, Elliot Hill, is coming back from retirement. Usually in US, when CEOs come back from retirement, everyone goes back to what happened to Apple, when Steve Jobs came back again. And Nike has had it very bad in terms of its strategy and product line, etc. over the last couple of years. The shares have been much lower as well. So change of leadership, change of guard for a
Mangalam tracks closely.
Very closely.
All the sneakerheads in our office led from the front by
the way,
Mangalam.
the last CEO who came back was, before Steve Jobs, was Disney. Bob Iger.
Yes, Bob Iger came back.
3 years back.
And we also keep...
The return of the OGs.
The return of the... even in Starbucks, we have the founders keep coming back, and there are a lot of leadership changes out there. So to that extent, it was important. But for the Indian market itself, like I said, first there was the reaction reaction and then there's the response. And the response, the Wall Street showed that yesterday as well. A big gain is what we saw on all the frontline Wall Street indices. But apart from that, the GIFT Nifty indicating a positive start is a good thing. Three things that, weren't so bad in our markets yesterday. The first thing, even though we went off the highs, we maintained levels. Nifty was above that 25,400 mark. The Nifty Bank still closed above that 53,000 mark itself. And the midcap index, while we did see a decline from the highs, there was an equal amount of recovery that we saw in the last hour as well, telling you that not all was very bad. Post-event, the other positive was that the India VIX, despite the volatilities that we saw in the market, the India VIX actually declined to sub 13 level, closer to 12.5 itself, after a big rally that we saw in the previous trading session itself. The other positive thing that happened was that the FIIs unwound some of their excesses. So if you look at it, there was a net sell of 924 crore in index futures by the FIIs. They unwound about 7,000 long contracts. They added about 7,000 short contracts as well. And as a result of which, their net long exposure, which stood at a hefty 69%, closer to 70%, has come off moderately. The important part, who bought the FII selling? It was the clients. Clients in HNIs who, know the near-term pulse of the market, after being net short, actually yesterday bought that dip. They added 17,000 long contracts as compared to just about 7,000 short contracts. So those are a couple of things that we'll be watching out for. The options range on the Nifty, 25,500 feels like a bit of a fulcrum for the next couple of trading sessions. 25,500 call has a premium of 150 rupees. 25,500 put has a premium of 150 rupees. Those who are selling the call and the put are playing for a broad range on the Nifty between 25,350 at the lower level to 25,650 at the upper level itself. The index, like we've been talking about, to watch out for will be the Nifty Bank, and that's largely because yesterday it went within kissing distance of its previous record high. Can it complete the loop or not is the big question, because it's been a rank outperformer this week and the previous week as well. This week, the Nifty Bank is up 2% at a time when the other indices are actually down 2.5% to 3% of the broader market level. Three stocks that I'm watching out for today. We pointed out yesterday the possibility of Chambal Fertilizers and SAIL getting into FNO ban, and they have gotten into FNO ban. And the other one is Balrampur Chini, which comes out of FNO ban. So those are a bunch of stocks that I'll be watching out for.
Okay, Mangalam, got it. We'll keep them on our radar. Thanks very much for that. Let's kick off the action then with the equity call of the morning. And this one's coming in from Lawrence Belanco of CLSA, who says that while there is still risk of further volatility for global markets heading into the US election, our base case remains for a continuation of the uptrend of the late 2022 lows into the year end. He says from a simple behavior aspect, the Nifty continues to respect supports provided by the 50 DMA post the election volatility back in June. He says while there are still signs of slowing upside momentum for the trend, he would give the benefit of doubt to the unfolding uptrend as long as the price action continues to respect supports provided by the rising 50 DMA, currently at the 24,760 level. Lawrence says a break of the 50 DMA would likely result in a test of the next chart support at 23,898 to about 23,900. But we're far from those support zones. The market continues to cruise along.
Absolutely. And, Lawrence, of course, widely followed as far as technicals are concerned. James Knightley is Chief International Economist at ING. He's joining us now to take some questions. James, good to have you with us here. Thank you very much for your time. So just a quick word, James, on markets and what they've done last night and what it means. Dollar is sharply down. I mean, actually, just two things stand out. Sharp rebound in equities, dollars, which is now sharply lower, and oil, which has bounced back a little bit to 75, although I'm not sure anyone is paying attention there. What does it mean for what does this backdrop mean for EM equities, especially India, James?
Yeah, I think the Feds did they did a good job. I think it was a hawkish 50 basis point cut, if you can describe it as that. Basically giving a clear message that the Fed is very much in the soft landing camp. They think the underlying fundamentals are solid. It's just that the inflation backdrop is improving, and that allows them to provide a bit more insurance for the economy by moving policy rates back to more neutral levels, out of restrictive levels, just to ensure that nice ongoing growth story can continue. I think the Fed are trying to angle for a mid-1990s cycle where they've had policy in restrictive territory. They can take the foot off the brake a little bit just to give the economy a little bit more breathing space to continue, driving along quite nicely. And that positive US backdrop in an environment where even Europe's looking okay. We had Bank of England yesterday, not changing policy. We've had Brazil actually raising rates once more. So there's still some underlying confidence that the underpinnings of the global growth story is still looking pretty good. And for now, until something changes in that developed market story, in that US story, I think it should continue to provide a solid base really for risk sentiment in general, and of course emerging market equities and Indian equities too.
All right. So I guess, no discomfort from the US Federal Reserve. But James, hi, morning. I also want to get your views on the Bank of Japan. And that, for me, at least, is the more interesting one, right? Because if you look at data, even this morning, those inflation numbers continue to inch higher. Growth numbers have been inching higher, almost at 3% as per the last print. So how long do you think they can remain on hold? And if they do start raising, say in October or December, then what does that do to the whole carry situation?
Yeah, no, morning. It was an interesting one because, of course, remember what happened back in July. We had that interest rate rise, which caught the market a little bit off guard, that 15 basis point rate hike that came through. And, of course, what happened was the next day the Fed pivoted to become much more relaxed about inflation, focusing more on jobs. And then 2 days after that, we had that very soft US jobs number. And we saw US interest rate expectations plunge as the yen soared. And there was concerns at the time about some financial market instability potentially stemming or coming from this big dollar-yen move that could potentially have hurt some investors, some hedge funds, and there was a little bit of anxiety about what that may mean. So I think that caution, it continues to play a little bit in the Bank of Japan's mind. You know, they've seen some really big moves in dollar-yen from the low, sort of 160s to the low 140s. And that, of course, does help at the margin tighten monetary conditions. It does act as a bit of a brake on inflation as well. So that's a good news story. So we're of the camp that we'll probably get the Bank of Japan holding today. And we are looking for them to hike, but perhaps it may not come until December this time around.
Right. You know, the obvious question then is with the money, which is now a little more cheaper than what it was before the 50 basis points rate cut, where does it find its way? In what asset classes, what geographies? What are your expectations? Where does the incremental money go to?
Well, the US is still awash with liquidity. We've still got banks putting money back in the Fed deposit at the Federal Reserve. We've still got, you know, trillions of dollars sloshing around in money market funds as well. So, you know, there is the potential for these funds to move, you know, if, as we expect interest rates to continue falling, that money may well seek a new home. But of course, it also depends on the macro backdrop as well. And at the moment, everyone's sort of really buying into this narrative that the US is in a soft landing, the US can move policy back to neutral and everything's going to be fine. Well, you know, the jobs market is a clear worry. The Fed did cut 50 basis points. They think, you know, that they do perhaps need to move to neutral quite quickly to ensure that they do get that soft landing. It's not guaranteed. And I think, you know, we are going to be closely following these jobs numbers. So for now, there's very few firings going on, as we saw with the jobless claims numbers. But the hiring story has really weakened dramatically. And the quality of the jobs that the US is adding has deteriorated as well. There's much more part-time, it's much more low-paid jobs. So there is a general sense that the economy is cooling. And for now, the assumption is it's going to cool and stabilize. But you never know. It could carry on just a little bit further.
Okay, all right, James, we'll leave it on that note for this morning. Thank you so much for joining in. Have a good Friday and a good weekend, and we look forward to connecting again soon. Well, with that, we have to quickly look at all the stock-specific action that we're going to track today. And, you know, in our top 10 segment, we'll be looking at stocks like IIFL Finance, Reliance Infra, NTPC, Indostar, IDFC First Bank, Phoenix Mills, EMS, and Power Grid, all those on the back of positive news flow. Vedanta and KC International have slightly negative cues around them. We'll tell you more about all of those stocks in just a bit after a quick break.
కడాన తిరుమల లడ్డు కూడా నాసి రకం. నాకైతే ఆశ్చర్యం వేస్తుంది. ఎన్ని కంప్లైంట్ చేసినా కడాన వెంకటేశ్వర స్వామి పవిత్రతను దెబ్బతీశారు. ఎన్నోసార్లు చెప్పాం. అక్కడ ఎంత దుర్మార్గంగా ప్రయత్నం చేశారంటే అంత దుర్మార్గంగా ప్రవర్తించారు. కడాన అన్న దానంలో క్వాలిటీ ఆఫ్ ఫుడ్ లేకుండా చేశారు. దేవుని దగ్గర పెట్టే ప్రసాదం అపవిత్రం చేసే విధంగా ఓసారి బాధేస్తుంది. నాసి రకమైన ఇంగ్రీడియంట్సే కాకుండా ఎనిమల్ ఫ్యాట్ కూడా వాడారని. ఏది గీకు బదులు ఈరోజు స్వచ్ఛమైన గీ తెమన్నాం, ప్రక్షాళన చేయమన్నాం. నాణ్యత పెరిగింది, ఇంకా కూడా నాణ్యత పెంచుతాం. అల్టిమేట్గా వెంకటేశ్వర స్వామి మన రాష్ట్రంలో ఉండడం మనందరి అదృష్టం. ప్రపంచం అంతా మన దగ్గరికి వచ్చే పరిస్థితికి వచ్చారు. అలాంటప్పుడు వెంకటేశ్వర స్వామి పవిత్రతను కాపాడుకోవాల్సిన బాధ్యత మనందరిపైన ఉంది. ఇది కూడా చేస్తామని చెప్పి కూడా నేను మీకు తెలియజేస్తున్నా.
Welcome back. Well, as promised, it's time to look at a lot of individual stocks that could be catching the limelight today. And our team is standing by with the CNBC TV18 list of top stocks to watch. Let's start first with Ritu. Because IIFL Finance has made all the headlines and for the right reasons this time around. Ritu, morning. So relief coming through?
That's right, Surabhi. Good morning. Big relief actually for IIFL Finance because RBI has lifted restrictions on its gold loan business effective yesterday, and that means the company can now resume sanctioning, dispersal, assignment, securitization of gold loans after what has been a 6-month ban. Now remember, RBI had placed restrictions on them on the 4th of March because of material supervisory concerns that included, deviations in certifying the purity of gold, breaches in loan-to-value ratio, cash dispersals and collections in excess of the limit allowed. And the impact of that ban has been significant. Their gold loan AUM more than halved from about 26,000 crores in March to about 12,162 crores by August. The share of gold loans in their consolidated AUM that dropped from 32% before the RBI action to 21% as of the first quarter, and they lost 1 million customer accounts that were closed during this period. There were concerns that there could be layoffs as well, with about 12,000 employees across their gold loan branches. But this lifting of restrictions, of course, removes the key overhang on the company and the stock as well.
Right, we are stock to watch out for on the way up. Thank you so much for that update, Ritu. Let's go across to Vivek now. He has some more updates coming in on Reliance Infra and also Vedanta and NTPC. Vivek.
Well, that's right. Some important updates coming in as far as Reliance Infra is concerned. Number one, the company has announced a fundraise. Fundraise is going to be via two routes. Number one is a preferential issue, and the other fundraise is going to be via the QIP route. Now, talking about the preferential issue, fundraise of close to 3,015 crore, and the promoter entity participating in this fund issue is going to be Rise Infinity Private Limited. Non-promoter entities include Florenti Innovation, that is led by Matthew Syriac, and also Fortune Financials as well as Equity Services. Now, coming to the QIP fund raise, the company is looking to raise close to 3,000 crore via the QIP route. Talking about Vedanta, again, some debt that the company is taking up. Now, this time it's the parent entity, that is VRL Resources, that has raised close to 900 million debt. This particular debt has been taken from Citicorp International. Citicorp is acting as the trustee, and the issuers of the debt are VRL, Twinstar as well as Welter, all three which are promoter entities of the listed entity, that is Vedanta. Now, coming to NTPC, in line with the very significant capex plans that the company has outlined for FY25, the board of the company has gone ahead and approved two investment proposals. Number one, 800 megawatt power plant at Odisha at a capex of a little over 11,100 crore, and a Chhattisgarh power plant again of 800 megawatt, and the size of this particular, or the capex for this particular plant, will be close to 9,800 crore.
All right, Vivek, thank you very much for that. We'll keep an eye out on all those names. The Bank of Japan decision is at the bottom of the screen. They've, as expected, held rates, nothing, maintained short-term interest rates at 0.25%. So that's the Bank of Japan meeting. The dollar yen is absolutely stable, nothing at all. So it's essentially where it was at about 142 early August. When at that level markets globally panicked. But of course, I mean, the yen rallied from 162 to about 142, and since it's been in this 140 to 145 zones. Usually there's a press conference later, and guidance, etc. will be important, so we'll get back to this in a bit. Well, let's go back to Ritu now. Indostar and IDFC First Bank will also be in focus. Ritu, tell us more.
Well, you have NBFC Indostar Capital selling its subsidiary Indostar Home Finance to a private equity player, EQT, for about 1750 crore rupees on a fully diluted basis. This deal is still pending, all the approvals, including from the Reserve Bank of India, consent from lenders and shareholders. Once it is completed, it will see the private equity player EQT invest about 500 crores into Indostar Home Finance. The capital is expected to help Indostar grow its primary sectors, which is vehicle finance and small business loans. Keep in mind, as of the end of the first quarter, Indostar Home Finance had 121 branches across 8 states. Their average ticket size is about 9 lakh rupees, and the assets under management were about 2,395 crore rupees. Now, on to IDFC First Bank, where the Reserve Bank of India has approved the reappointment of their MD and CEO V. Vaidyanathan for a 3-year period effective December 2024, that is until December of 2027. Earlier in April, the board had approved his reappointment for this 3-year tenure after his current term ends in December this year, which has now received the regulator's nod. He's been the bank CEO since December 2018 following the merger of Capital First and IDFC Bank, and this reappointment for the entirety of the 3-year term that was sought by the bank is a positive and ensures leadership continuity.
Okay, absolutely. So that stock expected to open out in green on the back of that development. Ritu, thanks for it. Let's head to Sonal now. Sonal, you're watching out for Phoenix Mills. What's the news here?
Well, Phoenix Mills, via its subsidiary, has made inroads in Punjab. They've gone ahead and they have been declared as the lowest bidder for 2 plots in Mohali in Punjab. And the total land area is around 13.14 acres. This will be used for commercial development only. And the bid value for the combined, for both the plots is around 891 crore rupees. The company says they intend to develop a retail-led mixed-use development on this land parcel. So one more step ahead in the expansion plans that the company has been talking about.
Sonal, thank you very much for that. More stocks with news flow. Vivek, back to you.
Well, that's right. Quite a lot on the plate today. First up is EMS Limited. Now, 2 separate pieces of news here, both important. Number one, the company as well as its JV partners emerged as the lowest bidder. This is for a tender that was floated by Kolkata Municipal Corporation, and this tender pertains to a pollution abatement work in the river Adi Ganga in Kolkata. Contract size is quite significant, 680 crore, where EMS's share is close to 74%. Along with that, yesterday the company also announced a fundraise via the QIP route. The company is looking to raise close to 400 crore. KC ICICI International, a slight setback coming in terms of a rating downgrade from rating agency CARE. Various bank facilities of the company have been downgraded by a notch. Long-term bank facilities downgraded by CARE to CARE A+ stable from earlier CARE AA negative. Now, the downgrade is mainly on the back of lower than envisaged recovery as far as gross current assets is concerned, continued reliance on working capital borrowings as well as the leveraged capital structure. Lastly, again, keeping an eye out on Power Grid as well. One more order win or one more lowest bid as far as Power Grid is concerned. Now, this company has emerged as a successful bidder under the tariff-based competitive bidding. Now, this is for a transmission system to be developed from Khavda in Gujarat, and the project includes establishment of both a new substation as well as new transmission lines, which will be done in the state of Gujarat.
Right, Vivek, thanks a lot for that, and we thank the entire team for all the stocks which they just mentioned will be in the news. In case you missed it, let's recap that for you. Stocks with positive news: IIFL Finance, Reliance Infra, NTPC, Indostar, IDFC, First Bank, Phoenix Mills, EMS and Power Grid. Well, stocks with negative news flows today: Vedanta and KEC International. All right, let's talk about the commodity space now. Manisha Gupta joins in with a roundup of all the action from the commodity market. Manisha, what stood out was the profit taking in gold.
Oh, well, yes, and even as it's off its all-time highs, but trading very close to that. So $2,600 an ounce has been an all-time high, and we are trading at around $25.80 at this point in time. Well, the geopolitical tensions, decline in dollar index, and the fact that the markets are looking at a slowdown in Europe and US clearly have been supportive. Add to that the fact that the U.S. presidential elections in the month of November bring in a lot of uncertainty, and we have seen a lot of physical gold buying in the Western world, also adding premium to prices. Within metals, a couple of metals that stand out is steel trading at a 3-week highs, and the copper price is now trading at a 2-month highs. There are concerns from Zambia mines, and it also has to do with the a stronger demand that we also seem to be picking up from Asia that is supporting copper there. Sugar is one thing that I would definitely want to mention, because this week has seen very strong gains into this commodity. We are up by 6% for sugar. It's trading at a 2-month highs at almost 22 cents. International Sugar Organization says that 2024-25 would be a third straight year that you could be looking at a global deficit, and that is supportive.
Okay, all right, got it. Manisha, thank you very much for that. We'll watch out for how some of these commodities sort of play up through the day. Take a break right now. Back in a moment, we'll have Deepan Mehta joining in, and he will, of course, give us some fundamental ideas to look at today.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a positive start for our markets itself. Though the premium has compressed a little bit from 50 points to about 30 points, but who's to say where it's likely to go in the second half of trade. Dipan Mehta, the director at Elixir Equities, joins us now. Dipan, we were very close to hitting a fresh all-time high for the banking stocks yesterday. Today we start with some positive news, at least on IIFL Finance. Your thoughts on the NBFC space and IIFL in particular?
Yeah, Mangalam, good morning and thank you for having me on your show. I think the entire NBFC space, excluding outliers like Bajaj Housing, are perhaps the cheapest stocks in the entire universe. And some of the microfinance companies like Credit Access, Pandana Spurti, even companies like Ujjivan Small Finance Bank are trading at single-digit type of P multiple or low double-digit, which is surprising in a market like this, where the average ME multiples are 40-50 times or so. So I think that the NBFC Bank has not been a favored space. They have been underperforming. But as we are seeing the churn in the sector taking place, I'm pretty certain that a few months down the line, banks and NBFCs may come back into focus. Just a trigger is needed. And investors, I think, should be overweight on the entire sector. Because at the end of the day, it is a growth sector and considerable runway.
Okay, got that. Dipan, hi, happy Friday to you. So gold financiers, right? Never a dull day. If you're in the gold financing business, either gold is shooting higher or the regulator's doing something. Now we have, IIFL Finance finally coming out with good news. Tell us what you think that'll mean for that one stock and also the others in the market, right? Because we've seen the rapid growth for the others, Muthoot, Manappuram. They've only been gaining market share because some of these names like IIFL Finance have been out of the market. What do you think of the business? And if you were to pick a stock, a gold financing stock, which one would it be?
Yeah, so good morning. I think it's great news for IIFL Finance because they are amongst the most aggressive lenders in the gold financing space, and they had clearly carved out a very strong market share for themselves at the expense of some of the other gold finance companies. So, and valuation wise also it is attractive. At the same time, it has got other lending products as well, which offer some amount of balance. So when you compare the entire spectrum, I'd go with IIFL Finance. It's been an aggressive player. And I think there's a scope for the PE to get re-rated upwards now that this regulatory overhang is over and done with. I think that's where investors should focus on.
I remember looking at Deepan morning. I remember looking at IIFL and where it trades at. It trades at one time FY26 book. So yeah, it's kind of bombed out in that sense. But as you say, it should see a big relief rally. That is the financial services and NBFC space. What about the telecom space and especially Indus Tower, Deepan? I heard a lot of interest around this name, even as it was down 9-10%. So you can argue and say, well, it's almost a Bharti company now. I don't think if you look at actual estimates for Indus Tower, nobody was factoring in this AGR bid. Actually, even for telecom companies, this was like the upside bull case. Stock went up because of this, but it's not in the estimate. So it's not as if you'll see sharp earnings cut because of the disappointment yesterday. Indus Tower specifically, if you have a view.
Yeah, good morning, Prashant. See, the issue with Indus Towers is that if you compare globally with some of the other tower companies, it is available at reasonably attractive valuations. But I think that, Vodafone, certainly that's the big question mark. And this, the fact that they lost the curative plea will put more pressure on Vodafone. So I'd get a bit cautious on Indus Towers, maybe take some money off the table. First, the disclosure, we and our clients are invested in it. And this is not a good development. And if you see quarter after quarter, Indus Towers, the earnings have stagnated. And I don't see any major, upside in terms of growth for Indus Towers. End of the day, I think it's reached sort of its level of potential. And you could see that this business becoming pretty much mature. So I would just be cautious on Indus Towers at this point.
Deepan, the data is interesting, right? If you look at a lot of chatter around this, PSUs. In the last 2 months, the BSE PSU index, which basically is 60 stocks, is down 11%. And in the last 2 months, in these 60 stocks, only 2 are higher and 40 are down, between 10 to 35%. Just your thoughts on what happens here. I'm talking about everything here, railway, defense, banks, everything, but PSU.
Yeah, I think, Prashant, it's a very good development because a lot of what was getting built in the PSUs, and we have been expecting a correction across the market, but it's not happening. It's happening sector by sector, so it's perfectly fine. I think that some of the defense stocks and the railway stocks are still expensive, but maybe another 10-15% correction and a good quarter, September quarter, may see their valuations from peak level, I'm talking peak level, P multiples, to maybe go down 40-50%. And then that may make a good entry point because end of the day, a lot of the engineering or the capital goods related PSU, be it in railways or in defense, they're sitting on massive order book positions. So there's good earnings visibility. So I'm keeping my eyes trained on the entire PSU engineering capital goods space. I think that further correction may yield very good winners.
All right, take that point. Stay on, Dipan. We'll come to you with more, stock talk as well. Let's go across to Anuj now, who joins in for a quick trade setup this Friday. Anuj, how are you feeling?
I'm good, Mangalam. It's Friday, so normally always cheerful. How are you?
Friday.
I think it's the same feeling on this side of the table as well.
Yeah, I mean it's okay. I mean, look, that's on the lighter side, of course. Now, coming to the setup, this is one thing that I've been talking about for some time now, that the Bank Nifty is looking one shade stronger than the Nifty. And I'll just put it in numbers. In September so far, the Bank Nifty is up 3.3%. And the Nifty is up only 0.7%. The reason for that is the Nifty IT has started to fall. It's now down about 2%. The only risk which emerged yesterday was that did the Bank Nifty make a double top? Yesterday's high was 53,353. The all-time high was 53,357. So for practical purposes, you hit all-time high. But still, on record, you still didn't hit an all-time high. Anyway, yesterday was the third highest close of the Bank Nifty, and only the third time that the Bank Nifty has closed above 53,000. So in that sense, the close was actually quite good. And normally, first attempt at an all-time high is rejected. The second attempt is successful. Let's see if we make another attempt at that all-time high. And quickly now, why is the Bank Nifty rallying all of a sudden? I think, you were just discussing with Deepan how PSUs have started to underperform. Defense has started to underperform. I think markets focus over the last 1 month all of a sudden has moved to undervalued pocket. And in the market, the only space which is undervalued is large private sector banks. Whether it's HDFC Bank, Kotak, Axis, they're all trading below their mean valuations or median valuations. ICICI Bank, yes, is fairly valued, but then that's also not done a lot over the last 1 year. That's also underperformed the market. So that's on the Bank Nifty. Coming to Nifty levels now, first resistance is 25,500 to 25,550. Then the bigger resistance is 25,600 to 25,650. Support comes in at 25,350 to 25,400, and then 25,150 to 25,250. For the quote of the day, since it's Friday and since it's cinema day, I'm referring to, and also, keep in mind the Shawshank Redemption, perhaps the greatest movie of all time, completes 30 years next month. And of course, we have one of the greatest actors ever, Morgan Freeman. That's the quote that I apply in my life as well. That's on screen for you.
Well, you want to say that in Morgan Freeman's voice?
You are good at that, Mark. You can do that.
That's a beautiful one, and of course one of my favorite actors, and I think all of our actors.
100%.
Somehow he's always played. I think he's played God a few times over in many.
Bruce Almighty. I forget the movie.
Bruce Almighty.
Bruce Almighty.
Bruce Almighty.
So
there was one of this. There was a content piece where he was called to one of these talk shows, and they just played a random video of a man walking down the street and asked him to do the voiceover on that, and that itself sounded like
he's such a great actor. Once he played Nelson Mandela, and when Nelson Mandela died, a lot of publications mistakenly put his picture.
Absolutely. In the same way, something comes to my mind. Asim Dhru, who is the founder of SBFC, Small Business Finance, he did a podcast recently, and he was asked something about, philosophical. He said, he quoted Osho of all people, and he said, it's very difficult to stay with yourself for 10 minutes, doing nothing, just with yourself for 10 minutes without picking up the phone or doing anything, and that company you want to impose on others. It's kind of the same line of thought, which is stillness and sort of, being in the moment. And
it's absolutely so relevant for anyone who's either in media or in markets, and we are in both. So we need to sort of really keep this in mind.
Anytime, I'm going through any kind of depression, I watch Shawshank Redemption. And I think it's one movie which will really lift your hopes by the end of it. So if you ever feel low, watch that movie.
Absolutely. The triumph of the human spirit, the greatness that we are all capable of. All right, so that's a dose of optimism and inspiration this Friday. Getting back to markets now, in an exclusive conversation with CNBC TV18 yesterday, Christopher Wood, global equity head of equity, global equity strategy at Jefferies, said that FIIs are marginally underweight in India, despite India being the best long-term equity story. But any major fall in Indian equities will be viewed by FIIs as an opportunity to buy. Listen in.
I'm genuinely astonished by the resilience to the capital gains increase, which is quite material, most particularly as the week before I met many domestic institutional investors and they were not expecting the capital rate gains tax increase. So I find that...
and many of them were very vocal that markets will be hurt.
Yes, I would have been too, so we've all been completely wrong. So the only explanation is that the domestic households who are investing through these monthly installment plans have become convinced, in my view correctly, that India is a good long-term equity story and don't want to be scared out of the market. That's the only... And the big story of India this year is these domestic flows.
Yeah. But what about foreign flows? You said that easing cycle is great for EMs. India is an emerging market. Foreigners have stayed away. I mean,
but on a relative basis, if you're investing, if you're an EM fund manager, after this 50 basis point rate cut yesterday, the markets you're going to want to add positions to are places like Brazil, which have 11% nominal rates, 5-6% real rates, so huge potential to cut rates. Markets in Southeast Asia, like Indonesia, Philippines, which are traditionally very sensitive to lower US rates, weaker US dollar. So India is not the obvious place to put your money in today because, one, it's expensive, and two, the RBI is in no hurry to slash rates.
But haven't, I mean, you've been at the conference, you've been speaking with a lot of foreign investors who are here. What's the sense you get about India? Yeah, it's expensive, but it's been expensive. You could have made the same argument 3 months, 6 months, a year ago.
The people who are, obviously the people here are already invested.
Right.
And so their issue, they're not too hung up on the valuation. I mean, they're all concerned about the valuation.
No, we're talking about incremental flows into the Indian market. I mean, what's the sense you get on that? I mean,
well, my sense is, yes, the problem for the foreign fund managers as a whole is that they are underweight. Based on our latest data, based on the top 30 global emerging market equity funds, they're now marginally underweight, which is not where they want to be, because most of them would agree with me that this is the best long-term story. But they're underweight. They've become underweight from a de facto standpoint. One, because they've been reluctant to pour money in because of the high valuations. Two, because this is a very important point, the neutral benchmark weighting of India has just gone up a lot, which has made them become underweight by market performance. But there's an additional issue. There are two sectors where the two sectors where foreigners have traditionally most invested in India have ironically been underperforming, i.e. IT services and banks. So in the last year, many foreign investors, particularly value-orientated investors, would have gone into the banks for the first time because they came within their valuation range. But you know, they're not the hot areas of the market. The hot areas of the market in India have been areas like industrials, infrastructure, real estate, energy, defense. These are the areas which have been driving the market. That's not the area traditional emerging market investors have been investing in.
So you don't think that foreign investors are going to come back to India in a big way?
Not in the immediate term, but the good news about this is the really positive point to take away is any major correction in India, like say 10%, in my view, will be viewed by foreigners as the opportunity they've been waiting for to add.
Are you still expecting a 10% correction?
No, I'm not. I'm just saying that's...
I mean, someone said 5 is the new 10 and maybe 2 is the new 5.
No, in my view, I've got a greed and fair long in the India portfolio. I'm not going that defensive in it.
Okay.
So, because the point is I can afford a correction. I've got very good performance. But my portfolio is heavily in energy, real estate, capex plays. But I have got the bank, so that's, I suppose, the conservative part of my portfolio.
Okay. Okay.
But the real issue for foreigners I think the more foreigners know about India, the more specialized they are in the market, the more relaxed they are on the valuations. It's just the generalists are the more concerned. And global investors, as opposed to global emerging market investors, barely own Indian equities at all.
So the
I'm
point,
talking about global funds.
right? Not EM funds, but global funds.
They barely own India at all.
At all.
Yeah, literally, they don't own India.
So it's a strange kind of a position, right? I mean, because you're saying is the best long-term story.
Many global investors will agree that India is now the best story, but there's a practical issue that if you only invest in India via ADRs, you have extremely limited choices. Because of the lack of ADRs quoted offshore. Unlike in China, there are many ADRs. And the second practical issue, if you want to invest in India in a sort of more real manner, you have to get FII approval. And that is a regulatory obstacle, right? That requires a real commitment. So most global funds have not got FII status.
Is that such a big issue? I mean,
yes, that's an issue. Don't underestimate that.
Yeah.
So a big fund management company could have their global emerging market fund with FII status, but their global fund may not have it. And then this capex increase, or capital gains tax, will now become another. Will now put them off.
You know, in your note, I think the last but one note, you did mention that you put in that capital gains, and you said, well, that worries you.
Now, that personally, I don't believe in capital gains taxes on equities because people have already earned the money and they're risking. They should be encouraged to invest in equities. Now, obviously, you can deduct the money you lose, but that's just a philosophical point. So, obviously, the government's raising.
No, but did you mean that in the context of where India is in terms of the political?
Well, no, that is an issue because in most Asian markets, you do not pay capital gains tax.
Welcome back. You're watching us here on Bazaar Morning Call. After some philosophical talks here, talking about equanimity and all of that and stuff, good time to get to the basics and talk about what to buy, what to sell. Mitesh Thakkar and Avni Bhatt now join in for the Today Trade on the indices and individual stocks. Mitesh, you go first.
Good morning, ma'am. On the index, it's been a consolidative kind of a phase. And I've said that 25,300 to 80 would be the first support pivot. In fact, day before we went there. I think as long as that is holding out, I think it remains a buy and declines kind of market on the indices. The bank Nifty is outperforming, so that's very clearly that's where the trade is. It's now very close to the earlier highs of 53, 150, 53, 200 zones. I think once we get an intraday closing about that, even on a 2-hour chart, I think we could see this continuation of this rally to about 53, 500. This also comes on the back that the weightages in the bank Nifty, which is Kotak Bank, HDFC Bank, those charts look very good, and therefore I think they might do well in the next few days as well.
Okay, got it. Thanks for that, Mitesh. Let's quickly get in a call from Avni as well. Avni, morning. So considering that the global cues are very, very supportive, would you look at a long trade on the indices, either Nifty or Bank Nifty?
Good morning, and a very good morning to all the viewers as well. For me, Nifty around 25,500 is a very crucial resistance zone. Yesterday it gave a swing high above that, but closed below it. So I would wait for a closing above 25,500, after which we will see a very clean move up to around 25,800 and closer to 26,000 also. But as long as it closes below 25,500, that's the area which I would avoid. And if at all we do not see any decline and it remains about 25,550 on intraday basis for at least 15 to 20 minutes, then that would be another trigger point to go long. And the target, as I told you, it would be 25,800 to 26,000 on the upside. Supports are very well placed at 25,300 to 350 area. So that's the area. In case if we see some dips, 25,300 to 350 area would be a buying zone. And similarly on Bank Nifty, now how long will Nifty enjoy the newer highs and Bank Nifty will remain sluggish? So now it's the turn of Bank Nifty to give a good move on the upside. 53,350 is the level, closing level, which we should watch out for. Once that happens, we'll see a very clean move up to 54,000. The bottom line is that the overall uptrend is intact, and some bit of consolidation, some bit of volatile swings, and then we should be seeing a clean move in coming days.
All right, we take that. Mitesh, your stock picks?
Yeah. I have a buy on Kotak Bank with a stop at 1852 for targets of 1920. AU Bank and Finance, I think that's also doing very well. Had a flash breakout yesterday. Could head towards 775, and it's a buy with a stop at 740. A buy on Oberoi Realty with a stop below 1820 for targets of 1890, and one sell call, that's HCL Tech. Keep a stop about 1751. Look for mild declines to about 1700.
Okay, and Avni, your stock calls for the day?
So my first stock pick would be Vedanta Limited. So Vedanta Limited gave a fantastic recovery yesterday. It had given a breakout above 435 earlier, and in last couple of days it has retraced back to those support levels. But yesterday by closing, it gave a fantastic recovery on good volumes and futures open interest addition also. So the stock is ripe to retest its recent highs. We would go long on this particular stock for a target of 480 and 495 on the upside, keeping a stop loss of 436. The second stock would be IndusInd Bank. Breakout above the downward sloping channel on good volumes and long addition in futures. And it is sustaining above the 50-week exponential moving average on the daily charts. So this again would be a buy call for a target of 1550 to 1575. And stop loss can be maintained at 1445. The third stock would be SBI Life. So it's already in an uptrend, but some bit of cool off and consolidation has been seen in last couple of days. And the stock is once again on a recovery mode. So the uptrend should resume soon. So this is an anticipatory call. We are expecting the uptrend to resume. It closed at around 1840 yesterday. One can buy for a target of 1940 and keep a stop loss of 1790.
All right, Avni, thank you for joining. We take a short break, come back, we'll have the pre-opening rates, and also with us will be Nikhil Nigania of Bernstein as NTPC Green Energy files for its IPO.
Well, less than 15 minutes to go before we hit the opening bell. Let's actually get you some futures and options trading ideas as well now. We have our next guest joining in for that. Sony Patnaik is with us from JM Financial. Sony, good morning. So what trades are you going with?
Good morning, everyone. Thank you so much for having me on your show. So since the markets are quite bullish and the upside is still intact, we'll go with two buy calls for the day. The first would be from the realty space, Oberoi Realty, which has given a good, strong short covering move yesterday and a breakout on intraday charts yesterday. So one can buy Oberoi Realty futures in the range of 1840 to any small declines up to 1830, keeping a stop loss of 1810 and a target of 1900 and a second target of 1940 can be seen. The second pick comes in Voltas, which has given a very strong option chain breakout yesterday above 1900. So one can buy in Voltas futures at 1917 to 1915, keeping a stop loss of 1895 and a target of 1950, 1980 also can be seen.
Right, Voltas and Oberoi Realty. Thank you for that, Sony. Let's go back to Deepan. Deepan, your thoughts on the real estate space? I mean, a lot has happened already, and the street believes that a lot is priced in. At these levels, what should one do? Is a fresh entry warranted, or the ones who are holding book profits?
And I saw Chris Wood's interview, and I think real estate is one sector he wants to get overweight in a correction. So I think I'll go with that flow of thought. That it's an interesting sector. It's in a multi-year bull market, but stock prices have rallied significantly over there, and the risk return doesn't favor you. So maybe in a correction, as we have seen in the PSUs, I think if there's a correction, deeper correction in real estate stocks, I would go with the winners, especially companies like Macrotech Developers and Oberoi Realty are on our market watch list.
Right.
Okay, all right, Deepan, we'll leave it on that note then. Thank you very much for joining in. You have a great Friday, and we'll touch base again soon. Well, with that, let's put the spotlight now on NTPC. The stock was the best performer on the Nifty actually yesterday, and it retained all its gains even when a lot of other PSU stocks were under pressure. And that is because news is now official. NTPC's subsidiary, NTPC Green Energy, has filed a DRHP for an IPO. And of course, the market's getting excited about the possible value unlocking that will take place. Now, Bernstein believes that the market might be willing to give a premium to NTPC's renewable business. Let's wrap our head around this. Nikhil Nigania, Director, Senior Analyst at Bernstein, is with us. Nikhil, great to have you on. Good morning. So let's start with exactly that. This is a much expected, anticipated and awaited event. Now, what is the potential value that you have ascribed to the renewables business at NTPC?
Yeah, so you're right. It's a much awaited event. It's been in the news for some time now. But I would just like to caveat that there are two schools of thought here. The first one is a fundamental view. So if you ask us, is it the ideal setup to list the renewables business separately? We would slightly disagree. We think right now the cash from the thermal business can fund all the capex for the renewable business. So listing it separately might make that difficult. And the renewable entity might need to keep doing some more fundraisers in the future for all the capex it has planned. And the second school of thought, as you said, is the value unlocking bit. There's a lot of interest in the renewable story right now. So given the blockbuster IPOs we have seen in the renewable space over the last 1 year, there could be good interest in this stock as well. On the valuation front, if you look at peer multiples, private power players are trading at 4 to 7 times book multiple right now. So there is a lot of excitement, and remains to be seen what valuation this could get.
Yeah, a great time for to list, generally speaking, right? I mean, I think that vibes with the general sentiment of Kal Ho Na Ho. So I think that's what a lot of people are going with. Nikhil, good to have you with us here. Good morning. Just explain that point a little bit more in terms of what are the asset base of NTPC Green, the renewable portfolio right now. Our colleague Vivek was telling us that by 2030, they want to add about 60 gigawatts. So by 2032 or so, maybe a little later than that, the thermal renewable mix for NTPC as a whole, the group as a whole, should be close to 50-50. I think thermal capacity is also going up. So just some numbers to it. And also explain that point. You said that even after listing, they'll have to keep raising money.
Surely. So the first point on the capacity side, so right now if you look at NTPC's mix, so out of 76 gigawatts that they have, only 3 gigawatts or so is capacity. But the plan is to take this 3 gigawatts up to about 20 gigawatts by end of FY27 and then on to 60 gigawatts by FY32. So that's the focus the company has on the renewable front. And thermal also, they would be adding in our estimates about 2.5 gigawatts every year. So we would be close to 50-50 mix in the overall portfolio by 2032. That's the aspiration the company has. Till now on the renewable front, the execution has been a bit slow, but we see that picking up from this year, especially looking at the capital work in progress, which is already there in the renewable arm.
Nikhil, you mentioned 4 to 7 times book as the going valuation, but these are the traditional generators on the coal side, or these are valuations you're speaking of on the renewable side?
So these are traditional generators, but for most utilities in India, the incremental focus is renewable. So the excitement which we see in utilities, A is power demand itself, B consequences of renewables, which is like evening shortages, and third, the big energy transition story, which is a big focus of the government, which you would have heard a lot about in the RE Invest over the last few days as well. So as India plans to take renewable capacity from 200 to 500 by 2030, so that is a big part of the excitement in private utilities right now.
I wanted your call on NTPC, whether or not this happens as well, because there was another news piece that came in where the board has approved 2 proposals worth 21,000 for thermal power projects as well. So if you had to look at NTPC on an SOTP basis, with this development coming in, what would your fair value and SOTP be here?
Yeah, so the valuation we have for NTPC is about 440 rupees per share. A larger chunk of that is the core business. That's a primary part of that, and renewables is the smaller part of that. Can there be more upside to that valuation? Yes, remains to be seen how this renewable listing is taken. But because even if you look at NTPC, the parent on an earnings multiple basis, it is 16 times earning. So it's higher than historical averages. But if you compare to global peers, most utilities globally also trade at a similar earning multiple of about 15-16 times. So it's compared to the larger market, which is trading significantly premium to global peers, NTPC valuations are still not very rich, I would say, right now. Yeah.
So, Nikhil, to sort of sum things up, and I think the market typically loves to draw parallels, right? And if you're looking at a pure play renewable business, power business, then I think people will quickly look back at Suzlon and the remarkable turnaround that company managed to achieve. I don't know if that's the right sort of analysis or the right peer to consider, but the kind of value creation Suzlon went on, and it also was a turnaround story, so you have to take that as well. But in general, what would you expect from the renewables business? And the other point you raised was very, very valid. The need for cash, because you simply can't draw from the cash of the parent once you're a separate listed entity. So what is the kind of debt profile you would expect this renewables business to have? And would NTPC Green, say, be able to enjoy anything close to what Suzlon did in terms of the market love and the value unlocking and the wealth creation that we saw?
Right. So firstly, in terms of the second point, which is the cash infusion that would be needed, why do we say that? See, there are many examples of separate renewable listings in Europe as well. So 4 companies did that. And all 4 had the same challenge. They had to keep raising equity because renewable by nature, the renewable operating plants don't throw enough cash in the initial years. So if you need to do a lot of capex, you have to keep raising funds. So hence the need to raise cash. Debt equity ratio is typically 75-25 for the renewable plant, maybe 80-20 if you want to stretch it a bit. So that is the kind of capital mix you would expect the NTPC Green also to have. They are very close to that right now. Their book size, what we saw, is about 29,000 crores, in which 6,500 crores is the equity part right now in the NTPC Green arm. To the earlier point you mentioned, is Suzlon a good proxy? I won't say Suzlon is a good proxy because they're an equipment player, but it does reflect the broader interest in the renewable theme. If you look at IREDA, the renewable lender, you look at Premier Energy, is a solar panel manufacturer, there's been a massive interest in the renewable theme. So from that thematic perspective, without a doubt, and even from our discussions with investors in Europe, there's a big interest for large opportunities in renewable, which NTPC Green could give.
Nikhil, 30-second response. We were speaking to one of the consultants earlier, and they said, asking which part of the value chain will yield most gains for investors from here? And he said, well, solar cells, because, you know, there is enough module capacity. There is, I mean, of course, you go the utility way, that is a different thing. But solar cell capacity, according to him, needs to go up, whatever, 10x, 15x over the next many years. And now, of course, there is import duty protection, etc. Would you agree?
The solar value chain, the equipment side, if you ask me, the value chain is modules, cells, wafers, and then polysilicon. That's the backward part of the value chain. The modules is the easiest part, which is largely an assembly job. So typically, you won't ascribe a lot of value to it. Cells is a bit more complex, and the cell manufacturing capacity in India is right now about 10 gigawatts. The requirement is upwards of 40, 50 gigawatts of total capacity in a few years' time. So there is opportunity in cells to add more. And the further backward you go, the more complex it gets, more difficult it gets. So the more backward you go in the value chain is what we prefer to play in the solar value chain. And there are opportunities which will emerge. At least the two large players, Reliance, for example, is looking to build a full value chain, right from polysilicon to modules on that front.
Okay.
Yeah.
Absolutely. Nikhil, we'll leave it there and we'll sort of invite you back. It's a sort of ongoing theme and lots to talk about here, lots to discuss. Thank you for joining us.
And Prashant, really interesting, right? The last point that you asked him what he made, that typically in things like commodities, forward integration is what gets you more value-added products, right? But here in the solar chain, it's backward integration, which is where the more complex business is.
It's like electronics, right? Yeah. So, for example, iPhone assembly is a very low-margin business, but sort of making things from scratch, that's where the money is. We'll take actually, we'll get you 9-10 calls now. So, Mitesh is with us. Mitesh, what do you have?
I'll go with a buy on Oberoi Realty for targets of 1890.
Okay, Oberoi Realty. And what else? Mitesh, sorry?
Yeah, that's the 9-10 call.
Okay. Just a quick word, if you will, on IIFL, Mitesh. Where can it sort of go up to? It's starting with a 10% pop in the pre-open.
I've not been tracking the stock, Prashant, but you know, all the entire broking and the financial names have done well. IIFL, I think, close above 520, which is what I think it will happen today, should see the stock head towards levels of around 600. So I think that could be a working target.
All right, fair enough. Mitesh, thank you very much for that. Let's shine the spotlight, and telecom. Hormuz is here with that. Hormuz.
You know, Vodafone Idea is the stock in the spotlight, right? Nomura has come out with an upgrade to a buy recommendation, but its price target remains the same. It says that this recent sharp correction that we saw yesterday, along with a strong industry outlook, is an opportunity to buy the stock right now. However, Goldman Sachs is still on the bearish side. It says that the Supreme Court verdict has increased the possibility of one out of the two events. Is that one being that there might either be larger or more frequent tariff hikes from Vodafone Idea, or B, it might result in market share gains for both Jio and for Bharti Airtel. And therefore, in the absence of any government support, it expects Vodafone Idea's free cash flow to remain negative until FY31. The UBS is also saying that it does not rule out an equity conversion or a deferral for Vodafone Idea in the absence of a complete waiver from the government. So that remains a possibility. CLSA is factoring in an AGR risk of 7 rupees a share for Vodafone Idea, and it is saying that in the absence of an AGR relief, it can face financial crisis in the second half of FY26 or in FY27. So mixed views coming in on Vodafone Idea. We'll see how the stock moves today.
Okay.
All right, Hormuz, thank you very much for that. Just a couple of seconds to go for the market open, and we'll have the first rate starting to come up. We'll look at the indices as always, and then we'll get down to stocks. What do we have? Sensex is up 0.5%, so 83,600. The Nifty is starting with the 0.5% gain, 25,540. You got the Nifty Bank, which is up 0.5%, 53,275. And the sort of mid-cap index is up 0.5% as well. Actually, for the broader market holding on and doing a little bit better as compared to the last few days, perhaps, is more important than what the Nifty does on a day-on-day basis, because that's where portfolios will sort of feel the heat or the pleasure one way or the other. Yesterday was a case in point. Frontline indices did nothing, but broader markets were seeing some selling pressure. So heat map on your screen, I think I can't see red yet. As you'll, the Nifty heat map, the number of stocks, I think all 50 are higher. So that's a good start. 100 now on the Nifty, 25, 530 is where we are starting. Okay, there's one stock which is down, which is Tata Motors. Surabhi.
Yeah, so Tata Motors is the red one. The other interesting thing to watch is whether banks can continue that strong momentum or not, because right now The start for the Bank Nifty is a step behind the Nifty. Bank Nifty is up about 0.3%. And those gains are fizzling off a little bit. So ICICI, Kotak, they're not doing too much. And that's been the problem with banks. No consistent build on the big bank trade. Let's see how that plays out. Anyway, let's talk about what's up. Commodities and anything that's global facing, because even the commodity markets are rejoicing that rate cut finally. JSW Steel, Tata Steel, Hindalco, ONGC, Coal India. So that's where the gains are this Friday morning. M&M is having a good pop, 1.5% on the upside. It's a bit of an outlier. It's probably the best performing auto stock on the Nifty right now. Then there's some buying on names like Wipro and HCL Tech. So some of the tech names coming through. Some buying on consumer names like Britannia and Nestle. They're in the mix, so not too bad. Infosys, SBI. Actually, everything else is mildly higher. The only thing to watch is whether banks can retain their mojo or not, because some of them are already slipping. Axis is already in the negative. Kotak is now flashing a little bit of red. And then there's Tata Motors, which is the other stock that's weak. But otherwise, quite okay. 100 points up on the Nifty right now.
Well, the stock of the morning definitely has to be IIFL Finance, up 9% at the open itself as the RBI has lifted the restrictions imposed on their gold loan business. So that's higher. And we also have a decent traction on all the other IIFL, listed companies. So we have IIFL Securities, just a sentiment rub-off out there. But what's also important is that this up move on IIFL Finance has caused a bit of a down move on other gold financiers. So Muthoot Finance is actually among the top F&O losers today. Remember when the RBI had put, the restriction on IIFL first, Muthoot Finance and Manappuram were the ones which actually saw most amount of gains, hoping to consolidate their market share out here. But now that, competition is back in the fray, these stocks are under a wee bit of pressure. We're also seeing some traction on Balrampur Chini. There's a stock that has come out of F&O ban. A couple of these metal stocks doing well, JSPL, etc. as well. Vodafone Idea this morning, there was a slightly positive-ish sort of note coming in. So as a result of which that stock seeing some bit of an up move after a big decline that we saw yesterday as well. Mahanagar Gas is seeing some bit of profit taking. And we have ITD Cementation, which again is gaining on huge volumes. Reports of some sort of deal. News reports. We've reported it here on CNBC TV18 as well. So we'll keep an eye out on that one. ITD Cementation is a stock which is seeing a big move. ITDC Cementation is the one that should come up.
There's also Indostar, Mangalam. I don't know if you mentioned that. 7% higher because they've sold their home finance business to a PE firm. And I think the money they're getting for it is about 1,700 crores. That's a substantial cash that's coming in to Indostar. 7% up there.
Yeah, absolutely. I mean, the stock's not done anything at all for a long time. So there is that bit as well. So there's room there. Well, IIFL is by far the biggest volume-led gainer with a 9% pop. It's holding. I think newspaper report on ITD is that Adani Cement is the front runner now, and the deal announcement is expected very fast, very soon. So that's why this one is excited. Remember that 46% stake in which the promoters are looking to sell. We'd reported that a player like KEC was interested as well. That's the big mover today. 1.6 million shares coming through. So we'll see. JSW Steel is up 3%. It's got very large volumes. Reliance Power continues to do well, 4.5 higher, 36. Hudco is up 2.5. You'll hear from the management a little later here on the show. 236 on Hudco. Balrampur Chini is up 2.5%. There is Interarc, that is a building products company, 7.5% high. Recent listing 1270. Lodha is up 2.5. Mankind is up 4%. JM Financial is up 2.5. Hindustan Zinc is up 2%. EID Parry is up 2. CMS Info is up 3.6. So there is, right out of the gates, a lot of action and a lot of sort of movement, both mostly on the upside. If you want to look at what is down, Muthoot is down the most, 2.5% in terms of backed by volumes. Godfrey Phillips continues to take a bit of a pullback. It's at about 76.20, and there is GET&D, which is down about 3.5%. It's got outsized volumes as we start this morning. By the way, Nifty is down 50 from the highs of the day, and that'll come up on your screen. We were up 100, and very quickly there is a bit of a pullback, which has emerged straight up on your screen. So 25,469 is where we find ourselves at. All right, Devina Mehra is with us. She's a market master of the day, founder, chairperson and MD at First Global. Devina, it's a pleasure. Thank you very much for joining us here on CNBC TV18. Prashant here. So let's just start with the big talking point, which is the sort of global easing cycle, which has been kicked off by the Fed with an aggressive 50 basis point cut. What does it mean eventually? Not actually, eventually, probably the wrong choice of word because it's kind of very long term. But what does it mean in the medium term for flows into emerging markets like India? Because this has been a domestic equity story. Local investors have pumped and pumped and pumped $4 billion a month into mutual funds now, whereas foreigners have been reluctant. Will that change as rates start to come off in the Western world?
Good morning, Prashant, and good morning to your viewers also. So analysis of the Fed 50 basis points cut is different because they actually just said that if we had known the data earlier, we might have cut 25 basis points in July itself. So it's really a combination of the two cuts we should have done. So it doesn't necessarily mean that they will cut it all the way down to where they started from. That's unlikely because, if I was the Fed, I'd like to keep some powder dry that in case the economy needs it. As of now, it doesn't look that the US economy particularly needs a boost. So that's as far as the US is concerned. As far as the liquidity into emerging markets or to India is that part is concerned, as I have said plenty of times, I think must have said on your show also multiple times, that if you're trying to project how much FPI or FII money will come in, but and obviously the assumption behind that is that the more money comes in, the market will go up. If money goes out, market goes down, or at least there's a correlation. But if you actually look at the data, there has been historically no correlation. And that is even at a time when the domestic flows were not of this kind. In fact, the domestic mutual fund industry did not exist. So FII money started to come into India around 1994. And 1994 to 2003 has been the only 9-year period in the Sensex history where the net return was zero. So it is as uncorrelated as that. I mean, even month to month, if you see, even at a time, as I said, when the mutual fund industry did not exist in any meaningful fashion at all, there was no correlation. So I think it's a fool's errand to really try to forecast FII flows and from there try to gauge where the market would go. That's what the data says.
Yeah, no, I absolutely take the point, Devina. But the only thing is that, I mean, we can never tell, never predict. We're only wiser in hindsight. That point is taken, Devina. But the point is, can locals continue to pump in this kind of money? Will it continue? Is it a secular theme? And if not, I mean, in anticipation that flows will remain so strong, supply is also building up on the other side, right? Big supply. So I'm trying to understand whether is it going to be evenly matched? Will demand overwhelm supply? Because you go back, you gave the 90s example. I think we've had bull markets punctured by too much supply. I think that 94 instance was, I think is a case in point. So just your thoughts.
So, I mean, that was not just that there was too much supply of paper, but, that's a different question altogether. In fact, I wrote recently about the IPO market, and that definitely looks to be in whatever you should call it, frothy or bubble territory. There's no doubt. The SEBI data, which actually is only up to December last year, already showed that more than half the people who get an allotment sell in the first week. And if the issue lists at a premium to the IPO price, something like 67% of the people sell. I'm sure the proportions are even higher now. So it's not become a game where you're not investing in the company because you think the valuation is right. You are investing because of what is called in finance the greater fool theory, that you will find a greater fool who will buy it at an even higher price from you. So that's always dangerous because, then everybody thinks that they will, even people who think, let's say an IPO is too highly priced, they will still go in thinking this is a lottery. If I win it, I will get out at a profit. But that sort of thing always ends badly because everyone thinks they will get out ahead of the mob, ahead of the dumb money, as they say. But till you find you are the dumb money. And I'd given the example of Isaac Newton, the same scientist all of us heard of in school. And in spite of being not just a great scientist, he was also a finance person. He was a master of the Royal Mint in England. And yet he lost almost all his fortune in a bubble called the South Sea Company bubble. And he saw that this was overpriced. At one stage, he got out of the stock, and then again, he bought it at a higher price and then rode it all the way down. So, so there are areas in the market which are frothy. And IPOs are one. The other rule of thumb to identify frothy areas is to see where the thematic funds and schemes are getting launched.
Oh, let's not even get started there. Devina, hi, morning, Surabhi here. By the way, your green, the green of your attire is, I think, reflecting the mood of the market. It's a bright shade of green across global markets. We've got rate cuts pouring in. So, but I guess that's the thing with momentum, right? And not just thematic funds. Now you have momentum funds launched by so many AMCs, and it's just the nature and the mood of the market that we're in. But yeah, who's to say where this goes? Till the going is good, it's good. And for a lot of people who came in after COVID, I think it's 3 years of an up market, and now you get into a rate cut cycle, and everybody's still saying that it's still looking good. So anyway, the point is, let's talk about...
We talked of people coming late. So that same SEBI study also said that I think 85% of the IPO allotments are to accounts which have opened after 2016, and more than 50% are to accounts which have opened post-COVID. So they have not seen the cycle.
No, they haven't seen the cycle, and now when it turns, it turns. But let's talk about what to do here and now. And what we're seeing in the market is a little bit of at least change in positioning, some sector rotation. That whole idea of buy any PSU stock and it'll be a doubler, I think that's coming under a bit of question now. So what is it that you're advising? Are you changing anything in your portfolios in terms of themes like CapEx and industrials and manufacturing? Do you think it's time to get into banks? But the bank trade really has been a bit of a non-starter. I mean, we're all waiting for that major secular up move in bank stocks, but it hasn't happened so far.
Okay, so in terms of the sector, of course, we will be doing our quarterly rebalance in something like 3 weeks' time. So I might have slightly some changes there. But as where we stand today, and based on what we have done up until now, our biggest overweights would be things like pharma, auto components. We've gone somewhat overweight IT in the last rebalance. Cap goods and industrial machinery, most people discovered in 2023. We have been overweight for almost 3 years. So we went overweight in October 21. So, I mean, now we've been cutting. So we've been, because many of those stocks did so well. So, we are now, we've been marginally overweight, but we're now close to market weight. And as far as, in general, what is to be done, first of all, many of the viewers would have made great money in some small cap, some micro cap. All those things you book profits and put it into a steadier portfolio. So if you want a one-line advice, that would be it. Banks, I mean, while they've underperformed a lot, if you look at the longer term, maybe they may not underperform that much, but that's not a sector that's a thumping buy, especially with all the credit concerns also. That's the part which you don't know, where that credit cycle to retail loans in particular, where that cycle will turn. And as people tell me that you repeat this in most interviews, I'm a nervous investor in banks and lenders. And that's because you don't know where the negative surprises hide in that sector. So that's definitely not a sector that I'm recommending as a switch to. I told you what looks good. I mean, we're watching FMCG. That's one place where little by little, weight has been going up. And I think it might be a positive cycle for FMCG earnings because the cost side, the food-related costs are going down, oil-related costs are going down, which are the main inputs for the FMCG pack.
All right, take your point on the sectors which you're overweight on and building positions on some which you are nervous on as well. But, like we were talking about, how a lot of the investors currently haven't perhaps seen a cycle itself. So, from your wisdom, what, according to you, would be, the first signs of worry? What would be the, the proverbial canaries in the coal mines? Largely because everyone knows that some parts of the market are frothy. Everyone knows that some parts of the market are, showing signs of value. But every time it turns, people are still surprised. I mean, case in point, everyone's surprised by the decline that we've seen in a lot of these PSU stocks. Everyone's surprised by the fact that some of the large caps are actually doing well. Everyone was surprised by the decline that we saw in the mid-cap index yesterday as well. But for the last 2 months or so, everyone's been calling out the top at the mid-cap end of things. So while everyone likes to call out, not a lot of people act on it. So what would your advice to them be, and what would be the first signs of, worry emanating?
So normally, I mean, the risk is what you don't foresee. So the trigger might be something you don't foresee sitting here. That's the whole point. But I'm not surprised the large caps are going up or so on. So I mean, that's a bet that we took a few quarters ago to be away from the small cap and the really small cap and the sub 5,000 crore market cap, small cap. And even though we knew that we could see the momentum, we could see that in the short term it would hurt our performance, but you should never get, as I said, bet on getting out ahead of the crowd. So you cannot wait for a trigger, and you will not know in advance what the trigger would be. But just let me give you a few statistics on small cap. So the small cap index in 2008-9 fell nearly 80%. 78% to be exact. So, I mean, if you haven't forgotten your school maths, if something falls 80%, it goes up 5-fold, you are still at zero. So that increase came after 8 years. In 2016, that high was crossed, but that's a theoretical statement because the index was a completely different index from what it was in 2008. So many of the stocks which fell in 2008 never came back. So that's the danger in small cap, micro cap, that stocks just disappear into the blue yonder. Many more stocks have been listed in the Indian markets than currently trade now. So, less than 50% of them actively trade. So, and again, there was a mad bull market from that 2016 to 18, about 1.5 years. Again, the small cap index fell nearly 2/3. And now a lot of the micro cap managers who say that 50% compounding for 2 years or 3 years, remember, something falls 80%, it compounds 50% for 3 years, you're still down 33%. So those are the numbers to remember. If you haven't lived through the cycles, as they say, learn from your mistakes, but the smarter person who is the one who learns from the mistakes of others and doesn't forget history.
All right, doesn't forget history. But, hanging there on a lighter note, we're getting some visuals coming in from the Apple store in Mumbai out here. It's September 20th, which means that the Apple iPhone 16, 16 Plus and all, would be available for sale. And as it is around the world, people queue up for those phones as well. These are not cheap phones, 90,000 rupees to 1,30,000 a pop, and there are a bunch of people queuing up for that as well. Devina, people who would have made profits in some of these IPOs are perhaps, very excited to take those profits out and buy iPhones, iPhone 16s. You are also investing in global stocks. So what are your thoughts on Apple here? Just out of curiosity, I want to ask, and will you be buying the iPhone 16?
I haven't bought a single iPhone. I'm still on Android, so I'm the wrong person.
Did you buy the Apple stock?
So yeah, I mean, we have some exposure, but less than market weight. So we would have something, but not.
Then you're not a true loyalist. You're using an Android and buying an Apple stock. I mean,
no, but that's what I'm saying. I'm not even at market weight on Apple. In fact, we didn't hold Apple in the middle. Now I think we have a small holding, but. Yeah, so I'm happy with Android. I'm happy with the Google voice to text in particular. So I wrote my entire book on my phone. So I have no
Are you tracking the developments at Nike? New leadership emerging out there as well. The stock has been in the doldrums. Stock was up around 8%.
Whenever the stocks are in the doldrums, you keep trying out new CEOs. Happened with Starbucks also. And so, I mean, that's the way US works. So, let's see what happens with the change.
Right. Prashant, you're buying the iPhone 16?
I'm using my latest iPhone 13.
iPhone 13. That's not too bad. That's not too bad.
Before this, I was using the latest iPhone 6. So I think
I guess the iPhone 26 is what you will go for.
I'm about 5 generations behind. Devina, great speaking with you. Thank you very much for your time. Appreciate it here on CNBC TV18 as always. Wonderful. Thank you. So that's Devina Mehra with perspective on markets. And of course, a little bit on Apple versus Android as well. 50 points higher, which means we're about 50 points off the day's high. Hoodco is the next company that we're speaking with. The stocks are up more than 80% in this year. That's 2024. And of course, I mean, the details of the PMAY 2 will be closely watched by companies like Hudco and what this would mean. Sanjay Kulshetra is CMD at the company. He's with us to take some questions. Mr. Kulshetra, thank you for joining us. Good morning, sir. Prashant this side. Could you sort of parse through the details for this PMAY 2? And what does this mean? I mean, step by step, if you can just look at it and compare it to where it was earlier, the first part of the scheme, and how this differs. How is it better? How is it worse? And what does it mean for Hudco? Go on, sir.
Thank you, Prashant. Good morning. I think PMAY is the landmark decision of the Government of India, and government has came out with PMAY rural as well as urban. And the guidelines are also out, and a lot of demand is there for the PMAY. So there are 2 crore households for the rural and 1 crore for the urban. So all these kind of opportunity which are coming out of the PMAY, which is actually for the affordable housing. The program is amounting from 10 lakh crores and 3 lakh crores, so total 13 lakh crores potential capital expenditure will be there in the entire country. So 3 crores households, 13 lakh crores kind of money. It gives a good potential as a lender to the company like Hudco, which is primarily into the housing and infrastructure development financing. So this is actually a step forward from the PMAY 1.0, because government has came out with certain monitoring framework also to assure and ascertain that a time-bound implementation of the program will come. Then there was a latent demand in the market, and there is a commitment of the government that everybody should have, especially in the middle class, they should have a house and a roof on their head. So they had came out with the interest subsidy schemes as well as affordable housing on rent also. So all these kind of measures the government is taking is towards that every Indian should have one house on their top. And if I talk about the house, and house is the epicenter of the infrastructure.
Yeah, no, absolutely, absolutely. Just to get into the specific details, I mean, there was some talk at the margin when the scheme was under formulation that there will be an interest rate cap. So, you know, you borrow from the NHB with a spread. I mean, you know, you can only lend at a certain, up to a certain rate. That is not part of this, right?
No, it is not part of this. It will be totally a commercial call by the Hudco to extend the loans for the counterpart funding, which is we envisaging that it will be more than 1 lakh crores. But the conservative figures stand at 1 lakh crores. And at the same time, we are trying to tap the resources to generate some low-cost funding, maybe from the Japanese market or the USD, so that, or the multilateral banks. And we are talking with the multilateral banks for back-to-back kind of funding. We want that the concept of the affordable housing, which is being launched by the government, should be supported by the Hudco also. And that's why we are searching and tapping all the resources wherever the affordable rates are available.
Mr. Kulshetra, just to get the number right, you mentioned 1 lakh crore. Is that the amount you're looking to disburse under PMAY 2?
Yeah. Under PMAY, we had already done more than 43,000 crores. This time, it will be very conservative to go with 1 lakh crores kind of a disbursement, maybe in 3 to 4 years of the time.
Okay, fair enough. So that's by how much you could grow. I mean, and what it will add to your overall disbursements that you do this year. Let's talk about the kind of yield, the kind of profitability that this sort of lending, can bring to you. Because the understanding is that, apparently, Hudco is also the nodal agency for consultancy work and all kind of technical studies around PMAY. So does that how does that impact the yield? Does that give you any sort of consultancy fee? Just trying to understand how profitable this business can be for you.
I think this is a good profitable kind of venture for the company. Our yields will be around 9%. And the assets will be much more secured. So yield will not be a problem because states around 9%, they are ready to pay at 9%. Presently also we are lending at around 9% or 9.09%. So yield will be in the range of 9 to 9.1 or 9.2. So that will not be a matter of fact here. But at the same time, government has given us the responsibility for the appraisals and the desk appraisal of these schemes. This will rather gives us a understanding and the potential to understand what kind of demand, what kind of issues are coming of the from the PMAY in state to state basis. Because our presence is there in every state, our regional offices work from there. So our infrastructure supports these kind of concepts to work with the state government, to come towards the central government and work as a tandem between both the governments.
Sure. So just to get the timeline right, this disbursal of 1 lakh crores, it happens over how many years? What are you projecting? Because I think the original guidance was that your book will grow by 25%, you'll do 35,000 crores of disbursement. I'm guessing that did not factor in PMAY 2. Just tell us the timelines and what is the guidance now for this year?
So your figures are very correct. In the first quarter, we had already done plus 12,000 crores and we are on the right path to achieve 35,000 crores. And this we had envisaged when the PMAY was not there. So now since the PMAY is there and we are talking with all the states and the stakeholders that what kind of disbursements they are looking at, and I'm sure, pretty sure that with the kind of push and the need, in the fourth quarter the disbursement under PMAY will start. But at this point of time, I may not be capitalizing those amounts, but yes, we will be revising our target beyond 35,000 crores after November or after December, looking at the status of the scheme.
How much higher can you revise it by? I mean, looking at the status of the scheme, is there a broad expectation here? 35,000 crores turns into, say, increase by, say, 5,000, 10,000, 15,000 crores?
I am expecting at least 10,000 should start coming because states are already prepared with their DPRs. So I am expecting that the bidding and all these tender effects will come forward.
So there could be an upside risk by 10,000 crore to your current target of 35,000 crores. I wanted, a little more color on your liability side of things. Just wanted to know what proportion of your funding is currently linked to benchmark rates. Now with the US having cut interest rates, there would be, expectation for the RBI to act as well. How will all of that impact your, margins, the cost of funds?
I think this is a very positive story for the infrastructure funding in the country, as the Fed has already cut the 50 basis point and we are expecting the phenomena to be continued in the Indian markets also. Since our commitment is to fund the infrastructure at a sustainable costing, and we want that the viable and the sustainable infrastructure should be created for Viksit Bharat. And that is the aim and objective of the government, and we are following the aim and objective of the government. At the same time, we are continuously trying. You may have seen that during past year, we had borrowed around 1 billion USD from the international market, and which has cut down our cost prominently. So during last quarter, our cost was just slightly less than the 7%. So if the USD Fed is reduced by 50 basis point, and another 50 basis point is also under discussion. So we may be tapping this resource of USD borrowing in the last quarter after looking at the rate cuts, further rate cuts. So it will give us an opportunity. It will give us another resource to tap the funds.
So in that case, if you could give us a sense of what your NIMs could be this year and the next year, and also your ROE and ROA targets for this year and the medium term.
So our loan book, as we had already discussed, and I think it is in the public domain, that by next fiscal, by FY26, our loan book or AUM will be at 1.5 lakh crores, which is now at 1 lakh crores. We had grown by 30% during last on a year-to-year basis. Regarding yield, it will be in the range of 9.2 or 9.15 to 9.2. It will remain constant. And regarding the spreads, maybe in the range of 2%, 1.9 to 2%, we will be comfortably maintaining that spread. And regarding NIM also, I think 3.5% will be the absolute figures that we will be maintaining. And
ROE and ROA.
Last question.
ROE and ROA.
Regarding ROE, we had improved from 11% to now we are at around 12.7%. And next year we are targeting it will be plus 13, and we will be settling in next year by 14% of the ROE. And regarding ROA, it is 2.5%, which is in line with the market other peer companies. So we will be maintaining 2.5, 2.55 kind of ROA and around 14% of the ROE.
Okay, all right, Mr. Kulshrestha, we'll leave it over there. Thank you very much for giving us a lot of the details on how PMAY 2.0 is going to shape up the fortunes of the company. By the way, as we take the break, check out the Indian market. We're once again underperforming and the market is cooling off quite a bit. Though Asia is, retaining a bulk of the gain, but the Nifty just 40 points up, a little drift lower. Bank Nifty is completely cooled off. It's actually midcaps which are saving the day today. The midcap index is still retaining about a 0.5% move, but otherwise, the opening enthusiasm is getting sold into. Let's take that break, come back on the other side, and then we will discuss telecom full throttle. Balaji Subramaniam of IIFL Securities, as well as telecom expert Prashant Singhal join in to weigh in on what yesterday's Supreme Court decision means for the overall sector now that companies do not get any AGR relief. Welcome back. So telecom is the big story that we're talking about as the impact continues to flow through. Let's pull up the stocks again. I mean, yesterday it was a complete slam dunk on Vodafone Idea and Indus Towers. Both stocks fell quite a bit. Let's see, the rates this morning. There you go. Absolutely flat, and a lot of different sort of sides to the story. Some brokers are calling for Vodafone to go down to 2.5 rupees, but there's Nomura which says that probably all the uncertainty is over and done, so the stock can actually, the target price is still 15 rupees. So the debate is really a fierce one and it continues to rage. Let's take it forward then with the two experts that we have with us on the show. Balaji Subramaniam of IIFL Securities, as well as Prashant Singhal is with us. Gentlemen, thanks very much for joining in. Balaji, I was listening to your views even yesterday when the ruling immediately had come through last afternoon. Now, what's the sense now that, the dust has settled on this? First of all, where does this leave Vodafone Idea? I mean, are we looking at a bit of a possible end of the road? Or do you think they can actually manage to raise money somehow, debt and equity, pay off these dues, continue to expand and stay afloat?
Good morning. Thanks for having me on the show. If you look at Vodafone's revival plan or the recovery plan, it had a number of elements to it. One was the fundraise, which is both equity and debt. The other one was the tariff hike. The third one was the relief on the AGR case. So as far as the first is concerned, which is the fundraise part, they are halfway through, the sense that they have managed to tie up equity. They were in discussion with banks and other financial institutions for debt, which is still work in progress. Out of the 2 or 3 rounds of tariff hikes, which everyone is broadly expecting, we are done with the first one. So the recovery story was playing out reasonably well. But yesterday, of course, things changed quite a lot with the Supreme Court dismissing the curative petition on the AGR liability. So I think now the key thing to watch out for will be what happens as far as the debt raising plans of Vodafone are concerned. Because if they manage to raise debt despite this setback, I think they should still be broadly okay in the sense that they will continue with their capex program, which will result in improved 4G coverage and capacity. And with that, they should be able to keep the subscriber loss under check. So as far as I am concerned, the key monitorable would be the progress on the debt raising part.
Okay, so as long as they can raise that debt, the story continues. Got it. Prashant, weighing on this, what do you think? I mean, would you agree that Vodafone can still somehow scrape through? And what would be the key monitorable for you if this is to be, if this market is to continue being a three-player market?
Yeah. So I mean, I can't comment specifically on Vodafone, but clearly from a sector standpoint, this is going to be, I mean, India would continue to be a three-player market. I don't think we can, or three plus BSNL. So we can't forget BSNL. I think there's a lot of revival which is happening for BSNL as well. As far as the judgment is concerned, clearly there was an expectation, especially, you know, with all the penalties which were being imposed, that there should be some relief which should come in. But and let's hope that there's still something which could happen. There's another petition which is still in the offing. Let's see if a review petition which is there. Let's see what happens there. Having said that, I think the sector is seeing growth now. You know, tariffs for the first time have gone up north. So this amount is to be paid over a period of you know, the next 5 to 7 years. So the undercurrent or the foundation of the sector is improving, honestly. So I would not say that we could suddenly become a half player of market.
Got it. So yeah, take your point. So you're saying that this will be a three-player market, and let's see how you know, Vodafone Idea bounces back from what has been a clear disappointment. But you know, Prashant, on the broader issue of tariffs, and you mentioned the hikes that have come through, and I think there's still some chatter around how well the hikes have been digested and whether that's led to some sort of down trading, basically people, you know, let's say going for smaller packs, etc. For the remainder of this year and then on to 2025, are you expecting substantial tariff increases at all? And if yes, what could be the magnitude?
Yeah, so I think India still is, you know, one of the lowest tariffs globally, right? And in the emerging markets as well. So, and obviously India has, or the Indian telecom companies have mastered the art of bringing in efficiency in their operations. Having said that, it needs to, and there is, because of the lower tariffs, which has been there, the entire digital, you know, the entire digital economy has boomed in India. But I think for the telcos to continually invest in infrastructure, whether it's on 5G and then we're talking about 6G, the tariffs have to go up. I don't think they can sustain these tariffs which currently are there. I would think that over the next 15 months, we could see another 25% jump on tariffs. And even with the 25% jump on tariff, it's not going to impact, or it's not largely going to impact a large strata of the people who are using the telecom or telecom services. Remember that our ARPU or revenue per user is still, on an average is still less than 200. So an increase of tariff by 25% on an average adds only 50 rupees per month, which is not really a substantial amount, even for most of us, including any and every strata of the society. So.
Sure. Okay, let me actually bring in Balaji on this point. Balaji, a 25% increase, average increase in tariffs. I don't know, is that something you're penciling in your estimates? And with that, kind of wrap it up, give us an overall view at this point in time. You're saying that this will continue to be a three-player market. From a stock perspective, what would you look at? Which are your picks? And what's the potential upside? I mean, are tariffs the only real key trigger that can drive stock prices higher? Or could there be something else that you're anticipating?
So as far as tariff hikes are concerned, I know I would, broadly agree with a 20 to 30% kind of tariff increase over the next 18 to 24 months. Of course, the timing of that can be difficult to predict, but broadly that is where we should be. Let us not forget the fact that at some point in time, there could be an IPO of Geo platforms as well, and in the run up to that, we could see further tariff hikes. On that, I would concur with Prashant largely. And as far as the stock picks are concerned and stock performance is concerned, I think a lot of the tariff hike related positives is built into the stock prices, especially based on how Bharti and Hexacom have moved up. But other than tariffs, some of the other things to also keep in mind is that the telcos have, at least Bharti and Reliance Jio, are largely done with their peak 5G investments. They are, they have adequate spectrum at least for the next 2-3 years, which means that you will have the operating leverage coming in because of the tariff hikes and the ongoing efficiency improvements. And on the other hand, you will have capex intensity also coming off. So I think we are in for a period where the FCF generation should be quite healthy. So I think that is also something which will support the stock performance of Bharti and Hexacom going forward.
All right, gentlemen, thank you so much for that insightful discussion. The key takeaway for me was a 20-25% hike in telecom tariffs over the next 18 to 24 months. Let's see how that will be taken by the consumers themselves. But let's talk about the dairy space. Dodla Dairy is the next management on the show. The company aims a higher capacity of milk procurement per day, 20 lakh litres. Animal feed business as well could be one of the big triggers for them. And also, the milk procurement prices have stayed stable. Typically, when that happens, ahead of the festive season, we see increased sales for value-added products and gross margin expansion for the dairy industry as well. As we've seen in the first quarter, the question is whether that sustains or not. Sunil Reddy Dodla, who's the MD of Dodla Dairy, joins in. Thanks a lot, Mr. Dodla, for joining in. That's really the first question. First quarter, we did see a decline in milk procurement prices. Where do they stand at the end of the second quarter? We're looking at a flush season now as well. What's your prognosis for this entire year?
Thank you very much for having me on the show, and good morning to you. I think this year will be a good year. Milk procurement prices have remained stable, and quantity of milk, although the flush season is just coming in, has remained pretty stable. It's not shot up nor has it declined, and it's been maintaining a stable trend. So I think stability is the key here. This year has been a good year and stability has been good, and that is going to be helping a lot in terms of our bottom lines.
Absolute price right now of milk procurement?
No hikes in price, only marginal corrections. Either certain states it's been a little bit on the lower side, certain states it's been on the higher side, but very marginal differentials that have been happening and nothing major. So I think it is going to be a steady state of pricing that will be maintained for the current year.
All right. And what about your current procurement capacity? Earlier, when we spoke, it was closer to 18 lakh litres per day. You were looking to ramp it up to 20 lakh litres. Where does that number stand right now?
Right now, we would be at an overall consolidated basis around 16.5 lakh litres of milk. The 20 lakh litres that we are looking at is taking into consideration another year or year and a half that we have to do, for which we also have to build additional capacities in terms of ghee and powder making, which is the reason why we'll keep balancing it. But we will be able to achieve that within a year or two.
What about value-added products? Because yesterday we spoke with the management of Heritage. They said that their value-added business is growing upwards of 20%. Their fats business is also growing. In the dairy industry itself, they showed the highest amount of gross margin expansion this time during the quarter as well. With stable milk procurement prices, what is your target growth in value-added products this year? Contribution from that as a proportion of sales, and as a result of which, margins for this year?
So basically, value-added products for us will also increase. It's also been driven by increase in all ends of the value-added products, be it ice cream or ghee or other products that have come in. So this year, we will also see a substantial increase in value addition compared to last year. I think at least by 5-7%, we will see an increase in the value-added product, increase in the overall revenue that we are operating on. And also, if you look at profitability, because of stable prices, value-added increase, and the growth that we have seen, we are looking at maintaining compared to last year margins, current year margins would increase at least in their high teens.
Okay, high teens is what you're expecting. You've also, looked at scaling up your animal feed business. As a proportion of your revenue, where can that number be? Because, I'm looking at the first quarter numbers itself. It's a 10% margin business. You did about 32 crores of revenue. How much can the revenue scale by and how much can the margin scale by once you get operating leverage here?
So our revenue will almost double from last year to where we are in the current year in terms of revenue. Margin will maintain at 10%. But as a part of our overall share in terms of our revenue, it's still very small. It may be less than 5%. It will be around 4%.
All right. Just a final question before we let you go. On the industry on the whole, on the one hand, you have Amul, which is extremely competitive, doesn't want to cede market share to anyone. At the same time, doesn't have the pressures of profitability or listing as well. So, how do you deal with that big competitor? And then you have the other private players as well, vying for the same theme that everyone else is looking at: higher value-added products, increased procurement, increased distribution, and looking at alternate sources of revenue. So what's the competitive situation like right now and your market share aspirations from here?
Basically, I think as we are going forward, we are seeing a lot of consolidation happening in the markets. If you look at it as Amul, yes, is an aggressive player. He has been coming into our markets. He's also come into areas of Hyderabad. They've been here for 4 or 5 years. It's not something new that they've come in. They're doing their bit. We are doing our bit like any other business. All of us are continuing to grow and gain market share. It's becoming a larger game now. So I think in the years forward, we will see a lot more consolidation happening and a fewer companies emerging, and they'll be the ones that will continue to go forward.
All right. Thank you so much for joining in. You seem to have brought good luck, not just for the dairy industry, but for the markets as well. The Nifty Bank, which was within, touching distance of the record high yesterday, has now gone ahead and hit that record high, 53357.7. So we've crossed past that, doing extremely well for the markets.
Absolutely. And, finally we get there, right? I mean, yesterday was just 4 or 5 points short of it. But this is now looking better. Somebody put it, and we'll have to sort of look at the data. I mean, if names like HDFC Bank, etc., don't start to perform now, I mean, their last couple of years' returns will fall below their FD returns. So, they've got to. And HDFC Bank is up about 0.75%. And Nifty Bank is up about 300 points or so, 0.5%, 0.6% higher. And of course, look at what that's done to the market, right? It just had 30 points there were just 30 points on the Nifty about 15 minutes back. We're up 150, 160. So we're almost basically back at the day's high for the index. Actually, the day's high was made just now. So there's a sharp ramp up which we've seen come through. And, on the index, if I just want to sort of take a look at where this bulk of this is coming from.
It's HDFC Bank, Prashant.
And
all
ICICI
of that is
as well.
HDFC Bank, ICICI Bank. The banks are doing well. What's also good is that, while the frontline indices are doing extremely well, there hasn't been any let up in the mid-cap end of things as well. Yesterday, by the same time, we had the advanced decline lines come pretty close to each other. And right now, they're maintaining their distance. 1,600 stocks on the advancing side for just about 700 stocks.
So
on the
HDFC Bank, ICICI Bank, between them are adding about 40 points, 40 Nifty points, and then Reliance is adding about 20 index points as well. So we should have that up as well. That is RIL. So these are the three names responsible for about 60 of the 160 that you see on the Nifty right now. We take a break. We're back. Manisha will put the focus on commodities on the other side. Stay tuned.
a major blow to Bharti Airtel and Vodafone Idea in the AGR dues case. The Supreme Court rejected curative petitions filed by the companies alleging calculation errors by the government in the 2019 ruling. Both companies owe more than 1 lakh crore rupees to the government. Ashmit Kumar is here with the details. Ashmit, take us through what entailed in the hearing today.
Well, first, to establish the significance of this development, let's bear in mind this was a curative petition. This was the final legal remedy that was available to Vodafone Idea and Bharti Airtel. With the dismissal of this application, that of course is the bigger takeaway. The bench headed by CJI, the curative petition has been dismissed by the Apex Court. That's the bigger takeaway. But of course, in terms of understanding the significance, this was the final court of appeal. This was the final legal remedy that was available. With this decision that we've seen today, the AGR issue has been put to rest. It has been finalized. The Supreme Court has had the final word that there is no dithering, there is no changing of the quantum of the AGR demand that was first levied. Bear in mind that this judgment came back in 2019. At that time, the burden that was cast on Vodafone Idea was north of 58,000 crore rupees. Burden cast on Bharti Airtel was north of 43,000 crore rupees. Now, of course, those figures have grown dramatically with the levy of the interest component. But nonetheless, the long and short is that the contention that has been raised by the telecom companies that there are...
All right, welcome back. 160 on the Nifty is what we have. 25,576 is where we're at. And that's about 0.6% higher. Manisha is here with what's making news and top. Okay, I think what we'll do is we'll go to Manisha in just a bit. Let me quickly get a quick view in from Mitesh, who's with us. Mitesh, good morning again. Bank Nifty finally making a high. What would your trades be?
Yes, Prashant, I think the private sector banks like HDFC, Kotak, I think are clearly driving the Bank Nifty higher, and that's propelling the Nifty as well. What is also happening, there's some kind of, short covering bounce is taking place on the IT stock. So we've gone to new highs. The current trade which I have is a buy on Maruti. It's done a good base building over the last few days, is now breaking out. So buy here with a stop at about 12,380. And look for a target of around 12,800 to about 12,900 range. And Pharma is a pack which is showing some signs of profit booking. So I have a conditional or a trigger sell on Aurobindo Pharma. If it starts trading below 1509, take a short with a stop at about 1535 and look for targets of around 1440, 1430.
Okay, all right, got it. Mitesh, thanks very much. You have a good trading day and we'll touch base with you later during the session. Now over to Manisha for all the commodity cues. So Manisha, how's it looking?
Well, I'm looking at precious metals right now, and within that as well, silver finally seems to be coming of age. Overnight, we've seen nearly 3% of gains into this one, and $31 an ounce is back in the international markets there. When you look at the range for 2024, it has been a huge $22 to $32 an ounce. The support comes in on the back of dollar index, which has slipped off its recent highs. And then the markets also have seen support from the run-up in gold, the US Fed rate cut, and the expectation that you would see another 50 basis point rate cut in the next two meetings from the US Fed as well. So when you look at the silver markets as an individual fundamentals as well, this is going to be a fourth year of deficit. The global markets are in deficit in 2024, and also this is the second largest deficit expected in 20 years in this year when it comes to silver. That is where the support's coming in. Silver global deficit, when you look at those numbers as well, has been increasing. 2022 was a record number. Last year was a deficit as well. And for this year, 215 million ounces of silver deficit in the global markets is anticipated. When you look at the silver demand, well, that is anticipated 2% higher as compared to last year. So we're looking at 1.2 billion ounces of demand expectation for this year. When you look at the global silver industrial demand, well, that has been increasing as well. Last year was a record 654 million ounces. This year is a record 710 million ounces of an expectation as well. And with all of that very strong fundamentals where you have a deficit and record demand expectation, the outlook for silver has been quite bright as well. These are the reports that have come in from global banks and brokerages. Citi expecting $35 to $38 an ounce of a price in next 12 months. UBS talks about 34 to 36 by the end of this year itself. And JP Morgan talks about an average of $36 an ounce in 2025. So from 31 currently, the expectation of silver prices going further high is quite high.
All right, so not just gold, but all that glitters can also be silver, as those price targets tell us. Thanks very much for that, Manisha. Well, before we take our break, let's actually put the spotlight on something else that's been really captivating consumers' mind share, and this is the iPhone launch. It's the much anticipated launch of the iPhone 16 that hit Indian stores today, and we have Rachna at one of the Apple stores here in Mumbai, so let's get a sense of the buzz. Rachna, what's going on?
Well, I'm here at the Apple BKC, which is an official Apple store in Mumbai, and long serpentine queues can be seen outside the store. Even now, 2 hours after the store officially opened at around 8 a.m. And before that, also the mall gates opened at around 6 a.m., but there were queues that were seen outside the mall. At around 6 a.m., these people were allowed to come inside and queue outside the store. And one of the first people to enter the store was Mr. Ujjwal Shah, who has come all the way from Ahmedabad, and he's joining us now. Thank you so much, Ujjwal, for joining us. Can you tell us how long did you wait to get inside the store? What did you buy?
I've been waiting for 21 hours. I got the 16 Pro Max in white titanium and also AirPods Max.
Right. So that is exactly what the people outside also are waiting for, the iPhone 16 and the 16 Pro series that is going live today for sale. Now the price range differs. It goes from 80,000 all the way up to over a lakh, almost to 2 lakh rupees. So how much did you pay for your iPhone and what were the specifications that attracted you to come all the way from Ahmedabad here in Mumbai?
I paid somewhat around 160, 165 for this phone. And last year also I did the same thing. I was in the queue for 17 hours and I was the first one to enter the store. So that experience was so good that I was sure that I would be doing it again.
Right. And you were also here when the store opened and Tim Cook was in the city.
Yeah, I was also here for the store opening and I got a chance to click a selfie with Tim Cook. So that excites me so much.
So you are an Apple fan through and through. But what is it that you like about the brand and about the phone that you're looking forward to?
I'm in love with the ecosystem. No other company can build an ecosystem that's similar to Apple, not even close. And Apple has it like history. It has been the best company for making a lot of products.
Right. Like I was saying, it's been over 2 hours since the store has opened, and even now the queues are coming in quite strong. There are actually 3 different queues outside the store. The store managers are taking them in at around about 40 to 50 people are taken in at once, and then there are these experience desks. This is the iPhone 16 one, where you can see all the colors that the phone is now available in being displayed. Similarly, there is one for iPhone 16 Pro and for the iPads and for the watches.
All right, Rachna, that's, I think the fan mania is real, right? And going by some of the conversations you're having, it hasn't dipped a bit. Year after year, we see, the newer variants get launched and the fans keep coming back. But I don't know, Prashant, 20 hours of a wait for something in a queue. What would you wait for? 20 hours in a queue?
I don't know. But I guess it's just, you could, and we were having this discussion that you can order. Apparently, you can now order, and I think Big Baskets.
Actually, on your phone, right?
Through Big Basket. So at 8 in the morning, apparently, they delivered
Along
iPhone 16.
with your milk and your eggs.
An iPhone
as well.
But I think it's also perhaps about just the experience of being there and waiting and sort of, getting the, being the first, as that gentleman told Rachna earlier on. So that's iPhone 16 and what's happening here in Mumbai. We'll take a quick break here. On the other side, we bring you excerpts of our conversation with the JP Morgan Brain Trust ahead of their investor conference next week. Stay tuned, that's coming up.
Computational errors. There are administrative errors in arriving at that AGR demand that was levied by the DOT. That concern has been set aside. The Apex Court saying that no case has been made out. It does not feel the urgency to indulge this matter anymore. And with that, the curative petitions having been dismissed by the Apex Court and the issue being put to bed, put to rest, finalized by the Apex Court, AGR demand is here to stay.
We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond.
Welcome back. Well, ahead of the JP Morgan India Investor Summit, Lata caught up with the JP Morgan Brain Trust, Sajid Chinoy, Sanjay Mukim, and Kaustubh Kulkarni, and discussed the Fed decision, the US dollars move, and of course, the India growth story, along with a whole lot more. Take a look.
It matters why the Fed is cutting. If the US does not go into a recession and there's a gradual slowdown and the Fed is cutting and this is a soft landing, the dollar will weaken. Right? And in that environment, all emerging market currencies will strengthen. But if the US slips into recession, historically that's been a risk-off event. And then the dollar strengthens. So it really matters why the Fed is cutting and what the US growth backdrop is. In the case of the rupee, I think we should be realistic here. Don't expect too much rupee appreciation. I think the central bank has correctly ensured that the trade-weighted real effective exchange rate has been broadly stable. China has massive excess capacity that's flooding into all countries, including India. There are risks that if China continues to disappoint, the CNY will depreciate. The last thing India wants to do is give China a further cost advantage by letting the rupee strengthen. So if exports are our focus, if the focus is to reduce imports from China, we don't want a stronger rupee.
Absolutely.
Right? And so in a world where the dollar is weakening and other emerging markets are strengthening a lot, if the RBI correctly buys dollars and does not let the rupee strengthen, in trade-weighted terms, the rupee is weakening, and that's good for competitiveness. Yes. One last thing I'll say is our reserves, people keep asking, why is the RBI hoarding so many reserves? Our reserves are not earned reserves like current account surplus countries. Our reserves are borrowed reserves through capital inflows. For every dollar the RBI has, there's a dollar sitting in the economy, a liability in the economy which can unwind. So I think the strategy has worked so far. Expect if there's a large BOP surplus, the RBI will buy these dollars and any rupee appreciation will be very, very modest.
Okay, very modest.
Very modest.
But, just a word more on growth. As it is, the trade deficit was, widening. In the last August number is not very flattering.
Yes.
So, do you think that exports are already finding resistance in global destinations?
I think
exports fell by 9.3%. Not a small number.
I mean, the main reason why the trade deficit ballooned was gold imports.
Yeah, of course.
But you're right. I think the manufacturing goods cycle around the world is struggling, and India will not be immune to that. Part of it is because China has just got so much excess capacity. So we have to get used to the fact that, goods exports are going to slow. Service exports are holding up well. But we should not worry from a trade deficit perspective.
No, not trade deficit. I'm worried from a growth perspective.
No, it's a very important concern that the combination of the goods cycle slowing and Chinese excess capacity means the goods sector around the world is struggling, and India will be no exception to that. So we'll have to hope for the fact that if X doesn't provide as much support, then C and I, right, consumption and investment, have to make up the difference.
Okay, you're getting into an economics class now. Okay, but Kaustubh, the more important thing is EMS company. Do you see this China Plus One continuing? We have seen fair amount of success in the EMS stocks, the Dixons, even the Tata Electronics. The South is seeing a burgeoning of investments. Will that continue?
Yes, for sure, Lata, because India has started the whole value chain on a very integrated basis on EMS side, and the amount of client dialogue that we are seeing from some of the most sophisticated product companies who want to get their products manufactured in India has substantially increased in the last 12 months. And that goes for EMS and also for some of the more high-end stuff like semiconductor. So when you have the whole prospect of a value chain being created and some very, very large and responsible companies are driving the investment and growth in India, obviously I think you're going to see very, very significant growth in the sector. So this sector therefore has the potential and prospect of creating very large number of jobs as well, just given the nature of work that goes on the EMS side. And hence it's in line with, let's say, what the government would also like to do is to start looking at and bringing sectors which have capability to put India as an important partner in the global value chain, but also contribute to substantial job growth in the country.
Okay. Sanjay, on that, are these attractive stocks?
Well, I wouldn't comment on...
I mean, see, don't go about the near term. I mean, you know you are considering we are in a late cycle now, but more generally for a longer term investor, I'm not asking you to name stocks, but is that a sector? There are two sectors which have burgeoned. This EMS sector, you know, those making Apple iPhones and laptops and assembling, as well e-commerce. These two, how do you look at them?
Well, the growth potential for both of them should have huge runway, Lata, right? And like Kaustubh was saying, this is just a start. We need to create more back-ended, value additive component manufacturing in India. And this is very encouraging. It has multiple impacts. In fact, we extrapolated some PLFS data, Lata, and some of the data is very fascinating. That India has added about 5 million manufacturing jobs in the last, 10 million manufacturing jobs in the last 5 years. 90% of that has gone to women, right?
Oh, wow.
So you had the huge problem in India where labor force participation for females was very low. That's actually turned a corner. And this is, of course, extrapolated from a small sample PLFS data. But nevertheless, my argument is this is just a start.
There is a burgeoning of manufacturing jobs.
There is. And we are seeing it in many sort of verticals within that EMS, within manufacturing in general across the country. And there's a lot that can still be done.
Okay. This fascination for FMCG stocks, or rather your pro-FMCG stance, you see that continuing? I mean, are you convinced that there are that many jobs, multiplier effect, good monsoon, etc.?
I wouldn't go that far, right? And the reason, there's two reasons we've looked at FMCG a little bit favorably. And one is, of course, purely tactically rotational. Because India, if you look at the behavior of stock markets, is a very mean reverting market. And because of the flow of liquidity, investors are always on the lookout for nice quality stocks that have underperformed for a while, and FMCG fit that bill very nicely, right? And then you have companies coming out and telling us on the margin really that things in rural India might be getting a little better. So to your question, I'm hesitating to give you a right answer. Are we seeing conviction that things are getting better at lower income consumption? Not yet. Okay. It's more of a hope trade. That's right.
Okay, well, to be fair, we had Sunil D'Souza of Tata Consumer, and he said much the same. It's hope that it should get better. H2 should be much better than H1. But Sajid, I want numbers. What are you expecting in October? Stance change? First rate cut, December?
We lean towards the first rate cut in December. The stance change in October is a little tricky. Financial conditions in India are very benign already. Like, look at stock market valuations, look at credit spreads, right? And so one risk the RBI runs is, even if you want to signal a cut in December and you change your stance, you'll get a further easing of financial conditions. So at some level, some EM central banks are stuck between a rock and a hard place where you have to sound hawkish until you actually switch for risk of making financial conditions even easier. So it's a very close call, but I think we're leaning towards the first cut in December, by which time you'll have a second quarter GDP number on November 30th, and more importantly, conviction that inflation is settling in the low 4 handles where we think it is for much of 2025. We haven't spoken about the fact that crude is 10% down at 73. Commodities are down. This is good for growth in terms of trade shock.
So what is your year-end inflation? Is it RBI's 4.5?
A little bit lower. So actually, our inflation forecast for this quarter is about 4%. For next quarter is 4.3%. So it's a little bit lower than the RBI's forecast. And I think once they make those downward revisions, we're getting closer to the rate cycle starting. The last thing I'll say is the trade-off for the RBI is to use rates for growth and inflation. But we have to be cognizant that financial exuberance doesn't run too far ahead. So you may need to see more macroprudential tightening to curb financial exuberance, even as you're cutting rates to address growth and inflation.
Okay. Actually, I was going to ask you that because the Reserve Bank would be worried about, possible froth in the economy. But before I come to the one number, which I'm going to ask you, how would you look at financials in the context of rate cuts? And as it is, we are seeing, the market yields go down because of the bond inflow. 6.75 is here. So, and most of the loans are benchmarked to repo rate and T-bills.
Yes.
But deposits are not falling. So, why would you be, are you positive on banks, non-banks?
Look, that there will be pressure on margins is without doubt, right? It's the ability of which segment of which financial can reduce that impact or mitigate that impact the best, right?
Or counter it with growth.
Counter it with growth, we'll see. But ultimately for growth, you need the raw material for growth, which is scarce at the moment, right? So it's a question of time where the entire system has to go back down or track the level of raw material available in the financial system.
So NBFCs would do better then?
Technically, yes, historically. But we must also remember that they are not direct deposit taking, right? So they have a disadvantage.
So their cost of raw material also goes up.
Exactly, right? So it's in this sort of setup, the deposit franchises, the PSU banks who are flush with liquidity, at least relative to others, look a little bit better, to be honest. But we do like some segment-wise NBFCs where we see the underlying business demand being strong enough to mitigate it. So you have to be a little bit nuanced with the view that everybody's margins is coming under pressure.
Okay, well, the number question first to him and then to you. Do you expect, Kaustubh, that the FII flows, just gets unblocked next year? People wait and then go overweight on India, or at least equal weight on India. So what would your forecast be of FII flows next year into equities, next 12 months?
I think there are two key themes that are driving the forecast for FII flows. One is, of course...
More than last 12 months?
More than last 12 months.
Okay, yeah. And substantially more.
And maybe at least 10-20% more, just because of the quality of supply that is going to come to the market. So I think we always need to look at FII flows in terms of capital market activity. FII flows is not only chasing secondary market purchases. Indian capital market, just to give you some sense, Lata, in 2020, the peak for global equity capital market volumes was in 2021 for all markets. India is the only market where I think so far we have almost raised $45 billion of equity through primary and secondary. By the time we are completing this year, we will get to $55 to $60 billion of total equity raised in the market, which is 40% higher than our 2021 level. And everywhere in the world, all other markets are 20 to 40% lower. Oh. So when you have this amount of volume of activity, then it is just not logical or possible that FIIs will not be very, very closely tracking. And we at least don't see any reason or clouds on the horizon why this momentum that I think we have created is going to slow down getting into 2025.
Just one word, are there more investors queuing up for your investor conference this time?
Yes, so I think
how many more?
This year we have about 1,000 people attending our conference.
Okay.
The number of investors, and we stopped registrations because we couldn't accommodate physically, I think, the requests we were getting. But we're about 35% higher in terms of number of equity investors who are coming up. And more importantly, a very good mix between Asia, Europe, US, and of course, India. So we are getting, hopefully, I think, what is this telling? I think it's just telling that investors also are deeply caring about what's happening. And therefore, if they get a good platform like us, they are keen to participate.
The most important question. Therefore, what's the kind of equity gains? Not just Nifty, generally for the investor in 12 months, in 24 months.
We are relatively cautious on that front because the Nifty is close to the upper end of our forecast range for this year. And this, of course, you struggle to argue that, returns will be generated only on multiples, right? You need to see earnings growth. For FY25, the base case consensus is about 12%, but in the first quarter, we've got sub 5%.
Yes.
Right. So there is a little bit of a tone of caution we're using, and we believe that there needs to be a healthy consolidation or maybe, let's say, a correction even before we start to talk of further strong returns.
So not in the next 12 months, but the next 24 months are glorious.
Yes. So look, ultimately, equities are relative growth instruments, right? If India's growth sustains, then returns will come. It's as straight as that.
CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
I think what we saw today is really on the part of the Fed an effort to recalibrate their policy stance by really bringing down the funds rate to a level that's more consistent with the easier labor market conditions. I think what's pretty clear is that the Fed is going to be cutting more. It's going to be. It made very clear this I think today that it's not going to cut rates at a very rapid pace. It's no longer going to do 50 basis points. It's more like in the 25 basis point range, unless we see a very substantial deterioration in the labor market.
IIFL Finance zooms more than 10% after it receives the Reserve Bank's nod of them lifting restrictions on the company's gold lending business. This comes after a 6-month ban on the company for sanctioning gold loans.
Meanwhile, the news of relief for IIFL Finance for their gold loan business has negatively impacted competitors like Manappuram and Muthoot Finance. Both stocks are down in the red.
ITD cementation zooms nearly 17% following reports that the Adani Group is set to acquire the promoter's 47% stake in the company.
Industar Capital Finance has zoomed over 5% after the company's board approved the sale of its arm Industar Home Finance to EQT for 1,750 crore rupees.
Reliance Infra climbs 10% after the company's board approves a fundraise of up to 6,000 crore rupees via a QIP and preferential issue of shares.
Hello and welcome. You're watching Chartbusters here on CNBC TV18. I'm Hormuz Fatakia. With me is Manglam Malu. And Manglam, after the first hour, when the Nifty played out the swinging ball, it seems like the wicket has eased out and we're moving to new highs.
We're moving to new highs, and how? We're very close to the 25,600 mark on the Nifty itself. The Nifty Bank, 53,400. It was perilously close to its record high yesterday. Today has gone out and, hit it out of the park, so to say. And to use a test match analogy, yesterday was the day where one was looking at the ball moving on, both sides, either directions. And now, once the reaction was out, the response of the market has become visible. We saw that on Wall Street overnight, and that's reflected in our markets as well. The market breadth does extremely well. So we have 1,600 stocks advancing for about 700 stocks, which are, on the obverse side today, which is quite a positive thing, largely because of the adverse reactions that we've seen in the market breadth, in particular, over the last 4 trading sessions. But, who's to say this is that kind of market and this is that kind of a game where even Ashwin goes ahead and hits a century at a time when Rohit Sharma, Virat Kohli and Shubman Gill don't do well.
Absolutely, and that's been the case, right? The Nifty was doing well. The Nifty Bank in the last 7 sessions has gained almost 2,500 points. So it shows the kind of move that the banking heavyweights have contributed to this recovery in the Nifty Bank. Now 53,400, almost 53,433 is the new high on the Nifty Bank that we made this morning. But good time to get in a technical check as well. Manas Jaiswal is joining us this morning. Manas, good morning. Thank you for joining in. Well, it does look like the Nifty is positioning itself for 26,000 by the end of this series. Does that look like a probability now?
Good morning. So you are absolutely right, because the next target for Nifty should be 26,000. Because I think we have seen some consolidation, but now Nifty is ready to run again. I think even at current levels, one can take a long position. Nifty is continuously taking support at 10-day moving average. So keep your stop loss below 25,400. Take a long position at current levels, and target would be around 26,000 on Nifty. However, if you're talking about the stronger index, then I think Bank Nifty is looking more stronger than Nifty, because the Bank Nifty has given a fresh breakout. After this breakout, you can see almost 1,500 to 2,000 points rally on Bank Nifty. So positionally, I think you can take a long position in Bank Nifty, keep your stop loss below 52,800. And now the new target would be around 55,000 on Bank Nifty. That is positional call.
55,000 on the Nifty Bank, positional call. A lot of stocks doing extremely well as well this morning. Manas, what's on your list?
So most of the auto stocks are looking very strong on the chart. So I would like to go with the M&M, because we have seen some consolidation, but now since M&M has given a fresh breakout on the charts, one can take a long position here. The stop loss should be around 2820, and here the target would be around 3,025. So here one can take a long position. Second is from midcap, I think one can look at IEX, because stock has been making higher tops and higher bottoms from the level of around 190. But now since stock has given a fresh breakout, take a long position here. The stop loss should be around 226. However, your target would be around 240.
EX and M&M are the stocks that you've recommended. They'll come up for our viewers on the screen as well. But Manas, just before we let you go, I wanted your thoughts on the metal space. Metals are doing extremely well today. Typically, after Fed rate cuts happen, commodity-facing stocks continue to do well. The hope is that maybe commodity prices will increase as well. We're seeing that on a couple of these, non-integrated players. We have JSW Steel, which has moved higher. Tata Steel is holding mildly in the green, but a lot of these stocks doing extremely well. Do you have any chartical call on them?
I think if you want to trade in metal counters, then I think you have to be very much selective, because Tata Steel is moving sideways. Many more metal counters are moving sideways, but look at JSW Steel, look at Hindalco. These two stocks are looking strong on the charts. I think one can definitely go long in JSW Steel, where stock has been making higher tops and higher bottoms from the level of around 860. And today's stock has given a fresh breakout on the charts with great volumes. So I think one can take a long position here. Stop loss should be around 959, and one can set the target of around 1,025 for JSW Steel.
One final word on Vodafone Idea as well, Manas. After yesterday's fall, very distorted looking charts now, I guess.
I don't want to comment on Vodafone Idea, because I think technically it is very difficult to take a call on Vodafone Idea, because this is news-driven stock now.
Understand that completely. Manas, we have no reason to speak to you for so long, apart from the fact that you seem to be a good luck charm for the market. When you started, the Nifty was closer to 25,587 or thereabouts. Now we've seen a big zoom on the way up. Seems like a bit of a melt up, just a vertical rise. 25,650 on the Nifty. The Nifty Bank very close to 53,500. Just when we started the show, we're looking at it closer to 53,400. So it's been a big surge. And what has led this surge? It has to be the heavyweights. HDFC Bank, just look at, the way that stocks moved higher. Look at ICICI Bank, that continues to do well. The other heavyweight, we have Reliance, which has moved to the high point of trade as well. So all of them doing well, batting for the bulls. ITC doing equally well in today's trading session as well, has recovered from the lows. So all these indices doing extremely well, of course, led by the banking heavyweights, which are contributing a majority share of the index gains today on the Nifty Bank, and as a result of which on the Nifty as well. 25,650 is here, Hormaz.
Oh, well, it's a fabulous move. It's a fabulous Friday, if you can call that, for the markets. Then, of course, yes, HDFC Bank and ICICI leading the index higher. But shifting focus to our special segment where we get you a few ideas for profit from Money Control Pro, Neha Dave now joins us today to talk about a stock that she is tracking very closely.
Today's stock idea is 361 Wealth and Asset Management Company, which is one of the largest wealth manager in the country and is one of the key beneficiary of the structural growth seen in the wealth management industry. No wonder the company reported its highest ever quarterly profit in Q1 FY25, even after providing for an exceptional expense. Earnings growth was aided by strong growth in assets and healthy net inflows. Thanks to booming capital markets, there was a significant rise in the transactional income, and that turned out to be a key driver of profit in Q1 FY25. While the assets under advisory, distribution and management cumulatively stood over rupees 5 lakh crore as of June end, the management's focus is on growing the assets that earn recurring revenue. Consequently, recurring revenue constituted around 63% of the company's total revenue in Q1 FY25. High proportion of recurring revenue enhances earnings visibility and is likely to hold the company in a relatively better state in a volatile market environment. The company's core segment, consisting of ultra-high net worth clients, is likely to see the highest growth given the K-shaped economic recovery after the pandemic. The company has also entered into the mid-market segment consisting of HNI clients and has forayed into global markets. Both of these segments are likely to go live in the current fiscal. The recent acquisition of ET Money will give the company the presence in the mass market. Now, talking about the valuation, the stock is currently trading at around 34 times earnings estimated for FY26, which is definitely rich. However, the premium valuation is justified given the strong business fundamentals, tangible return on equity of about 30% and good visibility of earnings growth. Long-term investors should keep this stock on their radar.
All right, speaking about the market itself, can't take your eyes away. Once again, the markets moved with a lot of gusto. The chart of the Nifty comes up for you. All-time high for the frontline indices. The Sensex gone ahead and scaled 84,000. So we were celebrating when the Sensex hit that 80,000 mark. 84,000 has come in quick succession. The Nifty Bank 53,500. It's a 1% gain, and we're not done with more than 90 minutes of trades so far, Hormaz. All these stocks are surging. Up until now, we thought the Nifty Bank was leading the gains. Yes, it was leading the gains, still leading the gains, but it's 0.9% higher as against the Nifty, which is 1% higher, which only explains that you have non-banking components as well contributing, and the largest contributor out there have to be Reliance and ITC. Reliance, with its big weight, still about 8% away from its record high, while the frontline indices are at their record high, so just keep an eye out on that one. HDFC Bank as well, 4% away from its record high, or 52-week high, not record high. For 52-week high for HDFC Bank is 4% away. So if these two big boys can go ahead and hit their 52-week high, record high for Reliance and 52-week high for HDFC Bank, then who's to say 26,000 could be very close. Right now, we've had just ICICI Bank hit that record high mark, and as a result of which, we've seen the fireworks in the overall market.
The way we are going, it won't be a surprise if that might just end up happening today itself. But yes, ICICI Bank, the frontline batters may not be in form for cricket, but the frontline batters for the Nifty are definitely in full form. ICICI Bank up for the 5th straight day today, up 12% now in a month, and shows in the Nifty Bank as well in today's session. Other contributors though, Mahindra and Mahindra and L&T and Maruti Suzuki also contributing to the upside for the index. Continuing our focus on the markets, but right after this short break. Stay tuned, we'll be right back.
All Asian central banks can cut rates today, including the RBI. But my colleagues here, we believe the RBI is not, not going to be aggressively cutting, i.e. the RBI is going to behave in a different way from the Fed. And actually the RBI in recent months has been actually counter-cyclical, because they've been doing these preemptive regulatory measures as regards the banking system. And so I would assume the RBI will cut rates once before the end of the year, but I could be wrong.
So when India, which is a very big abuser, he happens to be coming to meet me next week, and Modi, he's fantastic. I mean, fantastic man. A lot of these leaders are fantastic. You have to understand one thing. They're 100%. These people are the sharpest people. Then
Welcome back. Well, the market is the news of the day. We have almost 1,000 points on the Sensex. A bunch of stocks are doing extremely well as well. IIFL Finance is one of them. Ritu's been telling us this since morning that, there is positive news out here with the Reserve Bank actually lifting all the restrictions on the company's gold lending business. Ritu, tell us what it means for them. The street is clearly excited. The stock is up 10%. You've been at it since, 7:30 a.m. today?
Well, yes, for the company, this is big news because gold loan is a significant portion of their business, and for 6 months they were facing this ban, which is now finally being lifted as of yesterday, and that means that IIFL can now resume sanctioning, dispersal, assignment, securitization and sale of gold loans after a 6-month cap. Now remember, RBI had placed restrictions on them on the 4th of March to begin with because of material supervisory concerns, and those included things like loan-to-value ratio breaches, significant dispersals and collections in cash in excess of the amount allowed, and so on. There was a special audit which was instituted by RBI to look into these deficiencies. That concluded in June, and now finally the restrictions have been lifted. Now the impact has been felt very thoroughly by the company. For instance, their gold loan AUM that shrank from about 26,000 crores before the ban to less than half, in fact down 53% in just 5 months to about 12,162 crores by August. The share of gold loans in their consolidated AUM, which was about 32% earlier, had fallen to 21% as of the first quarter, and 1 million customer accounts were closed during this period. They also had to repay around 13,500 crores to banks, which is tied to co-lending and direct assignments. So the lifting of these restrictions removes a big overhang on the company, and of course the stock. Jefferies has upgraded the stock to buy with a target price of 595 rupees. They expect a gradual recovery in the gold loan disbursements, which they expect to normalize in the next 1 or 2 quarters, though the loan book, they say, could decline further to about 9,000 crores by September. Now, while the recovery to ban levels may take some time, easing margin pressure and high gold loan prices could offer some support.
Good news indeed for IIFL Finance, showing up in the stock price as well. 9% higher now on the stock at 540. But moving on, Reliance Infra is the other one. That is the other stock that's up 10% today after the company's board approved a fundraise of up to 6,000 crore rupees through a QIP, a preferential issue as well. Vivek is joining in with more details on that. Vivek.
Well, that's right. In the past week, the ADG group stocks, Reliance Infra, have been in focus. The company number one went ahead and did a deal with Edelweiss ARC, where they went ahead and extinguished all of the liabilities they had via the NCD issue from Edelweiss. Now, very interestingly, yesterday to the exchanges, what they've informed is that they've announced a fundraise, like you mentioned, via a preferential issue as well as a fundraise via the QIP route. preferential issue of over 3,000 crore rupees, and the entities coming in are well-known investors. Number one entity is from the promoter group itself, which is Realty Infinity Private Limited. Two non-promoter entities, amongst them Florentine Innovation, which is led by Matthew Syriac, and Fortune Financial and Equity Services, that is the other entity that has come in. Along with that, the company has also approved a fundraise via the QIP route of close to 3,000 crore rupees. So debt repayment as well as fundraise is something that's keeping Reliance Infra buzzing in the session today.
All right, Vivek, thanks a lot for that. That's about Reliance Infra. Has been doing extremely well today, not just today, but over the last few weeks as well. We've seen a big rally in that stock itself. But another stock which is doing well today, and this is ahead of the company's board meet, it is Mankind. And there's also an initiating coverage on the stock. Ekta joins in to tell us more. Ekta, the stock doing well?
Well, I'll start with the fact that there is a board meet today for Mankind where they are going to be considering fundraising. The board will approve fundraising via NCDs, commercial paper, debt securities or any other securities. Now, the fundraising, remember, is expected to be in lieu of the BSV acquisition, which was bought for a valuation of around 13,630 odd crores and is going to be funded via debt, equity, internal accruals. The company does plan to raise around 4,000 crores from internal accruals based on what they told us, and estimate around 70% of funding coming in from debt. They could also look to probably divest some non-core assets that they do have, such as 2 hotels under the Westin brand. Now, separately, Investec has written on Mankind. They've initiated with a buy and a target price of 3,300. It's their top pick. They've said that the BSV acquisition has potential to drive growth, according to them. BSV's specialty strengths, which is R&D and sourcing as moats, would further Mankind's vision. Now, the street underappreciates the specialty business moat of BSV, both in the near and the longer term. And BSV could scale new heights and potentially generate $1 billion in sales plus 35% EBITDA by FY32. They forecast an 18% EBITDA CAGR over FY24 to 27, and they're valuing Mankind at around 30 times September 26 EBITDA.
Ekta, thanks a lot for that. 3.5% higher. Mankind Pharma slightly off the highs of the day. But the Nifty above 25,650, Sensex above 84,000. Continue our focus on the markets right after the short break. Stay tuned. We'll be right back.
A little bit backward. They're not. They are at the top. You know the expression, they're at the top of their game, and they use it against us. But India is very tough.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since now.
Welcome back onto a special conversation that Shireen Bhan had with Salesforce India's chairperson and CEO Arundhati Bhattacharya, where she said that the Federal Reserve's aggressive move was reasonable considering the economic data print and higher rates. Listen to a slice of that conversation.
Let me ask you a broader question as far as the global economy is concerned. We've just seen the Fed announce a 50 basis point rate cut, kickstarting.
Which was what the market was betting on.
The market was hoping for, and it's on the aggressive side. Do you believe that this is going to make a material difference now as far as the complexion of the global economy is concerned?
I definitely think so. You know, the Fed and what it says and what it does still has an inordinately large impact on economies of other countries. Okay.
Wall Street has already given it a thumbs up. So,
yeah. So Wall Street will give it a thumbs up. The general, in fact, yesterday I was with a few people and I was saying that 50 basis points is what's going to come. Yeah. And they were saying the market wants 1. I said, come on, I said. You know, you have to be reasonable. You can't keep going up.
Expectations.
Yeah, you temper your expectations. You can't do that. But I think a 50 basis points is, I think, reasonable, given everything else, given the fact that it has been kept high for a very long time, given the data print that has come recently. And definitely it's going to have a very good impact on the rest of the world economy.
All right, that's some word coming in on the world of fintech and artificial intelligence, but no artificial intelligence here. 25666, 53577 for the Nifty Bank and the midcap index. Holmas, you want to show us your Friday moves? Come on, do that before we wrap up on this edition of Chartbusters. While Holmas and I groove a little bit, you take a short break, and on the other side, we'll have the team of Trading Hour coming up next.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
RBI Monetary Policy Committee of Reserve Bank of India will take a decision at appropriate point of time. Right. And my sense is that their decision is based on what is good for the Indian economy. We should not read too much into the event which happened yesterday.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
But the key point here is what the Federal Reserve believes is the neutral rate. So my guess that is probably in the 3 to 3.5% range. So even if the US achieves the soft landing, so to speak, we're probably going to be at between 3.5 by the middle of next year. But in terms of the short term, I'm surprised I'm surprised it's 50 basis points. Anybody who can read and listen is contrary to the messaging going into the meeting, so my guess at the margin is political.
How about listening to global market maestros before crafting your investments?
Good morning. Welcome to Trading Hour. I'm Sonal Bhutra. With me is Vivek Kayar. It definitely is a Friday for the bulls. New record highs yet again on the Nifty, Bank Nifty. Sensex crossed that 84,100 mark. So bulls are really cheering. You know, I was excited for it just being a Friday after it being.
But glad looking at the green screen, I guess.
I'm okay. I'm indifferent, but I'm just talking about the bulls. But yes, a lot of new records made, and we did see a lot of action in the markets yesterday as well. We failed to hold on to those opening highs. We closed in the red for the mid caps, off highs for the Nifty and the Bank Nifty as well. For now, Nifty is up around 240 points. That's almost a 1% gain. Mid caps are contributing, and these gains are coming on the back of what we are seeing with the Bank Nifty right now. So Bank Nifty up around 0.8%. We have ICICI Bank and HDFC Bank that has made a comeback. So these two stocks have been contributing off late whenever we have seen those moves on the Bank Nifty, and that continues to be the case today as well. HDFC Bank at the day's high, and so is ICICI Bank. So looks like a good day so far. We'll have to see how the day progresses. But so far, the trend suggests after the strong handover that we got from the Wall Street that it could continue. Some of the stocks from the broader markets that we should be looking at, Cochin Shipyard, that stock is up around 10%. A sudden spurt is what we are seeing on that stock right now. So from the broader market, that stock should be on your screen. And Anant Raj is the other one, which is doing well. That stock up around 8% as we speak. So a lot of moving parts in the market. What do you have on your radar, Vivek?
Well, I've been trying to do a little bit of spotting. So yesterday, one of the worries as far as the market was concerned was the kind of sell-off that you saw as far as the broader end of the market was concerned. The mid-cap and the small-cap index yesterday saw significant sell-off. While they did recover intraday, what actually happened was that they still ended with cuts, and there was a lot of worry building up. So the good part today is, both the mid-cap index as well as the small-cap index, both of them are up almost 0.7 and 0.8% respectively. Today, there are some key events that we need to keep an eye out for. The first event, of course, is the fact that today is the FTSE rebal event. So FTSE, you're expecting a net inflow event as far as India is concerned, $1 billion of inflows. Remember, there are 13 additions to the FTSE All-World Index, and there are almost 48 additions to the All-Cap Index. Along with that, there will also be some weight changes as far as some of the larger constituents are concerned. So all of that, it's a net inflow $1 billion event, no deletions. The second event today, the fact is that there are also Sensex rebalance that are happening. So while there are no changes to the constituents, there are minor weight changes. And on the back of that, if you pull up a name like M&M today, that is seeing a certain amount of inflow. Bajaj Finance also is expected to see some inflows. HDFC Bank and Infi, on the other hand, actually will see some outflows. And a couple of stocks on the radar, one that we'll discuss in much detail. Number one, ITD cementation, some news flow on that front, and Reliance Infrastructure getting debt-free, and then a fundraise coming in. So those stocks are in focus today.
Okay, all right. So a couple of those names, of course, we'll discuss some of them in greater detail as well in just a bit. It's a good time to get chatting about the market fundamentals. Nilesh Shetty from Quantum Advisors is joining us now for just that. Nilesh, good morning. Thank you so much for joining in. You know, it's been like that, quite choppy this week so far. But now, right now, we can say that Nifty is up for the week and Bank Nifty too is contributing. Do you think with the Fed rate cut, that event being away, we will see some incremental gains coming in for the markets? So what is your expectation in terms of earnings for this year?
Yeah, I mean, the Fed event was actually priced much before the actual event. So I'm not sure after cutting the rates, you will see significant move. I mean, the market is sort of battling valuations right now. I don't think earnings is a question mark anybody has in India. I think the rough cut 15% CAGR kind of earnings growth is expected. There's nothing on the horizon which suggests there's going to be a dramatic slowdown to that. It's just that at the valuations that the market is trading at, can you make sort of double-digit returns, which you've made historically over long period from equities? That is where the big question mark is. And at least our sense is at current valuations, you need to be careful as an investor. You can allocate a portion of your money, but you need to be careful. I think the market will provide better opportunities coming ahead. But at current valuations, you must perhaps allocate a small portion of your total savings.
Nilesh, so you know that incremental allocation that you're talking about, where is it that you're finding valuation comfort? You know, a lot of experts talk to us about private financials. Is that one space where you see some comfort?
Yes, that is the most obvious sort of anomaly right now in terms of valuations, where a lot of these high quality banks are trading at substantially lower valuations than what we've seen them over the last 10 years. The reasons for that derating is cyclical in nature. It is not that there's something structurally wrong with Indian private sector banks. And as long as there is a large market of public sector banks, which market share they can continue to erode over a period of time, they should continue to grow at the same rates that they have grown historically and make the same kind of margins that they've made historically. So that is the most obvious sort of anomaly that we see in the market in terms of where you can find valuation comfort. But apart from that, you have to be very, very stock specific. Most of the sectors are trading far above their long-term averages.
That has been the consensus because we have seen it across sectors, the big moves, the big, returns that most of these sectors have given as well. In that case, Nilesh, you said bottom-up approach would be good. Where are you finding maybe some sectors where there is relative valuation comfort? Is it industrials? Is it some of these manufacturing themes that you're liking? What is it that you would bet on?
Yeah, the industrial and manufacturing theme is perhaps the most expensive in the market right now. There is nothing which suggests these companies will grow at the rate that the valuations demand from these companies. I mean, it's similar to the valuation that we saw in the 2003 to 2007 boom, while the earnings are growing at half that rate. So that is actually a space we have zero allocation to. Selectively, we found, at least over the last sort of 6 months, names in sort of insurance companies, a broking company that we continue to hold and like in terms of valuation, a general insurance company that we sort of have liked over a period of time. And that is where we found some valuation opportunities come through. There was a consumable durable company that we added to the portfolio, which has done well for us. But apart from that, it's really been a period of selling for us where we've trimmed most of our holdings.
Nilesh, could you just hold on? You know, our colleague Hormaz right now is putting the focus on Vodafone Idea. You know, yesterday was a very news-heavy day, a body blow for as far as Vodafone Idea is concerned. Hormaz, over to you. What is it that brokerages have to say?
Brokerages are having a pretty mixed picture when it comes to Vodafone Idea. I was surprised that Nomura came out with an upgrade on the stock after what happened yesterday. They upgraded it to buy from their earlier rating of neutral, although they've kept the price target same at 15 rupees. What they're saying is that the worst is behind them, and after the fall that the stock had yesterday and the fall that it has had from the highs, and couple that up with a strong industry outlook, it presents a good opportunity to buy the stock at these levels. On the flip side, Goldman Sachs is saying that they are not building in any liabilities, AGR liabilities in their base case scenarios for now. But what it has done is the Supreme Court verdict has done is that it has increased one of the two probabilities. One being the fact that there might be larger or more frequent tariff hikes from Vodafone Idea, and two being that this might result in more market share gains for Reliance Jio and for Bharti Airtel. And in case there is no support from the government on the AGR front. Vodafone Idea's free cash flow is likely to remain negative until FY31, and this is something that they had highlighted in their note on the 6th of September as well, with their price target of 2.5 rupees on Vodafone Idea. UBS is saying that now the Supreme Court verdict has reduced the probability of an outright waiver on these AGR dues by the government, but they are not ruling out an equity conversion or a deferred payment, which is something that has happened before as well, and hence they have retained their buy recommendation on Vodafone Idea. CLSA is saying that if there is no AGR relief, Vodafone Idea may face some financial crisis in the second half of FY26 or in FY27, and they are factoring in an AGR risk of 7 rupees a share on the downside, and they have retained their underperform recommendation. However, for Bharti Airtel, they say that this AGR risk is lower, which is almost 3% of their fair value, or 62 rupees per share on this, and they have retained their outperform stance on this. And Macquarie has a very interesting take here, saying that if there is no relief on the AGR front, it will take around 25 to 30 years for Vodafone Idea to organically repay their dues, and they are continuing to see some market share erosion for Vodafone Idea, with a meaningful risk of equity dilution going forward, and hence as a cascading effect on Indus Towers as well. They believe that the the core earnings for Indus Towers may have already peaked. So mixed opinion coming in on the brokerages, at least for Vodafone Idea. The stock continues to remain choppy in today's session.
Yes, it's lower. Thank you so much, Armas, for joining in today. The low today on the Vodafone Idea stock was 9.79, so it did touch that single-digit mark as well. Nilesh, what do you make of the entire telecom space? Generally, were you bullish on this, and now do you think with this ruling coming out, it again talks about two major players in the telecom market?
Yeah, the telecom space has technically been a 2.5 player market for a long time now. And it's really surprising they've not taken price hikes much more aggressively. It's highly dependent on the largest player in the space. As long as whenever he wants to take a price hike, the industry will follow through. It is one of the few sectors where earnings visibility remains very, very high. It's unlikely that tariffs will not move higher from current levels. But again, there has been a significant up move in that space over the last sort of year. And we hold a position there. And company is starting to get expensive, irrespective of the price hikes that you factor in. So it no longer offers the valuation comfort that it was offering a year ago, if you wanted to allocate to that space.
Understood that, Nilesh. Thank you so much for joining us, and thank you so much for your time today. Now, moving on, one particular stock that's doing very, very well in the session today is ITD Cementation. So what we've done is, we've culled together all of the data, all of the news flow that has come in this particular name. We also have some fresh source-based information today that's also keeping the stock perked up. Now, ITD Cementation, the entire story started in July 3rd, 2024. July 3rd, the company informed the exchanges that the promoter entity, which is ITD Thai, a Thai-based company, wanted and expressed its intention to divest its stake as far as the Indian listed entity was concerned. And remember, they held close to 46.64% stake in the company, and they continue to do that. Now, remember, on August 1st, our colleague Yash had broken a story saying that KEC International, again a listed entity in India in the same space, had emerged as the front runner, and along with KEC International there were two other players, one domestic and another foreign player apart from KEC International, were also in the race. Now remember, KEC International, along with its Q1 results, had also announced a fundraise of close to 6,000 crore. Now the 6,000 crore was broken up into 4,500 crore of QIP fundraise and a 1,500 crore via an NCD issue. We had reached out to KEC International, and they clarified, saying that they continuously evaluate various organic as well as inorganic growth opportunities, and they would be making disclosures on any relevant developments. ITD Cementation, when asked, they once again went back to the July notification on the exchange saying that, yes, the parent entity is interested in divesting its stake. Now, today, what we are picking up from our sources is that the Adani Group is keen and has joined the race to go ahead and acquire a controlling stake in ITD Cementation. We reached out to the Adani Group. So far, we haven't received any comment from them. But let's have a look at the deal math. The current market price is close to 550 rupees a share. So the market capitalization of the company works to close to 9,500 crore. So any potential buyer, now remember, given the fact that they would be acquiring a controlling stake, so along with the offer that they would be making to the promoter entity, they would also be required to make an open offer to go ahead and take controlling stake in the company. So the parent stake sale of 44.5% works out to a little over 4,430 crore. The additional 26% open offer is close to 2,470 crore. So the buyer at this rate, at the current market price, will need to shell out close to 7,000 crore, 6,900 crore at the current market price of 550 crore to go ahead and acquire ITD Cementation. So it's a large deal as far as the civil engineering space in India is concerned. It'll be interesting to know who exactly gets this particular asset.
Yes, the battle will continue, and there's been a lot of chatter on ITD Cementation in general as well. Thank you for making sense of that deal, Matt, Vivek. But with that, we'll do one thing. We'll slip into a short break. When we come back, we'll discuss commodities with Manisha Gupta.
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
Just read that what the data they have released, and they have said the data they have found that, or their assessment at this point of time is that as far as growth is concerned, they say that the risks are balanced. That answers your question on recession. As far as inflation, their inflation is concerned, again they find it as a balance, risks are balanced. Only on unemployment they find it the risks are a bit on the higher side, but not alarmingly high. So that's their assessment, and we should trust their assessment. See, Federal Reserve has done what it assesses the good for the US economy, the largest economy in the world. And I see it as a positive for the global economy, including for the Indian economy. As far as your question about flows are concerned, it is a 50 basis points cut from a high level, from the high level. So I don't see that making any significant impact on the flows. You have to see how the things develop going forward.
Welcome back to Trading Hour. Let's now shift focus to the commodity space. Manisha joins us, and today we are focusing on crude.
Thank you for that, Vivek. Well, yes, markets are still assessing the US Fed rate cut and the expectations going forward in this year. But most of these commodities also seem to be starting moving to their individual fundamentals right now. So even with a bit of a profit taking that you can see on your screens, we are still holding around 74.5. And this is after almost seeing a 69 and below kind of levels in this month itself. Well, the support comes in on the fact of expectations of better demand now coming in, especially ahead of winters from Europe and US as well. And much of Gulf of Mexico output is still shut nearly 10% post Hurricane Francine. So that has been supportive as a price premium there. Apart from that, with what's happening in the Middle East and the escalation in sense of concerns there, especially with Hezbollah explosions that we've seen in sense of radios and pagers, that seems to be adding some price premium also. Remember, Middle East is the place where you get almost 30 to 35% of your oil. As of now, there are no supplies impacted. But with the way the things are moving on, the developments are happening, there is a concern about supply disruption, and that is a premium that we see holding in case of prices here. Also, when you look at the US inventories, while there was a increase in US crude inventories, but there was a decline in product inventories, suggesting that the demand there also seems to be improving, and all of that can be seen in prices.
Okay, so some Friday cheer for crude, Friday cheer for markets as well. But Manisha, are you also contributing to the Friday cheer that we're seeing for iPhone 16 sales?
Not yet. We'll let it settle.
It has to settle. There's a lot of crowd there, but thank you so much for joining in today. So that's the update on crude. Hope you have a great weekend ahead, Manisha. But we'll slip into a short break. When we return, we'll discuss market technicals with Mitesh Thakkar and also discuss their top trading bets.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
I support Israel's ability to defend itself. And I support the need for Palestinians to have dignity, self-determination, and security as we move forward and get a two-state deal done. But right now, the thing we need to get done is this hostage deal and this ceasefire deal. We need a ceasefire. We need the hostage deal. I've had direct conversations with the Prime Minister, with the President of Israel, with Egyptian leaders, and with our allies. And I think we've made ourselves very clear this deal needs to get done in the best interest of everyone in the region.
Welcome back. Well, let's get some technical check on the markets. Mitesh Thakkar is joining us for just that. Mitesh, good morning. Thank you so much for joining us. Do you think this Friday tour will continue? We'll see higher levels, or this is where we could see the Nifty levels for today?
Yeah. See, I think this is a very strong kind of a move happening on the upside and has met the second target of 25,600 also, I think, so 25,650, 700 also. I think good chance that you might see 25,900, 925 over the next few days and therefore maintain your long bias. We had some shorts on the IT side. It's coming back up, but the banking names are clearly outperforming and that's what's helping us. I think that strategy still should continue. Look at trade on possibly IndusInd Bank, which is slightly subdued today. That would catch up. The structure is good. So buy here with a stop at 1469 for targets of 1520. And the other stock is Bajaj Finance, which I would recommend buying with a stop at about 1887 for targets of 1945.
Thank you so much, Mitesh, for giving your view on the index as well as your top picks. But moving on, a bit of a setback as far as Lupin as well as Zydus Life Sciences is concerned. A setback, as far as the Supreme Court court verdict is concerned on generic version of Mirabackground. Ekta joins us, with more details on the same.
Well, the latest news with regards to Zydus and Lupin is that the US Court of Appeals has vacated a district court judgment for Mybetriq generic, which is a drug used for overactive bladders in the US market. Now, remember that the district court judgment was favorable to generic companies such as Zydus as well as Lupin. Now, the setback to Zydus and Lupin will now have to be seen in the next couple of quarters in terms of the developments. Now, Elara says that the litigation is far from over. Other potentially strong grounds for invalidation of patent exist. They expect Zydus and Lupin to continue to sell the product. A fresh decision by the court will probably take another 9 to 12 months. They're not changing their estimates at this point in time. They've built in around $120 to $180 million from Mybetriq generic in FY25 and $60 to $90 million in FY26. JP Morgan has said that the development adds uncertainty to the litigation outcome, but is not likely to impact Lupin and Zydus' product strategy at the moment. Mybetric Generic accounts for around 8% of FY25 earnings and 5% of FY26 earnings for Lupin, and 12% and 5% for FY25 and 26 earnings for Zydus. BofA has also written on it, they do not expect companies to stop supplies unless there is a restriction by the court. It does, however, create a near-term overhang. They reiterate their neutral stance. Zydus Life, they've cut the target price, and Lupin also, they've cut the target price on both these counters.
Okay, so the pharma space in focus yet again. Thank you so much, Ekta, for bringing us all those details on Zydus and Lupin. It's time to take a short break. We'll put the spotlight on the energy space, the new energy transition that is. Gauri Johar of S&P Global Commodity Insights will be joining us to discuss that. Stay tuned.
People of Jammu and Kashmir are voting for the first time in an assembly election in 10 years. This is also the first assembly election in Jammu and Kashmir since the abrogation of Article 370 in 2019, which gave the erstwhile state special status. A total of 9 million citizens are eligible to vote in this election for 90 assembly seats. In the 2014 election in unified Jammu and Kashmir, Mufti Muhammad Saeed-led Jammu and Kashmir People's Democratic Party had won 28 seats, which was the highest number of seats won, but fell short of the majority mark, which was 44. BJP had won 25 seats, Jammu and Kashmir National Conference won 15 and the Congress 12. The PDP and the BJP had formed a post-poll alliance which fell in 2018 due to sharp differences, and since then the state has been under the Lieutenant Governor's administration. This time in 2024 assembly elections, there are 13 main parties fighting the election. The major regional players are the PDP, led by Mehbooba Mufti, and National Conference, led by Omar Abdullah, both of whom are former chief ministers. The National Conference has an alliance with the Congress party in these polls. Apart from the Congress, the BJP is the big national party fighting these elections, and there is a lot at stake for the party, which is in power at the same time.
Welcome back to Trading Hour. Let's now put the focus on our special segment, Fin Street. Abhishek is standing by with a detailed picture of the Q1 FY25 performance in the secured versus unsecured lenders in the NBFC space. Abhishek, over to you.
Well, Q1 FY25 has shown that secured versus unsecured lenders have seen a marked difference in the growth as well as pain in the books or asset quality. Let's start with the segment seeing maximum stress, that is the microfinance. Now, microfinance is unsecured small ticket size loans which are extended mostly in the rural as well as semi-urban areas in India. We had highlighted in May of 2024 that rural market has come under stress. Q1 FY25 performance of the lenders focused in this segment showed further deterioration in their asset quality. So the gross NPA and net NPA in absolute value increased by 26 to 27% on a sequential basis, while the loan growth also slowed down. It came down to 1.8% quarter-on-quarter for players in this segment. This also impacted their stock performance. So from April to now, majority of the lenders have given a negative or lower returns. In contrast, the housing finance sector has seen growth coming in with lower NPA net additions. So AM or asset under management growth in players for housing finance sector has been around 3.2% quarter-on-quarter. And if you remove the LIC housing finance number, the growth has been more than 7% quarter-on-quarter. So growth has come in at a cost, which is cost of funds, as calculation shows that 27 basis point decline on a sequential basis is seen with respect to net interest margin on a YY basis, and about 24 basis point sequential decline is seen in their net interest margin. Now provisions have been lower for them, leading to a marginal growth in their profitability sequentially. Returns have varied amongst lenders from as low as around 3% to as high as more than 60% for players in this segment. Now, the best segmental performance amongst NBFCs has largely been in the commercial vehicle finance segment. AM growth has been around 5.3% quarter-on-quarter for players in this segment. So Q1 is seasonal in nature, hence there has been marginal deterioration in their asset quality, but it's remained under control. Gross NPA in value-wise increased by 6.4% quarter-on-quarter. But if you take a look at the ratio, it's increased by only 4 basis points quarter-on-quarter. Net NPA in absolute value increased by 9.5% quarter-on-quarter value-wise. But as a ratio, it increased by only 6 basis points quarter-on-quarter. CV financiers have given healthy returns from April to now in the range of 15% to 37%. Cholamandalam, on a one-year forward basis, has become the most expensive or valued firm amongst NBFCs. In fact, if you compare all these performances with the Nifty, the index has seen only 11.5% gain over here from April to now. So let's take a look at some of the other highlights in this segment. In last 5 to 5.5 months, from the highs, Nifty has given a negative return of around 1.9%, while Fusion Microfinance, Jana Small Finance Bank, Ujjivan Small Finance Bank and many other players focused in the MFI segment have given a negative return of more than 20% on an average. Secured lenders, on the other hand, have largely given single-digit negative return between -6 to -9% from their highs. From the lows, Nifty has given a return of around 17%, while MFIs have largely given return of less than 11%, except for ESAF Small Finance Bank. Secured lenders like Cholamandalam, Awas Fin, Home First Finance, Shriram Finance, as well as PNB Housing has given robust returns of anywhere between 38% to as high as 67%. So from the above analysis, it's clearly seen that in the recent months, investors have favored secured over unsecured lenders in the NBFC space. Unsecured lenders get better margins and return profiles during the good cycle, and vice versa. When the cycle is bad, it impacts their growth as well as deterioration in their asset quality. Housing finance is doing good. Focus of the government is on Pradhan Mantri Awas Yojana 2.0 as well, which should augur well for them. Commercial vehicle segment has performed the best when compared to other sectors on various parameters.
Thank you so much for that, Abhishek. Very interesting take as far as the NBFC space is concerned. But let's now take a short break. As promised, we'll put the spotlight on the energy space. Gauri Jauhar of S&P Global Commodity Insights will be joining us.
Several years, even separatist leaders are contesting elections. Engineer Rashid, a controversial politician, was released on bail and is contesting elections, and so are his supporters as independent candidates. Rashid could be an important candidate considering his strong support base and also because he had won the recent Lok Sabha election from Baramulla, defeating Omar Abdullah. Rashid's Awami Ittihad party has joined hands with the outlawed Jamaat-e-Islami. Now, why is this election important? In a way, this election can be seen as a referendum on abrogation of Article 370 and also the BJP's policies and handling of law and order in the state over the last 10 years. All opposition parties have promised to restore statehood and special status if elected. The BJP has ruled out restoring Article 370 but promised to restore statehood at an appropriate time after the elections. Union Minister Amit Shah has urged voters in Jammu and Kashmir to vote against separatism and terrorism. Let's see what the people of Jammu and Kashmir decide in these polls.
కడాన తిరుమల లడ్డు కూడా నాసి రకం. నాకైతే ఆశ్చర్యం వేస్తుంది. ఎన్ని కంప్లైంట్ చేసినా కడాన వెంకటేశ్వర స్వామి పవిత్రతను దెబ్బతీశారు. ఎన్నోసార్లు చెప్పాం. అక్కడ ఎంత దుర్మార్గంగా ప్రయత్నం చేశారంటే అంత దుర్మార్గంగా ప్రవర్తించారు. కడాన అన్న దానంలో క్వాలిటీ ఆఫ్ ఫుడ్ లేకుండా చేశారు. దేవుని దగ్గర పెట్టే ప్రసాదం అపవిత్రం చేసే విధంగా ఓసారి బాధేస్తుంది. నాసి రకమైన ఇంగ్రీడియంట్సే కాకుండా ఎనిమల్ ఫ్యాట్ కూడా వాడారని. ఏది గీకు బదులు ఈరోజు స్వచ్ఛమైన గీ తెమన్నాం, ప్రక్షాళన చేయమన్నాం. నాణ్యత పెరిగింది, ఇంకా కూడా నాణ్యత పెంచుతాం. అల్టిమేట్గా వెంకటేశ్వర స్వామి మన రాష్ట్రంలో ఉండడం మనందరి అదృష్టం. ప్రపంచం అంతా మన దగ్గరికి వచ్చే పరిస్థితికి వచ్చారు. అలాంటప్పుడు వెంకటేశ్వర స్వామి పవిత్రతను కాపాడుకోవాల్సిన బాధ్యత మనందరిపైన ఉంది. ఇది కూడా చేస్తామని చెప్పి కూడా నేను మీకు తెలియజేస్తున్నా.
Welcome back. It's time to focus on India's energy sector. India is the world's fastest growing major economy and energy demand is on the rise, thus making energy security paramount. S&P Global says India needs to strike a balance between energy security, affordability and sustainability, and there is a need to aggressively invest in new sustainable technologies. To discuss more on this, we are joined by Gauri Johar, Executive Director of Global Energy Transitions and Clean Tech Consulting at S&P Global Commodity Insights. Gauri, good morning. Thank you so much for joining in. And that's all we can talk about, right? The transition to new energy right now. The report suggests that we need big investments in the new energy space as well. But as far as India is concerned, do you think there's enough done? What kind of investments are we seeing in the traditional refining or upstream sectors versus, say, new energy like biofuels or other avenues as well?
Thank you so much for having me and for having S&P Global on this feature. I think there is definitely a green rush, and we are seeing new commitments by even bellwether in energy companies in India. So if you take a combination of companies such as ONGC, Indian Oil, HPCL, NTPC, Reliance, Adani Group, while they are continuing to invest in their core businesses to the extent to maintain capital expenditure and grow for energy security. What we do see is that if you look at the time frame up to 2030, which is an important time frame for meeting and milestone for meeting interim targets towards net zero, we do see these companies spending about $57 billion in aggregate. And what's interesting about that number is that it compares to about $65 billion being spent in low carbon technologies by a group of companies, oil and gas companies called the OGCI group of companies in the last 5 years. So I think there's definitely a shift that is happening, but it is not happening at the cost of energy security.
That's very interesting. So going forward, where do you see more investments coming? You know, we are seeing it, number one, like you mentioned, across the energy space. We're also seeing it across some of the older thermal power companies as well, who are getting quite aggressive as far as renewable energy capacity is concerned. So going forward, where do you see incremental spends happening?
Right. So the incremental spends are happening towards sort of what we call, the foundations for a new energy system, which is also something we've highlighted in our report that we launched yesterday, India Forward. And me and my co-authors have looked into this space. What we find is that there is a lot of new investment which is beginning to go into areas like biofuels, green hydrogen. We are coming at the margins of even technologies like carbon capture. But all these are, frontier technologies in the energy sector, in the energy transition space. And they will need a lot more of government policy push, a lot more incentives, mandates to create new markets, to create the demand for these new markets. So a lot of things have to happen synchronistically. But at the same time, we are seeing mature renewable technologies like solar and wind on an accelerated course in India.
Okay. So Gauri, when we talk about investments, one thing that maybe the investors, shareholders or the industry wants to know is what is the return on that capital employed? Say if somebody is investing in new energy versus a traditional energy, where do they tend to benefit?
That's a great question. And I think this is where the whole just energy transition considerations come in. While, if you look at the stock markets right now and you see a lot of investments going into greener energy companies, more, integrated in utility companies, and they're delivering far higher stock market returns. In fact, the difference between the greener end of the spectrum and the more traditional energy companies or other more fossil fuel based energy companies, it's almost like about a 258% difference on the stock appreciation that has happened in the last 5 years. But if you see the returns on capital employed, which is returns based on the balance sheets and the income performance, the net income performance, we see that difference actually tilts in favor of the fossil fuel energy companies, fossil fuel based companies, wherein they deliver on average about 8.3 percentage points higher than the green energy companies. And this is where I think this underscores the need for that balance that we talk about in our report between energy security and energy transition, that while this new energy system is coming into place with newer just energy transition technologies, we're still not quite there in delivering the types of rates of return on capital employed that the fossil fuel-based energy companies have delivered. And mind you, this is not just about rates of return on capital employed. It comes with huge political economy considerations as well. It implications on employment. It has implications on, huge stocks of capital which have already been committed. So how do you unwind that and replace it with a new energy system is I think, a work in progress. And a lot more thought has to be given to how this transition will happen in a just manner as well.
Very good point. See, also you've mentioned, while it's a work in progress, India actually has gone ahead and given a very strong commitment as far as becoming net zero. Along with that, what we're actually seeing is that on ground there is quite a lot of competitive intensity as far as the renewable space is concerned, and some of the tariffs that we're seeing getting discovered at the recent bidding have been very low. So going forward, do you see a path to profitability or sustained profitability for some of these players? And can some of the players actually survive? Because in the past, we've seen some of the players, especially in the power space, actually struggle to even survive.
Yes, it's a very relevant question because I think, as you rightly said, that there is a pressure on returns. As we've seen, there's a difference wherein they're not, stock market returns are not being reflected in actual returns on capital employed. And what we also have indicated in our report, which some of my colleagues on the power side have shared, is that there will be potentially a cost pressure that comes as supply chains are also rewired, as some domestic manufacturing as well picks up. So we do see and anticipate a certain cost pressure coming in the near term. So the ability to deliver actual high rates of return is something which remains to be seen. And there will be, as you said rightly, competitive intensity in this sector.
Okay. Gauri, quickly, if you can tell us, when we talk about new energy, a lot of new avenues have come up. Earlier, we were also talking about gas as a clean fuel. 50% is still imported in the country, but we do have KG basin production coming up. There's a lot of chatter around more production being, being focused on in the country as well. Will this be also a big part of the clean energy puzzle?
Again, I think it's a very relevant question when we look at gas. Globally, what we see is gas has about 7 advantages which need to be fully exploited to play its full role as a transition and a bridge fuel. There is an economic advantage, an overall economic advantage in terms of system-wide, stabilizing a system which is going into more renewables and needs cleaner base load power when you don't have the nuclear option still ready. So it has, number one, an economic advantage. It has a clear emissions advantage on CO2 emissions, NOx, SOx, and particulate matter. It does have an operational advantage as well to be supportive for power for peak demand and minimum loads. It has a coupling advantage. It has an optionality advantage of sort of quicker building and shorter lifespan adaptability to future technology and also policy changes. It has an energy security advantage, and it also offers a decentralized advantage wherein off-grid renewables and gas can offer flexible and in some cases even cost-effective power solutions when you compare it to things like displacement of diesel-based gensets, for instance, in both developing and developed markets.
Thank you so much, Gauri, for joining us and putting the spotlight on that. So many of the relevant topics, and a lot of them also impact the stock markets and some of the listed players as well. But moving on, it's time for a short break. On the other side, we'll put the spotlight on India's real estate space to talk about one of the key questions in most of our minds. Should you buy or enter home? Anuj Puri, Chairman at Anarock, will be joining us. Stay tuned.
Welcome back. Well, should you buy a home in India or rent it? Anarock research shows that rental values in key micro markets of the top 7 cities in India have gone up by 72% between 2021 to end of first half of 2024. However, capital values saw lower growth. In key markets in Bengaluru, Pune, Kolkata and Chennai, average residential rental values rose more than the capital values. However, in areas of NCR, Mumbai metropolitan region and Hyderabad, those regions saw the reverse trend. To discuss more on this, we are now joined by Anuj Puri, the chairman at Anarock Property Consultants, to shed light on what's really happening in these micro markets and should one rent or buy. Anuj, good morning. Thank you so much for joining in today. Well, what's causing this surge in rentals? Almost 72%. That's a big hike. First, tell us the reason why that's happening and which are the major geographies where we are seeing this phenomenon.
Good morning, Sonal. Always a pleasure to be on your show. And, it is very evident the way the rental markets have surged over the last, I would say, 2.5 years, and now overtaken the capital values. And as you rightly pointed out, cities like Bangalore, Chennai, Kolkata, where the rentals have really pushed up far greater than capital values. I think there are sort of 4 or 5 trends why this is happening is, one is clearly that the ITITS, folks are being asked to come back to the office. And, clearly from the perspective of calling these guys back, they are going and, taking it on rent. Second, we are starting to see many expats now coming back and many sort of high income professionals, getting back to work where they are wanting to take it on rental. I think the biggest thing is that there aren't those many ready to move in apartments for sale as compared to rentals. And, people are wanting to live in good locations, in premium buildings. They're making good salaries, as a result of which they want to live more comfortably. And because they're not being able to find anything that is ready to move in, to buy, they are renting it out. And that's really pushing the rentals up.
Anuj, what you just mentioned makes a lot of sense, especially, in a ITITS dominated city like Bangalore or maybe even Hyderabad. When it comes to Bombay, you're also seeing quite a lot of redevelopment activity happening. And at least during the time of the redevelopment, we understand that a lot of existing homeowners are looking to places on rent. So the spike in rent that you see at that time, do you think that can sustain, or do you think a couple of years down the line, when the redevelopment surge ends, you will see rental rates coming back low?
Hi, Vivek. Bombay is a little different to the rest of the markets. The trend that we are seeing on the rental growth is largely where ITITS is dominated, as I said, is, Pune, Bangalore, and for that matter, even Calcutta, where we are starting to see a lot of the IT companies going into Rajarhat. I think Bombay, you're right. Much of what we are seeing in the suburbs and South Bombay on the rental activity is a push coming in from the redevelopment. But I must say is that the overall impact is less than 5% of the people who are getting displaced due to the redevelopment of the societies and taking it on rent. So I dare say, Vivek, that that is a criteria which is really in any meaningful way pushing up the rentals. I do agree that it adds to it, but the larger perspective remains is that people are getting back to work. They were there back in their tier 2, tier 3 hometowns. Most of the corporates are asking at least 2 or 3 days in a week for them to come back to the office and operate, as a result of which, majority of these guys are now being forced to come back to their tier 1 city and, rent it out.
Who would know that coming back to office would prove to be costlier after a while, right? But Anuj, do you think this would be a sustained trend? Rentals have shot up now. That's a near-term demand push that we've seen. But do you think that phenomenon could continue? And if it does, what does a person who wants to rent do? They should just go ahead and buy. Is there some math to it?
I think there are 4 or 5 things, because rent versus buy is a big decision. It's always nice if you own your own home, but it does come with some challenges. The biggest one is the affordability. That whether you have that kind of capital to be able to put together in buying a home. Second is flexibility. Many of these professionals do move cities, do move jobs, and hence they're not really wanting to buy a home. So, if you are one of those professionals who is really not sure whether you want to stay in the same city, then I would say flexibility should be looked at it. From a taxation perspective as well is, many times it's better to take it on rent because the full HRA is really allowed, and you don't get that flexibility in if you are owning a home. But I must say, Sonal, the biggest decision really rests on wealth creation. Most of the Indians, and rightfully so, we've seen in the past as well, are looking at that aspect and wanting to buy. So clearly, we've seen in the last 3-4 years as well, through the pandemic, that the wealth creation on the residential side has been very stark. And hence, we're seeing many of the younger professionals, the average age of home buying, say about 20 years ago, was in the mid-40s. It's come down to early 30s. So clearly, the young professionals are saying is, this may be another way of creating wealth and also have stability in life. And that's where I think is the decision is, do you want that, or do you want the flexibility? Depending on that, and depending on whether you have the money to be able to put through, the rent versus buy options can be worked out.
Of course, it would depend on each buyer's or the person who's renting's financial situation and other aspects of life as well. Anuj, last question before we let you go. I request you to keep it short. I wanted to understand whether the capital appreciation versus rental appreciation debate in major cities like metros like Bengaluru, Mumbai, where do you see more push coming? Would it be rentals or housing prices? Is there some trend which is suggesting that this could continue, the appreciation across any form of housing?
So my thought is that the capital values will appreciate, but they will appreciate now in single digit. We have seen double digit capital appreciation over the last 4 years. My guess is that going forward, it will be single digit appreciation. So at some stage, you will start to see is rentals stabilizing and not increasing, and capital values only increasing by a single digit percentage to match both of them.
Okay, all right. Anuj, thank you so much for joining in today. So that is a very interesting debate to have with no clear answer, but it's good to have that debate. Thank you so much for joining in with all those insights as to what's happening to rentals right now, they're surging and how, and with the home prices as well. But Vivek, with that, we have to wrap on the show with the news that markets continue to soar. We have the Nifty sitting at a fresh high. It is up around 290 points as we speak. Sensex above that 84,100 mark. Midcap participating as well, and it's the Bank Nifty which is contributing and how to the gains that we are seeing. With that, it's a wrap on Trading Hour, but stay tuned. Halftime report is up next.
Benchmark indices scale new highs as stocks charge up in a broad-based rally. Metals, auto, industrials and realty lead the charge. IT and healthcare lag.
Reserve Bank of India has permitted IIFL Finance to resume gold loan business from September 19th. The move, which had significantly impacted its business in a segment, comes as a big relief for the lender. The stock jumps.
Crude oil flares up with Brent hitting a 2-week high on escalating tensions in the Middle East following Hezbollah's device blasts in Lebanon. An expectation of high demand in upcoming winter months also aids sentiment.
The iPhone 16 is now like an apple in your cart as digital platforms from Big Basket to Blinkit deliver the handset in a jiffy. This even as several queue up at Apple stores to get their hands on the latest edition, some queuing up for over 20 hours. It's all happening here. It's a Friday afternoon. I'm Mangalam Malu. With me, Ekta Batra. You're watching us here on Halftime Report. It's a record-breaking session for our markets. All the frontline indices doing extremely well. And it's that day where if you've made some profits, you can go ahead, either queue up at your nearest Apple store to buy the iPhone 16. If not, then use your old iPhone to perhaps order it on any of these quick commerce apps as well. So no letting up for the market. In fact, after yesterday's reaction, today is a response, and the response is a resounding yes from the bulls.
Hi, Mangalam. Well, it also tells you that while it is available on quick commerce, just look at the kind of demand that you have for a product which is so expensive. So that's the kind of demand or the consumption that you need to actually even track in terms of the. I mean, Apple probably has its own set of demand, but nonetheless, that gives you a sense in terms of the kind of demand that you're seeing for such a high price object or product as well. But nonetheless, for the markets, the US markets have surged and India has followed suit, and Nifty is at a record high. The frontliners are outperforming the broader markets on a week-to-date basis today. So at current reckoning, the Nifty is up around 1.3% for the week. The midcap index has lost around 0.5%. The BSE small cap index has lost around 0.5% as well. And on a week-to-date basis, if you just want to look at it in terms of key indices, we have the Nifty Bank, which is up around 3%, the BSE Realty Index, which is up around 2.7%. And what has stood out on the declining side is that the Nifty and the IT index are down more than 2%. So that's really what is taking place in terms of key indices, sitting at record highs for the Nifty, which is at around 25,710. But let's kick off the show with one particular stock which is in focus and is really powering ahead. IIFL Finance, which has zoomed more than 8% after the Reserve Bank has lifted restrictions on the company's gold lending business. Ritu is here with more details on what this exactly means for the company.
And therefore, you're seeing that sort of reaction on the stock because it's big relief. Well, it's a big relief for IIFL because of RBI lifting restrictions on the gold loan business. That means that IIFL can now resume sanctioning, dispersal, assignment, securitization and sale of gold loans after what has been a 6-month ban from the RBI. Remember, these restrictions were placed on them on the 4th of March because of material supervisory concerns. It was followed by a special audit to look into the deficiencies that concluded in June, and now RBI has lifted these restrictions. The impact has been significant because of this ban. Their gold loan AUM shrank actually from about 26,000 crores in March to 12,000 crores by August, which is a 53% drop in just 5 months. The share of gold loans in the total consolidated AUM also fell from 32% before the RBI action to 21% now, and more than 1 million customer accounts were closed during this period. So lifting of these restrictions removes a key overhang on the company and on the stock. Jefferies, for instance, has upgraded the stock to buy with a target price of 595 rupees. They expect a gradual recovery in the gold loan disbursements, normalizing over the next 1 or 2 quarters, though they do expect the loan book may further decline from about 12,000 crores now to 9,000 crores by September. Now, while the portfolio recovery could take some time, they say the easing margin pressures and high gold prices could offer some support.
All right, take that point, Ritu. Thanks a lot for that. As a result of which, we are seeing some, movement on the downside for its competitors, the likes of Muthoot Finance as well as Manappuram too. these stocks had seen a bit of a rally when the RBI had put restrictions on gold loan financing by IIFL, citing hopes of market share gains out here, but now that is reversed. So has that trade. Just keep an eye on a couple of these PSUs, all of them doing extremely well. One of them that stands out today is Hudco, which is up almost 8% this morning. We had the management join us on our channel, talk about how there could be an increased dispersal by almost 1 lakh crores under the PM Awas Yojana, and this year itself they could actually increase their disbursal outlook from 35,000 crores all the way up to 45,000 crores. Management will speak more on that in the second half of this year, while maintaining their NIMs around that 3.5% mark as well. Detailed interview where the management spoke about the ROE and ROA targets for the company as well. We'll try and get more on Hudco in just a bit, but the other stock which is buzzing around today is ITD Cementation. There are reports that suggest that maybe the Adani Group is in race to acquire the promoter's stake. Vivek.
Well, absolutely right. So what we've actually done is, remember in the past, even our colleague Yash had done a story on, the stake sale as far as ITD Cementation is concerned. So we went back, to the last couple of months, we passed through the filings that, ITD Cementation has done, and we are actually trying to make sense of how exactly this particular stake sale is panning out. Remember, on July 3rd, ITD Cementation told the exchanges that the parent, which is a Thai company, ITD, had decided to go ahead and divest its stake in the Indian entity. Remember, they held close to 46.6%, and they continue to do so. Now, on August 1st, CNBC TV18 had done a story which mentioned that KEC International had emerged as the front-runner to acquire the promoter's stake, and there were two other players, one domestic and another foreign player, apart from KEC International, that were interested in this particular stake sale. Very interestingly, KEC International, along with its Q1 results, had gone ahead and said that they were looking to raise close to 6,000 crore rupees, through a fundraising, 4,500 crore of a QIP and a 1,500 crore NCD issue. KEC International also mentioned that they do keep evaluating both organic as well as inorganic growth opportunities. Now, today what we understand from our sources that the Adani Group has also joined the race to go ahead and acquire a controlling stake in ITD Cementation, intending to go ahead and buy out the promoter's stake. We reached out to the Adani Group as well. They did not offer any comment to our story or to our queries. Now, just have a look at the deal math. The current market price is close to 550 to 560 crore. The market capitalization is in the range of 9,500 crore. The parent stake at this point would be valued north of 4,400 crore. Remember, if there is an stake being bought, which intends that there will be control of the entity being transferred to the acquirer, there will be an open offer that will be made. So an open offer of an additional 26% is what will be required to be made. So that particular stake value will be in the range of 2,470 crore. So at the current market price, the buyer will need to shell out close to 6,900 to 7,000 crore for this particular deal to go through. It will be interesting to see who actually emerges as the final buyer of this particular entity.
Okay, all right, Vivek. Thanks very much for that. So that's ITD Cementation, maybe some M&A on the cards there. That stock up around 20% but Reliance Infra has surged in trade after the company's board has approved a fundraise of around 6,000 crores via QIP and preferential issue of shares. Vivek is still with us to tell us about this story.
Well, that's right. Just a couple of days ago, we had told you about how Reliance Infra had gone ahead and repaid a few NCDs, from Edelweiss ARC, and, the debt had come down quite significantly. Now, along with that, a very interesting development, the company has announced a fundraise, like you mentioned, both via preferential issue as well as a QIP route. Preferential issue of almost 3,015 crore. Some noted investors coming in, even a promoter entity is looking to infuse funds. The promoter entity is Rise Infinity Private Limited, and Florenti Innovation, which is actually run by Matthew Syriac, a noted investor who has investments even in other listed entities, and Fortune Financial and Equity Services are the entities that are putting in funds via the preferential route. The QIP fundraise, again, of close to 3,000 crore, total fundraise of around 6,000 crore. Important to see whether this particular fundraise sails smoothly, and that will be important for the fortunes of Reliance Infrastructure.
All right, Vivek, thanks a lot for that. So that's about Reliance Infrastructure doing well in today's trading session. But as we slip into a short break, let's give you some good news. All your viewers, India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and all news coming in from the financial world, the updates on your fingertips. Download the CNBC TV18 app, now available both on iOS and Android from the Apple Store or the Google Play Store. Everything for you on the go. Welcome back. The market continues to do well. The Nifty now comfortable above that 25,700 mark, even as we are looking at 53,600 on the Nifty Bank, closing in on that 60,000 mark once again for the midcap index, even as the Sensex just about 40 points away from a 1,000-point gain on that index. Time for our daily dose of pharma. Mankind Pharma is one of the stocks which is doing extremely well in trade today, ahead of the company's board meet. Ekta tells us what's on line for the board meet and also a couple of brokerage notes.
Well, yes, it's two pieces of news which are really driving Mankind today. First is that there will be a board meet today to consider fundraising. The board is going to approve fundraising, which is going to be via NCD, commercial paper, debt securities or any other securities. The fundraising, remember, is in lieu of funding the BSV acquisition. Remember that Mankind is acquiring the BSV company for a valuation of over 13,600 crores. Now, the acquisition is expected to be funded via debt, equity, internal accruals. They plan to raise around 4,000 crores from internal accruals. They estimate around 70% of funding from debt. The company also has non-core assets, which they will eventually probably look to divest as well. Now, Investec has initiated with a buy on the stock with the target price of 3,300. They say it's their top pick. According to them, the street underappreciates the specialty business and the moat of BSP, both for the near and the longer term. BSV could scale new heights and potentially generate $1 billion in sales and 35% plus EBITDAM by FY32. They forecast 18% EBITDA CAGR on an FY24 to FY27 estimated basis. So they're very bullish on Mankind. That's the other reason you're seeing the stock up around 3%.
All right, so that's about Mankind, but you're also looking at Lupin and Zydus, Ekta?
Well, yes, I'm looking at Lupin and Zydus on account of news. So, for example, the US Court of Appeals has vacated a district court judgment for the drug Mybetriq generic, which is basically used for overactive bladders. The district court judgment, remember, was favorable to generic companies. Now, this is a setback to Zydus and Lupin, which benefited from the district court judgment. Now, Elara, for example, says that the litigation is far from over. Other potentially strong grounds for invalidation of the patent exist. They expect Zydus plus Lupin to continue to sell the product. Fresh decision by the court should probably take another 9 to 12 months. They are not changing their estimates at this stage. They are building in $128 to $180 million from Mybetriq generic in FY25 and $60 to $90 million in FY26. JP Morgan has said that the development does add uncertainty to the litigation outcome. For example, Mybetriq accounts for 8% and 5% of FY25 and 26 earnings for Lupin, and 12% and 5% for FY25 and 26 earnings for Zydus. BofA says they do not expect the companies to stop supplies unless there's a restriction by the court. However, it does create a near-term overhang. Zydus Life, they're neutral, but they've cut the target price. Lupin, they haven't underperformed, but they've cut the target price on that one as well.
All right, so that's about Zydus and Lupin. Take a short break, come back on the other side. Manish Hathiramani of the India Investments joins in with some trading strategies.
కడాన తిరుమల లడ్డు కూడా నాసి రకం. నాకైతే ఆశ్చర్యం వేస్తుంది. ఎన్ని కంప్లైంట్ చేసినా కడాన వెంకటేశ్వర స్వామి పవిత్రతను దెబ్బతీశారు. ఎన్నోసార్లు చెప్పాం. అక్కడ ఎంత దుర్మార్గంగా ప్రయత్నం చేశారంటే అంత దుర్మార్గంగా ప్రవర్తించారు. కడాన అన్న దానంలో క్వాలిటీ ఆఫ్ ఫుడ్ లేకుండా చేశారు. దేవుని దగ్గర పెట్టే ప్రసాదం అపవిత్రం చేసే విధంగా ఓసారి బాధేస్తుంది. నాసి రకమైన ఇంగ్రీడియంట్సే కాకుండా ఎనిమల్ ఫ్యాట్ కూడా వాడారని, ఏది గీకు బదులు. ఈరోజు స్వచ్ఛమైన గీ తెమన్నాం, ప్రక్షాళన చేయమన్నాం. నాణ్యత పెరిగింది, ఇంకా కూడా నాణ్యత పెంచుతాం. అల్టిమేట్గా వెంకటేశ్వర స్వామి మన రాష్ట్రంలో ఉండడం మనందరి అదృష్టం. ప్రపంచం అంతా మన దగ్గరికి వచ్చే పరిస్థితికి వచ్చారు. అలాంటప్పుడు వెంకటేశ్వర స్వామి పవిత్రతను కాపాడుకోవాల్సిన బాధ్యత మనందరిపైన ఉంది. ఇది కూడా చేస్తామని చెప్పి కూడా నేను మీకు తెలియజేస్తున్నా.
Welcome back. You're watching us here on Halftime Report. The market is doing extremely well, so good time to get you the FNO update at midday itself. A big rally is what we're seeing in the markets. There's no two ways about it. 553 points on the Nifty Bank, 280 points on the Nifty. The mid-cap's doing even better. What's actually good is that, the Nifty is being contributed by all the heavyweights today. Nifty Bank doing well, 1% higher. If you look at the contribution chart of the Nifty, looks pretty strong. On the one hand, you'll have, names like HDFC Bank, ICICI Bank being the top contributors. Alongside that, we have names like Reliance contributing on the way up to the index as well. There you have it. This is the batting lineup that comes up for you. HDFC Bank 50, ICICI Bank 31, Reliance itself 30, M&M and the others are giving it a good up move, whereas the draggers are far and few in between. Not too many on the way down itself. TCS maximum about 5 points taking off. NTPC down about 2 points as well. It was the top Nifty gainer yesterday. Keep an eye out on the market breadth as well. It's improved after 4 days of selling. So if you look at, the contribution, if you look at the crisscross lines, you would see a wide difference between the number of stocks which are advancing versus the number of stocks which are declining. And that continues even now. The other thing that we're looking at is a short covering element of the market right now. 25,500 call writers were pretty active this morning. And once the Nifty did cross past that 25,650 mark, these shorts started to feel the pressure and started covering their positions. And now we are seeing some punt buying at 26,000. Remember, last week, the 26,000 call that expired yesterday was just about 1 rupee. And now it's surged all the way up to 38 rupees. So those who would have rolled this over would be making some money. 25,700 put writers fairly active as well, telling you that the support has come higher for the market, closer to 25,450, 25,500 itself. Lot of long positions being added in the auto space today. We have Maruti Suzuki, M&M, Escorts, all of them fairly well bid with a lot of open interest backing them. And I'll just keep an eye out on Birla Soft because that stock today may exit FNO ban, showing some signs of life today.
Okay, all right. Thanks very much for that, Mangalam. So that's the FNO update. Voda Idea is in focus on account of the July telecom data. BSNL has added around 29.47 lakh users. Remember that Voda Idea was in focus in yesterday's trading session with steep losses because of the court ruling with regards to the AGR dues, and it's in focus today on account of the user addition subtraction, which will take place for the July telecom data. Should be up on your screen. It has lost around 14.13 lakh users versus a loss of around 8.6 lakh users on a month-on-month basis. Manish Hathiramani joins in to talk about the technicals of the market. Manish, hi, welcome to the show. Since we are discussing telecom, what's your view on a stock such as Bharti Airtel, which was fairly resilient despite bad news yesterday?
Good afternoon to you, Ekta and Mangalam. Thank you so much for having me on the show. Well, we've looked at all the telecom stocks yesterday as well when the news came out. Bharti Airtel in specific, I think, would become a buy only if you have a mild correction. We haven't really seen too much of a downside on that, so we are already in an existing uptrend. I would not recommend any fresh buys on that, but any kind of correction should be bought into.
Okay, any kind of correction should be bought into. What are you tracking today? There's strength in the markets. How are you playing into it?
Well, Ekta, Nifty has got a very stiff resistance at 25,650. We are trading above that, closer to 25,700. If we can give a closing today above this 650 level, I would be boisterous and ambitious to give a new target of about 26,100 with a support at 25,200. What is really worth looking at is the Bank Nifty, because Bank Nifty has been subdued for the last week or so. If we are able to keep above this level of 53,400, I really wouldn't be surprised if we see all the way to 55,000 on the Bank Nifty. My trading calls are ideally two buy calls, one on L&T and HDFC Bank. L&T for a target of 39.20, stop loss 36.70. 3,500 is a good support for this stock. We have bounced from there after the recent correction. A positive chartical formation has now been formed with very good volumes. HDFC Bank has got a target of 1830, stop loss 1635. 1580 to 1675 was really a range that we were stuck in for a while. We have broken out of that range, and we've also got the support of the Bank Nifty. Therefore, this momentum is here to stay.
Momentum is here to stay, and you've been calling the momentum on the markets quite, fairly. Thank you for joining in and giving us your views. Take a short break, come back on the other side. We have Ravi Menon of Macquarie Group joining in to discuss the outlook for the IT sector after the 50 basis points rate cut by the US Fed.
Welcome back. Well, steady for the market. So the Nifty is up around 280 odd points. We have the India VIX, which is down around 1% today, and it's declined significantly this month. So it's down around 8 odd % on a month-to-date basis and 15% on a year-to-date basis. So that's the other factor that you should probably watch out for. But let's focus on our special segment, Fin Street. Abhishek is standing by with a detailed picture of the Q1 FY25 performance in secured versus unsecured lending in the NBFC space.
Well, Q1 FY25 has shown that secured versus unsecured lenders have seen a marked difference in the growth as well as pain in the books or asset quality. Let's start with the segment seeing maximum stress, that is the microfinance. Now, microfinance is unsecured small ticket size loans which are extended mostly in the rural as well as semi-urban areas in India. We had highlighted in May of 2024 that rural market has come under stress. Q1 FY25 performance of the lenders focused in this segment showed further deterioration in their asset quality. So the gross NPA and net NPA in absolute value increased by 26 to 27% on a sequential basis, while the loan growth also slowed down. It came down to 1.8% quarter on quarter for players in this segment. This also impacted their stock performance. So from April to now, majority of the lenders have given a negative or lower returns. lenders. In contrast, the housing finance sector has seen growth coming in with lower NPA net additions. So AM or asset under management growth in players for housing finance sector has been around 3.2% quarter-on-quarter, and if you remove the LIC housing finance number, the growth has been more than 7% quarter-on-quarter. So growth has come in at a cost, which is cost of funds, as calculation shows that 27 basis point decline on a sequential basis is seen with respect to net interest margin on a YY basis, and about 24 basis point sequential decline is seen in their net interest margin. Now provisions have been lower for them, leading to a marginal growth in their profitability sequentially. Returns have varied amongst lenders from as low as around 3% to as high as more than 60% for players in this segment. Now, the best segmental performance amongst NBFCs has largely been in the commercial vehicle finance segment. AM growth has been around 5.3% quarter-on-quarter for players in this segment. So Q1 is seasonal in nature, hence there has been marginal deterioration in their asset quality, but it's remained under control. Gross NPA in value-wise increased by 6.4% quarter-on-quarter, but if you take a look at the ratio, it's increased by only 4 basis points quarter-on-quarter. Net NPA in absolute value increased by 9.5% quarter-on-quarter value-wise, but as a ratio, it increased by only 6 basis points quarter-on-quarter. CV finances have given healthy returns from April to now in the range of 15% to 37%. Cholamandalam, on a one-year forward basis, has become the most expensive or valued firm amongst NBFCs. In fact, if you compare all these performances with the Nifty, the index has seen only 11.5% gain over here from April to now. So let's take a look at some of the other highlights in this segment. In last 5 to 5.5 months, from the highs, Nifty has given a negative return of around 1.9%, while Fusion Microfinance, Jana Small Finance Bank, Ujjivan Small Finance Bank and many other players focused in the MFI segment have given a negative return of more than 20% on an average. Secured lenders, on the other hand, have largely given single-digit negative return between -6 to -9% from their highs. From the lows, Nifty has given a return of around 17%, while MFIs have largely given return of less than 11%, except for ESAF Small Finance Bank. Secured lenders like Cholamandalam, Awas Fin, Home First Finance, Shriram Finance, as well as PNB Housing has given robust returns of anywhere between 38% to as high as 67%. So from the above analysis, it's clearly seen that in the recent months, investors have favored secured over unsecured lenders in the NBFC space. Unsecured lenders get better margins and return profiles during the good cycle, and vice versa. When the cycle is bad, it impacts their growth as well as deterioration in their asset quality. Housing finance is doing good. Focus of the government is on Pradhan Mantri Awas Yojana 2.0 as well, which should augur well for them. Commercial vehicle segment has performed the best when compared to other sectors on various parameters.
All right, thanks a lot for that, Abhishek. With that, we'll step into a short break, and on the other side, we get as the promised conversation on the IT space with Ravi Menon.
quality.
Welcome back. Well, steady for the markets, but let's talk about one particular sector which has been under pressure this week. That's the entire Nifty IT space. Let's put the spotlight on that sector. Macquarie believes that demand for lateral hiring is likely to pick up in FY26, as other lead indicators such as hardware capex are trending higher as well. To decode key trends in the sector and the wage hike outlook, we have with us Ravi Menon, IT and technology analyst at Macquarie Group. Ravi, hi, welcome to the show. Well, you know, the news was with regards to Accenture delaying their promotion cycle to June from December. And, you know, after skipping some amount of salary hikes as well. So that probably deterred a lot of sentiment in the market. What is your reading of it?
I wouldn't worry too much about it. See, definitely not a bullish indicator, that I agree. But I don't think it's necessarily very bearish either, because it's not a one-time change this year, right? They are saying that this is going to be a permanent change because if you're thinking about a December cycle promotions, you know, you need to start planning for it in October. So there is too much volatility now. I think in October, you have really not much idea about next year's spending plans. As we saw last year, right? People were expecting a rate cut in May. That hadn't happened. So, you know, we had actually initially been expecting that this year spending will start picking up in June. And with the rate cut that's happened only in September, now it looks like that's come too late for an improvement in spending this calendar year. So it's only next year. So I think it makes sense to align to a June promotion cycle for them. If you look at what Indian firms have done, you know, look at Wipro, for instance. Last year they had deferred their pay hike from the usual June cycle to December. This year, they've actually moved it up a little bit. They're doing it in September. They've also reportedly given a wage hike that's better than what they've given last year. So I would think that that indicates that at least Wipro is expecting a better outlook for next financial year. And we agree, and is starting to pick up. We're seeing somebody, you know, like you already mentioned, you know, the hardware capex that started picking up. Channel checks also says that conversations with clients are improving. So there is a lot of activity. We hope that will translate into deal bookings in Jan to March and into strong revenue growth by Q1 of next fiscal. That's you know, April to June, calendar year 2025.
So in light of that, what do you think would be, you know, you're talking about Wipro, you did name that, but what are the other, you know, top line IT companies, the frontline IT companies that you have your views on?
So TCS is our topic in the sector, followed by HCL Tech, then Wipro, then LTMindtree. We are neutral rated on Infosys and negative Tech Mahindra, which we have an underperform on. So TCS, we think, you know, offers the broadest portfolio. Valuations we think are reasonable given, you know, their strong free cash flow conversion. They also don't have any balance sheet risks. Unlike what we see at Infosys, we think, you know, earnings volatility occurs there. We've seen now 3 quarter fours where Infosys has but below expectations on revenue and margins. And we think that's related to a lot of large deals that they've taken on where they carry a lot more risks. And they're not used to doing that, unlike TCS and HCL Tech, I think, which have been doing large deals for a long time and have internalized that risk management capability very well. And we also see that manifested in you know, higher unbilled DSOs for Infosys compared to TCS and HCL Tech, where that's pretty steady and much lower.
Okay. Well, I just wanted to get more details about why and where and which segments do you think that demand is looking better for when it comes to Wipro?
So Wipro particularly, because since their Capco acquisition, we think, you know, they should have a better win rate in BFSI. BFS is actually expected to be the first sector where I think we should see pick up in demand, especially in North America. And even in the last call, Wipro management had spoken about you know, how they're seeing an improvement in North America BFSI. We've seen that in the numbers as well. Europe BFSI is still not doing so well, but we hope that will also come back to good growth next year.
Right. Outside of you know, the wage hike related issues and the sort of uncertainty, your call on the IT pack, what is it fundamentally based on? Is it a valuation thesis right now, or are there opportunities for growth and perhaps in some cases higher growth than earlier as well. Do you see that? Is it value versus growth? Just wanted to understand that.
I think it's both really. We see much stronger growth compared to what we saw pre-COVID. We don't agree with most people's thesis that what we saw during COVID was just pent-up demand. We think that we will see a very strong enterprise technology refresh, and that will mean much faster growth for services companies compared to, say, the 2016 to 2020 sort of period. So we should see hardware, big changes happening there. So I think the good profit pools in this tech cycle is going to be in hardware and in services, because off the shelf there is really no software available to take advantage of all the new hardware that is to offer, especially in AI. So I think services companies will be required to create a lot of solutions for customers.
Okay. Can you tell us a little more about your mid-cap pick, Persistent?
So Persistent, again, we see that as very well placed because they have no legacy. So they are in a right position to play disruptor. They also, I think, have point solutions to get into new customers. They've deployed a lot of sales personnel over the last couple of years. To some way, I would say, over-invested deliberately, so that when the demand picks up, they are in a good position to get that sales and marketing leverage and get that into their operating margins. So we expect to see that play out with good margin improvement over the next year. We also think that our estimate of 20% plus growth for next year for Persistent is fairly conservative, because their sales team today is 25% at least bigger compared to FY23. So we think that they can potentially add even more revenue than that year if demand comes back, which we expect it will.
Right. You briefly mentioned the two letters that everyone's talking about, that is artificial intelligence. You said AI. From an Indian IT company standpoint, I wanted to know what could the revenue opportunity be for companies that are developing Gen AI based products/services? And secondly, how could this impact their costs? And of all the companies that you track, which one is best placed to benefit from this, and which gets most impacted from this?
Right. I would think that BPO firms probably get most impacted because that, especially customer service, is what people are talking about as the first area where AI can be used. We've already heard some companies in the US which have used that to reduce their call center volumes a lot and improve customer satisfaction as well. But none of the large cap IT services firms really do too much customer support. Perhaps with the exception of Tech Mahindra, which I think does customer support for its telecom customers. So I don't really think there is much disruption near term for Indian IT services firms on the revenue side. It's more opportunity because to help enterprises adopt AI, there is everything from setting up specialized hardware to modernizing their data. So there is a lot of services work that I think will be required over the next 2-3 years at least, at a minimum. And for many large enterprises, I think it can be 2-3 years just to get ready for AI adoption, and then a lot of applications to be built on top of that. So we're looking at least 3 to 5 years of strong demand, I think.
Right. The reason why I asked you that was because this week earlier we spoke with the management of Happiest Minds, and they did have a bit of an AI startup that they did, just about a year ago, and now it's ramping up quite significantly. They are in active talks with a lot of clients. Do you track that space? Do you track Happiest Minds? What's your call?
Happiest Minds is a firm that I do not track very closely. We don't cover it. So Persistent, if you look at, they've launched something called Sasva, which is an AI-based solution to help roll out updates for their customers much faster. So there is productivity benefit, but that actually opens up. If you look at TCS, they've rolled out a legacy modernization program using AI. They're saying that solution accelerates us, compared to what would take 10 years earlier, which nobody actually would sign off on. Today, that's been shortened down to 2 or 3 years. So yes, notionally you might think, isn't that actually negative? But fact is that with a 10-year of effort, no client would take the risk or the cost to actually carry out these programs. So that legacy modernization is now finally an opportunity that might open up over the next couple of years.
Okay, all right, Ravi, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving your view on the IT space. Well, for the markets, advanced decline ratio is positive at this point in time. So around 2,600 stocks advancing. So that stays steady at around 2:1. We'll take a short break. But up next, Manisha Gupta will join in. She has with her Meghalaya's Agri Secretary joining in. Stay tuned.
Welcome back, and joining us now on the show is Mr. Vijay Kumar D. He's IAS Commissioner and Secretary, Department of Agriculture and Farmers Welfare at the Government of Meghalaya. Mr. Kumar, hi, thank you so much for joining us. And there's lots that being done for farmers. We've seen various notifications coming from the central government, and the state governments also are doing their bit. So when it comes to Meghalaya, what is the kind of contribution that we are seeing to agriculture exports within the country and outside as well?
We have the advantage that we have a whole bunch of crops that are export worthy, but we have a lot of challenges, right? Because our production is not very high. Our farmers are not, because these are grown in hilly areas. So the habitations are very dispersed. The fields are very far away. So it's not like the kind of plain agriculture that we know, which is where you can do, hundreds of hectares of land continuously cultivating a continuous tract of land using mechanization and stuff. And therefore, aggregation marketing becomes easy. So having said that, in Meghalaya, what we are doing is that to overcome these problems of spread out habitations and villages, the plots being small and the inability of grassroots organizations, whether it is FPOs and all, to aggregate the produce. So we have started working from the bottom, which is to strengthen the grassroots institutions, which is our FPOs, cooperatives, which can actually aggregate the produce. Because the first step to export is aggregation. So without aggregation, we'll not be able to export. So we have strengthened that network over the last 2 to 3 years. So today we have a very strong network of cooperatives and FPOs, about 500 of them across the state, so which are aggregating very high value crops of the state like turmeric, ginger, fruits like pineapple, oranges. Some of our farmers also grow vanilla. So other spices, pepper, bay leaf is very important. So all these are now being aggregated. The produce is being collected, aggregated. Their primary processing units set up at various aggregation points, and from there we are able to. We have a hub and spoke model. We have about 500 primary aggregation points, and we have about 50 hubs. So at these hubs, we do the final processing. And from there, obviously, there is, the sorting, grading, standardization.
Also, Mr. Kumar, so when we look at agriculture within the state, how would you look at entrepreneurs, startups, and what is it that the Meghalaya government is doing to give support to them?
Agri startup space is very interesting. And again, in Northeast, huge opportunities exist. And I'm glad that our entrepreneurs are taking up those opportunities. So in the food processing space, there's a whole bunch of, I keep giving this example, if you go to Thailand, if you go to just Bangkok airport, you find all these processed fruits, basically oranges freeze dried or heat dried. All fruits are dried and they're being sold across the. So mangoes are being, mangoes which are produced in Philippines are being dried and they're being sold in American markets. So today I think the processed food industry, which is has become very big. The opportunities are huge. So even for our fruits, our advantage in the Northeast is that we are naturally organic. So most of the produce that is from here is organic. It's produced without any chemicals. And then if we are able to increase the shelf life of these produce, because typically we think of juices, jams, and jellies. But I think today the market, there are a lot of, instead of eating potato chips, I think people want to eat dried fruits. So now technologies exist to kind of do that at both small and large scale. Freeze drying is a big technology. Is something that's very big, which keeps the freshness of the fruits and the vegetables for a very, very long time. So we produce a lot of strawberries, for instance, and there's a huge potential to kind of again do freeze drying or various other processing and take them to the market. So these kind of processing opportunities, we are supporting the entrepreneurs. So we have both grant windows and loans that we provide both from the state government. We leverage Government of India schemes. And entrepreneurs are being supported to set up these units. So some of these are being set by individual entrepreneurs, some by collectives, which is again our FPOs, because the investments are also huge. So sometimes individual entrepreneurs find it hard to make big investments. So there's a combination of both these kinds of entrepreneurs. But yes, the food processing space is very big, and some of our people are doing very well.
Mr. Kumar, as you said that Meghalaya does lesser volumes but higher value crops here, and you do see a lot of export possibilities here as well. So what are the global strategies that as a state that you're looking at?
So when you say global platforms, I'm expecting you're talking of e-commerce, you're talking of the Amazon is of course the place where everybody goes to buy stuff. So this is again, we are putting our products. So we have created brands. We have now a couple of brands. We have one brand which is called the Megalayan Age Limited, which is our luxury brand of the state's food and craft products. We also have a brand called the Meghalaya Collective. So it's a collectives brand, which means it's the brand of all our farmers groups. So these brands, we are trying to put the products of these brands on Amazon, online, on the various e-commerce platforms, so that they get a much wider reach. And honey, again, I didn't mention, has today, I think honey is something that is consumed almost on a daily basis by most urban households, and people are looking for good quality, whether it is the wild forest honey or specialized honeys that we have, the orange honey or the lychee honey. These are very high quality products that we have. So we are again trying to put these on e-commerce platforms and reach to a much wider audience through these marketing interventions.
All right, thanks a lot, Mr. Kumar, for joining in. Thanks a lot, Manisha, for taking us through with this conversation. But the conversation was on the Nifty, went ahead and hit that 25,800 mark as well. It's a bull run that continues. The melt up from morning. If you just take a look at the intraday chart, you know, there are periods where the Nifty just keeps moving higher in a step related fashion, and right now it's 25,800 for the frontline index. It's led again by the same heavyweights that have been doing the heavy lifting all through this morning. So we have ICICI Bank, which is doing extremely well. Fresh record high for that one, continues over the last 5 sessions. It's actually up close to around 12 to 13%. We have HDFC Bank as well, which continues to do well. So the intraday chart of HDFC Bank comes up for you, and then you have Reliance, which is among the top contributors to the Nifty. So the market, once again, a complete up move is what we're seeing. Close to 400 points on the Nifty, 1250 points on the Sensex. The midcap index holding up with gains of 1%. It's that kind of a day where even a 1% move actually amounts to underperformance, because all the other large cap indices are doing 1.5% in terms of gains. So what we'll do is, on this firecracking afternoon, take your leave on this edition of Business of Halftime Report. Take a short break, come back, Business Lunch. We'll take all the market action ahead. Stay with us.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll.
Benchmark indices scale new highs as stocks charge up in a broad-based rally. Metals, auto, industrials, realty, you name it, and they are leading the charge. IT and healthcare are the only laggards.
The Reserve Bank of India has permitted IIFL Finance to resume gold loan business from September 19th. The move, which had significantly impacted its business in the segment, comes as a big relief for the lender. The stock jumps.
Crude oil flares up with Brent hitting a 2-week high on escalating tensions in the Middle East following the Hezbollah device blast in Lebanon, and expectation of high demand in the upcoming winter months also aids sentiment.
The iPhone 16 is now like an apple in your cart as digital platforms from Big Basket to Blinkit deliver the handset in a jiffy. This even as several queue up at the Apple Store to get their hands on the latest edition.
Good afternoon, you're watching Business Lunch on CNBC TV18 this fabulous Friday afternoon. With me is Vinny Motiwala, I am Hormus Fatakia, and it is a fabulous Friday indeed. New highs for the benchmark indices, and it's a pretty good day for the market.
Pretty good day, a good Friday, at least a good week. Hoping to end on this note as well. We still have a couple of hours of trade, but fresh record high levels,
Indeed.
No complaining there, right?
Absolutely, and more importantly, the FTSE inflows, the rebalancing will also take place towards the final hour of trade, so we'll keep that in mind as well. But pull up the benchmark indices, there you can see the Nifty now making a new high, crossing 25,800 now in intraday trade. 350 points higher, 1.5% up on the Nifty. Leading the charge is the banks. Again, the Nifty Bank made a high of 53,800 on the upside at one point of time, 53,700, I beg your pardon. Now nearing the highest point of the day, 53,650 is where the Nifty Bank is, and there you can see the contributors: HDFC Bank, ICICI Bank, Kotak, banks on one side, and some bit of the banks on the other side as well. But it is ICICI Bank and HDFC Bank that have led the charge on the benchmark indices. ICICI Bank up for the 5th straight day today. Its market cap crossed 9 lakh crore in yesterday's trading session. That has had a very good run in the last 5 trading sessions. In fact, it's risen almost 12% in the last 1 month as we speak. Even HDFC Bank is up 6% in the last 1 month. So it is the banking heavyweights that are powering the index ahead. And of course, most of the sectoral indices are trading with gains. In fact, the IT and pharma that were some of the laggards in the earlier part of the day, even they have turned positive in today's session. But it's a broad-based rally.
Absolutely, a broad-based rally coming in there. And Hormas, what's interesting today is that Nifty Midcap finally and the small cap have snapped their 3-day losing streak. So it's going to be interesting to watch out for that. Look at Nifty Midcap as of now also holding on to gains of almost 1%. Day's highest point over there. And small cap too, 1% of gain there. Metals, that's one that is shining bright in trade today. So we have all the metal names: JSW Steel, JSPL, Hindalco, all of them buzzing after Macquarie has raised their target price. Positive on the Nifty metal side overall and the middle pack. Tata Steel, Coal India too among the names buzzing in trade. Moving on, in a trend that we're seeing today, shipbuilder stocks, Cochin Shipyard, GRSC, Masgav Rock, all of them too are seeing good volumes as well as in terms of an up move that we're seeing. Look at Cochin Shipyard, 9% uptick coming in for that stock. Let's move on and talk about some of the other names also. We have railways that's buzzing in trade, RVNL, Rides, Titagarh Rail, all those stocks are buzzing, holding on to gains of 5 to 6% in trade. On the back of news flow, Indostar as well as Phoenix Mills also, Hormas is managing to hold on to gains. So mid-cap names also clearly participating today. Like you said, a broad-based rally is what we're seeing in the markets this afternoon.
Indeed, and one such stock that has also contributed to the gains today is IIFL Finance, and that is the stock we're going to begin the show with. And that's after the Reserve Bank of India lifted restrictions on the company's gold lending business. And Ritu is now joining in to tell us what this means for the company.
Well, big relief coming in for IIFL Finance with the RBI lifting restrictions on its gold loan business, which means the company can now resume the sanctioning, dispersal, assignment, securitization and sale of gold loans after what has been a 6-month ban from the regulator. Remember, RBI had placed restrictions on IIFL Finance's gold loan business on the 4th of March because of material supervisory concerns that included breaches in loan-to-value ratio, significant dispersal and collection of loan amounts in cash far in excess of the limit allowed and so on. The special audit instituted by RBI to look into these deficiencies was concluded in June, and now the restrictions have been lifted. The impact of the ban has been significant. IIFL's gold loan assets under management shrank from about 26,000 crores in March to 12,162 crores by August, which is a 53% drop in just 5 months. The share of gold loans in their total consolidated AUM dropped from 32% before the RBI action to 21% as of the first quarter this year. More than 1 million customer accounts were closed during this period, and IIFL also repaid around 13,500 crores to banks which were tied to co-lending and direct assignments. So the lifting of these restrictions removes a key overhang on the company and on the stock. Jefferies has upgraded the stock to buy with a target price of 595 rupees. They expect a gradual recovery in the gold loan disbursements normalizing in the next 1 or 2 quarters, though the loan book, they say, could decline to about 9,000 crores by September. Now, while portfolio recovery may take time, easing margin pressure and high gold prices could offer some support.
Moving on from one buzzing stock to another, ITD Cementation, that's locked in upper circuit today and is buzzing as sources say that Adani Group is in the race to acquire promoter stake. Vivek is joining in with us to tell us more details.
Well, that's right. So when you're talking about ITD Cementation, remember, this particular stake sale by the parent has been going on for quite some time, especially, on July 3rd, the company actually informed the exchange stating that the Thai parent, that is ITD, was looking to divest its close to 46.5% stake in the company. After that, remember, on August 1st, our colleague Yash had done a story saying that KEC International, another listed T&D player, was actually looking at acquiring a majority stake in ITD Cementation. At that point of time, KEC International did not actually told us that they look for both organic as well as inorganic growth opportunities. And also remember, very interestingly, at the end of Q1, KEC International actually had gone ahead and announced a fundraise of close to 6,000 crore rupees, which involved 4,500 crore of a QIP fundraise and another 1,500 crore of debt issuance. Now, after that, what's actually transpired is that today we understand from our sources that the Adani Group has also evinced interest in going ahead and getting a controlling stake in ITD Cementation. We reached out to the Adani Group. They did not offer us a comment. Now, just looking at the deal, Matt, closer to the current market price, the market capitalization of the company works to a range of 9,500 crore. The parent stake, that is close to 46.5%, works out in the range of 4,500 crore. Now, remember, if there is a change as far as the ownership is concerned, there will be a mandatory open offer that will be triggered, and that particular 26% open offer will work out to another 2,500 crore rupees. So all in all, at the current market price, remember, whoever is looking to buy this particular entity will need to shell out a close amount in the range of 6,900 to 7,000 crore rupees. So it's a significant development. ITD Cementation on the back of that today locked in the upper circuit.
20% upper circuit for ITD Cementation. Vivek, thanks a lot for that update. On the flip side, KEC International is not having a very good day. On a day the markets are making new highs, that stock is down 4% and is the top loser on the Nifty 500 index. Moving on in the conversation with Shireen Bhan, Salesforce India CEO and chairperson Arundhati Bhattacharya commented that the Federal Reserve's aggressive move was reasonable considering the economic data print and higher interest rates. Listen.
Let me ask you a broader question as far as the global economy is concerned. We've just seen the Fed announce a 50 basis point rate cut, kickstarting.
Which was what the market was betting on.
The market was hoping for, and it's on the aggressive side. Do you believe that this is going to make a material difference now as far as the complexion of the global economy is concerned?
I definitely think so. The Fed and what it says and what it does still has an inordinately large impact on economies of other countries. Okay.
Wall Street has already given it a thumbs up. So,
yeah. So Wall Street will give it a thumbs up. The general, in fact, yesterday I was with a few people and I was saying that 50 basis points is what's going to come. Yeah. And they were saying the market wants 1. I said, come on, I said. You have to be reasonable. You can't keep going up.
Expectations.
Yeah, you temper your expectations. Yeah. You can't do that. But I think a 50 basis points is, I think, reasonable, given everything else, given the fact that it has been kept high for a very long time, given the data print that has come recently. And definitely it's going to have a very good impact on the rest of the world economy.
So talking about central banks and their rate decisions, while the US Federal Reserve has actually pivoted its policy stance, kicking off with an aggressive 50 basis point rate cut, the Bank of Japan held its short-term interest rates steady at 0.25% this morning. The Japanese central bank revised its assessment on consumption and signaled a solid economic recovery, enabling the bank to raise rates further. Remember, the central bank recently did away with the negative rates and raised the benchmark rates by 25 basis points in the month of July. However, opposing the market expectations, the People's Bank of China left its benchmark interest rates unchanged this time.
It's been a week that has belonged to central banks, isn't it? And keep an eye out on all of these developments as well. A time for a short break. When we return, we get you the latest on the iPhone frenzy in India as the iPhone 16 goes on sale today. Stay tuned, back on the other side.
Phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats.
Welcome back, and you're watching Business Lunch on CNBC TV18, and the much awaited iPhone frenzy that we're talking about, or was just talking about, that's at the market today. Eager customers have been lining up outside Mumbai's Apple store hours in advance. Now, to get their hands on the latest model, they had queued up earlier on in the morning, and we have our reporter Rachna, who is there at the Mumbai's BKC, as well as Abhimanyu, who is standing by at Saket in New Delhi. Let's go across to Rachna first to get us updates coming in from the Mumbai store and BKC. What's happening over there? What has she picked up there? Rachna?
The much anticipated iPhone 16 and 16 Pro series are now available for purchase in India. The phones were first launched on September 9 and pre-bookings were made subsequently open. But it is today that all Apple fans assemble here at the Apple store and get their hands on this phone. Along with the iPhone series, the newer products include the Series 10 watch and the new generation of AirPods. But the star of the show really is right here, the iPhone 16 Pro Max. This is the iPhone 16 Pro Max in the new Desert Titanium color. The price starts at 1,44,900. That's almost $1.5 lakh. But what is interesting is that this is the first time ever that a new Pro Max model has been priced lower than the previous Pro Max model, which was iPhone 15 Pro Max. Now that is because the finance minister has recently announced an import duty cut for smartphones, and that has definitely brought in some joy among the Apple customers here. Over 37 million people had pre-booked their iPhones this time around, and yet the queues are going strong even hours after the store opened up at 8 a.m. this morning. In fact, this is the first time that iPhone 16 is also available to buy on quick commerce websites like Big Basket and Blinkit. But the queue at the store is going strong for the experience that the store provides. In Mumbai, I'm Rachna Dandrajani.
Well, Rachna also caught up with some excited buyers, some who travelled all the way from Surat and from Ahmedabad as well. Take a look.
I am from Surat. My name is Adil, and we have waited for almost 3 to 3.5 hours. And actually, for next phone, we have to wait for more 4 hours.
And this is after you pre-booked your phone?
Yes, ma'am. We have pre-booked on 13th of September, and today is 20th of September. But we have to wait more.
16 Pro Max, 266 GB, natural titanium, 1,33,000 approx.
And how many?
I have 2.
Why did you buy 2?
One for myself and one for my wife.
And sir, are you buying for your wife?
Yes, ma'am, but their delivery is from tomorrow.
Clearly, the frenzy, the rush, at least at the Mumbai VKC store is what we're watching out for. But Abhimanyu is joining in with us from the Saket store in Delhi. Abhimanyu, how is the vibe there? Are the buyers rushing in to buy the new iPhone?
Well, overnight queues of tech wizards and fans, that's something which very much defines the launch of a new iPhone model, and the situation is very much the same in Delhi. This store in Delhi is located inside a mall, so the mall did not open right in the morning, but still there were people who was waiting outside the mall since 5 a.m. and yet again pre-bookings were made by several customers, but despite that we can see huge queues of people out here. There are 2 parallel queues which have been ensured at this point of time. Of course, there is a lot of security which has been deployed to ensure that other mall hoppers, other mall goers, their journey is not constrained by any way. But clearly, we can see huge crowds which have assembled here since morning, and it's not just the availability of financing schemes and the availability of iPhones on EMI which is dragging people out here, but the sheer thrill and excitement of holding the newest technological marvel by Apple in their hands is something which is bringing them here, and that is something which is possibly driving these queues. These queues have not reduced, mind you, since morning, and what people out here tell us that the others whom they know of are also reaching here are not really getting a place to stand, which clearly demonstrates that the queue is only lengthening, though some people are going inside only for inquiries, but there are a lot of people who are coming out with bags, clearly flaunting that half-eaten Apple logo as part of their shopping journey. So clearly it remains to be seen what is going to be the total sale at the end of the day and how this entire experience is going to go off for people.
Well, Abhimanyu, thanks a lot for that. You don't necessarily have to queue up at the Apple store for this, because quick commerce apps are also delivering the new iPhone 16 in just 10 to 20 minutes. So from Dhania to iPhones, Blinkit, Big Basket are upping the delivery battle with the e-commerce giants like Amazon and Flipkart. Let's now go across to Shilpa Ranipeta to understand if the lines between the 2 online retail channels is really blurring, Shilpa.
Well, I'll start off with an example to you. This morning, a consumer ordered an iPhone on Big Basket at 8 o'clock, and at 8:07, she had it in her hands. And at the same time, Blinkit, for instance, by 10:30, after its sales started at 8 o'clock, had sold almost 300 iPhone 16s. Now, this goes to show that the lines really between quick commerce and e-commerce are blurring, because last year, you'd have to wait for the next day after you ordered your iPhone on an Amazon or a Flipkart. Now, let me quickly run you through what the advantage advantage that both the platforms have and why these lines are sort of blurring. Now, quick commerce, right? The consumer behavior has really shifted. Consumers now, they want everything between 10 to 30 minutes at the most. And this is across categories. Like you said, not just dhania. They want cosmetics, they want toys, they want kitchen appliances. Everything is now available within 10 to 20 minutes. And these players are also expanding into more categories. They're expanding into more markets. They're going beyond just the small metros. And of course, the larger the assortment increasing is also an advantage. But will this mean that it will all take away from quick e-commerce? E-commerce still has some advantages. One disadvantage, however, is that same-day delivery something is the most that they can offer, but also only in select cities. But they have a higher penetration. E-commerce players serve almost 100% of the pin codes in the country. They have a much larger assortment when it comes to products, and they have the logistics in place for large appliances, for larger deliveries also already, and they can offer much higher discounts than what Q-commerce players can currently offer. But given the rising penetration and changing consumer behavior, they are facing the heat. No wonder then that Flipkart is running a Q-commerce pilot with minutes. Myntra is testing 4-hour delivery, and we're given to understand that Amazon and JioMart are also eyeing a quick commerce foray now. And they're also now ramping up their own infrastructure to offer faster deliveries. Like, for example, Flipkart, right ahead of the festive season, is adding more fulfillment centers. Amazon has a massive warehousing capacity now where it can offer more same-day deliveries. Nykaa also has ramped up its same-day, next-day deliveries to 110 cities. So this is what the landscape is going to look like going forward. Experts are saying that it's not like quick commerce will replace e-commerce. Both will coexist. Faster impulse buys will remain on quick commerce, but while more planned purchases will stay on e-commerce platforms, and at the same time, e-commerce platforms will have to now work on shortening their lead times and their delivery times going ahead.
Absolutely, they will have to hustle now to match up with the quick commerce players, because iPhone delivery in 7 minutes almost is something that's very interesting. I had not imagined that. But on that note, we'll slip into a very short break. Don't go anywhere. Up next, we'll get you all the updates on hosts of national and international news updates. So stay tuned in.
And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
కడాన తిరుమల లడ్డు కూడా నాసి రకం. నాకైతే ఆశ్చర్యం వేస్తుంది. ఎన్ని కంప్లైంట్ చేసినా కడాన వెంకటేశ్వర స్వామి పవిత్రతను దెబ్బతీశారు. ఎన్నోసార్లు చెప్పాం. అక్కడ ఎంత దుర్మార్గంగా ప్రయత్నం చేశారంటే అంత దుర్మార్గంగా ప్రవర్తించారు. కడాన అన్న దానంలో క్వాలిటీ ఆఫ్ ఫుడ్ లేకుండా చేశారు. దేవుని దగ్గర పెట్టే ప్రసాదం అపవిత్రం చేసే విధంగా ఓసారి బాధేస్తుంది. నాసి రకమైన ఇంగ్రీడియంట్సే కాకుండా ఎనిమల్ ఫ్యాట్ కూడా వాడారని. ఏది గీ.
Welcome back. On to some national news updates then. Protesting junior doctors in West Bengal have decided to call off their strike and will resume essential and emergency services from Saturday, but would not work in the outpatient department. The doctors had outlined 5 demands before Chief Minister Mamata Banerjee to cease their protests and return to work.
I'm bringing you the latest from Israel and Hezbollah conflict. In a late-night operation, the Israel Air Force struck several Hezbollah strongholds in southern Lebanon. There were no reports of any casualties, but Lebanese officials claim that this could have been a worst aerial strike since tension erupted in the region in October last year. The airstrike came days after the barrage of attacks were targeted to Hezbollah's radios, I beg your pardon, as well as pagers, and killing 37 people and wounding over 3,000.
And while Winnie figures out her latest iPhone orders, we call time on this edition of Business Lunch. But before that, a quick look at the movie releases today. You can catch Wolves, Transformers 1 and Yudra at a theatre near you. From Winnie, myself and the team that put this show together, thank you so much for watching. Midcap Radar comes up next.
ఈరోజు స్వచ్ఛమైన గీదెమన్నాం, ప్రక్షాళన చేయమన్నాం. నాణ్యత పెరిగింది, ఇంకా కూడా నాణ్యత పెంచుతాం. అల్టిమేట్గా వెంకటేశ్వర స్వామి మన రాష్ట్రంలో ఉండడం మనందరి అదృష్టం. ప్రపంచం అంతా మన దగ్గరికి వచ్చే పరిస్థితికి వచ్చారు. అలాంటప్పుడు వెంకటేశ్వర స్వామి పవిత్రతను కాపాడుకోవాల్సిన బాధ్యత మనందరిపైన ఉంది. ఇది కూడా చేస్తామని చెప్పి కూడా నేను మీకు తెలియజేస్తున్నా.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, all the indices up more than 1% right now. And you know, during trading hour, when we were talking about how markets are higher, I didn't think we can actually build onto those gains, but we have done that. The Nifty surged above the 25,800 mark. Now it has come up from those levels, but there's nothing that bulls can complain about.
Absolutely nothing to complain about. All the indices in the green, and it's actually the benchmark indices that are actually outpacing the broader end of the markets. And the advanced decline ratio as far as the benchmark or the Nifty 50 is something that's very, very strong. We have a lot lined up on the show. Let's start off with the top headline. Benchmark indices scale new highs as stocks charge up in a broad-based rally. Metals, autos, industrials, and realty lead the charge. IT and pharma lag. Mid-caps relatively underperform.
The Reserve Bank of India has permitted IIFL Finance to resume gold loan business from September 19th. The move, which had significantly impacted its business in the segment, comes as a big relief for the lender. The stock jumps.
Mankind Pharma surges ahead of its board meet, which will consider fundraising for their BSV acquisition. Company plans to raise 4,000 crore rupees from internal accruals and expects around 70% funding from debt for the acquisition.
Woodco surges over 8%. The street gets excited over company potential for extending loan assistance of 0.75 to 1 lakh crore rupees under Pradhan Mantri Awas Yojana Urban 2.0. Management tells CNBC TV18 that the potential capex under the scheme is 13 lakh crore rupees.
ITD cementation zooms nearly 20% after sources tell CNBC TV18 that the Adani Group is set to acquire stake in the company.
Okay, all right. It is that day when Nifty is again scaling new highs. We crossed the 25,800 mark. Right now, we have come off those highs and below the 25,700 mark, but still maintaining gain of around 1%. The Sensex, which is up around 1% as well, and it is all led by Bank Nifty, which is contributing to the gains that we are seeing right now. But some names which have come off from the highs in last couple of minutes would include the likes of TCS, we have NTPC, but nothing which is deterring the big move that we are seeing. The Bank Nifty too should come a few on the screen because it has come off from the highs of the day. So something like an SBI is the one which is lower. We have TCS, Infosys, Axis Bank, all these names which are pushing the Nifty lower from the highs of the day. But again, as I said, the index continues to do really well overall. But you know, the mid caps which were not participating yesterday, they have made a move as well. So the advanced decline ratio is very strong.
That's right. Some of the PSU stocks managed to make a slight comeback, and that'll be something that's quite positive given the fact that a lot of the PSU stocks have taken quite a sharp knock. One stock on the radar, BHEL, seen significant selling pressure from its recent high. Today, holding quite steady, around 2.5% higher in the session today. But a whole host of other stocks on our radar. Hormaz is standing at the wall. Hormaz, which are the stocks in the broader end of the markets that are making the moves?
The broader markets are definitely making a comeback, even as the benchmark indices are seeing some bit of cooling off from the higher levels. But yes, there are plenty of stocks in the gaining end from the broader markets. Let's start off with ITD Cementation, a news that we've been following for the last few months. That stock is locked in an upper circuit of 20%. Prism Johnson has sprung up again in today's session, another 12% higher there. BSC now almost at 4,000 is the stock, now 7% higher for BSC, and IIFL Finance after the RBI relief. Now at one point was up 13%, but still holding on to gains of around 8%. PSUs have made a slight comeback, as you just mentioned, and shipbuilders can't be left behind. Mazagon Dock 6.5%, Cochin Shipyard 10%. It's also a FTSE rebalancing candidate, so some inflows anticipated there. And of course, Garden Reach Shipbuilders another 8.5% higher today. Some of the non-shipbuilding PSUs also, particularly within the railways, are making a comeback today. Rights, Ircon, and even HUDCO. We spoke to the management today, 7.5% higher on that stock as well. Stocks that are doing well on the back of very strong volumes in today's trading session, and they'll come up on your screen. They're starting off with stocks like Mankind Pharma on positive brokerage commentary, Devyani International, Asahi India Glass as well. But there are some stocks in a market like this as well that are not doing well. KEC International is one of them, the top loser on the Nifty 500, also in response to the ITC cementation story. 4.5% lower there. Polymedicure and JBM Auto 2 at the lowest point of the day. Back to you guys.
Okay, all right. Thank you so much, Hormaz, for joining us as always and telling us which stocks are in focus. But let's get a technical check on the markets. Hemeen Kapadia from KR Choksi Securities is joining in now. Hemeen, good afternoon. Thank you so much for joining in. If you can tell us what are the important levels to watch out for on the Nifty. We have seen some fall from the highs. Of course, it's not alarming yet. But do you think we'll be able to sustain these levels?
A very good afternoon to you, Sonal. Thank you for having me on the show. It's always a pleasure. 25,800. Okay, these are uncharted territory, Sonal, obviously. No known resistance levels. But yeah, 25,800 will obviously now act as a resistance level that needs to get taken out. But maybe, like you said, it's not yet alarming. It's maybe just a one-off thing. And we need for Nifty to sustain above 25,470. I think that is important. If it does that, it's okay. We've had a brilliant run. It is getting a bit overbought, but 25,470 is important. Bank Nifty 53,357 was the all-time high. I thought we would have taken some time to consolidate, sort of take a breather and then move up. But it went above that today. I don't think it's going to close above that. So previous all-time high, it's natural we expect significant resistance. So that's what we are seeing. So as of now, Bank Nifty is playing catch up. Nifty is facing resistance at levels we haven't seen up till now. So I would say a small pull-off is there probably in the offing. The VIX is not suggesting anything yet, but yeah, the way we've seen the price movement in the last half an hour or so, Sonal, I believe there is either call writing or resistance at these levels that we spoke about.
Thanks so much, Hemant. In fact, quite a sharp sell-off from the highs. The Nifty given up almost 250 points. 25,800 is where the intraday high was. After that, even the Bank Nifty has given up quite a bit of gains. In the last 10-15 minutes of the session. Hemant, which are your top trading bets for the day?
Well, it's still too early to give a small sell call away. But yes, the way it's fallen off a cliff is a bit disconcerting. But yeah, stocks to look at in terms of recommendations. Firstly, a buy call on Nestle India. 36 weeks of a consolidation. 36 weeks. This is the 37th week between 2340 and 2650. Listed history, we've closed twice on the weekly chart about 2650, but haven't sustained. So we're on the cusp of doing that. Friday weekly charts are closing. I'm assuming the closing comes in about 2650. So that happens. One can buy Nestle at around current levels, stop loss of 2600, target of 2810. A 37-week breakout is a significant one, I believe. Secondly, Vivek, a buy call on DLF. DLF has been moving sideways for some time. There is resilience. It's formed a rounding bottom on the weekly chart. The mechanical indicators after 5 or 6 months are beginning to look up, are giving crossover buys. Everything seems to suggest that we are set for an up move. It's also for the 55-day exponential moving average, high tops, high bottoms. Everything seems to be falling in place on technical parameters, obviously. So one can buy DLF at 865 away, stop loss of 840, target of 915.
Okay, all right. Thank you, Hemant, for joining us. While we're talking about this fall that we're seeing from the highs, it's quite swift actually. And the banking index and the IT names, they should come up for you on the screen. Look at that. It is almost a 250-point cut from the highs that we are seeing. It is contributed by the Nifty Bank. Something like an SBI, you have ICICI Bank. These stocks have come up from the highs. Nifty IT, that is the main reason why we are seeing this big fall. So we have the likes of Infosys in the Nifty IT pack, which has led to this fall. And Nifty IT has come off sharply and is at the day's low. And these are heavyweights that we are talking about, right? So Infosys, there's HCL Tech, TCS should also come up for you on your screen. All these stocks, a sharp fall in last couple of minutes. We also have Bajaj Fin, which has come off. ITC is the other important weight, which is coming off from the highs, and that is the one which is leading to the fall that we are seeing right now. HUL. So some of these consumption names too, they've come off sharply, and that is the reason, Vivek, we are seeing that fall coming by. And that's quite sudden. So Nifty IT is the one which is contributing to the fall, and
see,
the Nifty Bank.
Yeah, the Nifty IT has seen a very sharp dip, and that's actually caused the Nifty to lose almost 300 points from the top. And this particular fall is quite swift. It's happened just in the last 15-20 minutes of the trading session. But let's move on. We'll slip into a short break. Ajay Kanwal, the MD and CEO at Jana Small Finance Bank, joins us next to discuss their growth outlook and more.
Invest.
Welcome back to Midcap Radar. Like we mentioned, the market has seen quite a bit of a sell-off from the higher levels. In fact, the Nifty cooled off quite significantly after hitting the 25,800 mark. Now closer to the 25,550, or 50-point bounce in the last couple of minutes. But like we promised, remember, we have the management of Jana Small Finance Bank waiting by. Jana Small Finance Bank has launched a new liquid plus fixed deposit offering, providing an interest rate of 6.75% per annum. The offer is effective from September 19th and it aims to attract short-term funds. To discuss this and more, we have Ajay Khanwal, MD and CEO at Jana Small Finance Bank, joining us. Good afternoon, Mr. Khanwal. Thank you so much for joining us. First up, talk to us about this latest offering of yours. And number two, how has business panned out as far as Q2 is concerned?
So first, a very good afternoon to you and all the viewers. This product is interesting because we did feel that when it comes to short-term money management, we probably don't have a competitive offering as a bank, or probably even as an industry, I would say. And we looked at where do people really go? They go for liquid funds, they go for short-term debt funds. And we had seen a fair amount of equalization from a tax angle. But that did not mean that that would be the reason where, whether it's CFOs or treasurers or people with short-term liquidity, why would they keep money with banks? We found there are 2-3 areas where we had to really change. The first one was making sure that we give a fixed return for a period of time. So we decided that between 7 days to 180 days, whenever you withdraw your deposit, I will give you a flat rate of 6.75%. Second was, banks typically have prepayment penalty charges when you break a deposit, which in a short-term industry doesn't exist. So we took that away completely. The third piece was around partial withdrawal. I don't need to withdraw all the money. I really want to withdraw part of it. So we kept a partial withdrawal facility also as a fourth feature. The fifth one, we said, listen, somebody doesn't want to partially withdraw. I would like an overdraft against it. So there is an instant overdraft facility at a very nominal charge. And finally, payment is at T+0, which all banks do for deposit. So I do think from our perspective, we looked at short-term money management and we looked at where are the gaps, why people don't come to us or probably at a larger industry per se. And we put our best foot forward, and which is what we launched yesterday.
Okay, all right. Yes, please go ahead.
Sorry. And just to make sure that we understand this, our basic deposit book, 98% of all retail deposits are 1 year and above. So we really don't have a real short-term deposit book ever. Over the last 2 years with supply chain, vendor management, vendor finance, etc., we now have a short-term asset book. So it's easy for us to also match it off between a short-term liability coming and a short-term asset book at our end. So that was the primary reason we thought we will go ahead and make this what we think is a first of its kind from a bank.
Okay, interesting product. Yes, it's an interesting product is what I was going to say next. Mr. Khanwal, now that we have this new product that you have put out in the market for short-term lending purposes, and we have seen this Fed rate cut that has come by recently, if at all RBI does follow suit, what kind of impact will you see on the asset and liability side, the impact on spreads and NIM side as well? And has Q2 so far been better than Q1 in terms of asset quality and otherwise?
So definitely quarter two has been better than quarter one. Really three reasons. Quarter one anyway is always soft for most of us, and we don't have good reasons for it, honestly. Second, heat wave did have some impact, certainly on people on the field doing collections, doing sales. It was a bit of a tough quarter, I must say, and we did see some impact of that. And third, elections did cause some amount of slowdown in some areas, not all of it. And there were three real factors which kind of made Q1 a bit more challenging. Q2 obviously a lot better from both the volume perspective, both from a collections perspective. So yes, it does look better. And on your question on where does interest rates go, see the reason why interest rates weren't probably going the US way, so to say, in the past, or probably even now, is on food inflation. I think once we get a bit of clarity around food inflation, I do think that our opportunity to relook at the direction of interest rates may be a reality. At least from what I see in the market, when we raise deposits, when we speak to consumers, it is certainly a softer environment than what it was in March. So it's still very competitive, but not as competitive as we've seen in March. So there is certainly a softening, so to say, in our head when we meet with consumers, when we do bulk deposit pricing, etc. There seems to be a bit more liquidity for sure in the system.
Oh, that's good to know. I want to, pin you down to a couple of numbers. As far as the FY25 guidance is concerned, you have an AUM growth target of 20%, a deposit growth target of 20%. Last time you spoke to us, you said that the cost of funds had peaked out closer to the 8.5% range. Do you stick to these numbers, and what is it that you're targeting for NIM as far as FY25 is concerned?
So yes, 8% is a cost of deposit. We will be at 8 or below. That's our sense. And I'll give you a very practical number. Our peak deposit rate in the first quarter of this year was 8.5%. Second quarter, our peak deposit rate is 8.25%. And which is what I said earlier, that I could see a bit of softness, and we are able to grow with the 8.25%. And I do think that interest rates in our mind have peaked out. Second, on 20% growth in deposits, 20% growth, which is our annual guidance. Our first quarter itself was 5% each, both in asset and in deposits. Only thing very important to us is, we are really focused on growing the secured asset.
Yes.
So our growth in the first quarter on secured asset was 8%. On unsecured was -1.5%. And to us, that is very important. It's not just growth, it's the quality of growth. And that's holding up very well. Similarly, on the liability side, our growth in CASA was about 9% and growth in fixed deposit was 4%. So, it's a 6.5-year completion in September. And as we evolve into a full-scale universal bank in the future, we would like to really move and get all the parts right.
Okay. Mr. Kawal, last question before we let go of this interesting conversation. I know your MFI book has come off to 38% of share versus 100% when you started the bank. But considering where the industry is right now, there has been some pressure. How is your company trying to, work around the pressures that the MFI industry is seeing generally? And what is it for you in particular?
So I must tell you a bit about the stress and my view on the same. I think wherever companies have grown fast, because unsecured lending, if you grow very fast and you end up leveraging your customers higher, your stress levels are much higher. To that extent, we are slightly in a better position because our CAGR of unsecured loans between March 18 to June 2024, which is 6.25 years, roughly is between 1 to 2%. That's a CAGR for 6.25 years. So it's really not been something that we've been pushing very hard on. And which is why we can see that, yes, we do have a bit of stress. Nothing as compared to an industry which has really been growing at 25% CAGR annually, if you ask me. We obviously are seeing it peak out again in the quarter two. And quarter one, of course, was a bit more challenging because, like I said, heat wave election. So it just got, stress coupled with a difficult quarter made it look odd. We do think it'll peak out now. We don't have a bigger challenge here. And, our buy, so that we're very clear, is, we would like our microfinance customers, if they do want the affordable housing, if they have the business and they would like a business loan, they would like a two-wheeler, they would like gold loans, See, we do feel that financial inclusion has to go beyond unsecured.
Right.
Because we have to put it to productive use or asset building use, which is what we are very busy doing.
Mr. Kanwal, we have a lot more questions for you, but we are running out of time. We'll have you again soon on our show to discuss these questions in a lot more detail. Like promised, let's now shift into a short break. On the other side, we'll get you more on the markets and focus on Hutco, which is buzzing in the session today. Stay tuned.
Welcome back. Let's quickly take a look at Hutco. That stock is surging in trade today, and we spoke to the management where we spoke about the opportunity in the PM-AY scheme, the Pradhan Mantri Awas Yojana, and they said the loans worth 1 lakh crore can be disbursed under this, and also that yields will be nearly 9% under PM-AY 2.0, and it will be the same level as the existing yields as well. So that's stock surge and management commentary and the opportunity that we are seeing. The Nifty too has recovered from the lows, so continues to be a very interesting day for our own markets. We'll track that for you very closely, but we'll take your leave on midcap radar. Stay tuned, your stocks when we return.
Barely a few months ago, this spot was bustling with shoppers and your shopping experience was incomplete without being shoved, jostled around or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier. But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we are seeing good gains come in for the market, so no real concern which has come in for today's trading session, and we've really followed what the global markets threw up for us overnight, the US markets as well as the Asian markets. So it seems as though we are in steady state. We have the Nifty, which is at record high, so up around 1%. The Bank Nifty, which has gained around 0.8% and has done well on a week-to-date basis as well, along with the mid-cap index, which has underperformed week-to-date, but nonetheless holding steady with a gain of around 0.7%. The advance decline ratio has remained steady through the trading session, favouring the advances. Hi, Vinny.
Absolutely. Hi. Good afternoon, Ekta, and a very good afternoon turning in for the markets as well, right? Nothing to complain about today. Ending the week on a good note is what we're looking at in terms of the market as of now. But on that note, let's get started with all your stock-related queries. And joining us today are experts. We have Shaina Mukaddam as well as Vaishali Parekh on the show. Very good afternoon to both of you all. And let me start with the first query. This query is a long-term query coming in from Deep Shah. This is from Mumbai. He's holding 3,000 shares of AB Capital at around 197 rupees per share. Currently, AB Capital trading at 227, so clearly making some bit of a profit there. Now, he wants to know that whether he should continue to hold this for the long term or maybe look to sell, book out profits. Shaina, what's the word on this?
I would say you should continue to hold. Recently, they have got the approval to merge their finance business into AB Capital, that is Birla Finance into AB Capital. Of course, that doesn't change anything in terms of the equity capital, but it just strengthens the overall size that AB Capital can work on in terms of the finance business. And this accounts largely for about say 55-60% of their total revenue. Others being your housing, insurance. I think price to book, it's pretty decent, attractive is just about 2.2 times, which is not expensive. So I would say you can hold from current levels.
Okay. All right. Well, Vaishali, what would your view be on Aditya Birla Capital? 12 months, the stock has given returns of over 20-odd%.
Very good afternoon, all of you. Yes, so the trend is very much intact. It is in the positive territory, even of the larger term time frame. If I'm looking at the weekly and the monthly, the trend is quite intact. So, well, we have the support levels also pretty close. The support levels lie at 12 to 200 levels, and from there, that's where we have seen the new round of momentum begun. So, I would say 243, 245 levels need to be crossed. And then later after that, once we see a consistency in these levels, we can see a target of 270 also. So view is positive and buy on dips with a support of 200.
Okay, all right. That's on Aditya Birla Capital. We now have Lakshmi, who writes to us from Vishakhapatnam, holds around 500 shares of IndusInd Bank, which is bought at around 1460. So sitting on a profit on that one, and wants to know what to do, whether one should hold their shares in IndusInd or exit at current levels. Well, the bank Nifty itself has done well. Frontline stocks such as IndusInd, what would your view be on that on a longer term basis, Shahina? Is this a portfolio stock that stays on to that one sticks on to?
Yeah, the stock has actually, been consolidating around these levels, and the valuations are not expensive. It's just about 1.8 times book 1 year forward. For the size of IndusInd Bank is definitely interesting, and the management has said that they will grow about 15 to 17% in their loan book, which looks good at current, currently their CD ratio is about 85-89% in that range. So they would be able to bring it down a bit more, growing very well. Their NIMs are pretty healthy. So I think at current levels, it would be a hold.
Okay, current levels would be a hold, but Vaishali, what's the word coming on the technicals, right? Because when you're looking at it, YTD, IndusInd has not managed to perform much in terms of a move. 7% downtick actually is what we're seeing. What are you looking at it in terms of charts?
So I totally agree that IndusInd Bank has not performed the way the other private sector banks have. And I would say right now we would just take it as a trading strategy. Technically, it is in a better spot because it's sustaining above the 200-day moving average. We've seen the run-up coming in, and this is the level where it's just consolidating. So we would say it needs to cross 1530. That is the next hurdle. So once we see the stock moving above 1500, 1530 levels, it brings us furthermore conviction and clarity that it can go towards 1580 to 1600 levels. So that's how we would be looking at it. For now, it's absolutely in the trading zone.
Okay, keeping an eye out on those levels there. But let's move on to this next query. This one is from Vidya, who's writing to us from New Delhi. Now, he wants to know, he's holding 80 shares of Coal India at a price of around 503 rupees per share. Wants to know whether he should continue to hold this or maybe look to sell. And let's not forget that today we did have a brokerage note coming in from Macquarie on metals, where they've actually raised the target price for Coal India to 541. Shaina, what's your view coming in for Coal India? Would you suggest that the viewer continue to hold Coal India?
Yeah, see, Coal India, the valuations are extremely attractive. It's just about 4 times EV to EBITDA, which is like a very good stock to hold in terms of valuation. Also, if you look at the, I would say the business coal prices have remained stable over the last 1 year. They are operating at about 100% capacity utilization. So to that extent also, business operations also going well. And valuations, as I mentioned, were good. Lastly, I think in terms of overall performance, the stock has performed. But even from here, I believe there is an upside that one could look at if you're holding for the medium term. So definitely you can hold. Of course, the longer term, you have to keep reviewing the stock, because while it is a high dividend paying stock as of now, one needs to look at it because, yes, there is a shift from fossil fuel to green energy. So to that extent, I wouldn't call it a portfolio stock. I would call it more of a dividend play.
Okay, you would call it more of a dividend play as compared to a portfolio stock. But what is your sense on this one? What would your view be on the technicals?
Sure. So the trend is good. Right now it is in the consolidation phase. So unless and until the levels of 475 break, the stock is likely to surge high. Today also we are seeing good volume pickup and good momentum kicking in. So we need to have a clarity once the stock sustains above 505. I think this is ready for a target of 540 to 560. So risk reward ratio right now from here on also is very favorable. With 475 as support, this can be looked into for 540 target.
Okay. 540 target is what one could watch out for from Coal India, and obviously a dividend play that comes in there. But let's move on. Next query is from Sagar, who's from Mumbai. He's holding shares of Nuvama Wealth Management at a price of 143 rupees per share. I beg your pardon. He's holding 143 shares at a price of 4,750 rupees per share. Wants to know whether he can continue to stay invested in this one at the current levels. What's the view on this one? Vaishali, let me take it across to you first. What are you watching out for? Because viewers currently making a good amount of profit here.
Well, definitely actually continue holding because I see no sign of fatigue right now. The indicators are also showing that there is still scope for further upside. So I would say since he's already sitting on such a good high level of profit, 6,400 should act as a trading stop loss and look for a target of 7,300 to 7,500. That's how I would look at this stock because, well, very, very strong build-up coming in even at these levels.
All right. And what about the fundamentals of stocks such as this, Shaina? Nuvama Wealth Management stock has already given returns of around 92% on a year-to-date basis. So fantastic performance. What would your view be, Shaina?
Yeah, I thought the stock performance has actually trailed their fantastic financial performance. If you saw the first quarter numbers, you had an overall growth of revenues of about 87%, profits more than 90%. So I think to that extent, in terms of valuation, while it remains expensive, the growth, and especially if you talk of wealth management companies across the board and also Nuvama, the growth has been so phenomenal that, it is better to continue to hold. You could hold for the medium to longer term. Shorter term, you may see some bit of...
All right, Shaina, there's some disturbance in your audio, so we're just going to come back to you in just a bit. But that's a view coming in on Nuvama. That stock is giving returns of around 90% on a year-to-date basis. Just want to point out for the markets, there are specific stocks which are doing well. So Marksons is doing fantastically today. That stock has picked up around 12% in today's trading session, over 300 odd rupees. Gained over 90% this year itself and around 29% just in the month of September. So very well in today's trading session. We'll take a short break on that note, but more queries on the other side. Stay tuned.
Land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand.
Welcome back. You're watching Your Stocks on CNBC TV18. Let's move on and keep it going with all your stock-related queries. We have Shaina Mukaddam as well as Vaishali who are still connected with us to stall all those queries of yours. But let's move on. This query is from N. Ramesh, who's writing to us from Hyderabad with an investment query, and this is to buy Varun Beverages as well as Skims. For the long term, what is the view on both these stocks, and fundamentally, how are they looking, Shaina? Shaina, this one is for you, and this query is from Ramesh. He wants to know whether he can look to buy Varun Beverages and Kims for the long term.
Well, he can, but I would not suggest to buy it at current levels. I suggest you buy it at dips, because if you saw last week, both the stocks actually have gone in and had splits. Varun Beverages had a 2:5, and Kim's had it become a 2 rupee share from a 10 rupee share earlier. So basically, if you saw the correction in the price of the stocks, it is not actually totally factored in this split. Secondly, in terms of valuation, both the stocks are expensive at current levels. Kim's, because of the heavy expansion that they are doing, they are adding almost about 300 beds that would come in operation by the end of the year. So in the current year, it's going to be a bit expensive because you're going to see some bit of pressure on the margins, and growth likely in terms of revenue will fully reflect next year. Valuations are extremely expensive. In fact, Varun Beverages, the valuations are more expensive. If you see 1 year forward, valuations are almost about 70 times, multiple. And if you look at the growth in terms of overall revenue growth, we are talking of volume growth double digit. So I think the stock has, moved far ahead of the numbers that are coming out. Yes, but they are good quality stocks, not at current levels. Buy it if you get any corrections.
Okay, Vaishali, what would your view be on both these counters, Varun Beverages as well as Kims, both from different industries?
Definitely. So Varun Beverages, I think it is already gone quite high. So I would say, wait for a little bit of a dip, because 600 would act as a support. So either you accumulate, because if it retraces to 600, then there will be a little bit of erosion. So 600 is an ideal support level. So somewhere closer to that, because long-term chartical projections, what we look at is around 680 to 700 levels. So I guess accumulation would be a better strategy. And as far as Kims is concerned, we've seen a perpendicular rise right from around, I think, 400, in fact, 380 levels in one way. So I would say now let it retrace a bit towards 500. 500 would be a better level to get into the stock for higher targets.
Okay, all right. 500 would be a better level for Kims to get in for higher levels. Now we have Maulik, who writes to us from Ahmedabad, holds around 50 shares of SBI card, which he's bought at around 800 odd rupees. And he wants to know what to do, whether he should exit or park his money in this particular counter. So he's asking about SBI cards in particular. What is your sense, Shaina, on this one?
Well, I suggest that, he either switches from SBI cards, he can switch to even something like SBI, which I prefer, or he should exit. Basically, if you see, there's a lot of pressure coming on in the overall card business. RBI is putting in a lot of new norms that they are being affected. Also, businesses, I think in the longer term will be affected by a lot of new transmission and transfer methods of, like, for example, UPI. So to that extent, business overall will slow down if you take the longer term, and valuations are not cheap. So I would suggest a switch.
Okay. Valuations are not cheap. Business could see a slowdown. That's the fundamental word coming in on SBI Cards. Vaishali, is your view on the technicals also similar for SBI Cards?
In fact, there is some improvement which I'm looking at on the weekly chart as well as the daily chart. So I would say, well, of course, if one has to get into the trade, it always has to be a disciplined level-wise trading. So I would say right now it's at 783. So keeping in mind 765 levels as a stop loss, this stock can be considered again to look for a target of 800 to 820. So that is how, even on a weekly chart, after a very long consolidation, the stock is showing some upward move. So I guess for now, 800, 820 should be the target that one can look into and keep a stop loss of 765.
Okay. All right, so that's on SBI Card, but we now have Srinivas, who writes to us from New Delhi with an investment query. He says he wants to invest in Syngene International for the longer term and wants to know whether it's a good idea to invest now or not. Well, China, the debate with regards to the Biosecure Act, how beneficial it is going to be for a company such as Syngene is ongoing. But they seem to be quite bullish on it. What's your sense? Do you think that it's a long-term play? One should probably look into it?
Yeah, I think so. I totally agree with you. This act is going to be a positive for Indian companies in the medium to longer term because it is going to be China plus one. The act is specifically made to, the companies in the US and developed markets to actually outsource from other countries other than China and some of the other, Asian countries. So to that extent, India will benefit. And Syngene, of course, is in CRAMS. It's one of the leaders. If you remember, 2 years back, they tied up with a company called Geotis, and which is a $500 million order over a 10-year period. So I believe, while of course we didn't see very good performance in the first quarter, as time goes, I think it should start reflecting well in the numbers. And I would suggest that, if you're buying, you can buy it, but do keep stop losses in this volatile market. It is always better to hold with a stop loss.
Right, and Vaishali, what's your word coming in for Syngene? What are your expectations on the technical front?
Well, I would say that not at all a good buying opportunity at this level because it's already run up. But to those who are holding, should continue because I'm looking at it even on a monthly basis, it's showing a lot of good uptrend. So it makes sense to hold. But if one has to buy, then wait for levels of 880 to 870.
Okay, all right. We now have Lokesh, who writes to us from Mumbai. He holds 1,500 shares of Vodafone Idea, which he's bought at 13.35. Will it go down more? Some brokerages have put a target of as low as 2 rupees. I think that's the big concern about Voda Idea since yesterday, about what the future is going to look like. There was a decline in terms of the addition of subscribers, in terms of the telecom data that came out today. But separately, the big problem is the debt, which is looming. So from that perspective, Shaina, what would you recommend?
I would say it is better to exit. There are a lot of negatives that have come about. The Supreme Court judgment that we saw 2 days back, there, on the balance sheet, it's going to be a huge amount of additional stress, not to mention the huge debt. So all these things more or less, offset totally the 18,000 fundraise that they had done. So it is really risky. It's like, you just have to sit and wait and hope some M&A happens. But it's very risky at current levels. So it's no point in holding. Better if you have funds to invest in the sector, either invest in Reliance through Jio, you get a better opportunity to play into the telecom segment, or even Bharti Airtel at declines, because the stock has rallied. I would prefer in terms of valuation, let the stock correct and you can invest.
That's the view coming in on the telecom side from Shaina. But that was the last query for today. So thank you so much, Shaina, as well as Vaishali, for joining in with us on this show and solving all our viewers' stock-related queries. But with that, it's a goodbye from Ekta, myself, as well as the team who put this show together. Don't go anywhere. Closing bell will take the action forward.
foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Our biggest overweights would be things like pharma, auto components. We've gone somewhat overweight IT in the last rebalance. Cap goods and industrial machinery, most people discovered in 2023. We have been overweight for almost 3 years. So we went overweight in October 21. And as far as, in general, what is to be done? First of all, many of the viewers would have made great money in some small cap, some micro cap. All those things you book profits and put it into a steadier portfolio. So if you want a one-line advice, that would be it.
కడాన తిరుమల లడ్డు కూడా నాసి రకం. నాకైతే ఆశ్చర్యం వేస్తుంది. ఎన్ని కంప్లైంట్ చేసినా కడాన వెంకటేశ్వర స్వామి పవిత్రతను దెబ్బతీశారు. ఎన్నోసార్లు చెప్పాం. అక్కడ ఎంత దుర్మార్గంగా ప్రయత్నం చేశారంటే అంత దుర్మార్గంగా ప్రవర్తించారు. కడాన అన్న దానంలో క్వాలిటీ ఆఫ్ ఫుడ్ లేకుండా చేశారు.
Japanese indices were leading the gains yesterday. They're leading the gains today as well.
Big relief for IIFL with RBI lifting the restrictions on its gold loan business.
The Nifty must, on the downside, hold 25,120.
They did a good job, I think. It was a hawkish 50 basis point cut.
The Nifty is starting with a 0.5% gain, 25,540.
Our biggest overweights would be things like pharma, auto components.
Long serpentine queues can be seen outside the store. Even now,
the Fed and what it says and what it does still has an inordinately large impact.
It definitely is a Friday for the bulls. New record highs yet again.
Particular stock that's doing very, very well in the session today is ITD cementation.
The Nifty surged above the 25,800 mark. Now it has come up from those levels, but there's nothing that bulls can complain about.
sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and what a day we've been having. The market up plus 200 points. It was actually almost up 400 points on the Nifty, and we've cooled off since. This is the last hour, and we'll track markets for you. We're coming to you from the CNBC TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. I guess the week started off on a bit of an iffy note, but by the time we're ending it, the bulls would be feeling quite convinced because it's been one big move, one big rally playing out.
All right, it's been one big, and sometimes these big global events, it's not that day which where the real reaction is seen as day two.
Yeah.
And we've seen that many times in the past as well, and this seems to be one of those as well. So one day late, but I have to say it's a satisfying reaction. I mean, imagine if you were down today as well. I mean, the Fed cuts 50 and the markets are all sulking and down, right? Down and out. I think that would have been a bit hard to fathom and to explain as well, which is not what we are having. We're up solidly 250 points, so 25,700, which means that now, with that upper end of that ending diagonal on the Nifty that we were talking about, I mean, if we close here, that is gone. I mean, so are we starting a fresh impulse move higher? That becomes the new question, really. So we'll see what the close really is like, because we've been, sort of flitting or giving up and adding 100, 120, 130 points just like that. If you just see the last 1 hour or so, the Sensex is up 800. Midcap index, actually large caps are outperforming what the mid-cap and the small-cap part of the market is doing, because those are doing well, but they're up about 0.8%. But really, it's a vibrant screen. Advanced decline is about 2:1. Consumer stocks are doing well. Metals are doing well. Autos, I mean, especially the tractor names, and we'll talk about each of these names with our researchers in a bit, and beaten down PSUs, especially on the defense side. They're making a comeback. Some of them are up between 7 and 10%. Surabhi.
Absolutely. I mean, it's a big list of winners out there. And, if I talk about some of the major movers and shakers, PSU names, which were completely out of favor in the first part of the earlier part of this week, they've come back in quite some style. Look at Masgao Dog, for instance, right now. It's the PSE index up 1%. Otherwise, it's one of the weakest performers of the week so far. But look at Hoodco. We spoke with the management in the morning, sounding extremely optimistic on the PMAY 2.0 scheme, under which they are going to be lending, very significant sum. There's Masgao, which is up 8.5%. There's Hoodco, there's Cochin Shipyard, 10% higher. So basically, the whole PSU space has come back with a vengeance. Rights, I could go on. I mean, quite a few names over here as well. And then there are other names. Some of the wealth management businesses, Nuvama, for instance, is up almost 6%. There is IIFL Finance, which of course has great news coming in the form of regulatory relief from the Reserve Bank of India. Stocks been up 8-9% throughout. So some of these names from the broking/wealth management side are doing well. But even newer names, so to speak, Devyani International, not often that we've spoken about a quick commerce player or QSR, not quick commerce, but more of QSR. But you're having those names also on the upside as well. And then, of course, there's the likes of Reliance Infra. It's been quite the week for Reliance Infra. All kinds of positive news flow, settling old dues, looking at raising fresh equity capital. And the market's really lapped it up. By the way, Reliance Infra this week is up, hold your breath, 47%. That's the kind of move on the stock, as the market is sniffing some sort of perhaps a turnaround and maybe a fresh lease of life. So lots and lots of action beneath the surface. But the surface itself is looking so good, with the Nifty sitting on a 250-point gain. So the question is, what do you do now? In the last 1 hour, we have with us, as usual, Mitesh joining in with some thoughts. Mitesh, it's been a great day for the bulls. Would you take long positions even now on the index, Nifty, Bank Nifty, in the last hour?
No. So, I think it's been a great day. I think I agree with that. But also is the fact that it's been a very volatile day. Look at the last 2 hours movement and on a 5-minute chart, and you will see that it's been a vertical rally for the first 1.5 hours, and then a big decline of about 300 points from the highs of 800 plus levels. And then again, a bounce back of 150, 200 points. So it's been slightly choppy. The Nifty futures premium discount also has been changing. So I'm not very sure what's happening in the short term. though the overall the setup and the trend is on the upside, but on an immediate basis, I think it makes it difficult to figure out, and therefore taking a fresh position may not be the best idea. If you don't understand some part of the market, I think best to let it go and look for opportunities where you have some understanding and can take positions. And that is why we are trading with some stock-specific buys. I have a buy on iShares with a stop at about 49.50 and a target of around 5100 plus. Both iShares and Scotch have done well, and Scotch, since the run-up has been there, I think iShares is something which is bringing out fresh, so I would choose an iShares. And also a buy on DLF. Now, the stock has time and again failed to get past this 875 880 zone. So the way I would want to buy it is buy some now, buy more above 882. And for the time being, the stop loss is about 855 and a target of 920 is what I'm looking at.
Okay, all right, got it, Mitesh. Thanks very much for that. By the way, while we're talking about a lot of the enthusiasm over here, also important to note that global markets, Western markets, they're cooling off a little bit because, I mean, they've been running on steroids at 50 basis points of a rate cut of a steroid that came through. But now Europe is tracking some red. There's about a 1% decline on many of the indices. And US futures right now also indicating that it could be a bit of a cautious start, digesting some of those recent gains. So, yeah, that's the picture across some of the major markets across Europe for the time being. But, another asset class that has celebrated the rate cut is, of course, the entire commodities universe. A lot of, base metal prices also moving higher. In fact, metal prices have been, metal stocks have been doing really well back home here. And along with all the rate cut enthusiasm, there's also a bullish note from Macquarie that seems to be supporting sentiment. Nimesh is here with the details from this one. Nimesh, fill us in.
That's right, Surbhi. So, while there is a Macquarie note and they've upgraded a few names, the metal stocks are also buzzing on the back of the strength in the global commodity prices, and that's helping the Indian metal names as well. So, I'll start with JSW Steel first because that's a big upgrade coming in from Macquarie. Today, they've upgraded the stock to an outperform, and then they've raised the target price on the stock to 1,077. However, JSPL, continues to be the top pick for Macquarie in the metal names. Even there, they've raised the target price to 1170 on JSPL now. On Hindalco, the target price has been raised to 760. On Tata Steel, they've raised marginally. They've raised the target price to 171. And on Coal India, which is also buzzing in trade today, there Macquarie has raised the target price to 541. Now, a couple of key highlights from that report. One, the Macquarie commodities team believe that the upcoming rate cuts is not going to be disinflationary, and actually it's going to be market supportive in 25. And on the back of recovery in the demand as well, they expect prices to firm up in the second half of this year. So that's been the key reasons why they've today upgraded some of the metal stocks. Now, coming specifically to individual names on Hindalco, they've put out a note saying while the slowdown in the global auto demand will have a bit of a near-term impact on their subsidiary Novelis, but generally the prices are firming up both in aluminum and alumina, and that would mean positive for Hindalco. That's a trigger for raising target price on Hindalco. On Coal India, again, Macquarie believes that while the easing international prices on coal, that can have an impact on the margins in the near term, but there is clear focus from the company in terms of improving the margins. There is a growth as well, and the stock has a 5% dividend yield as well. So on back of that, there is a target increase on Coal India as well. So Macquarie today has actually upgraded JSW Steel, but they remain bullish on the entire metal names.
Okay, got it, Nimesh. Thank you very much for that. That point on auto concerns is well taken, actually. By the way, another development, European market action was that today Mercedes came out lowering its guidance and forecast for the year. Now, almost every single major global auto OEM brand has now lowered its forecast. BMW, Porsche, Volkswagen, and Mercedes as well being the latest ones. So lots of concerns as far as global demand or European demand for cars goes. But let's take this to Sudeep Bandopadhyay is joining in, of course, from IndiTrade Capital. Sudeep, good afternoon. Thanks for joining in. Let's start with that question on metals, really. Right now, there's a lot of euphoria and positive sentiment thanks to the rate cut cheer. But would you be a buyer of any metal stock right now?
Well, I think, Subi, what we need to distinguish is between ferrous and non-ferrous. There is, while the rate cut is definitely gets the metals excited, and that's what pretty much is happening. There is another challenge which the metal universe will face, and they are facing, is that the biggest market, which is China, there is a problem. And that problem is genuine. It's not a temporary problem. It's not a, it's not going to go away. It's a structural issue there. And the government, for some reason, is not coming out with a major, liquidity injection or rate reduction. There were expectation on rate reduction. That also hasn't happened. So I think the China problem is going to remain for some time. So I would not like to buy, let's say the steel companies at this stage. If I have to really look at the metals, I'm structurally bullish on the entire aluminum industry. I think the use of aluminum structurally is increasing across the spectrum, whether it's the EVs, whether it's new gadgets. I think the use of aluminum is increasing vis-a-vis the use of steel and iron, and this definitely benefits aluminum companies in the long run. So if I have to buy, I will go and buy the aluminum companies, whether it's a Hindalco, Nalco, or even Vedanta. I think all these three stocks for long term is a good buy, even at current levels.
No, got that. So that's the view on metal. Sudeep, hi, afternoon. Coming to you. Let's just talk about Reliance Infrastructure. Surabhi was talking about how the stock's up 50% in this month itself. So there is fund infusion happening, and there is talk that two prominent investors are going to be coming into the company. Vivek, tell us more. And also, I mean, just the fundamentals, right? What's the debt after this? What's the plan? And what's the shape of the company going to look like?
Well, that's right. Very importantly, before we start off with the fundraise, remember just yesterday, the company actually had a press release stating that, they had gone ahead and repaid most of the loans, the NCDs that they had, as far as their exposure to Edelweiss ARC was concerned. And the debt, on the listed entity, again, we have to mention that it's the listed entity, close to around 500 crores is the one that they were talking about. Now, what is it that the fundraise that you're talking about? When you're talking about the fundraise, this is being done via both a preferential issue as well as a QIP issue. Preferential issue of a little over 3,014 crore. And who is it that's coming as far as the pref issue is concerned? Number one promoter group entity is coming, which is called Rise Infinity Private Limited. The non-promoter entities coming in are very interesting. Matthew Syriac, again, noted investor, through his entity, which is called as Florentine Innovation LLP. Remember, they have stakes in other large companies as well. He is putting in some funds. Fortune Financial and Equity Services, that is the other entity that is participating in this fundraise. And along with that, a QIP fundraise of close to 3,000 crore. So very interesting development as far as Reliance Infra is concerned. No wonder then, on the back of debt coming down sharply and the back of the fundraise and the QIP fund infusion, we're seeing the stock doing quite well in the session today.
Okay, all right, Vivek, got it. Thanks very much. So much interest and buzz surrounding that stock, and investors really trying to, sniff out the possibility of any major business turnaround, perhaps, that could be in the works. Sudeep, let's ask you about this as well. I'm sure you would have noticed the price move. I mean, it cannot go unnoticed because it's been so pronounced, right? What do you make of this? Do you think this signals, the start of a business turnaround itself? And what thoughts on the fundraising exercise that the company is now trying to do?
Well, a couple of things. One, I would say that this is a very good development as far as this particular company is concerned. They have kind of settled most of the debt, and there is a fresh fund infusion happening from some of the some well-known investors as well. Under these circumstances, I think we will have to be positive on the stock. Of course, it has moved up 40% plus over the last few trading sessions. The valuation, I'm not very sure at this stage. But the fact remains that if they are able to resurrect the business and all this money gets into the business, I'm sure, considering there is a major boom in the infrastructure spending and infrastructure activity across us, the tailwind definitely will be there, provided they are able to garner the resources and use it productively.
Absolutely. There are so many, the market, of course, is also a more receptive place for a lot of these companies down and out, which are trying to engineer some sort of a turnaround. And I think this one is not alone in that sense. Just a quick word, if you will, on once again, Sudeep, what's happening with BSE. It's up. It's the biggest volume-led gainer, another 7.5%. Stock hit 4,000. It's just absolutely stunning move. I think this. Let me just see what it's done this week, and maybe take a look at what it's done this month as well. So this week it's up 40%. Yeah, for the month as well, it's 40% higher, and of course for the year since January, it's up 80%. So two very large years. That is last year and this year. Sudeep, what would you do with this one?
Well, I really don't know what I will do. But if I'm an investor in BSE, I will stay put. I think the recent excitement on this stock was on the back of the fact that most probably NSE is getting closer to that, that long-awaited IPO. Now, if the NSE IPO happens, I'm sure there will be further excitement in the counter. Now, to what extent the valuation at this level is justified based on the fundamentals, it's very difficult to comment. But the fact remains that if NSE IPO comes, BSE definitely will get excited stock. And in fact, why BSE? Even MCX and some other listed exchange-related companies also will be getting a lot of attention. Fundamentally, I think this is an area of market infrastructure, and these are very important institutions. They have a kind of an annuity income, which is continuously growing on the back of increasing trade. I would like to also mention that the draft proposal circulated by SEBI on this entire FNO and curbing the retail speculation, I think at some level does benefit BSE vis-a-vis NSE. At least the negatives for NSE are more vis-a-vis BSE. So it may not benefit, but the negatives of NSE in that, assuming that thing comes, is more compared to BSE. And that probably is also another reason for the stock to get a little more excited.
Okay, I'm just looking at the prices for Muthoot and Manappuram. That's the other big story of the day. Let's get Muthoot up. Both of those stocks, the other gold financiers, they've been a little downbeat now that IIFL Finance is basically back in the game. That's Muthoot. We'll just pull up Manappuram as well. And IIFL Finance, of course, has been surging almost 6-7% right from the start of today's trading action. Sudeep, what's the sense? IIFL Finance on massive wealth destruction. Now there's relief. Would you be in the stock and expect it to, go back to its glory days?
No, absolutely. I think IIFL Finance is definitely available at a very attractive valuation. Today morning it was very attractive. Now also it's reasonably attractive, I would say, and definitely it's worthwhile. IIFL, apart from gold, also have other lending book, and that's a very good blend they have. So there's absolutely no problem. They had this regulatory problem which led to wiping out of almost 50% of their gold loan book. But I'm sure, considering the kind of presence they have, they will kind of resurrect the book. And they have a deep presence. They have been very aggressive on the gold loan space as well. So a little bit of challenge for Muthoot and Manappuram. But fundamentally, we like all the gold finance companies. As a business, we like the gold finance. And considering that the gold prices have been on an upward trajectory, I think it's good time for all these three major gold financing units.
No, absolutely. Get that. Sudeep, thank you very much for joining us. Good speaking with you. Appreciate your time here. By the way, I looked at IIFL Finance and where it trades on a FY26 price to book basis. Of course, I mean, the gold finance book has shrunk, right? The AUM has shrunk massively over the last 6 months from when they did not get the business was banned by the RBI. So you got to take that into account. And of course, the rate at which the book gets built over the next couple of years. But basically, it's trading at about 1.5 times FY26 book. You have other NBFCs, diversified NBFCs. Don't look at sort of a gold-specific company or one sector NBFC, but a diversified NBFC. And most of them are at between 2 to 3 times price to book. Much larger ones, of course. You look at something like a Shriram Finance. Chola, of course, trades at 5 times plus. But some of the smaller ones as well. We'll take a quick commercial break here. We're going to be joined by Amit Jeswani of Stallion Asset on the other side for more conversation on markets. Stay with us.
దేవుని దగ్గర పెట్టే ప్రసాదం అపవిత్రం చేసే విధంగా ఓసారి బాధేస్తుంది. నాసి రకమైన ఇంగ్రీడియంట్సే కాకుండా ఎనిమల్ ఫ్యాట్ కూడా వాడారని, ఏది గీకు బదులు. ఈరోజు స్వచ్ఛమైన గీ తెమ్మన్నాం, ప్రక్షాళన చేయమన్నాం. నాణ్యత పెరిగింది, ఇంకా కూడా నాణ్యత పెంచుతాం. అల్టిమేట్గా వెంకటేశ్వర స్వామి మన రాష్ట్రంలో ఉండడం మనందరి అదృష్టం. ప్రపంచం అంతా మన దగ్గరికి వచ్చే పరిస్థితికి వచ్చారు. అలాంటప్పుడు వెంకటేశ్వర స్వామి పవిత్రతను కాపాడుకోవాల్సిన బాధ్యత మనందరిపైన ఉంది. ఇది కూడా చేస్తామని చెప్పి కూడా నేను మీకు తెలియజేస్తున్నా.
Invest.
Okay, welcome back. We got the market, which is doing very, very well. 360 points now. And this is what I'm saying. You know, you're basically moving around 100, 120, 30 points. We have done that many times over. 100 up, 100 down. But with basically a base of at least 200, 240 points. Anything extra has kept coming and going over the last one and a half odd months or so. Over the last one and a half hours, beg your pardon. That's distance to 26,000, right? It just sort of leapt away, 200 points away from those levels now. We have Amit Jeswani now joining in to run us through what he's making of things. He's founder and CIO at Stallion Asset. Amit, welcome back. Always great to have you with us here on the program. Prashant here. Just what a day, right? I mean, rocking day with gains across the board. Large caps. Yesterday, mid caps and all were looking a little weakish, and actually a lot of pain there over the last couple of days in some pockets. But seems to be back again. I wanted, before we get to what you own, Amit, I just wanted your thoughts on this entire PSU space. I mean, take Cochin Shipyard as an example. The high was $3,000, fell to about 1,600, and you know, it's back at about 1,800 rupees now. Look at so many other names, right? Garden Reach, and those are just shipbuilders, but many other names as well. What's your sense? Are we finally seeing a rotation? PSUs have been the leader of this bull market. Are we seeing some rotation away from there?
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. Prashant, you're absolutely bullseye right. There's a sector rotation happening. The PSU trend started after March, after the war in Russia. In March to June 22, we are 2 years in the trend, and typically trends last for 18 months to 24 months. And you've seen that before with chemical, pharma, IT, they all topped in 2021, and it's taken them 2 years to come back. The sector has reversed. The trends have reversed. You have to find newer trends. Newer sectors will start making new highs. Of course, we never had positions in PSUs before, but we don't have positions now also, so we don't have anything to worry about. But overall, the markets are going in every 2 years. There are new sector rotations happening, so the market doesn't become a bubble. There are always over-owned sectors and under-owned sectors. and there's like some kind of neglect, and some earnings growth in these under-owned sectors gets you a lot of price action. And that is what the markets are doing, and you just have to do what the markets are telling you to do.
Amit, hi. Great to be speaking with you again. I remember our last conversation, right? And as always, you're very spirited about telling us that you're willing to pay for growth. I mean, as long as there's a solid growth coming in and good visibility. The problem is that the sectors that are now, coming back in focus because of this rotation, they're still not showing great growth, whether it's staples, whether it's IT, whether it's banks. It's all fairly anemic, right? At least right now, given the evidence that we have. So are you interested in any of it?
We are interested. We keep thinking, when do we get in? We just need one confirmation of earnings growth, and that is where we get in. But for now, the numbers are a little weak. Financials last quarter was extremely weak, and we find it tough to get in. But the screen is telling us, and when the entire sector makes a new high together, and you have numbers, see, we chase earnings. At the end of the day, for us, we don't believe in narratives. We don't believe in where the money flow will go. For us, if earnings are there, that gives us margin of safety, that gives us like ability to hold on, and when we get that, we will go in financials also. Actually, in our portfolio, we've got around 14-15% capital markets and 10%, 11% real estate. So we already have 25% of high beta in our portfolio. And Nifty 500 financial services is 31%. So we are not in financial services, but we're not in the lending side of businesses. We are more on these sides. But when I look at numbers, what my companies are showing, but versus what financials will show, I still feel that we should do better. But we can change. We will have to add financials to our portfolio because we have literally near less than 1-2% financials like lenders in our portfolio. But very few ones have that growth and valuations what we want. Like the good ones like Chola, etc., are already expensive. And then now we'll have to go on the second tier ones, and not second tier, like super high quality ones only, but we'll have to find new names. We are already looking at it. In fact, today itself, me and my team members in the morning were saying that if you launch a financial fund today, we don't do all this, we don't do this marketing business. We have only one fund, but if you launch a financial fund today, you should make around 100% in 2 years if you're good enough.
Wow, that's a big statement, huh? And I think the market's going to pay attention because you've developed a knack of picking stocks that will show that kind of, delta or alpha, given the fact that you got into trend so early on, right? So just to explore that point a little further, till now on the financial side, I think you've been in some names like a Bajaj Finance, you've had Policy Bazaar, which obviously did so well. What is the evidence that you're looking for? What is that inflection point for lenders? Because you're saying that's where the next big money is going to be made. You're saying 100%, right? So what is that evidence that will convince you?
So 6-8 months, 9 months can be good for capital markets also. I think we should make 50% in capital markets first because they are 12 months in the trend, and that is where the earnings growth will be the highest. The financial lending trend, I'm not 100% sure yet. But you don't make bets when you're 100% sure. You start making bets when you're 70-80% sure. If today HDFC makes a breakout, so HDFC is at 2.7 times price to book. If that makes a breakout above and starts making new lifetime highs, that's around 1,800 rupees. And if it sustains there, I would say that financials for last 2 years, they've consistently been the worst performing sector. If I start seeing disbursement growth, last quarter disbursement growth was horrible. AUM growth was horrible. So that is why we don't have any interest yet in lenders, but we are looking at it. And I will tell you, when we buy something, we don't have any exposure right now. But if I think that sometime between now and the next quarter, if earnings are good, wherever earnings are good, this is where you become, the screen is telling you that something big might happen this quarter. We don't have confirmation. We need earnings confirmation, and then we get in. But something to look out for.
But when you say if you launch something now, it should be up 100% by in a year, Amit.
No, 2 years, 2 years, 2 years, not in 1 year. In a year, I would have lost it.
Stocks are up 40-50% in a month. I mean, it's just that kind of a market. But so you already have some names, some ideas in your mind, right?
So we
HDFC is maybe one of them.
Actually,
HDFC Bank, yeah.
The HDFC Bank we wouldn't buy.
Okay.
My number one holding would not be HDFC Bank. If we launched some, I would have.
Let's talk about this hypothetical fund. Hypothetical for now. What would it have?
I would have my number. I will tell you. Let me finish my buying.
Okay.
There is one health insurance company which is very good. It's the market leader, 33%, 32% market share. It's extremely reasonable. There are so many names.
Star Health.
I'm just giving an example. Like across that entire space, I think we already have in Stallion's current portfolio. Like stocks are not recommendations. We are a PMS team trying to have vested interests. My family has vested interest. We keep trading very aggressively, buying, selling all the time. But if you look at BSE, I think today, last year profits, like adjusted, like normalized profits of BSE was 400 crores. If this once a week settlement happens, the profits can be secular to 2,500 crores in 2 years. So that can be a very big trade, I think. So you want to look at large changes of earnings. Now, this is based on if the regulation happens at 1 week NSE and 1 week BSE expiry options. If you see NSE option revenues are near 9,000 crores. That's what analysts say. 16,000 crores, 16,700 crores is total NSE revenues. These are changes. You have to bet on large changes which can change.
Amit, I just want to, sorry, if it is one contract per week per exchange, most are saying it actually perhaps it gives a bit of a boost to BSE. Yeah, that's correct.
A massive boost. Actually, if you see NSE index options does 9,000 crores of revenues. BSE does 100 crores a month. That is 1,200 crores of option revenues. So the total revenues of BSE is around 1,000 crores. This is 9,000 crores for NSE. If you think 10,000 crores is the total revenue. If you think BSE after one expiry a week will become 30% of the market, then your revenues, which is 1,200 crores, will move to 3,000 crores. If you think it will become 40% or 50%, whatever you want, it will become 4,000. Now there is no additional large cost which increases. So your profits, so revenues of BSE in FY24 was around 1,600 crores. My apologies, I'm not able to get to, but 1,600 crores can become a very large number. Your revenues can go up like this year itself. Regardless of last quarter, they made profits of 267 crores. This quarter should be around 280, 290 crores. So broadly, they'll end the year at around 1,100 crores. And if you get, without change of anything, right now market cap would be around 12.5 crore share. About 50,000 crores would be market cap of BSE. And right now, but if you see that if the change happens in 2026, in this, what happens typically in this, it's not like it's after 1 year market share change will happen. In 1 week itself or 1 month itself, that speculators will move to one exchange and boom, your market share change happens and your change of expectations, change of earnings happens. And when that happens, hopefully we make some money.
So what is, you'll have some number, right? What could profits be next for estimated profits?
I don't want to say it on national television, Prashant, but it's a very large number. I can tell you.
No, why not? I mean,
we have scenarios. We have scenarios that we are building in. And if those
their profits were 772 crores last year.
There's another income also of 500 crores as another income. Net of tax, I think profits normalized was 450 crores last for BSE. This year, in the first quarter, I'm just saying from memory, I can be wrong a few points, please. But I think by memory, the profits first quarter was 267 crores. This quarter, they should be around 270, 280 crores, 290 crores in that range. But Q3, Q4 should be good. Yeah, typically, I think they will do around 1,100 to 1,200 crores profit this year. But this is not the year where that change of, I'm not expecting that change of regulation to happen. The change of regulation will happen FY26, where the complete impact happens. And when that happens, you don't know what kind of incremental revenue will come. But you know, there's a high probability of that happening. And we have taken
Amit, I take the enthusiasm on board, but just to complete a point, I mean, you have BSE, so that's fine. Isn't a lot of this already captured in the huge stock price surge? Is there any point getting in now?
Yeah, I got in at 3,400 only, actually.
Okay.
So I also bought after the breakout happened. Actually, the first move of BSE from 900 to 3,500, to 3,200, we never participated. We had MCX in our portfolio, which we bought at around 2,000. We still have MCX. It is now at 5,800. So we made 3x, but someone else who bought BSE made 4x. So we were sad that we couldn't. But now I think it fits our framework where market share change will happen. NSE, which was a monopoly, it will become a duopoly structure if we get it right. If we go wrong, we will lose money and come out. For us, it's not a big deal. We have 25 names and we keep going wrong, right all the time.
Yeah, but more right than wrong, I suppose, given the list that he has, which includes Zomato. We've not even discussed consumer this time.
I'm curious to know how much is Amit's portfolio up today, because the other stock which Amit owns is Novama, which is now almost 7,000 rupees. So that has been that's been a wealth creator for you as well, I'm sure. Amit, I see a few.
There's a block coming that will determine everything.
Yeah, I mean the Edel block, right?
Yeah, the Edelweiss, they have already disclosed in public that there's a block.
I think post the lock-in ends on 25th or 26th. So yeah, that'll.
Yeah, so if that block happens, that will give us a very good this thing, because Nuvama last quarter profits were 220 crores. This quarter should be very decent. Though we have vested interest in everything that I'm speaking. Do not buy these stocks. Just understand what we are trying to do.
Yeah. No, I get that. I see. So these names. I think I see Yatharth. You own. Is that a new addition? I see Tips Industries. There is Red Tape. These are all. We will discuss these. Yeah.
Red Tape we bought before the demerger is already up 3x for us in last 1 year.
Okay.
Yatharth we got in this. It's a very small 1.5% kind of position. We got in this quarter. My team likes it. It should do around 160 crores PAT. We bought it around 44, 45, 4,300 crores market cap. So we bought it, and it's a very cheap company. This last quarter it grew at 37%. This quarter it should grow at around 30%. So it's got the highest growth in the hospital business, low valuations, and like at 27, 28 times we bought it. So we keep doing.
Tips, Amit?
It's also growing at 30%, ROCs of 100%.
It's a recent addition, or?
Yeah, we bought this quarter only. This quarter.
Oh, this quarter.
So we were selling our PB Fintech, our PG, like we were not cutting, we're cutting weights in PB Fintech. We were cutting weights in PG Electronics, we bought PG Electroplast, we bought at, we more than doubled in a quarter. So we have to give it back and book profits and find something else. So we keep doing these kind of things, Prashant, where wherever there is higher rewards, that is where, and lower valuations, we keep moving there. But Tips we bought, yes, this quarter. Like we bought this quarter only, but that because Torani Saab said he will grow at 30%. Profits of this quarter is higher than that of Saregama. And so we bought, but Tips we like as a business. If you grow, and this is free cash flows. Tips is like whatever profits you're seeing is free cash flow, because content cost.
Yeah. I mean, just very quickly, apart from PB Fintech and Electroplast, have you taken profits anywhere else? Trend, Zomato, a lot of those other high flyers for you? Just to wrap up the conversation.
I would be cutting here and there. We keep cutting. We sold Domes at 2,800. Around that, we bought it at 1,100, we took some money out at 2,800. See, money is always limited. We always have ideas. So for us, in our cricket team, we also have to see that who's going to be our opening batsman, who's going to be our...
Maximize, yeah.
So we
Maximizing returns, right?
And if it's giving you opportunities to make 60, 70%, 80% in a quarter, 2 quarters, you make that money and move to the next opportunity, and you keep doing that till the time you have opportunities. You see, in a bull market, you have to change your net worth. And like you need to try. My portfolio beta is low. You buy good quality companies only, but we don't buy dirty companies or bad quality. We never had all those cyclical, etc. We buy high quality companies. But your goal is that end of the bull market, you need to change your net worth in a very big way, and minus 10% tak, niche tak ke baad, you will come to know that the bull market is over. Before that, you will never come to know. And you keep riding and keep trying to make most of this bull market. But if you don't change your net worth in this bull market, then it's very tough.
Yeah, no, absolutely. And hopefully we have this continuing for some time, right? We're not on borrowed time, hopefully. Thank you very much, Amit. It's a pleasure. Appreciate you joining in. Great conversation and great insights, as always, here on CNBC TV18. Well, let's focus on the other sort of set of stocks which are doing very well. M&M and Escorts, right? Tractor names. Vinny is here to tell us what's happening. Vinny, over to you.
Good afternoon. So key triggers that are coming in for the tractor names, especially the tractor space is expected to do well. We're seeing good monsoons that will work out well for them in terms of the Rabi crop, as well as pick up in rural demand, and the sentiment there is surely a key positive that you watch out for in terms of tractor companies, and that's why Escort and M&M, that's going to be a positive for them. Other than that, across regions, festivities have started, so that optimism is something that will play out. Analysts believe that tractor inquiries have gone up sharply. That's the word coming in from analysts, as well as they expect industry, these two companies to outperform in terms of the other industry levels as well for FY25. Let's not forget the last time when we spoke to Anish Shah also on the channel, he highlighted himself as well that, you know, they've already started seeing green shoots. This was in the month of August. So green shoots were there. Good monsoon is a positive trigger, and they're expecting full recovery to play out for the tractor space in the second half of the year. And Navratri is something they believe will be doing well for the tractor segment of the company. So key positives there. And obviously we are seeing the FTSE readjustment and rejig coming in today. So yes, the adjustment is today, the settlement will be, and the with effect from 23rd of September. So inflows coming in for both Escorts as well as M&M in terms of the S&P BSE quarterly rejig, where we are seeing, and M&M is also going to be seeing good inflows there.
All right, got it, Vinny. Thank you very much for that. Well, let's move on and now look at another stock. Adani Energy Solutions is in focus. There's a bullish note coming through from Cantor Fitzgerald in the stock. Vivek is here to tell us more. Vivek, what are the details?
That's right. You know, after Adani Enterprises, Cantor Fitzgerald now likes Adani Energy Solutions. They have an initiating coverage on the stock now. They have a buy rating, and they have a target price that is well above the current market price at 2,251 rupees a share. What they say is that Adani Energy Solutions actually has a portfolio that includes transmission assets, distribution assets, as well as a smart metering business. They're saying the stock is an attractive way to play the rapidly expanding energy markets in India. They believe the company offers growth unlike any other publicly traded utility or energy company across US, Europe or Asia as well. Expecting the total revenue to grow at a CAGR of 20% from FY24 to FY27 and adjusted EBITDA to grow at a CAGR of 28.8%. They are saying that the peers are actually growing at low single digits and EBITDA at mid single digits. So they expect Adani Energy Solutions to actually outpace the peers. Also, they note that valuations at this point of time are more expensive on a multiple basis, but they say that since the growth is meaningfully faster than peers, they're going ahead and assigning a valuation multiple of 26.5 times FY26 EV to EBITDA, and they continue to like the stock as far as a slightly longer term portfolio pick is concerned.
Okay, all right, got it. Thank you very much for that, Vivek. Well, it is now time for D-Street chatter, and the dealing rooms must be quite a buzz because it's been quite some Friday. A little bit of volatility, but the net result is still a very green-looking screen. Dimesh, how is it going?
Well, you know, Surbhi, it's a very strong day. We gave up some of the gains in intraday, but there is a very strong momentum, largely in the large cap names. And today we're going to see a very large buy figure as well, thanks to the FTSE rebalancing. That itself is close to $1 billion. And apart from that, even there is a basket buying, is what I understand, at some leading FIDs. So there is clearly momentum now, and looks like there is a shift now happening from the broader market stocks to the large cap names, right? So that's where the whole action seems to be. And every day you're having a newer leadership in the large caps today. So today looks like it's a day for autos to do well. So a lot of the auto names are buzzing in trade, and so is the metal names. I spoke about the big Macquarie note and the fact that commodity prices are firm. So that's a bit of a trigger for the metal names to do well. So, but clearly, Surbhi, the feedback is one, there is a very strong buying from larger FIs, and clearly it looks like there is a shift happening now from broader market stocks to the large cap names.
Got that. Now, Nimesh, in terms of specific stocks, what are you picking up?
Well, while I said there is a lot of momentum in the large cap names, but in my chatter there are most of the stocks are the mid cap names. So the first stock is Shaily Engineering. Big move in that stock, up 6%, but large volumes as well. A couple of large domestic mutual funds recently closed blocks as well, and now there is a big indication that maybe the company is likely to bag a very large order from a global telecom company. So that's the big buzz as far as Shaily is concerned. The second stock is Campus. Even that's been buzzing in the last few days. The volumes are on the higher side. and I understand some domestic mutual funds are active buyers, and hence a big move in that name as well. The third stock is BSE. I heard you guys extensively talking to the guest as well on why he likes BSE. The stock is up almost 40% in the last few days, and I understand one leading long-only fund has been an aggressive buyer in BSE, and that's the reason why a big outperformance there. So that's the third name. And the last one is Anant Raj. If you look at the stock, it's almost a 5x in the last 1 year, a big move within the real estate stocks. And again, for Anant Raj, apart from a real estate stock, it also has a trigger of the data center, and the buzz is that the company is likely to announce a few tie-ups in the data center businesses very soon. So that's the reason why Anant Raj has been buzzing off late.
All right. Nimish, that BSE chat, of course, we discussed with Amit quite a bit, as you also said. I mean, that the capital market, I think there is a capital market index, right, which was recently introduced. BSE is part of it, has done very well.
Well, absolutely. That also could be one of the reasons why the capital market stocks have been doing well of late. So on 9th of this month, NSE had launched the capital index, and I was just looking at the data. It largely comprises of the broking companies, the exchange companies, and all. In terms of weightage, the highest weightage in that index, it's a index of 20 stocks. The highest weightage has been assigned to HDFC AMC, and the second highest weight is for BSE. That's around 15% is the weight that has been assigned to BSE. And maybe that explains why all these stocks are buzzing in trade in the last few days, and so is the case in today's market as well. In fact, I understand Motilal Oswal has already applied for an approval with the regulators to launch a capital market index fund. So maybe now you'll see larger interest in terms of a lot of institutional investors tracking this particular index, and the fact that BSE has got a 15% weight explains a bit of move in not only BSE but all the capital market stocks in the last few days.
Okay, all right. Absolutely, capital market stocks have been on a roller coaster, and it's a roller coaster that's only been going one way, and that's up. Thank you, Nimish, very much for all of that. With that, we have to actually quickly move on, take a quick break. We'll come back on the other side and get you the key final calls as the week is closing out, and then, of course, some more fundamental perspective on the market.
quality.
Welcome back. It's been a good day. The market's retaining almost a 400-point gain. Back to Mitesh for some final ideas. Mitesh, what are the final trades?
So I think Havells is something which is closing at day's high. So BTST here with the stop at 2035 for targets of 2080. And Marico, that's also closing at day's high. 705 take, 704 half take as the stop loss and look for a 720 kind of product.
Havells and Marico. Got that, Mitesh. Thanks very much. You have a great weekend and see you with the market again on Monday morning. Now on to what clearly was the stock of the day, and that's IIFL Finance really finally coming in for the company on its gold loan business from the Reserve Bank of India after a full 6 months. Ritu is here with some perspective on this. Ritu, so what does this really mean now for the company with respect to its gold loan business?
Well, Surbhi, gold loans form a substantial part of IIFL business, IIFL Finance's business, which is why this is coming in as a big relief with RBI lifting restrictions on the gold loan business effective yesterday, and that means IIFL can resume sanctioning, dispersal, securitization, etc. of gold loans after what has been a 6-month ban. Remember, this ban was placed on 4th of March because of material supervisory concern. Subsequently, there was a special audit instituted by RBI that was concluded in June, and now finally the restrictions have been lifted and the impact has been significant. For instance, the gold loan assets under management, they shrank by 53% in just 5 months from about 26,000 crores to 12,162 crores by August. The share of gold loans in the consolidated AUM, that also dropped from 32% before the RBI action to 21% now, and more than 1 million customer accounts are also closed during this period, and hence this removes a key overhang on the company and its stock with the RBI lifting the ban. Jefferies has, on the back of this, upgraded the stock to a buy with a target price of 595 rupees. They expect a gradual recovery in the gold loan disbursements, which is expected to normalize in the next 1 or 2 quarters, but they see the loan book declining further to about 9,000 crores by September. Now, while the total recovery may take some time, there will be easing margin pressure and high gold prices could offer some support to the company.
All right, got that, Ritu. Thanks very much for the perspective there. Indeed, and that kind of enthusiasm really being captured in the stock price today with that 7% move. Let's take a break on that note. We'll come back on the other side and we'll get chatting with Anand Tandon. Some final fundamental ideas coming up in just a minute.
Welcome back. Anand Tandon is with us with what he's making of things. Anand, apologies coming to you a bit late today, but it's a blockbuster move today, 400 points on the Nifty. What do you make of it?
Well, we are reacting to the rest of the world, and to some extent, immediately after a cut, one did expect to see the market react positively. Happened overseas, happened in India. Anyway, the market trend has been strongly up. So there is no particular reason right now that one can see why, or on an overnight basis, one should see a change in direction.
Okay. Hi, Anand, great to have you on. We've been discussing this with our other guests as well. Reliance Infrastructure, and of course, you would remember this company and everything that happened and how it went down all too well. But it seems now, after settling with their creditors, there's talk of fresh equity capital raising and the market is getting so excited. The stock is up 50%. What would your advice be in a situation like this?
Well, I haven't examined it in detail because of the debt restructuring, etc. So it's been a little bit of outside the radar. But, right now, almost companies of that ilk are doing exceedingly well. This was one of those which was hanging fire. There are a couple of other companies also in infrastructure, especially power, which are suffering from PPAs which have been signed, which have not been rectified and consequently have debt which needs to be restructured. So I would imagine that, corporate action will be one of the larger drivers from here on.
Okay, fair enough. Actually, quite a few stocks today doing very well. I mean, the capex theme, which a lot of people said that, there's a move away from it happening. In fact, the PSU index is doing really well. There's IRB Infra came up on the screen right now, surging 10%. So if someone wants to play power or infrastructure, what would your top picks be at this moment?
So I don't think it makes sense to be looking at top picks at this stage. The thing to do is to be in the market in whatever sector you think will make the money. So if power infrastructure it is, get an ETF, buy it, or a fund and just buy it. Because, trying to be selective right now requires you to be able to justify what is going on. And I have lost the ability to do that.
You can't throw your hands up, Anand. You're here. You gotta play.
So as I said, I'm not suggesting that we should be out of the market. I'm just saying that buy the damn thing. Don't try and be choosy or picky about this one or that one, because when everything is trading at 50 to 150p, why bother?
Yeah, no, got that. Yeah, I mean, it's always right. I mean, you don't know what is helping what. I mean, is the easier kind of environment helping some of these turnaround stories, or the turnaround stories are being rewarded? Both things, I guess, in many of these cases, especially names like Reliance Infra, etc. We'll see what finally happens. Some investors are coming in, so we'll talk about that. The other one is these tractor companies, Mahindra and Escorts. This is just a rural kind of a bump. Another, you think something else is afoot?
I don't think so.
6 and 4% gains each. Yeah.
Yeah, I mean, it is a rural bump cycle. There is a cycle in terms of tractor demand. I don't think it's particularly favorable necessarily at this stage, given where we are already. But that said, we are looking for anything which is positive. So given that, the monsoon has been good, the likelihood of sowing is quite decent in most parts of the country, credit towards farm, etc. will go up. You could stack up a list of reasons. You could also stack up a list of other sets of reasons that, most people who have taken up loans, for example, have multiple loans on their books. I remember reading somewhere that, 10% of all people who have borrowed have got more than 10 unsecured loans. So it depends on which side you want to look at. Right now, we are looking for positive. So I think this is a sector which is, I mean, I don't think there's anything specific today which one can attribute to this.
Okay. All right, Anand, we'll leave it on that note for today. Thank you very much for joining in. The bell has gone. The day and the week has come to an end. And it's been an end with a flourish. 400 points up on the Nifty. And the Nifty actually reclaiming the highest point of the day, probably closing at the day's high, despite a little bit of volatility here and there. 400 points up. So if we talk about the big moves and shakers, M&M, look at the move on the stock, 5.5% on the upside. Of course, the Bank Nifty has soared with a gain of 1.7%, and that reflects in stocks like ICICI Bank, nearly 4.5% up on ICICI Bank. Kotak and HDFC Bank have also done fairly well. up between 1 to 3%, depending on which bank stock you're looking at today. L&T, Lever, these are some of the other big winners today. Nestle. So as you can see, it's really cutting across sectoral lines. It's a very broad move. The one stock that stands out is actually State Bank of India. It did not participate in what was otherwise a very bullish day for the large cap screen and also for banks. So that one sort of stood out. The mid caps as well, Prashant, not bad at all. I mean, the gain is almost 1.5%, more than 1.5% actually on the mid cap index as well.
No, absolutely. And although for the week, I mean, if you look at the change, the Nifty is up 1.8. I mean, Monday to Thursday, nothing, flat. Most of the gains came in today. Same thing with the Sensex. And mid and small caps, Friday to Friday end, kind of flattish. And they picked up towards the end. Otherwise, there was a bit of profit booking. So that's why for the week, as a whole, they are absolutely flat. But it's turning out to be, I mean, just a great September so far. There are so many 20+% movers. If you just take a look at the NSE 200, the NSE 500 group of companies. So a really vibrant screen over the course of this month once again. So good markets overall, absolutely no doubt about it. Sensex 1.6, Nifty 1.5, Bank Nifty 1.6. Bank Nifty, of course, this week finally made a new all-time high, and that's a good thing. 53,930, our large private banks starting to come alive. I think that's a big question. Because there have been many false starts. People have been sort of calling this, well, it's the times now. So far, it hasn't materialized, but, are we finally there? I think that the question is being debated quite a bit. It's a wrap on this edition of Closing Bell. Thank you very much for staying with us, but don't go anywhere because Editors Roundtable is going to take the action forward. Just stay with us.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
Dalal Street ends higher for the second week in a row. Financials have been the star performers while mid-caps underperformed. And the big event is finally out of the way, which is the start of the US Federal Reserve's rate cutting cycle. Welcome to this week's edition of Editors Roundtable. And this week on the show, we decode a lot of these big events that have gone by. We, of course, put the spotlight on other central banks as well, which also held their meetings, and then raise the big question: what happens to the PSU rally next? Is it indeed over, or is it just a pause? I'm Surabhi Upadhyay, and with me on the show, as always, Prashant Nair and Nimesh Shah. And a bit from now, we'll also have Rajesh Kothari, MD at Alpha Accurate Advisors, joining us right here on Editors Roundtable. Gentlemen, so finally the week has come to an end, and it's been quite a roller coaster.
I mean, it's been a roller coaster, and it also made our hearts go a little fluttering, right? Because after that Fed decision, 50 came, and then markets gave a big yawn.
Yeah.
And I think many were wondering whether this is it. I mean, 50 basis point from the Fed, and markets see nothing.
So I think, it was also whether is this a good cut or is it a bad cut, because the economy is going downhill. So that good-bad debate kept happening.
I told you it's a happy cut.
Finally, we know it's a happy cut. Yeah.
So yeah, I think all week we did nothing. Monday to Friday, the market actually did nothing. The Nifty was flat. And then on Friday, the market did what it did. And I think we end about 1.8% higher, both on the Nifty and the Sensex. So hopefully, with this 50 basis point cut from the Fed, I think we've got a global easing cycle underway. RBI maybe is a bit of an outlier because they're not expected to cut immediately, only later this year, maybe the first one in December. But there are many other central banks who've been waiting for this, and perhaps we will see that. this is also the week where the banks finally started to show signs of life. The Nifty Bank finally made a high. Remember, it's like, you know, the two cousins which have gone completely in opposite directions. One is, of course, you know, reached great heights. The other has been loitering without finding direction. But I think it's back on track now. The Nifty Bank made a new high. I mean, if you saw the price action, especially on Friday, the ICICI Bank was up 4. HDFC Bank is just under 1800. And some of the others are starting to fire as well. There have been many false starts here, remember. But this actually is the big question, which many are asking, even as they continue to be invested in mid-cap, small caps. But they're all wondering whether to move to large caps. And then the second question is whether banks here, as far as large private banks are concerned, will do well. So Nifty, by the way, Nifty itself is just about 200 points away from that 26,000 level at the day's high on Friday. Mid caps and small caps for the week, they ended absolutely flat. It's such a fantastic market, right? It's a out and out bull market. And I thought, why restrict ourselves to this week? Why not take a look at what September has done to stocks? I looked at the NSE 500 universe from the end of August till today's market close. And just these names will come up on your screen. Some of them we all know, others are a bit surprising, at least to me. Concord Bio is the top performer this month. It's up 60%. BSC, which we've discussed quite a bit, and we will, is up 57% this month. Gujarat Fluorochem is up 32%. Jubilant Pharma is up 31%. Campus Activewear is up 30%. It was a big mover on Friday. Chola is up 27%. Thermax is up 25%. Max Health is up 24%. We've not really discussed Max, so it's like a sleeper hit in that sense, but it's done well. There is Devyani, which is up 20. Sobha is up 20. Kalyan Jewelers is up 20. I'm limiting myself to that 20% cutoff, but it's a long list of big winners so far this month.
Oh, absolutely. And I think the ammunition is now really coming in from some of the biggest central banks, right? Yeah. So I thought what I'll do is I'll go beyond the Fed because the Fed got all the headlines. But there were 4 major central banks that held meetings. And, just to quickly summarize who's standing where, because central banks are also singing their own song. And sometimes the tunes are very, very different. So starting with the Fed. Now here it's very, very clear that the rate cut cycle has started with a bang, with that 50 basis points rate cut. So just to quickly summarize some of the macros on which these central banks are also operating. Clearly for the Fed, the jobs market is the most important. And the unemployment rate, the last figure that we got was 4.2% in August, slightly better than the 4.3% in July. But that's not the point. The point is the 3-month average in terms of the non-farm payrolls addition. And that 3-month average number has dwindled to just about 116,000 jobs getting added at an average. And that's the lowest pace since the pandemic. And therefore, the alarm bells went off. And inflation is not a problem at all. I mean, the inflation figures, last numbers were down to 2.5% headline inflation in the US. So that's clearly no longer a big spot of bother for the Fed. So what is the Fed going to do? We have a dot plot. Quickly to summarize, another 50 basis points this year is what the Fed is saying, followed by 100 basis points next year in 2025 and another 50 basis points in 2026. So in aggregate, we're talking about 250 bips of rate cuts, out of which 50 has been delivered. Let's move to Japan, and that's where things are so different, diametrically opposite to the US. The Bank of Japan held its policy meeting on Friday. It left rates unchanged after literally shocking the markets, in July, when it decided to hike by 25 basis points. What is the concern for the BOJ? The concern is inflation, and that remains fairly sticky in Japan. In fact, the headline consumer inflation was at 3% in August, rising from the 2.8% in July. And that August inflation number, 3%, is a 10-month high. And accelerating inflation is why a lot of market participants are expecting that the BOJ will hike. It hasn't done that right now because it doesn't want to do the opposite of the Fed in the very same week. But the anticipation is that October or December is probably when we'll get a BOJ hike. And that will be extremely interesting to see what that does to the dollar-yen equation. Because from a level of about 161 in July, the yen has surged big time, 10-11% of a surge in the yen to about 143 by the end of this week. That's Japan. Quickly moving to China. China left policy absolutely unchanged on Friday, but growth concerns are the biggest watch point, which is why the anticipation is that gradually China will also ease now that the US has anyway started cutting. And the growth concerns are very apparent in the data. Look at fixed asset investment numbers out of August or retail sales, etc. All of those numbers missed estimates in China. And not just that, urban unemployment in China is at 5.3%, higher than the number quoted in July. So growth concerns in China, which is why we'll probably see China cutting. BOJ hiking, China cutting, and Fed cutting. That finally brings me to the Bank of England. And here things are very mixed and there's a lot of uncertainty and indecision. The Thursday meeting, this week's meeting, left rates unchanged. But inflation is very, very sticky. The inflation numbers, in fact, on the services side are as high as 5.6%, though headline inflation is coming off, which is why the BOE is expected to remain on hold, at least for the next 1 to 2 months. So BOE undecided, Japan hiking, and US and China cutting in all probability.
Well, I just want to add to what Surbhi said. We saw what all the central banks have done globally, right? The key question is, what will RBI do?
Absolutely.
And again, I'll just add, I just spoke to somebody very senior, and he gave a very interesting feedback that, look, we are going to have a change of guard in the RBI come December and January, right? We don't know whether there will be an extension for the RBI governor. Even the deputy governor's position will be up for a replacement. So, it's a big thing. This whole bull market was on the back of the fact that RBI was so, agile, and there was so much that they've done for the economy and for the corporates and all. That's going to be a big thing for the Indian markets. Just don't look at from a central bank point of view, but even from an equity point of view, the change of guard in RBI is going to be a big thing that nobody's talking right now, but that's something to track very, very closely. And for any new team to come in, to have a very aggressive stance on either side is going to be a bit of challenge as well. So not only we have to track what global central banks do, but keep an eye on RBI as well as to who comes there and how the change of guard is taken.
I mean, the consensus is that the first cut is only later in December. So we'll see. Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. Rajesh, great to have you with us here.
Thank you.
Thank you for your time. We were discussing what a fantastic bull market this still is, right?
Yeah.
I'm very much in the thick of it.
Yes.
And I was just reading out a long list of names which in September have gone up 30, 40, 50%.
True.
Where are you at? Fully invested? With the same kind of, just your stance right now.
Yeah, see, I think, one thing is very clear. Whatever is happened in last 2-3 years, there is a lot of, I would say, all categories of stocks have gone up, irrespective of how good or bad the management is, how good or bad the governance is, how good or bad the balance sheet is, correct? I think next 12, 18, 24 months will be probably the years of the alpha managers. This will be the years where there will be differentiation between good and bad. There will be differentiation between good governance and bad governance. And very importantly, the sustainability of the growth. The companies who have a resilience, who have demonstrated the resilience, those will be rewarded significantly better compared to just narratives. I think last 18 months are more of narratives. Correct? Now it is a time to execution, to prove that narrative is right or wrong. Correct? So I think so. Our entire theme, if you ask me, is that be bullish, but be prudent. Means gaadi chalana hai, but seatbelt pehen ke chalana hai.
But do you think we will see a pause in many stocks? Just time correction, as you say, they will wait for execution. So when you're waiting, you're not moving. So then,
not bad about it if that happens. Some time correction, some price correction is always welcome for any structural bull market. But market is not going to wait. If the growth is going to be delivered, then those stocks will be rewarded. But there are many companies where growth probably may not come. In fact, if you see last 3 months, there are many stocks which are down 35% from its 52-week high.
Correct.
Correct?
I'm going to put that list out.
But the narratives were very strong in many of such stocks. Those narratives now needs to be executed for those stocks to go back again.
So Rajesh, which are the sectors which we're going to avoid purely from a narrative point of view? We saw big storytelling, but the numbers are not there. Which are the few sectors that you're going to avoid now?
See, I think it will be more of a bottom-up rather than sectoral call. It will be more of a stock-specific call. Okay. So let me, for example, tell you, there are about 1,400, there are 5,000 listed companies in India. But only 800 companies makes 100 crores plus reported net profit after tax.
Right.
And if you look at 1,000 crores plus market cap, there are 1,400 companies. Of that, there are only 240 companies, a good universe of 240 companies, which delivered 18% compounded profit growth for last 10 years.
Right.
And in every sector, there are winners and losers.
Right.
So say, for example, one of a portfolio company, please put a disclaimer because now we are talking about some stocks. Like, Uno Minda. Now, this Uno Minda has grown by 30-35% compounded for last 10 years. It's the fastest growing auto ancillary company in the entire auto space, auto plus auto ancillary. If you look at two-wheeler, look at TVS CAGR of profit growth. Versus say number 1 or number 2. Significantly far ahead, correct? And
but it's been rewarded also, right? TVS has been rewarded. It's been the best performing.
No, but there are even others are also rewarded. That's what I'm trying to say.
Sure.
The last 3 years, whether your profit growth is 10% or 20%, everybody is rewarded.
Right. Now the differentiation will come.
That's what I'm trying to say.
So while I know that it's going to be very, stock specific, in general, which could be the theme or the sector that at least for the next 3 to 4 years can keep delivering at least this 20% CAGR because you're coming at very lofty valuations in all probability?
Yeah, a good question. I think the first theme will remain the capital goods. But within CapEx, you would have data center, the electrification, the robotics and smart technologies. Those will be significantly high growth.
But we don't have too many pure players. That's the problem, right?
You have 4 players. Globally, there are 4 companies. In India also, all those 4 multinationals are present. They are proxy for this data center.
Yes.
Because if you want to build one data center, 40% of it goes for the electrification. So it means transformers and related. So that's number 1. Number 2, if you look at the renewable energy growth, it's significantly going to outpace the thermal energy growth. And there are players who are catering to specifics within that each of that pocket. So that can be the second opportunity. Third opportunity can be auto ancillary. Means more sensors, more seat belts, more airbags. So auto industry growth may be 7-8%. But if you are into say airbags, then from 2 airbags now we have 4 to 6 to 8. Correct? So that will be faster growing.
Rajesh, since you mentioned renewables, I have to ask you about this, right? One of the developments this week was that finally the NTPC green IPO is getting the green nod. They're going ahead with the DRHP process. Here is an IPO coming from a state-run company in one of the hottest sectors, not just in India but globally.
Globally,
What would you expect?
No,
I mean, it's early days to talk about numbers, but in general, can NTPC Green be a good wealth creator?
Definitely it will, because what is going to happen is that as a state company, look at last 20 years, it has never happened in India. The state companies are thinking about unlocking the value and making a subsidiary, getting it listed with a separate ROC focus kind of thing, am I right? So I think it is an entire big lesson to be learned for the entire PSU sectors, that PSUs are also now behaving like a private sector. You have seen demerger from top 5 companies of the country, correct? But now it is happening even from the NTPC kind of company. So we do not own NTPC, but surely it is going to be a good value unlocker.
Rajesh, talk about names that you own in your portfolio. So there is no, I mean, as you said, this is, and we'll put the disclaimer out. The 2 sectors you mentioned, data center, transformers and electrification. What's the best play on that? And the other one was, I think you said renewables. You said robotics as well. So if you can just give us some examples.
So there are 1 or 2 common companies which are basically catering to data center plus AI plus the complex grid. So our largest holding, for example, portfolio is Hitachi Energy. It's our largest holding in a portfolio, across portfolio. So there are only again 4 or 5 companies in the world, what they can do, correct? Not many companies. Probably out of every 10 metros, 7 metros are powered by Hitachi Energy.
Oh, wow.
So if you see more fast speed trains, if you see more metros, if you see more renewable complex grid, HVDC project, earlier for every 2 years there was 1 HVDC project, 6,000 crores roughly. Now probably every year there will be 2 HVDC projects, 10,000 crores each, so 20,000 crores.
And
so
where is it trading at now in terms of valuations?
Depends which year you look at it.
26
because
or 27.
in capital goods what happens, you get order book first. It's like real estate, for example. The order book comes first. And then over a period of 3, 4, 5 years, it gets executed. So the important question here to ask is that how many years the growth can sustain? Can it sustain for 5 years? If answer to that question is yes, then these are the product companies, high technology, high moat. So it will continue to command at a premium valuation.
So that's one. Any other names to represent the themes you mentioned?
So for example, Siemens is also part of such names. And then of course there is a thermal side is also going to grow. So BHEL is also going to do well, but that's more on the thermal side because there is a shortage, is correct. Likewise, like auto ancillary, so likewise there are so many fast growing segments within consumer. For example, the discretionary, like Trent is our largest holding for the last 4 years, doing extremely well. Now on one hand, people talk about consumer growing at 6%. On the other hand, this company is growing at 45%, even in 1Q. It grew by 50%, am I right? So I think there are enough profit pool opportunities. You need to be selective. And there are enough opportunities which can create such kind of wealth,
You mentioned PSUs just a while back. We were discussing NTPC. And I know that Nimesh worked a lot of numbers over the week because I guess that's one of the biggest questions, the big debate, whether the best of the PSU party is done and dusted or whether this is just a pause. What do you say,
Surbhi, as a lot of people have said, the leader of this bull market has been PSUs, right? And we've seen some cracks now happening in the last 3 months. The index is down 10%. Let me just go to the wall and explain what it means and what to look forward to as far as the PSUs is concerned. So I'm putting the spotlight on PSUs largely because we've seen a big crack in the last 3 months in the PSC index. The index is down 10% in the since the recent highs. index down 10%. Individual stocks in the PSU basket are down between 20 to 40%. And PSC index has lost nearly 4 lakh crores of market caps. That's a kind of correction we've seen in the PSU stocks in the last 1 quarter or so. Look at the big, these are the 3 reasons why you've seen a bit of correction in the PSU stocks. First being, there was over-exuberance and expensive valuations across the PSU basket. The second reason was over-ownership. We saw a lot of retail participations into the PSU stocks. And third, normally we've seen the launch of the thematic funds lead to a bit of a peak for that particular sector. These are the 3 reasons why we've seen a bit of correction in the PSU stocks. Now, look at the performance of the PSU stocks. Big cuts in the stocks like Cochin Shipyard, Garden Reach, BEML, Mazgaon Dock, Midani. HAL is down 26%, so is BEL. Of course, we need to put into context that these stocks have done phenomenally well over the last 3-4 years, and now we are seeing first signs of correction or a bit of pause in these companies. So these are the big losers. I've just taken more than 20% cuts. But within the PSU basket, there have been some winners as well in the recent months. HPCL is still in the green, NTPC is still flat to green, and stocks which are down less than 10%, Oil India, BPCL, Power Grid, IOC, they have not fallen much. And the key reason for this is the valuation has been a comfort for this particular basket, which has not done or fallen much in the last few months. So that's the kind of PSU basket. Now, as I said, the launch of thematic funds lead to a bit of a peak in the PSU stocks. We saw 3 defense funds in the last many months, and look at the performance of all the defense funds of late. HDFC Defense Fund is down 12%. Motilal Oswal Defense Funds is down 20% since the launch. And Aditya Birla Defense Funds is also down 5% in the last few months. So that's the kind of stocks which have done in the defense thing. But now the big question is the rally over for the PSUs? I spoke to 3 different sets of investors, and here's the first feedback. The first feedback is from a leading fund manager who had a big exposure in the PSU stocks. He believes that PSU as a theme is a decadal theme. He believes that value is going to outperform growth in this decade, and hence he's of the opinion that the bull market is not over in the PSU, but the easy phase of the bull run is largely over in the PSUs, and he believes from here on only quality PSUs which has got a unique business, they are likely to outperform. So that's a view from a fund manager. Second, I spoke to a veteran investor who's been a big bull of PSUs. Now, even he believes that typically, in a bull market, we see 30, 40, 50 kind of corrections in the bull market. So this is a typical bull market correction in the PSUs. However, the leadership is going to change, according to him. And now there will be new sets of companies which will take the mental leadership in the PSU basket. There are a few sectors and stocks where the valuations were unreasonable, and hence we are seeing a bit of correction in those names. I've also taken a technical view that this is coming in from Rahul Sharma of GM Financial. He believes that the PSE index is now trading at a very crucial support at a 200 DMA, and the risk reward from a long-term perspective is attractive. But in the near term, a lot of the over-exuberant stocks like defense, he feels that defense stocks need to be sold even if there is a bounce back. So it's going to be very, very selective in the PSU basket. We've seen a bit of a correction, but the key question is, and the feedback seems to be that the leadership of this PSU is likely to change. So we need to look for unique businesses within the PSUs which can do well. If I can ask you if you've been holding any of the PSU names, and in general, what's your sense on the PSU stocks? What kind of leadership can come within the PSU basket?
No, I think from our perspective, we are neutral, whether it's PSU or private.
Sure.
Company should be good, governance should be good, balance sheet should be good, and there should be growth.
Sure.
So, for example, we own BHEL.
Okay.
Bharat Heavy Limited, correct? Right. Because thermal is going to be there is a shortage, and BHEL will be the biggest beneficiary of it, right? And likewise, so I think be it a shipyard, be it a railway, or I think all the themes are of course fantastic. Within that, we need to stick to the player who is a market leader and who has significant growth. And that's are the 2 most important things. We own one of the shipyard company as well. Of course, it is significantly in the money. So it's not a recommendation. Please put a disclaimer. But there are enough opportunities, be it a PSU, be it private. Look at from the growth perspective and the ROC perspective.
Sure. The other big thing is, now there is a sense that maybe time has come to shift to large caps from mid and small caps. Is that something that you've been taking in your portfolio as well? A bit of shift towards large cap names?
A bit of it, yes, you are right. More because of the valuation perspective.
Yeah, exactly, from a valuation point of view.
Yeah, but at the same time, let me tell you that, I was just running if you look at the entire small cap index, the median debt to equity ratio of small cap companies is 0.
Yeah.
Which was not the case in 2012.
True.
The ROC of small cap index is now 18%. Earlier it used to be 12%.
Right.
So the premium or discount versus Nifty, which it used to be 10 years back, is no more valid now. Correct? And as I'm saying, from the market cap perspective, top 100, large, next 150 mid, and everything else is small. But from the profit pool perspective, these 800 companies, which is making 100 crores plus profit, they all are actually large companies because there are only 800 companies. So largest plywood company is called small cap. The largest logistic company with a 40% ROC is a small cap. The second largest luggage company, one of our top holding, is a small cap. But these companies are not small. Correct? So we don't look at more as a market cap. We look at more as a profit size. Correct? And of course with their leadership characteristics and of course the balance sheet. If you these three things right, chances that you will not lose your money.
Rajesh, hearing you, it's a very different conversation from most of the ones that we've had in the last couple of days. We've discussed capital goods, we've discussed auto ancillary, manufacturing, high-end technology. The sense I get is that you're still, very keen to play the whole manufacturing, industrials, capex kind of a theme.
Absolutely.
Are you looking at any kind of portfolio shifts? Because otherwise the chatter has been all around, let's go back to banks, let's go to IT, it's time for consumer staples. So just your thoughts on the overall sense of portfolio churn that people are speaking of nowadays.
No, I think, capital goods will do well, no doubt about it. That remains a big structural theme over the next 3 years. Banking, everybody's hoping for, of course we also own it. The valuations are in your favor. But the credit cost, we are at the bottom. We are the best of the credit cost. From here, probably credit cost is going to go up. And it is more linked to global thing as well. So within banking space, you need to have, for example, housing finance. What we own is more housing finance. They are doing extremely well. So they are not growing 12, 13%. They are growing 18, 20, 25%, correct? Likewise, in consumer, you will see some uptick because the rural is going to do well. So we own one of the largest FMCG company in last 1 month we added, correct? So we keep making this tactical shift, am I right? But if you ask me the broader themes, the structural stories, correct, will remain capital goods, few consumer discretionary, auto ancillary. There are few pockets in pharma because CDMO is going to take a U-turn now because that is impacted the most in US. Now CDMO research is going to start again. So there are few companies which are going to do extremely well in the entire CDMO space. So that space is going to be interesting. So I think in every sector you need to identify such pockets.
Prashant, this really reminds me of your conversation with Chris Wood of Jefferies, right? He was making the exact same point that tactically he might add a little bit of financials here and there or some consumer. But he's steadfast going on capex and on real estate, right? Exactly what Rajesh is saying.
Absolutely. That's the thing, right? Near term, maybe people shift in and out. But I think as Rajesh is saying, if you're in it for the next 3-5 years, I think that's a theme which perhaps should do very, very well. Rajesh, great talking to you. Thank you very much for dropping by.
Thank you.
And hope to have you here more often on the table.
Sure. Thank you.
Thanks. Well, I think it's a wrap on this edition of Editors Roundtable. From all of us here, it's goodbye. Thank you for staying with us. More news and updates on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Bulls enter deep into uncharted territory as records stumble on the Wall Street. Sensex gains over 1,300 points. Nifty crosses 25,800. All sectoral indices end with gains. Crude oil prices set for a second week of gains even as prices hover around $75 a barrel. Gold prices hit another record high as the US Fed rate cut boosts sentiment. Setback for SpiceJet. Supreme Court directs the airline to ground and return 3 engines to lessors over non-payment of dues. Quashes the airline's plea challenging the Delhi High Court order. The CEO of Etihad Airways says India's aviation traffic can double to 400 million passengers. Defends the demand by Gulf carriers for more access to Indian traffic, citing higher demand. Shares of ITD cementation hit the 20% upper circuit. Sources say Adani Group has entered the race to acquire the promoter's 46% stake in the company. Samsung moves the Tamil Nadu court against a newly formed workers' union and left-affiliated CITU after weeks of protests disrupt production at its plant at the outskirts of Chennai. Seeks an injunction restricting the union from agitating and disrupting work. The court has asked the respondents to respond by October 28th. EdTech company PhysicsWallah is valued at nearly $3 billion after raising $210 million. This is the largest fundraise in the Indian EdTech space in over 2 years since the Byju's fiasco cast a cloud on the sector. After attacking Hezbollah's communication devices, Israel launches major strikes on Lebanon. 12 people killed in West Bank and Gaza as the onslaught on Palestinians continue. Sri Lanka presidential elections this Saturday. Incumbent Ranil Wickremesinghe, left-leaning Disanaike and opposition leader Sajid Premadasa are the top contenders among the 39 candidates in the fray. This is the first election in the island nation after civilian-led protests toppled the previous Rajapaksa government in 2022 amid widespread economic crisis. Hundreds queue up outside Apple stores in Mumbai and Delhi as the iPhone 16 goes on sale. Lines are blurring between quick commerce and e-commerce as Blinkit, Big Basket and Zepto deliver the new iPhone within minutes. All right, let's start with the market action. Records continue to tumble on the Wall Street as bulls enter deep into uncharted territory. Sensex and Nifty gained 2% this week after a big rally on Friday. Sensex gained over 1,300 points and Nifty gained nearly 400 points to cross the 25,800 mark. All sectoral indices ended into the green territory led by financial stocks. And Prashant Nair is here with a wrap of the week gone by on the Wall Street. Prashant, US Fed sparking a global rally there.
No, absolutely. And, the Fed did not disappoint. That was the big global story. 25 was expected. They gave 50. And the market did not budge, at least initially on day one. US markets, if anything, pulled back, ended in the red. Here in India, yesterday it was a flat close. But day two was different And it often so happens that after big macro events, it's not on day one because there is a fair bit of positioning, etc., which gets unwound. It's on day 2 and beyond where the real sort of reaction comes. And it came here. It came on Wall Street overnight with those 2.5% gains on Nasdaq. And in India, of course, we had that big sort of rally on Friday. Actually, you know, the Nifty Friday to Friday ended up about 1.8%, similar for the Sensex. But it was really a story of what happened on Friday because Monday to Thursday, markets were flat. Almost all of the gains for the week accounted for by what happened on Friday. Banks, I mean, I think that's the other big story because they've underperformed the Nifty and they've sort of floundered, but they finally made a new high. Remember, the Nifty has been making newer highs for a while. It's had small pullbacks along the way as well, but the Bank Nifty never did. But this week, it did make a new high, and maybe it's now tracking higher as well. The Nifty itself, by the way, at the day's high on Friday was just about 200 points away from the 26,000 level. Mid-caps and small-cap indices, there was a bit of pain, underperformance for the broader markets on the first 3 days of the week. But on Friday, that picked up as well. For the week, though, we ended absolutely flat. I mean, it's an absolutely vibrant bull market, the strongest ever, if you ask many who've been around for a while. And so I just wanted to kind of put out some names which have done phenomenally well. And I don't want to limit myself to the last 5 days, but look at what these stocks have done for the month of September. Many names, of course, we've discussed extensively, but some have been sleeper hits as well. So Concord Bio on your screen, 60%. BSC, extensively discussed, 60 there. Gujarat Fluorochemicals, 30. Jubilant Pharma, Campus Activewear, the footwear maker, Chola, Thermax, Max Healthcare, Devyani, Sobha, 20. Kalyan Jewelers, 20. And I'm sort of limiting myself to the 20-plus movers. So it's just been a great month so far, and generally been, of course, a great year so far as well. The bull market very much sort of well and alive, and sort of the easing cycle, the global easing cycle, the Fed really taking the step with an aggressive, big, deep 50 basis point cut. Back to you.
Right, vibrant bull market there. Thank you, Prashant, for that comprehensive update. In the commodity market, crude oil prices are set for the second straight week of gains, but prices continue to hover around the $75 mark as fears over demand persist. International gold prices have hit a record high of $2,609 per ounce. The 50 basis point rate cut by the US Fed has sparked a fresh wave of safe haven buying. The big story this evening, shares of cash-strapped SpiceJet came under pressure in trade today. The Supreme Court ordered the airline to ground 3 aircraft engines and return them to lessors within 15 days. The apex court upheld a High Court order and dismissed the petition from SpiceJet. Ashmit is here with more details. Ashmit, take us through the verdict.
Well, a major setback coming in for the airline SpiceJet. The apex court granting directions for grounding as well as for returning of 3 engines back to the lessors. SpiceJet will have to do that within a space of 15 days, a small window there for the airline. Now, all of this goes back very many months. Lessors, 2 in question, had raised this question first before the Delhi High Court regarding unpaid dues and whether SpiceJet can continue using those engines despite not paying the dues to the lessors. The Delhi High Court, first on August 14th, had held in favor of the lessors, had directed for returning of these engines, and subsequently on September 11th, the division bench had upheld that direction. SpiceJet, the airline, clearly concerned on what the impact could be on the operational fleet, had moved the apex court, had sought an urgent hearing. They made their submissions that they've only recently raised money via the QIP, some 3,000 crore rupees, that money will be used for discharging some of these dues, that they are already in negotiations with the various lessors, also citing how as much as $8 million have already been paid to these 2 lessors. However, none of these arguments managed to cut ice with the apex court. The Supreme Court said that clearly SpiceJet is in breach of the consent terms, clearly is in breach of the payment schedule that was agreed on, clearly has defaulted on those payments, and the consent terms were very clear. The consequences of not complying with those consent terms was very clear, and therefore there is no wiggle room available to the airline. And with that, the CJI-led bench of the apex court grounding those 3 engines and asking for SpiceJet to return them to the lessors in no more than 15 days.
Thank you, Ashmit, for that update. So how is this order likely to impact the airline? In a statement, SpiceJet said the engines in question are already grounded and the airline's operation remained completely normal and unaffected. SpiceJet also said it's currently in discussions with the aircraft lessor to reach an amicable settlement. However, last month, SpiceJet's lawyer had argued before the Delhi High Court that it only had a fleet of 21 aircraft and the grounding will cause grave loss to the airline. SpiceJet's lawyer said grounding of 3 engines will mean grounding of 2 aircraft, as 1 aircraft needs 2 engines. The order was delivered on the 14th of August. It's important for SpiceJet to maintain a fleet of at least 20 aircraft to continue flying international routes. But according to documents filed by SpiceJet before its 3,000 crore rupee fundraise, the airline said it has a total fleet size of 64 aircraft, out of which 36 are grounded, leaving the airline with 28 aircraft. Onto a CNBC TV18 exclusive, Etihad Airways CEO says India's aviation traffic has the potential to double to 400 million passengers per year. Speaking to my colleague Madiha Mujawar, he said Etihad has no further room to grow in India beyond the 176 flights per week due to the restricted access to Indian traffic. He further said Etihad's flights from India having 80 to 90% load factor shows India has a demand-supply mismatch and has enough potential for more competition.
It's growing like 30%, right? 30-40% year on year. We are adding a lot of capacity. We have now 11 destinations in India. We have 175, which is 25 flights per day, right? 175 per week. So we now have used all the traffic rights that we have to India. I mean, we can't grow anymore in 2025, but we have no doubt, right? We want to grow more. If you compare to 2022, early 2023, we doubled the capacity in India. If Etihad today, together with Air Arabia, is using all the seats that we had in the past, we're using all the seats that we had in the past, you see what I mean? So I cannot have more market share.
Yeah, you used 30,000 and you're using 30,000 even now.
Yeah, 50,000 together with Air Arabia. So 35,000 plus 15,000. Air Arabia has about 15, 12,000, right? But the point is 50,000. It's being used from
How much more do you want? How much more is your capacity?
We could have 20,000 more in the next 5 years. 20, 30,000. 20 to 30,000. The Indian market is 200 plus 220 million passengers per year, right? 200, 220. I mean, it's a big market. Right, I mean, it's in the US, right? I mean, you have 800 million passengers, right? I don't see any reason why India cannot go to 400 million passengers. My view is that supply and demand today is not balanced in India. So
what is the mismatch you see?
The mismatch is every flight I add to India, I get 85, 90% load factors. You see what I mean? So if I can add today more flights, it's because demand is not balanced.
Right, a quick look at the other headlines. Shares of IIFL Finance surged in trade a day after RBI lifted restrictions on its gold loan business. The lender will now be permitted to sanction gold loans with immediate effect. The central bank had earlier imposed curbs on the NBFC in March over supervisory concerns in its gold loans portfolio. Shares of Reliance Infra gained 11% following the board's approval of a 3,000 crore preferential issue to a promoter group company and other investors. Additionally, the company also plans to launch a QIP to raise another 3,000 crore rupees. These funds will be used to expand the business. ITD cementation stock hit the 20% upper circuit in trade today. This after CNBC TV18 reported, citing sources that Adani Group may also be in the race for the promoter stake along with KEC International and 2 other companies. Vivek Iyer joins us now. Vivek, what are your sources telling you about this development?
Well, that's right. So when you're talking about ITD cementation, remember, this particular stake sale by the parent has been going on for quite some time, especially, on July 3rd, the company actually informed the exchange stating that the Thai parent, that is ITD, was looking to divest its close to 46.5% stake in the company. After that, remember, on August 1st, our colleague Yash had done a story saying that KEC International, another listed T&D player, was actually looking at acquiring a majority stake in ITD cementation. At that point of time, KEC International did not actually told us that they look for both organic as well as inorganic growth opportunities. And also remember, very interestingly, at the end of Q1, KEC International actually had gone ahead and announced a fundraise of close to 6,000 crore rupees, which involved 4,500 crore of a QIP fundraise and another 1,500 crore of debt issuance. Now, after that, what's actually transpired is that today we understand from our sources that the Adani Group has also evinced interest in going ahead and getting a controlling stake in ITD Cementation. We reached out to the Adani Group. They did not offer us a comment. Now, just looking at the deal, Matt, closer to the current market price, the market capitalization of the company works to a range of 9,500 crore. The parent stake, that is close to 46.5%, works out in the range of 4,500 crore. Now, remember, if there is a change as far as the ownership is concerned, there will be a mandatory open offer that will be triggered, and that particular 26% open offer will work out to another 2,500 crore rupees. So all in all, at the current market price, remember, whoever is looking to buy this particular entity will need to shell out a close amount in the range of 6,900 to 7,000 crore rupees. So it's a significant development. ITD Cementation on the back of that today locked in the upper circle.
Right, thank you, Vivek, for that update. Moving on to the startup space, EdTech company PhysicsWallah has raised $210 million at a valuation of $2.8 billion. This is the largest fundraise in the EdTech space since 2022 after the Byju's fiasco cast a cloud on the sector. Ritu Singh is here with more on the PhysicsWallah fundraise and its significance. Over to you.
Well, EdTech unicorn PhysicsWallah has secured $210 million in fresh financing amid what is a very tough funding environment for EdTech companies, especially in the wake of what's happening with Byju's. This Series B round was led by hedge fund Hornbill Capital with significant participation from Lightspeed Venture Partners alongside existing backers Westbridge and GSV. This round values PhysicsWallah at $2.8 billion, which is a substantial increase from the previous $1.1 billion valuation that it had scored in the last funding round in June of 2022. And this is also the largest fundraise by an Indian EdTech in the last 2 years. PhysicsWallah, with this current round, has now raised more than $310 million to date. The current round also includes a secondary transaction of about $35 million, which also saw its founders and employees selling some of their shares. Now, the company will primarily use these funds to make acquisitions to support its future growth plans with a key focus on consolidation in the education market. It plans to pursue inorganic expansion to enter the competitive K-12 formal education segment as well. Now, currently, the EdTech offers online, offline, as well as hybrid platforms. It caters to more than 4.6 crore students through its 112 plus YouTube channels. 55 lakh of these students are now paying customers. It operates about 180 brick and mortar centers and is also establishing tech-enabled offline and hybrid centers across 105 cities in India. Now, the company's co-founder has said in a statement that FY25 is going to be the year of largest absolute EBITDA profitability for the PhysicsWallah group, and this comes after the company reported a steep 91% drop in profits in FY23 because of a surge in expenses, even as its overall revenues rose about 243% over the previous year to 104 crores in FY23. So in what has been very tough times for the EdTech sector, here is a mega funding round coming in for PhysicsWallah.
Right, thank you, Ritu, for that. On that note, it's time for a short break. Coming up next, hundreds queue up outside Apple stores in Mumbai and Delhi as the iPhone 16 goes on sale. More details when we return.
It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Our biggest overweights would be things like pharma, auto components. We've gone somewhat overweight IT in the last rebalance. Cap goods and industrial machinery, most people discovered in 2023. We have been overweight for almost 3 years. So we went overweight in October 21. And as far as, in general, what is to be done? First of all, many of the viewers would have made great money in some small cap, some micro cap. All those things you book profits and put it into a steadier portfolio. So if you want a one-line advice, that would be it.
కడాన తిరుమల లడ్డు కూడా నాసి రకం. నాకైతే ఆశ్చర్యం వేస్తుంది. ఎన్ని కంప్లైంట్ చేసినా కడాన వెంకటేశ్వర స్వామి పవిత్రతను దెబ్బతీశారు. ఎన్నోసార్లు చెప్పాం. అక్కడ ఎంత దుర్మార్గంగా ప్రయత్నం చేశారంటే అంత దుర్మార్గంగా ప్రవర్తించారు. కడాన అన్న దానంలో క్వాలిటీ ఆఫ్ ఫుడ్ లేకుండా చేశారు. దేవుని దగ్గర పెట్టే ప్రసాదం అపవిత్రం చేసే విధంగా ఓసారి బాధేస్తుంది. నాసి రకమైన ఇంగ్రీడియంట్సే కాకుండా ఎనిమల్ ఫ్యాట్.
Welcome back. The Supreme Court took exception to a comment by a Karnataka High Court judge who referred to a Muslim-dominated part of Bengaluru as Pakistan. The top court is also locked in a standoff with the union government over appointment of High Court judges, and the court's YouTube channel got hacked today. Ashwit Kumar is back with us to wrap up all the court action.
Well, here's a quick wrap of all the courtroom action. Number one, at 10:30 a.m., the Apex Court off to an interesting start. 5 senior-most judges of the Apex Court assemble in court number 1 for a special hearing to take note of comments that fell from Justice Srishananda of the Karnataka High Court. Justice Srishananda had likened a part of Bengaluru dominated by Muslims to be Pakistan, calling it, "This is reality." This is something that the Apex Court not happy with, the CJI not happy with, calling it a case of gratuitous comments, asking the Registrar General of the Karnataka High Court to conduct a report on this, to submit the report in no more than 2 days before the Apex Court. The Supreme Court will resume hearing on Wednesday next week. That's one. Second, the Jharkhand government red flagging the conduct of the centre in delay in approving the name of the Chief Justice of the Jharkhand High Court, saying that the Jharkhand High Court has no Chief Justice at this point because despite the collegium recommending the name of Justice MSR Rao back in July, that name has still not been approved by the centre. The CJI expressing concern, asking the Attorney General to give the reasons why certain names have not been approved, certain names why the centre is still sitting on those files. That's number 2. And number 3, the YouTube channel of the Apex Court of the country, the highest court of the country, appears to have been hacked. Instead of hosting videos from the Supreme Court proceedings, what we found while clicking on that link is that you find videos advertising and promoting a cryptocurrency which is backed by Ripple. Ripple, mind you, is a blockchain company, a cryptocurrency company which is often in conflict with the US regulator SEC. So an interesting day here at the Apex Court.
All right, thank you, Ashmit, for that. Shifting focus to the big tech story we are tracking. Hundreds of Apple loyalists lined up outside Mumbai and Delhi's Apple stores as the iPhone 16 hit the shelves today. The new iPhone series was announced on September 10th with an updated design and improved hardware. The doors to the stores opened at 8 a.m. in the morning in Mumbai's BKC. A huge crowd of people beaming with excitement were waiting outside to get their hands on the new model. Not just Mumbai, Delhi's Saket Apple store was also witnessed a huge queue as people extended across the mall floor. My colleagues Rachna Dhanrajani and Abhimanyu Sharma capture the iPhone mania from Mumbai and Delhi.
The much anticipated iPhone 16 and 16 Pro series are now available for purchase in India. The phones were first launched on September 9 and pre-bookings were made subsequently open. But it is today that all Apple fans assemble here at the Apple Store and get their hands on this phone. Along with the iPhone series, the newer products include the Series 10 watch and the new generation of AirPods. But the star of the show really is right here, the iPhone 16 Pro Max.
एक बेटे के लिए एक बेटी के लिए बीवी एक ही है उसके लिए एक बाकी दो भाई के लिए
How many?
I have two.
Why did you buy two?
One for myself and one for my wife.
We have waited for almost 3 to 3.5 hours, and actually for next phone we have to wait for more 4 hours.
And this is after you pre-booked your phone.
We have pre-booked on 13th of September, and today is 20th of September. But we have to wait more.
I saw that the iPhone colors are in the colors of the sari that I already have. I said, you know, what better way to bring together two things I love and on a day like this.
There are many people who are actually buying it on EMIs, and that is something which has actually made the buying experience more lucrative for many of the people who cannot afford it outright. And several banks, several finance companies are also offering EMI plans to ensure that many people actually join the bandwagon and actually become Apple customers. Of course, there is a huge resale value too, which is being banked upon by many sellers. And despite the availability of iPhones on quick commerce platforms like Big Basket and Blinkit, there are still huge queues which we are witnessing outside this Saket store in Delhi and also several other stores across the world.
Well, hundreds chose to queue up outside Apple stores in Mumbai and Delhi hours earlier for their iPhone 16. An iPhone was just a click away for many who got it delivered home within minutes. Quick commerce companies like Blinkit, Big Basket and others cashed in on the iPhone mania, promising to home deliver the phone in minutes. Blinkit founder shared a post on X saying they have partnered with Unicorn Info Solutions to deliver the iPhone 16 series in select regions under 10 minutes. Big Basket also announced that it delivered iPhone 16 in just 7 minutes. Now, what does this mean for the future of e-commerce? You can now get an iPhone home delivered along with your weekly supplies of grocery or a bunch of coriander leaves. Shilpa.
Well, you know, a Big Basket consumer today, right, ordered an iPhone 16 at 8 a.m. on Big Basket and it got delivered by 8:07. This same consumer last year would have had to wait a day if she had ordered it on Amazon or Flipkart. And this, you know, is the perfect example of how lines are blurring between e-commerce and quick commerce. Now, let's see how each of them stacks up. Now, the biggest advantage that quick commerce obviously has is how quick it is. And that's consumer behavior is changing and the consumer now wants everything in 10 minutes. But e-commerce players currently only offer same-day delivery and that also in just select cities. But it's their presence that is unmatched. Currently, they service nearly 100% of India's PIN codes, while quick commerce has now only just started, sort of expanding into Tier 2 and Tier 3 markets. And Zepto, Blinkit and the likes have been expanding their product range into appliances, into toys, into cosmetics and more. But e-commerce players have a much wider product assortment and they offer much higher discounts and they're also much better equipped to deliver big goods like a TV or a refrigerator to you. But the way quick commerce apps have been ramping up is definitely giving jitters to e-commerce players. Now see, Flipkart for instance, right? It is already testing the model with minutes and it's also ramping up its fulfillment centers. Myntra on the other hand is already testing 4-hour deliveries. Amazon is also looking at a foray and at the same time is also ramping up its storage capacity for faster deliveries. Nykaa for instance is also making its faster deliveries, which is same day and next day deliveries available in 110 cities. And now experts say that, down the line, it's not like one will eat the other up. Both will coexist, where impulse buying will go to quick commerce and planned purchases will continue to stay on e-commerce platforms. But yes, e-commerce players are likely to work on reducing their delivery times to as fast as 30 to 45 minutes. And this festive season, we're likely to see this battle playing out.
Right, thank you, Shilpa, for that update. It's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
ఏది గీకు బదులు ఈరోజు స్వచ్ఛమైన గీదెమన్నాం, ప్రక్షాళన చేయమన్నాం, నాణ్యత పెరిగింది, ఇంకా కూడా నాణ్యత పెంచుతాం. అల్టిమేట్గా వెంకటేశ్వర స్వామి మన రాష్ట్రంలో ఉండడం మనందరి అదృష్టం. ప్రపంచం అంతా మన దగ్గరికి వచ్చే పరిస్థితికి వచ్చారు. అలాంటప్పుడు వెంకటేశ్వర స్వామి పవిత్రతను కాపాడుకోవాల్సిన బాధ్యత మనందరిపైన ఉంది. ఇది కూడా చేస్తామని చెప్పి కూడా నేను మీకు తెలియజేస్తున్నా.
Hello and welcome to this special program. I'm sitting down with someone who is was regarded as one of the world's foremost equity strategists. I'm sitting down with Christopher Wood at Jefferies, and what a day to sit down with him from the sidelines of the Jefferies Investor Conference here in Gurgaon. Chris, great to have you with us here. Thank you very much for your time. I said what a day to sit down with you because we're sort of coming out of this 50 basis point rate cut from last night. What do you make of it? I know you were expecting 25, but here we've got 50.
No, I'm genuinely surprised by the size of the rate cut because it's contrary to the messaging of the Fed going into the meeting, which is that the economy is okay and the employment market is weakening, but only gradually. So, yeah, if you'd talked to me yesterday, I would have said 25 basis points. I think there was an article in the Wall Street Journal suggesting it might be 50 at the weekend, so that was probably the clue that they were going to go bigger. But bottom line is contrary to the messaging going in. But the key point here is what the Federal Reserve believes is the neutral rate. So my guess that is probably in the 3 to 3.5% range. So even if the US achieves the soft landing, so to speak, we're probably going to be at between 3.5 by the middle of next year. But in terms of the short term, I'm surprised I'm surprised it's 50 basis points.
Do you think it's got a political angle to it as well, with elections in November?
My guess, given the fact that whatever they might argue today is quite, anybody who can read and listen is contrary to the messaging going into the meeting. So my guess at the margin is political. Because it's pretty clear that probably the vast majority of members of the Fed would prefer Donald Trump not being elected.
I see. And does it?
And I'm sure the Republican candidate will view it as political.
But does it help at the margin?
Maybe. I'm not sure it does help. Maybe at the margin.
Okay. I want to come back to the US political sort of elections season in just a bit, but we don't see 50 basis point cuts without a crisis. Either very apparent or, I mean, something which they're worried about. But
there could be conspiracy theories that they know something and the economy is much weaker than which is a risk of them cutting 50 basis points yesterday, actually. But my guess is they actually genuinely believe the economy is okay. So that's why I think the motivating factor is political. And there clearly are some members of the Fed who are very political. Former New York Chairman Bill Dudley has been calling aggressively for a 50 basis point rate cut. If I remember correctly, he was the guy who once wrote an article calling on the Fed to manage monetary policy in a way that could stop President Trump being re-elected in the previous election. So I think there have been quite a lot of people calling aggressively for rate cuts, saying the Fed's behind the curve. But that's not the message transmitted by the Fed chairman, Mr. Powell. Yeah.
Do you believe the economy is solid?
I believe the economy is obviously the economy is okay right now, but I still believe there is a risk of a US downturn because of the big lags in monetary tightening in this cycle. So if you look at a chart in my presentation I gave this week, there's a chart of M2 nominal GDP growth, which had a huge explosion back in 2020 when they printed all that money in the pandemic. And actually, while M2 growth has slowed sharply in the intervening period, while the Fed has been tightening, if you draw a trend line from 1997, the M2 to nominal GDP ratio has only just gone below the trend line, which is a long-winded way of saying that in liquidity terms, the monetary tightening is only just beginning to bite. And you know, the labour market is weakening. All we need for the Fed to be cutting 50 basis points every meeting is one unambiguously bad labour market
data.
Yeah.
And you get another 50.
Yeah, but then the market will be discounting 50 basis points every meeting.
Okay. The Fed themselves in the dot plot is saying that there'll be two more 25 right, this year in 2024. At this point, that seems likely. I think it'll be more than that.
Yeah, but I don't really pay any attention to the dot plots. What's important is the data.
Okay.
I mean, the dot plots are important in the sense of what the Fed think, but I wouldn't invest any money on the dot plots.
Okay. So let's assume that it's a normal kind of an economy, maybe a little slowing at the margin, but no crisis, nothing panicky. And you have these rate cuts which have started. Let's just assume it's 50 now and then maybe another 50 through the end of the year. What does it mean for asset classes like equities?
Well, it's good news it should be good news for emerging market equities because in most emerging markets, particularly here in Asia, central banks all year could have cut rates for their own domestic reasons based on the level of real rates and inflation. But in the vast majority of the cases, they chose not to cut rates because they were worried that they might undermine their own currencies. And in the specific case of Indonesia, which has the central bank has a currency stability mandate, they actually raise rates despite very high real rates. So basically, all these central banks will now have room to cut rates and hopefully their currencies don't get hit. So far, basically, the dollar has been in an increasingly clear weakening trend. So that's basically good news for emerging markets.
So EMs more than US?
In my view,
in an easing cycle?
Yeah, in my view, yes. Because in the specific case of the US, the interesting point is how resilient the US listed companies have been to the Fed tightening cycle. And that is explained by this extraordinary statistic that the net interest payments of the US non-financial corporate sector have declined sharply in this Fed tightening cycle, which is counterintuitive, but it's the reality. And that's because the big tech companies have been earning 5.5% on their cash, where they used to earn 0. And it's because the investment-grade corporate sector in America did a very good job locking in bond yields when they were low, refinancing their debt. So if the higher rates actually were positive for them on the out, where the lower rates will help is the SMEs, because they don't issue bonds. And that's the big surprise. SMEs in America have been paying between 9 and 10% to borrow money for the last year. And that's why I'm genuinely surprised how resilient the labor market has been. Yeah, because they employ most Americans.
What about India, Chris? I mean,
well, in the case of India, the RBI can cut rates like
later this year.
Well, I mean, all Asian central banks can cut rates today, including the RBI. But my colleagues here, we believe the RBI is not, not going to be aggressively cutting. I.e., the RBI is going to behave in a different way from the Fed. And actually, the RBI in recent months has been actually counter-cyclical because they've been doing these preemptive regulatory measures as regards the banking system. And so I would assume the RBI will cut rates once before the end of the year, but I could be wrong.
Okay.
And they can cut rates because...
That's the consensus. First cut by December of this year.
I think the RBI would be coming under criticism if they haven't cut rates by the end of the year, because if you look at the level of inflation, particularly core inflation, is below the level rate. So you have positive real rates. But obviously with the stock market at all-time highs, huge domestic flows going to the stock market, the RBI doesn't feel under massive pressure to cut rates today.
Yeah, no, absolutely. Chris, what about flows into India? Because the market here has been marching to the sort of drumbeat of local investors putting in money, and that number has sharply increased. It's about $4 billion regularly a month coming into mutual funds. It was about $2 billion a month before elections. So actually post-elections, the number has gone from $2 to $4 billion a month. I remember you were surprised when the market here, barely shrugged in response to the election.
That was a big surprise. That was a big surprise to me.
And of course, after the capital gains...
well, that's actually the biggest surprise to me was the second.
Yeah.
So after the election, clearly it was only one-day sell-off, but then I think the market's reaction was explained by the fact when I came to Delhi shortly, it was clear that everybody believed this government could last 5 years with the two minority parties. So that became more explicable to me. But I have to say, I'm genuinely astonished by the resilience to the capital gains increase, which is quite material, most particularly as a week before I met many domestic institutional investors and they were not expecting the capital rate gains tax increase. So I find that actually...
And many of them were very vocal that markets will be hurt.
Yes, I would have been too. So we've all been completely wrong. So the only explanation is that the domestic households who are investing through these monthly installment plans have become convinced, in my view correctly, that India is a good long-term equity story and don't want to be scared out of the market. That's the only... And the big story of India this year is these domestic flows.
Yeah. But what about foreign flows? You said that easing cycle is great for EMs. India is an emerging market. Foreigners have stayed away.
But on a relative basis, if you're an EM fund manager, after this 50 basis point rate cut yesterday, the markets you're going to want to add positions to are places like Brazil, which have 11% nominal rates, 5-6% real rates, so huge potential to cut rates. Markets in Southeast Asia, like Indonesia, Philippines, which are traditionally very sensitive to lower US rates, weaker US dollar. So India is not the obvious place to put your money in today because, one, it's expensive, and two, the RBI is in no hurry to slash rates.
Well, Chris, stay with us. We'll take a quick break here. Stay with us because we got a lot more ground to cover with Chris Wood of Jefferies on the other side. You've been at the conference, you've been speaking with a lot of foreign investors who are here. What's the sense you get about India? Yeah, it's expensive, but it's been expensive. You could have made the same argument 3 months, 6 months, a year ago.
The people who are, obviously the people here are already invested.
Right.
And so their issue, they're not too hung up on the valuation. I mean, they're all concerned about the valuation.
No, we're talking about incremental flows into the Indian market. I mean, what's the sense you get on that? I mean,
well, my sense is yes. The problem for the foreign fund managers as a whole is that they are underweight. Based on our latest data, based on the top 30 global emerging market equity funds, they're now marginally underweight, which is not where they want to be because most of them would agree with me that this is the best long-term story. But they're underweight. They've become underweight from a de facto standpoint One, because they've been reluctant to pour money in because of the high valuations. Two, because this is a very important point, the neutral benchmark weighting of India has just gone up a lot, which has made them become underweight by market performance. But there's an additional issue. There are two sectors where the two sectors where foreigners have traditionally most invested in India have ironically been underperforming, i.e. IT services and banks. So in the last year, many foreign investors, particularly value-orientated investors, would have gone into the banks for the first time because they came within their valuation range. But you know, they're not the hot areas of the market. The hot areas of the market in India have been areas like industrials, infrastructure, real estate, energy, defense. These are the areas which have been driving the market. That's not the area traditional emerging market investors have been investing in.
So you don't think that foreign investors are going to come back to India in a big way?
Not in the immediate term, but the good news about this is the really positive point to take away is any major correction in India, like say 10%, in my view, will be viewed by foreigners as the opportunity they've been waiting for to add.
Are you still expecting a 10% correction?
No, I'm not. I'm just saying that's...
someone said 5 is the new 10 and maybe 2 is the new 5.
No, my view, I've got a greed and fair long in the India portfolio. I'm not going that defensive in it.
Okay.
So, because the point is I can afford a correction. I've got very good performance. But my portfolio is heavily in energy, real estate, capex plays, but I have got the bank, so that's, I suppose, the conservative part of my portfolio.
Okay.
But the real issue for foreigners, I think the more foreigners know about India, the more specialized they are in the market, the more relaxed they are on the valuations. It's just the generalists are the more concerned. And global investors, as opposed to global emerging market investors, barely own Indian equities at all.
So I'm
talking about global funds.
Right. Not EM funds, but global funds.
They barely own India at all.
At all?
Yeah, literally. They don't own India.
So it's a strange kind of a position, right? I mean, because you're saying is the best long-term story.
So many global investors will agree that India is now the best story, but there's a practical issue that if you only invest in India via ADRs, you have extremely limited choices. Because of the lack of ADRs quoted offshore. Unlike in China, there are many ADRs. And the second practical issue is you want to invest in India in a sort of more real manner, you have to get FII approval. And that is a regulatory obstacle, right? That requires a real commitment. So most global funds have not got FII status.
Is that such a big issue? I mean,
yes, that's an issue. Don't underestimate that.
Yeah.
So a big fund management company could have their global emerging market fund with FII status, but their global fund may not have it. And then this capex increase, or capital gains tax, will now become another. Will now put them off.
You know, in your note, I think the last but one note, you did mention that you put in that capital gains, and you said, well, that worries you.
Now, that personally, I don't believe in capital gains taxes on equities because people have already earned the money and they're risking. They should be encouraged to invest in equities. Now, obviously, you can deduct the money you lose, but that's just a philosophical point. So, obviously, the government's raising.
No, but did you mean that in the context of where India is in terms of the political?
Well, no, that is an issue because in most Asian markets, you do not pay capital gains tax. But be you domestic or foreigners. But there's another technical issue where if you're running a dedicated Indian fund, or you have to make a provision for that capital gains tax, apparently, even if you haven't sold the stock. You see what I mean? So if you're a fund manager, you're kind of starting behind the benchmark.
Because of this?
Yes.
Okay.
So that is actually a negative, yeah. That's a negative for people trying to do dedicated Indian funds offshore.
So do you think this? I mean, India's weight has gone up, right, in the benchmarks. But do you think foreign funds will stay underweight for some time? I mean, that underweight position can actually even widen if local investors continue to put in money. and the market
yeah,
continues to do
that's
well.
the direction of travel is foreign ownership is declining relative to domestic ownership. Fundamentally, this domestic flows are just extremely positive. And we estimate Indian households have 6% of their assets in equities. Though none of us are expecting the recent pace of flows to, by every law of logic, they should slow down. As you say, it's remarkable they've picked up since the election.
I mean, it's $4 billion a month now, on a regular basis.
But from a macro standpoint, at this conference last year, we were arguing that we were in the early days of a capex cycle, but you couldn't really show data comprehensively proving that. Actually, the best evidence we were in the early days of a capex cycle a year ago, 15 months ago, was that capex stocks were rallying.
Sure.
But there wasn't the actual data. But now there's real data highlighting that the private sector capex cycle's underway.
But do you think, in a lot of ways, across sectors, I mean, stocks are already pricing a lot of this in India? I mean, capex stocks, for example.
So tactically, you would be a bit more cautious.
You would be.
Yeah. But I'm not. I've got these long-only portfolios, and I believe this. See, the last time India had a capex cycle, which I would say was like from 2002 to 2009, India massively outperformed the rest of Asia in that period. I remember it clearly. So if this capex cycle is happening, structurally, I want to remain invested in the story.
Even if they go through periods of underperformance, but eventually it'll. I mean, it's a great story.
Plus, we have the residential property story, which
you've been very bullish on.
Yeah, and we don't think there's
You did highlight that last quarter there was a bit of a slowdown, but
but that I would view all that as a pause to refresh.
Okay.
So we've got good news of if there's a weakness to the residential property story, which has been dramatic here, if there's a weakness, is very much focused on what they call the high end. Which I suppose in the US, well, it depends what city you're in.
The premium end has done very well.
Yeah.
You're saying that perhaps sees some...
Well, what I'm saying, if you're going to criticize it, you will say it's very vulnerable because it's just the high end going up.
Okay.
But I would say, in response, well, I would have to admit that's true. I would say that's normally how property cycles work. They start with the high end and they gradually trickle down. And in that sense, rate cuts would help because if you go under 200, to use dollars, not if you go under $2,000 for a unit, you're probably going to get to levels of more rate-sensitive buyers. And so if rates go down 200 basis points here or 150 basis points, that's going to increase the number of people who can afford it.
Right. So for
I'm heard that I think I heard this week that inventory in the top 7 cities is at a 14-year low.
Yeah.
So if that's true, we can definitely keep going for another 4 years.
In terms of this cycle, in terms of real estate build-up?
Yes, because we've just entered our 4th year of an upturn.
Okay. So you're saying another 4 years? Another 4 years?
Obviously, we take it a year as it comes, but given the fact that we had a 7-year downturn, given this multi-year inventory low, given the fact that India builds far fewer residential units today than even China, given its current problems builds, there's no reason to think why this suddenly blows up.
So, tell us the sectors or places that you're most bullish on now, Chris. If somebody is trying to put fresh money to work here, what would you?
Put it in today. So I'm not taking out. I've got 19% in real estate.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled.
Hello, welcome to News Center. I'm Parikshit Luthra. The Supreme Court has ordered SpiceJet to return 3 aircraft engines to lessors within 15 days over non-payment of dues. The apex court upheld a High Court order and dismissed the petition from SpiceJet. So how is this order likely to impact the cash-strapped airline? SpiceJet said that 2 engines in question are already grounded and operations remain completely normal and unaffected. SpiceJet also said it is currently in discussions with the aircraft lessor to reach an amicable settlement. However, last month, SpiceJet's lawyer had argued before the Delhi High Court that it had only a fleet of 21 aircraft and the grounding will cause grave loss to the defendant. SpiceJet's lawyer said grounding of 3 engines will mean grounding of 2 aircraft, as 1 aircraft needs 2 engines. The order was delivered on the 14th of August. It is important for SpiceJet to maintain a fleet of at least 20 aircraft to continue flying international routes. But according to documents filed by SpiceJet before its 3,000 crore rupee fundraise, the airline said it has a total fleet size of 64 aircraft, out of which 36 are grounded, leaving the airline with 28 aircraft. Joining us now to discuss the future course for SpiceJet is aviation sector analyst Devesh Agarwal. Thank you very much for joining us on the program today. Devesh, how does this order from the Supreme Court today impact the operating capacity of SpiceJet?
Hi, Parikshit. Thank you so much for having me. I was going to say should not impact them too much because it's 3 engines. So effectively equal to 1.5 aircraft, and the airline is already facing quite a bit of issues with aircraft itself, with airframes itself. So it should not have too large an impact. It will have an impact for sure, but not too large an impact, in my opinion.
All right, not too large an impact. The other question, considering that there has been a lot of trouble for SpiceJet, financial trouble especially, for the last 2 to 3 years, does this order in a way further negatively impact the financial credibility of the airline?
SpiceJet is already facing a lot of issues, and I think pretty much there is talk about their QIP, but then everything when it comes to SpiceJet, we are kind of operating in an area of, I would use the word unknown. The airline is not very transparent. By the way, I must disclose that I am a shareholder in SpiceJet. So apart from being an external observer, I would also be talking from a standpoint as a shareholder. But there is not adequate transparency from the airline in terms of their financial issues. They definitely are facing issues. They're talking about getting funds, but there is really no detail available from where the funds are coming, when the funds are going to come, anything. There's no authoritative sort of information available. And I may be wrong, but to the best of my knowledge, the airline does not have a CFO. I think their CFO resigned a few months ago. I mean, it's not quite sound. You're gone for such a large place, QIP, and the topmost financial official of your airline is sort of not, in a how do I use the word, a permanent position. It leaves a little bit to be desired, to be honest with you.
Right. We've run out of time, but thank you very much, Devesh Agarwal, for joining us. One of the engines means for SpiceJet as an airline going ahead. Moving on to a CNBC TV18 exclusive, Etihad Airways CEO says Indian aviation traffic has the potential to double to 400 million passengers per year. Speaking to my colleague Madhiya Mujawar, he said Etihad has no further room to grow in the Indian market beyond the 176 flights per week due to the restricted access to Indian traffic. He said Etihad's flight from India having 80 to 90% load factor shows India has a demand-supply mismatch and has enough potential for more competition.
It's growing like 30%, right? 30-40% year on year. We are adding a lot of capacity. We have now 11 destinations in India. We have 175, which is 25 flights per day, right, for 175 per week. So we now have used all the traffic rights that we have to India. I mean, we can't grow anymore in 2025, but we have no doubt, right? We want to grow more. So we understand this may take time, but I mean, it's doing extremely well. If you compare to 2022, early 2023, we doubled the capacity in India.
Okay, so 176 flights is the doubling of capacity as compared to 2022.
They were about 80.
You're saying you're utilizing the bilateral traffic rights in full. What is that? How many seats is that per week?
It's about 30,000 per week, about 30,000, 35,000 per week. If Etihad today, together with Air Arabia, is using all the seats that we had in the past, we're using all the seats that we had in the past, you see what I mean? So I cannot have more market share.
Yeah, you used 30,000 and you're using 30,000 even now.
Yeah, 50,000 together with Air Arabia. So 35,000 plus 15,000. Air Arabia has about 15, 12,000, right? But the point is 50,000. It's being used.
Yeah.
From
How much more do you want? How much more is your capacity?
We could have 20,000 more in the next 5 years. 20, 30,000. 20 to 30,000.
Air India and Indigo have upped their game. Do you see that competition posing a risk to further expansion of Etihad's presence in India?
I think the market is so big that I don't see that as a risk. I mean, if you think about it, right? I mean, the Indian market is 200 plus 220 million passengers per year, right? 200, 220. I mean, it's a big market, right? I mean, it's in the US. Right? I mean, you have 800 million passengers, right? I don't see any reason why India cannot go to 400 million passengers. My view is that supply and demand today is not balanced in India. So
what is the mismatch you see?
The mismatch is every flight I add to India, I get 85, 90% load factors. You see what I mean? So if I can add today more flights, it's because demand is not balanced.
So you feel that if there are more flights and you will still get 85, 95%?
Of course. No, I don't feel. I know that by a fact because I just added 50% capacity.
And it's all full?
And it's all full.
Yeah. So all flights have 90% plus load factor?
On average, yes. On average, yes. We're operating now at 85 this month.
Yeah.
I mean, but we get up to 90. Last week on Monday was 90% load factor. And what is the asset that nobody can buy today? And every airline is complaining is airplanes. So it's really a privilege for India to be in a position where India can say, look, you know that scarce resource that you have, which is an airplane? Bring to India.
What is your fleet outlook looking like? How many planes you're expecting to add this year or in the near future? And how much of that capacity you plan to deploy in your key markets? So
we have today about 92 planes. Our fleet plan is to get to about 170 planes, about 60 planes more in the next, I would say, 5 to 6 years. It's going to be about 15 to 20 planes every year. So in the next 12 months, we're going to be adding 20 planes. It's a big number for an airline our size, right? It's about 15 to 30% growth. It depends on the year, depends on the delivery.
That's a 15 to 20% growth in your capacity.
Yes.
Yeah. So even if the government had to, did you have that capacity? You say you had.
I would shift. I would shift from other markets.
Is it that important India is?
It's a market that is growing.
Yeah.
Right? Yeah. I would shift. All day long. Okay. Isn't that nice for India?
Very nice.
Don't you feel good?
I feel very good. And so the last question then, Antonaldo, would be, what other partnerships are you exploring? Etihad was the first airline, a foreign airline, to partner with an Indian airline, which was Jet Airways, to take a 24% stake through the FDI route. So are you exploring any such partnerships with any Indian carrier?
We could partner with all three major carriers that you have. Not major, but the two major carriers. We actually have an interline agreement.
Air India, Indigo and
Akasa, right? Akasa. We have an interline agreement with Air India. It's active.
All right, from aviation to autos, Indian market continues to grow while premium segments are growing faster than the industry. That's the word coming in from Vikram Pava, President BMW India. While speaking to Danish Anand, he says he's upbeat in the festive season. Listen in.
We are seeing continuous growth. I think the first 6 months we established a great growth, and we said that that the growth continues. There was a small pause in between during the election time. We saw that, but it's coming back now. The festive season is right here. BMW Joy Days is absolutely on, our annual platform of giving great offers to our customers and celebrating the festive season. So we can see that there's great demand right now on those platforms. BMW Joy Days. Joy is core of our brand, BMW, right? And that's expressive in every format that you can think of. So what we try to do here is that give some specials to our customers to celebrate the festive season. It could be interest rate, it could be extended warranties, it could be some value-add accessories, it could be some cash benefits and things like that, depending on models where the demands are. I expect this demand and momentum to continue. Would I want more, is your question? Of course, I want more. I want more customers to come and experience our brand, experience our products, and attach to these great products that we're offering right now. I think our demand for EV has been really good. We've sold over 2,000 EVs now in the country, which is not a small number for a luxury car maker in any regard. We see that the penetration rate of 40% has been achieved in 7 Series. That means 40% of customers who are buying a 7 Series are actually choosing electric. If you look at India, India continues to grow. The industry is growing. The premium segment is growing faster than the industry. We are selling more and more products every year, and like I said, we'll end up this year at a solid double-digit growth as well. We are selling more of high-end vehicles as well as entry-level vehicles. So it's not that only one part of the segment is working for us. It's the entire spectrum from X1 till X7 or 7 Series, or from 2 Grand Coupe to 7 Series, that is actually working for us. So for me, that gives me the confidence that this is a sustainable growth. And India, it's a great story. And I think that's exactly how our country and economy is also behaving compared to the world.
Time for a short break, but coming up, Sri Lanka is heading to polls for the first time since an economic crisis roiled the nation, led to nationwide civilian-led protests and toppled the Rajapakse government. We get you more when we return.
CNBC TV18, an unending pursuit for excellence. A pioneer. A leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award.
Welcome back to News Centre. In a landmark judgment, Bombay High Court has struck down the IT rules amendment which allowed the government to set up a fact-check unit. The court termed this unit as illegal after hearing a petition filed by comedian Kunal Kamra and others. The mandate of this unit was to fact-check content about the government on online platforms. Ashmit Kumar is here with more on this verdict. Ashmit, does this mean that the fact-check unit that had been set up by the central government under the Press Information Bureau, that will now have to stop working until any other relief is granted by the Supreme Court?
Well, to begin with, the FCU, the day it was notified on March 20th, the very next day on March 21st, it was stayed by the Apex Court. So the FCU didn't quite take off in the first place. But as far as the FCU and the legality of that is concerned, of the fact-check unit, the Bombay High Court has answered that question, that it is simply untenable, unconstitutional and illegal. That's the long and short of it. Now, what is at the heart of this entire issue? Well, it's Rule 31B5 of the IT rules. This rule essentially envisioned a fact-checking unit which would operate under the government and then fact-check content online for accuracy with respect to governance, with respect to conduct of the government. Now, this was red flagged by various petitioners before the Bombay High Court. It was argued at length. The long and short, the broad essence of what the petitioners were arguing is that, look, allowing this fact-check unit power in the hands of a government-backed entity will lead to censorship of content, especially content that is critical of the government. And this is broadly the concern that was laid forth before the Bombay High Court. Now, what's important is that earlier this year, in the month of January, there was a two-judge bench verdict of the Bombay High Court, which had given a split verdict. There was a tie of 1:1. It is at that stage that this matter then travelled to a third judge. The third judge today pronouncing his verdict that in his understanding of this issue, this FCU unit, the rules, the way they've been prescribed are currently illegal, are disproportionate, are in violation of fundamental laws, and therefore merit being struck down. This, of course, is a ruling coming in by the Bombay High Court. The legal remedy for the centre would, of course, lie before the Apex Court.
All right, so let's see what the central government does. Ashmit explaining that very well, that the rules regarding the fact-check unit have been struck down by the Supreme Court. So let's see what the centre does now in this case. Moving on to international news from the neighbourhood, Sri Lanka is heading to the polls for the first time since an economic crisis roiled the nation 2 years back, triggered nationwide civilian-led protests and led to the ouster of the Rajapakse government. Voters in the island nation will be electing their next president from an all-male list of 39 candidates. Incumbent President Ranil Wickremesinghe, opposition leader Sajith Premadasa and Marxist-leaning Dissa Naike are the likely frontrunners. Wickremesinghe, who is contesting as an independent, is trying to cash in on Sri Lanka's economic turnaround. He claims he took up the job when no one wanted to, but has the economy in Sri Lanka really turned a corner? What are the key issues affecting the economy? Is this election a referendum on the austerity measures? What are the frontrunners really offering to the people of Sri Lanka? Joining us right now, our author and journalist Andrew Fidel Fernando. Andrew, let me begin by asking you, is Ranil Wickremesinghe the frontrunner? Are the odds in his favour at this juncture?
Thank you, Parikshit, for having me on, first of all. No, I don't think that anyone thinks that Ranil Wickremesinghe is the front runner at this moment. There's been a huge kind of wave of support, or an increase of support across the island for the National People's Power candidate, who is Anurukumara Dissanayake. So if anyone is a front runner, it's a very, very heavily contested election. It's an election where there are three major contenders all taking votes of each other. So it's one that's really hard to predict. But I don't think anyone is describing Ranil as the front runner at this second. I'm in Galle at the moment in the southern province. Certainly everyone around this area seems to be pulling towards Anurukumara Dissanayake. That situation will be very different in the north and the east, where Ranil and Sajith Premadasa are much more popular. So I think it's a three-way race. It's one that's very difficult to call. And if there is a front runner, I don't think it is Wickremesinghe at this second.
All right, you don't think Ranil Wickremesinghe is the front runner. By when do you expect the results to be out or results to be absolutely clear?
So this is a fascinating election because there is a chance that none of the three candidates will get 50% of the vote. So this is a presidential election where ideally to claim to have a strong or even a decent mandate, you would get 50% of the votes. And because there are three big contenders, it looks at the moment unlikely that anyone will get over that mark. What happens in that situation is that Sri Lanka has a preferential voting system where the two leading candidates after the first preference is counted go off into essentially a runoff or a recount of the eliminated candidates' votes, second and third preference votes. So it's a slightly complicated issue. I think this may be, if no one gets 50%, as many are predicting, it may go on for a couple of days. This may be the election where we spend the longest between, ending of votes being cast and knowing for sure who the president is. Probably around Monday or Tuesday, that will become clear. But it is, for any country, it's unusual to have three major candidates, and for a presidential election, the permutations are many.
Right. Andrew, one quick question before we let you go. Do you believe that tax rates in Sri Lanka are a contentious issue in the voting process for citizens right now?
More than tax rates, I would say cost of living is probably what is, the big contention in Sri Lanka. We obviously have, and it's not as if the economic crisis is past. There's Arutha, a policy think tank that's focused on the economy in Colombo, recently came out with some statistics that 54% of Sri Lankans, since the economic crisis hit in 2021 and 2022, 54% of homes in Sri Lanka are food insecure. There's been an increase in the number of wastage and underweight children in many of these homes. So people are very much still paying the toll for economic mismanagement in the past, particularly under the Gotabaya Rajapaksa presidency. So I think those economic hardships are probably the biggest factor at the moment. There's also a very big anti-corruption initiative, or the anti-corruption is a big issue in this election, which is why Anil Kumar Dissanayake, who has presented a vision of the strongest change, has done well. He was a presidential candidate in 2019, only got 3% of the vote, but now has surged ahead. And so he's probably, that's probably the reason why he's done that, because he's presented that notion.
All right. Okay. All right, Andrew. Thank you so much for joining us on the program. We'll keep looking out to you for the results of the Sri Lankan elections and the impact it has on the economy. Moving on, India's import authorization mechanism for laptop, tablets and PCs is set to expire on the 30th of September, with just days away. The uncertainty around this scheme is worrying the industry. That's a word coming in from Jason Oxman, CEO, ITI, during a conversation with Ashwat Kumar. He said the import restrictions is handled incorrectly and could actually lead to a complete shut-off. Listen in.
Thanks to government being willing to listen to industry feedback about the impact it would have on Indian consumers and businesses' access to technology. The program was changed. The deadlines were extended. A registration program was put in place that runs through September 30th of this year. So as you and I are having this conversation, we're only 11 days away from the expiration of that program. What's going to happen? We don't know yet. This program, if it's done incorrectly, and obviously our hope is that it's not, could result in an absolute shutoff of access to PCs, laptops, tablets, again, those vital communication and education and business links to the online world. Our hope is that the government of India will recognize that those products from trusted companies in trusted countries should continue to flow into India and be made available to consumers and businesses. But we are concerned about what is going to happen between now and September 30th when this program expires.
Recently, we've had the Ministry of Telecom put out procurement norms which have been tightened even further, where the domestic component in some cases goes up to as high as 65% domestic value addition. Again, in the same spirit of trusted sources and trusting some of these companies with allied countries, is that a concern when you look at such high prescriptions, 65% domestic value addition?
It is a concern, and it's a concern because, again, as for the government of India and its own technology needs through public procurement, it is going to deny the government of India access to the technology it needs to continue building out networks and infrastructure, connecting agencies and government employees, and providing the services that citizens need so desperately from government in the digital realm. Public procurement is enormously important. The government obviously controls what it buys and where it buys it from. The challenge with the recent guidance issued, and there's an opportunity for comment over the 15 days since the order came out, and we appreciate that, and we will provide that comment. The challenge is, again, as in the private sector, that a lot of these technologies are made by trusted companies, but not in India. It's really important for the government of India to focus on national security and make sure that it's procuring technology only from trusted companies that come from trusted countries. But in this case, if the government of India does not recognize the importance of an exemption for ICT technology, the kind of technology and telecom equipment that's on that list, including network equipment for running wireless networks, including equipment for accessing the internet, including equipment for communicating, everything that government needs to do, that equipment is just simply not made here in India. Even though trusted companies provide it, they manufacture it elsewhere. And that's okay as long as those are trusted companies. And so our suggestion to the government of India in this case is to provide the same kind of exemption for ICT technology that the government in the United States has had to do, because manufacturing doesn't happen there either.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Our biggest overweights would be things like pharma, auto components. We've gone somewhat overweight IT in the last rebalance. Cap goods and industrial machinery, most people discovered in 2023. We have been overweight for almost 3 years. So we went overweight in October 21. And as far as, in general, what is to be done? First of all, many of the viewers would have made great money in some small cap, some micro cap. All those things, you book profits and put it into a steadier portfolio. So if you want a one-line advice, that would be it.
కడాన తిరుమల లడ్డు కూడా నాసి రకం. నాకైతే ఆశ్చర్యం వేస్తుంది. ఎన్ని కంప్లైంట్ చేసినా కడాన వెంకటేశ్వర స్వామి పవిత్రతను దెబ్బతీశారు. ఎన్నోసార్లు చెప్పాం. అక్కడ ఎంత దుర్మార్గంగా ప్రయత్నం చేశారంటే అంత దుర్మార్గంగా ప్రవర్తించారు. కడాన అన్న దానంలో క్వాలిటీ ఆఫ్ ఫుడ్ లేకుండా చేశారు. దేవుని దగ్గర పెట్టే ప్రసాదం
मुझे किसी को मलाइन करने के लिए थोड़ी सीरीज बनाई है. हमारे इतिहास में ऐसा हुआ था. एक ऐसी घटना हुई थी, उसको थोड़ा सा ड्रामेटाइज करके रिपीट कर दिया.
मेरी तो जान निकल जाती है मैं जब भी वो मोमेंट देखती हूँ. I don't know whether it's my maternal instinct that kicks in, but just his response to that child. Special tribute to child. Between bad coffee and bad tea, I choose bad tea. Bad coffee is like a religion.
IC814 is not claiming to be history. शुरू में एक डिस्क्लेमर है जो कहता है ये is based on events.
The compliment that came from Captain Devisharan, he called the other day and he said he was very happy with what I did, and because I'm playing him on screen, and that validation is very, very special. And he gave the phone to Mrs. Sharon, and she said, I know this man more than he knows himself, and I can tell you that you've come very close to being him.
So when I look at Pankaj Kapoor and you remind me of Office. Mr. Dilal.
Everybody like that. Chai mangwa de.
Yeah, so it's so
$200
it's so unpredictable. It's so
$2 का क्या करेंगे? पाकिस्तानी बोलिए. बस तो पाकिस्तानी में करेंगे ना.
मैं switch from
मतलब मुझे आपसे तो यही बोलना है कि मैं दिल्ली बोल रहा हूँ मैडी से. I think रहना है तेरे दिल में अंदर. I'm so glad that all these films are getting a re-release.
कोशिश जरूर है कि मतलब कि हम री-रिलीज ही करते रहे, या एक फिल्म का जो है, एक फिल्म थोड़ी सी जो चल जाती है उसका पार्ट 2 पार्ट 3 इतनी भी अच्छी नहीं है कई फिल्में जो कि पार्ट 2 पार्ट 3 है ना.
Hello, welcome. You're watching CNBC TV18. I'm Archana Solanki. I have with me the stellar cast of Netflix's ICICI, the Kandahar Hijack series with me. Thank you so much for making time. And I really appreciate you spending this time with us and speaking with us about your series, which has received rave reviews, but it's also in the midst of a huge controversy. We'll talk about that later. But सबसे पहले हम ये जानना चाहते हैं कि आपको इस शो में सबसे बेस्ट फीडबैक क्या मिला और वो किसने दिया? Like the best thing something has said to you, and who has said that?
The compliment that came from Captain Devisharan, he called the other day and he said he was very happy with what I did, and because I'm playing him on screen, and that validation is very, very special. And he gave the phone to Mrs. Sharon, and she said, I know this man more than he knows himself, and I can tell you that you've come very close to being him.
Lovely.
Wow. And for me, that was a great compliment. And Captain was very happy I didn't play it as a superhero, because he said, मैं वापस जाऊंगा तो मेरे कलीग्स और मेरे दोस्त मेरा मजाक उड़ाएंगे. तो आपने जो किया एकदम करेक्ट किया. Thank you so much.
Best compliment is very difficult. I've been thinking because I got some extra time.
Can I give you a hint? So Sudhir Mishra ji tweeted. He said that he loved everything about your series, and he had one concern, but he said that he'll tell you about that in person.
He did.
Did he mention?
Yeah.
Do you want to talk about it?
No.
Or so was it one of the best compliments?
Coming from him. So my response to his tweet was Peri Pehna Ustad ji. So, one has the aspirations got modified looking at his work and Ketan's work and Saeed's work and Govindji's work and Sham Babu's work. So that's where the aspirations come from. And if they end up saying something like that, brilliant and whatnot, then, pat on the back. So, that's what I was going to say. It's not the best compliment, or probably the most valuable people that it came from is, like my son saw it, and he's, today's kids are irreverent. He patted my back and he said, well done. So I said, okay, sir.
Right.
No, but before you say it, because you will need a more special answer, I'm sure. What Anubhav said to me when I called him to thank him was, for him, what was most special was how his entire team responded to the show. The way all of us have watched it and felt, not for ourselves, but for the totality of the storytelling, and the way he approached it, and the way he humanized it.
Yes.
That was so important and so cherishable for every one of us.
Yes. My wife, Seema, वो मतलब आज तक मेरी तो तारीफ की नहीं उन्होंने, और वो हार्डली इम्प्रेस होती हैं. तो उन्होंने जब ये सीरीज देखा, और एक ही साथ में हम लोग बैठे थे, हम बाहर से आए थे, हमने कहा चलो 1-2 एपिसोड देख लेते हैं. कोयम्बटूर से आए थे हम लोग, तो 7:30-8 बजे हमने कहा चलो शुरू करते हैं, क्योंकि हमने देखा नहीं. तो एंड फिर हम लोग देखते रहे 1:30-2 बजे तक. एंड शी वाज लाइक कि उन्होंने कहा कि ये शायद अनुभव का नहीं, मतलब नेटफ्लिक्स पे ही सबसे बेस्ट सीरीज होगा, मतलब इस तरह का ह्यूज कॉम्प्लीमेंट दिया. एंड शी वाज लाइक क्राइंग, आंखों में आंसू थे. एंड शी वाज लाइक कि वो उस वक्त महसूस नहीं हुआ, अभी महसूस हो रहा है कि क्या बीती होगी इन लोगों पे और क्या क्या हुआ, हमें तो इतना कुछ पता है। शी वाज ऑल, और फिर दोबारा उसने कहा मैं इसको तो भी दोबारा देखूं। तो अगले दिन हम फिर बैठे, हमने फिर दोबारा से कुछ एपिसोड्स देखे उसके। दैट वाज द बिगेस्ट कॉम्प्लीमेंट जो आपका सवाल था।
कोई भी अच्छा काम होता है तो उसका एहसास तब होता है जब कई साल पुराने मित्र, पहचान वाले जो आपसे टच में अचानक से जब उनका मैसेज आता है तो आपको लगता है कुछ तो अच्छा घटा है। तो ऐसे बहुत सारे लोगों से संपर्क दोबारा हो पा रहा है और उसके लिए धन्यवाद है इस सीरीज का। बहुत सारे लोग हैं जो मैसेज कर रहे हैं, बात कर रहे हैं और सब यही कहते हैं कि उन्होंने शुरू की और अंत की। तो या
I think all the reviews that's coming my way, I wasn't really expecting anything. You know, I really wanted to work with Anubhav sir and look at the stellar cast.
Yeah.
You know, so for me, I was like super happy. But then that morning, people started sending me the reviews, and it was like a bonus. You know, so it felt really good. And like everybody's saying, it's like your family, your friends, your oldest friends, you know, they are calling. It's quite an overwhelming feeling.
Right.
What happens is that, you know, when you make a film, it's open to 140 crore people, 150 now probably, and people can have opinions.
Yes.
It's their right. But it's very difficult to individually address opinions unless I run into somebody in an aircraft. He's sitting next to me and he said, "Sir, थप्पड़ में आपने जो वो किया था वो मुझे सही नहीं लगा, क्यों किया था?" मैं बता दूंगा मैंने इसलिए किया था, हो सकता है मैं गलत हूँ, तो मैं गलती मान लूंगा। और ऐसा होता है फिल्म जब आप बनाते हैं, जब आप कविता लिखते हैं, जब आप पेंटिंग बनाते हैं, तो जाहिर है आप रिस्पॉन्स के लिए बनाते हैं ना। एनी पीस ऑफ आर्ट इज फॉर अ रिस्पॉन्स। सो आई एम श्योर देयर आर responses which must be there, which are not out of the usual. IC814 is not claiming to be history. शुरू में एक disclaimer है जो कहता है ये is based on events. इसलिए आप देखेंगे तो characters को भी ना, जैसे उस वक्त के ब्यूरोक्रेट्स थे, सबको नाम मालूम है, पत्रकारों को तो मालूम ही है। आप अगर गौर से देखें तो मैंने उनको फिजिकली भी अलाइक दिखाने की कोशिश नहीं की, कुछ नहीं किया। ना उनके नाम राइम करते हुए रखे, बिकॉज वो मेरा इंटेंशन नहीं है। भाई हम आज 25 साल दूर बैठ के एक ऐसे हादसे के बारे में बात कर रहे हैं, वो उस वक्त उनकी जिंदगी में रियल टाइम चल रहा था और वो ह्यूमन बीइंग्स हैं, तो वो एक तरीके से रिएक्ट कर रहे थे। तो मैं मिला उनमें से कुछ लोगों से, पर फिर भी उसके बावजूद मैंने कभी ये कोशिश नहीं की कि उनकी भाषा पकड़ लूं, उनका चलने का तरीका पकड़, नहीं, क्योंकि मुझे किसी को मलाइन करने के लिए थोड़ी सीरीज बनाई है। हमारे इतिहास में ऐसा हुआ था, एक ऐसी घटना हुई थी, उसको थोड़ा सा ड्रामेटाइज करके रिपीट कर दिया। इतिहास नहीं है ये।
Right.
और जिनको इतिहास में दिलचस्पी है वो पढ़ लेंगे।
Do you think that the hijackers were humanized in a certain way, or was it a part of your research, or it was a creative liberty that you took, or did you take, or did you not realize, or I mean, it didn't matter?
I'll give you the answer. What did you think?
Please don't ask me this question.
No, why? As an audience, not as a journalist. What did you? Did it feel?
So I think this is not the first time when we have seen this grey character, but I think I don't have an opinion on that yet, because there are scenes where there's this, like your air hostess says that cute hair, and there's this little conversation, little vibe between the hijacker and some moment
before she knows he's a hijacker.
Yeah, before she knows, and then there is the scene where he says कि इसको aftershave lotion लगा दो ठीक हो जाएगा खून. So these instances have been pointed out by people, viewers. So
I'm not very inclined.
But would you call it humanizing of hijackers?
No, if you think it is, I will respond to it. I wouldn't want you to be the carrier of someone else's opinion.
Yeah.
That's not our relationship. If you have an opinion, a strong opinion or mild opinion, I will respond to it.
Say for example, there's a scene where he says कि सबके लिए खाना है, veg भी है, non-veg भी है, खाना आ रहा है. So what was the rationale behind it, or did it really happen?
It did.
It really happened.
Okay.
Most of it is based on research, and we have dramatized stuff, but we haven't turned it on its head ever.
Series में कहीं ना कहीं दिखाया गया that the pilot was blamed for taking off in a very delayed manner from Amritsar, but then his version was very different. Your character as a hero is a vulnerable character, you know, but he's also kept his calm. He's vulnerable. What was your brief? What was the brief that was given to you for preparing this role?
Actually, I did not try to imitate or take on the personality of Captain Devi Sharan in my portrayal. It so happened that the events that unfolded and the choices that Captain Devi Sharan made gave me an image of a person. And I tried to play that image of somebody who is extremely disciplined, sincere, efficient, ethical, and also knew his way around people. This could have gone south had the pilot been slight bit aggressive or did not have the negotiation skills to work around. And also that one thing that he shared with me, that he started flying again after 4 days, right after returning from Kandahar. And that says a lot about a person. And it was his choice that he wanted to fly. I think that made me very clear about the person I'm playing. And I was playing that energy. And so yeah, I feel very honored to depict this unsung hero. And the kind of love that I'm receiving, I'm passing it on to Captain because it's all his. I'm just a mere prism that the light is reflecting from. Light is coming from the audience and it has to land on Captain. I'm just acting as a prism in the middle.
Right. Enough has been said about the stellar cast, the diverse cast, and you know, you've managed to get like the best of the industry together. Pooja, I want to understand from you, at any point did you get intimidated, or did you feel that there's a great opportunity for me to learn, or you know, how did you take this assignment, and what was your first reaction that you'll be working in this show?
For the first time, I was getting to play a real life character. I, at that point, did not know that the legends were on board for this series. I only knew that Vijay was a part of it because I was more focused. It was like literally I had to start shooting from tomorrow and I was speaking to them in the evening. So I was more concerned on what I had to do. Once I was done with my shoot, on my last day I met Kumud sir, and then it started unraveling for me, and then the cast announcement and the trailer and teaser and all happened, and it literally happened like that for me. I was like, wow. What? Yes. This is what I shot for. So that's how it was happening in real time with everybody else for me.
అపవిత్రం చేసే విధంగా ఓసారి బాధేస్తుంది. నాసి రకమైన ఇంగ్రీడియంట్సే కాకుండా ఎనిమల్ ఫ్యాట్ కూడా వాడారని. ఏది గీకు బదులు ఈరోజు స్వచ్ఛమైన గీ తెమన్నాం, ప్రక్షాళన చేయమన్నాం. నాణ్యత పెరిగింది, ఇంకా కూడా నాణ్యత పెంచుతాం. అల్టిమేట్గా వెంకటేశ్వర స్వామి మన రాష్ట్రంలో ఉండడం మనందరి అదృష్టం. ప్రపంచం అంతా మన దగ్గరికి వచ్చే పరిస్థితికి వచ్చారు. అలాంటప్పుడు వెంకటేశ్వర స్వామి పవిత్రతను కాపాడుకోవాల్సిన బాధ్యత మనందరిపైన ఉంది. ఇది కూడా చేస్తామని చెప్పి కూడా నేను మీకు తెలియజేస్తున్నా.
They I want to understand from you that being an editor, you played the role of an editor. Okay, let's go back to my previous question. If you were my boss, and if this controversy had happened, as an editor, what would your brief be to your reporters?
Exactly what it is to Nandini.
Okay.
And it's very interesting the way this track plays out. And for me, I think the most exciting part for any actor is when you get to play a character in a series or in this kind of a story where there is this dynamic situation unfolding, and within that dynamism you are also kind of unraveling something that's very pertinent even today, which is the advent of real-time news versus print, and the conflict of interests, and how you approach it from a place of ethic. And I think, like for me, I've played journalist before, but at this stage in my life, when I've spent enough years around really incredible women who are journalists and have a better sense of what it takes for them to be at work and do what they're doing with the authenticity and the credibility that they bring to the job. So many of them have left mainstream big channels, set up their own independent YouTube channels. The amount of, everything for them boils down to values and the ethics of journalism and how that has really come into question. And that was fundamental to the core of this track, for Shalini and for Nandini.
Patrulika, I don't think there are any spoilers. I can mention one scene where you're worried about your dad, and you ask one of the hijackers to call and check if he's fine. And
I'm getting goosebumps.
That's a very emotional scene. I think it just. How did you pull it off? It was very real.
She went there. She went all there. I was, in fact, just before this interview, when I met her, I said that scene. I still get tears in my eyes, and I've got goosebumps.
Because there weren't enough words. It wasn't a very long dialogue. It was just, I don't know how to sum it up, but it was beautifully done. So I think
I didn't know when to say cut. Because when you're doing an emotional scene like that, which is not riding on dialogue, see, the dialogue gets over, the actor holds the emotion for 3-4 seconds, and then you call cut. But when it's a quiet shot, you don't know when to call it cut, because if the actor's not leaving the emotion, there is another gold mine might be coming up. So the director waits. And then through the monitor, between the actor and the director, the one moment comes when you know it's over. But in this case, that wasn't happening. She just went on. And I didn't know how to say cut. And then I said cut because I knew I could not keep the shot in the edit for this long. Had I not said cut, she would still continue performing.
She's amazing. That scene was very powerful.
Yeah, it was very powerful indeed.
But I also feel like it's what Sir's written, thought of something like that. And I don't know, he gave me that space. I remember clearly. We didn't speak about it. And he just told me, Abhi karenge. And then he gave me half an hour, 45 minutes. And he just let me be. And before I went, you told me something. I don't remember. But anyway.
Must have.
Yeah.
Kuch to bola hoga. Yeah, I don't know what to say. Itna to bola hoga.
Now, without being biased or anything, I want to ask all of you about your favorite scenes. Any specific scene that gave you goosebumps? We've spoken about her conversation, but any personal favorite? आपका कोई favorite scene पूरी series आपका भी या किसी का भी हो सकता है?
I like that scene where, the fag end, when he's leaving the aircraft and he just inspects the entire space. Everything is all right. Everybody's out. Made it back. Goes. He has a private moment. We don't see what he's doing, and then he leaves. I just found it very profound and very beautiful on paper. I mean, it wasn't written this way on paper, but he made it up on the go. And he shared that idea with me, and I was like, this is beautiful.
Yeah. I have so many. I can think of many moments.
But if I have to say from the series, Manoj Pawar negotiations.
Oh yeah.
Oh my God! So I've been talking to my friends, him, everybody like that. Chai mangwa de.
Yeah. So it's so
$200 million का.
It's so unpredictable.
$1 million का क्या करेंगे? पाकिस्तानी बोलिए. खर्च तो पाकिस्तानी में करेंगे ना.
The switch from how he was earlier to the moment he started negotiating, oh my God, that switch was quite fantastic.
Yes.
And I think one of the that one moment between him and Arvind sir's character where they talk about chai and coffee. Those lines, those two lines.
Special tribute to chai. I think between bad coffee and bad tea, I choose bad tea.
I love it.
Coffee is like a religion.
There are lots of lines like that.
That is exactly how you speak.
You know, these are your words.
I like the reaction that Kumudji gives when he gets the first phone call and he's like, "Meri bhatiji hai." Strictly between us, right? Strictly between us.
I've been calling him Kaku all day today because Kaku.
And she's like hijack ho gaya. That level.
And the face he makes after he cuts the call is gold.
Little moment.
मेरा favorite.
Can I tell you my favorite while he's thinking about his favorite? Because I know he's thinking.
South intention.
मेरा favorite वो है कि जब पहली बार मैंने इनको सुना, negotiation का पहला sentence सुना, तो as an actor जब आप अपने co-actor से surprise होते हैं, वो सुर, वो अद्भुत था. तुमने ये कहाँ से लेके आए?
And you see it on his face.
That is a surprise. मतलब वो हमारे लिए learning है as actors. जब आप अपने co-actor को देखते हैं वो, तो वो मेरा पहली जो line उन्होंने
क्या बोलना चाहेंगे वो लाइन?
I enjoyed the negotiation. मुझे और वो कोई ऐसा
मुझे लग रहा है अभी भी उसी negotiation
नहीं वो और वो पता नहीं जैसे अनुभव सर ने भी पूछा था एक बार कि वो जो आपका नोट जो है वो उसी वक्त स्पॉन्टेनियसली आया या आपने बट मुझे बड़ा सिंपल लगता था कि वैसे भी जब हम एसटीडी कॉल करते थे ठीक हो नहीं तुम तो आई सेड ये नेगोशिएशन प्लस वो लोग जिनको ये बिल्कुल अंदर से एकदम बहुत गुस्से में है नफरत करता है और इसका जो कैरेक्टर है वो बहुत एग्रेसिव है तो वो बात कहनी जैसे हम अपने बेटे को भी डांटते थे तो उसका नाम पहले कभी पेट नेम से बुलाते हैं अरे बेटे नोनी इधर आ जाओ जिस दिन डांटना होता है मैं पावा काम हियर उसको भी पता चल जाता है आज मेरा पूरा नाम लिया है तो वही बात है मिस्टर पावा आप इधर आएंगे तो आपको ऑटोमेटिकली एक वो चेंज होता है तो आई थॉट ये अच्छा लग रहा है ऐसे बोलेंगे तो मजा आएगा.
It was so unusual and so amazing. Can I mention some of my favorite moments? So for me, you know, there's a passenger who's a parent. He's also a dermatologist. And he is very indifferent to his child.
Yes.
And towards the end, there's the special needs kid sitting next to him because his mother was disembarked.
Yeah.
And she doesn't realize वो कैसे छूट जाता है वो हड़बड़ी में मेरी तो जान निकल जाती है मैं जब भी वो मोमेंट देखती हूँ I don't know whether it's my maternal instinct that kicks in but just his response to that child and there are like that I can think of many moments so for me what becomes special in any storytelling is not always the words that are used. It's the silences and what you're conveying in those silences. And like that, the show has so many such silences that have strong social comments, strong political comments, and strong emotional points to make. And that's what makes it really special. And this is his ace.
I wish you all the best. It was amazing to speak with all of you. Thank you so much for being so candid.
Thank you.
Thank you so much for your time. I wish you all the best.
Thank you. Thank you so much, Archana.
Hello and welcome to the CNBC TV18 special. I'm Shireen Bhan. We're coming to you from San Francisco, which is playing host to Salesforce's annual event, Dreamforce. And joining me now to talk about the road ahead for Salesforce in India is the chairperson and CEO of Salesforce India, Arundhati Bhattacharya. Ma'am, it's always a pleasure. Thank you so much for joining us here on CNBC TV18. You know, you reminded me that it's now 4.5 years for you at the helm of Salesforce in India, and that's longer than your stint as the SBI chairperson. Let me start there. I mean, the transition for you personally, but also the growth that's happened for Salesforce in India under you. Take us through both those.
So, if you ask me for my personal growth, I think it's been a very energizing journey. I've learned a whale of a lot. I've learned, a different domain, how you negotiate that. I've tried also to find how best I can contribute to this organization, because what I bring to this organization is the outside-in view, the view of the customer and where the customer pain points are so that they can be resolved by our people and engineers over here. Other than that, of course, I've also learned to work a lot with a younger generation.
Yeah.
In fact, multiple generations. Because, we have people who are in their early 20s, and I'm, of course, in my late 60s. So you can imagine, the kind of people that I'm working with. And their requirements, their priorities, what really satisfies them, what energizes them is entirely different from the way we used to work. So I think I've learned a lot about people, I've learned a lot about technology, I've learned a lot about customer service and delivery, which I don't think, I had done in SBI. Other than that, of course, I'm very happy about the fact that India is growing well. So there are two parts to the India operation. One, of course, is the global hubs, which does a lot of our innovation work, our product and engineering work, also our support work. So there are a number of global support hubs out in India. And they have been growing very, very well. We were about 2,500 people then, we are about 13,000 now. So that's been a massive growth in 4 years' time. And on the other hand, my sales, which was earlier also about, we had only about 300 people, we have about 800 people today in our go-to-market, initiatives. There too, we have been doing very well. For the last 2 years, India has been the fastest growing country in the Salesforce domain. And I'm hoping that we'll be able to make it 3 years in a row. but that's to be seen because there's enormous competition amongst countries to ensure that we are getting the right things out. But I think with Agent Force, that we showcased in our Dreamforce today in the keynote, it's going to be a game changer, absolute game changer, and it's something which I believe will improve the level of services that we are able to provide to our nation, because our nation is a very populous nation, and it's very difficult to really cater to people's requirements because of the sheer size of the population. Now, we always knew that technology was required to solve this, and now we have that technology. So I think, I am actually quite happy about the change that I made. When I did make the change, there were a lot of naysayers. I personally was, not at all sure I was doing the right thing. But now I think, I did absolutely the right thing.
You made the right decision at the right time, and it's worked out well for you. There's a lot that you packed in there, Ms. Bhattacharya, so let me pick up on each one of those. And let's start with the big announcement that's come in from Mark Benioff here at Dreamforce, which is to talk about Agent Force in collaboration with NVIDIA. You said you believe that this is going to be a game changer. Why do you say that? Why do you think that this is going to reimagine sales tech as we know it?
So, the thing about Agent Force is that it can be autonomous. So you don't really need, to have a human in the chain all the time. It will be capable of really and truly answering questions that you are putting to it on its own. And what that would do, it would allow the humans to basically do jobs that need human interaction. There are a lot of jobs that actually need human interaction. It cannot be done only by machines. But there are a lot of, lower level grunt jobs, so to speak, where the maximum amount of people's time go. That can all be saved. And it's not only that, today the entire concept of Agent Force is this is something that you can go to market with very, very quickly. Okay. So it's not going to take ages and ages in order to build these, to deploy them. It's something that can be done very fast if you're already on the Salesforce platform, or even if you're not, with the right kind of foundations. And the foundation always has to be data and our ability to integrate that data. If you get those foundations right, the rest of it is very simple to do.
There was a provocative statement that Mark made saying that, this is way beyond any co-pilot, and that is why he believes that he's betting the entire company behind Agent Force. Now, the response by Microsoft, etc., is that, look, in terms of adoption, in terms of being able to scale it up and so on and so forth, there's refinement happening on the co-pilot end. But you said that this is going to be able to take off very quickly. Explain to us why you feel so confident about that.
I just saw it today. I saw the whole thing being built in front of me for a client for whom we had very little data. Okay, but it got built right in front just by taking information from the client's webpage. And it's really and truly, I think it's really, truly path-breaking. What has been shown and what can be done is absolutely path-breaking.
Okay, let's talk about India. You said you're hoping that in year 3 as well, it will continue to be the fastest growing market for Salesforce globally. In terms of revenue, what is the expectation? You're almost at 6,000 crores
so
currently.
That is the revenue for the Indian entity, but I cannot break it up separately, region-wise, and we'll see what the numbers show, because the annual results in any case will have to be declared sometime soon, or at least with the registrar of companies it goes. It doesn't exactly reflect that number to our sales numbers, but even otherwise I would say that we are growing very rapidly, mainly because while there is a lot of digital skill available at the individual level in India, industry in general is still, I think, lagging behind.
Okay.
But the advantage of Indian industry now is it can leapfrog. It can easily leapfrog into what we have right now. And that, I think, is an opportunity that Indian industry will not let go of. Okay. So I'm actually very enthused about the fact that there is so much more awareness in Indian industry about how quickly they need to bridge the gap of where they are and where they need to be. And which is why I feel that there's a lot of white space in India. There's a lot of work we can do. And, my whole attention now is to try and find how best to get to my clients as quickly as possible. Do I have the people? Do I have the bandwidth? How do I get to them? How do I showcase what we have? So that's what we are already planning.
So in terms of people, are you going to be hiring more? You already told us how much the organization has grown, about 13,000 people currently. Are you going to be hiring more?
So we will continue to hire in India. We never stopped hiring in India in the last 4 years, and we will continue to hire. But how many is very difficult to predict. It all depends upon, how the demand pans out. So having said that, India remains a growth center. There's a large amount of investment that Salesforce has made in India. So we will continue to do that.
Yeah. Are you hearing different stories from your peers who are looking at other regions and other markets at this point in time? Because you talked about growth in India, but the concern and the worry globally is that there is a pause as far as tech spending is concerned, discretionary spending specifically. What are you hearing from your peers?
So one of the things, of course, has been that, the developments are coming at such a fast pace that there is some amount of hesitation on the part of customers as to whether they should go for this or they should wait further. But you really can't catch a falling dagger. You have to take the jump at some point of time or the other. I think the kind of offering that we have brought with Agentforce is very compelling, is really compelling. And therefore, I think, this is something that people will go for. We also try to make sure that if we are doing any further advances on these, it will not negate the kind of spends that you have done earlier, that it will build on it.
Right.
It will not require you to sort of throw it away and build all over again.
talked about how India is also bolstering Salesforce's global efforts with what is happening in the centers of excellence and so on and so forth. Take me through the kind of innovation that's happening in India for Salesforce globally, develop in India for the world.
Yeah, so basically it's not that we have one solution that's developed entirely in India. So today, you know, there are many global leaders that sit in India with teams in the US or other places. There are many teams in the in India that have leaders sitting in other places. And there is collaboration amongst all of these teams. But all the solutions that you are seeing over here, the industry solutions that we have put out, the auto solution, the auto cloud, for instance, the health and life sciences cloud. Now, Indian teams have had large components of that coming out of their, efforts. But what happens is, we work collaboratively. So somebody may write the code, somebody else may do the debugging, somebody else will do the testing, somebody else will do the UAT, somebody else does the beta version. So it's a collaborative effort. So I cannot say that India gave this solution. It's something that is given collaboratively from across the teams in the world. So we have teams in India, we have teams in the US, we have teams in Israel, we have some teams in Dublin. So we have teams in various places. Now we are having teams in Mexico as well. So we have teams in various places. They collaborate in order to come up with the solutions.
Let me ask you a broader question as far as the global economy is concerned. We've just seen the Fed announce a 50 basis point rate cut, kickstarting.
Which was what the market was betting on.
The market was hoping for, and it's on the aggressive side. Do you believe that this is going to make a material difference now as far as the complexion of the global economy is concerned?
I definitely think so. The Fed and what it says and what it does still has an inordinately large impact on economies of other countries. Okay, I don't know what the Nifty is doing today. I haven't checked it out, but I'm sure it's going to go up. Okay, so
well, Wall Street has already given it a thumbs up. So,
so Wall Street will give it a thumbs up. The general, in fact, yesterday I was with a few people, and I was saying that 50 basis points is what's going to come. And they were saying the market wants 1. I said, come on, I said, you have to be reasonable. You can't keep going up.
Expectations.
Yeah, you temper your expectations. You can't do that. But I think a 50 basis points is, I think, reasonable, given everything else, given the fact that it has been kept high for a very long time, given the data print that has come recently. And definitely it's going to have a very good impact on the rest of the world economy.
Well, let's talk about India. I mean, given the fact that the Fed has moved with a 50 basis point cut, what's the expectation now? What do you believe the RBI is likely to do?
So
how will this weigh on the RBI?
This is something that I will not comment on because I'm out of the,
You're out of the rate cycle.
Yes. I do not follow it so well. So what I say may not be actually correct. I follow the IT cycles very well these days, but not so much the rate cycle. But I do know that it has an impact on the stock market, and it has a salutary impact, I would say.
Well, speaking of cycles, and I'll ask you this in the context of the many cycles that you've seen in the banking sector. This chase for deposits and the big concern that's been put on the table as far as banks go. How do you look at this? Do you believe that there is a structural change now, given the fact that we are seeing this diversification, this financialization as far as savings are concerned?
So I think, this is following what I would say the natural course of things. Every developed economy has gone from being a deposit-led economy to an economy where deposits and debts from the market are more or less balanced. It has to be balanced. It shouldn't be one very much more than the other, then you are looking at trouble. But to be deposit-led banking system like we were, I don't think that's ever going to come back. And to say that you've got to get it done. You think that era is over? Yes, I do think the era is over. And there are two reasons for that. One, of course, is the fact that today we have a younger population with a far bigger risk appetite. Because their earlier generation are still working, they don't depend on the younger generation. If you look at my generation, and mine, not yours, mind you, my generation, we were supporting an older generation and a younger generation. Today's younger generation is not supporting the older generation and still doesn't have a younger generation to support. Okay? Given that, their risk appetites are far more. The markets are far better managed and controlled. So given both of these two things, I think, the shift towards investing in the market is here to stay. It's not going to get reversed. Unless there is something, of humongous nature that happens.
Yeah.
The third thing I think which has really resulted in this is the innovation of SIPs. The SIP is something which has enabled people to invest in very small sums.
Yeah.
And that again, if you look at India and the amount of disposable income that we have, it was impossible to buy even one Reliance share, in an earlier stage because of the sheer size of it. Okay. Today, because you can put 2,000 rupees at a time into the market, you can buy into the mutual funds, and the mutual funds in turn are able to give you that market access. So I think, this is something that is here to stay. This is the new reality.
So what is the challenge then for banks? I mean, moving from, as you said, a deposit led growth mindset to now having to accept this new reality.
So our treasuries will have to tone up. Okay? At one point of time, everybody used to blame us for lazy banking in the treasuries. I agree it was lazy banking. So our treasuries really need to tone up to understand how they should balance assets and liabilities. Whether the giving of those loans makes sense. Whether the price at which they are going to get the liabilities justify the margins that are required in order to give those loans. So the treasuries as such will become far more central to our operations than they have ever been.
Well, back to what's happening at Salesforce, there is clear enthusiasm, as I pointed out, with what has been delivered here in terms of agent force. But there's also a feeling in general. I mean, you drive down the valley to the city, and all you see on either sides of the highway are billboards screaming AI and screaming what AI can do for you. So it's a very competitive landscape. But do you also feel that we're perhaps at this point in time at the peak of the expectation cycle?
I don't think so. I think there will be more to come. What shape it will take is very difficult to predict. But I think what has come now is sufficiently mature for businesses to invest in. It's sufficiently mature. It gives a high rate of accuracy. In fact, Mark said that we are willing to have a bake-off. So, we are actually willing to take on the challenge and showcase that what we have is actually giving you results that are meaningful and that will make your business much better. So, if you are trying to call somebody and you are sort of, on the speed dial or whatever it is, and you're being asked to hold on and on and on and on, all those days will be gone. It'll be in the past. There will be agents that will be able to take your queries and run you through the whole process without missing a beat and do it well.
Well, what are you most excited about? As you said, you no longer feel unsuitable to be a part of a tech company because, we're moving into an era of generative AI where everyone's now questioning what the role of coders is going to be. So how comfortable do you now feel?
So, the coders will still be required in companies like ours. We will do the heavy lifting. For our customers at large, if they know English, that's more than enough. So which is why I was telling you, I was the true visionary. 50 years back, I majored in English, and that's all I need right now in order to create the agents. Okay, so yes, the coders will still be needed for the heavy lifting, but it will be like Mark showed the iceberg, it will be below the surface. You won't need them above the surface.
So from chairwoman, or at actually you were what? You were chairman at SBI, and you even tried very hard to get them to change it to chairperson, but they said the statute didn't allow that. And now to chairperson at Salesforce. It's been a big shift and a big change. But again, that mindset that we were talking about, do you believe that we're now somewhere closer to breaking some of those boundaries, back home?
Yeah, I think so. I think people are beginning to realize that, the world is moving at a very, very fast pace. All cycles have become shorter, and you have noticed that. Look at the economic cycles, look at the market cycles, look at tech evolution. All cycles are becoming shorter, and human life is becoming longer. So to that extent, yeah, I think, we are very close on the verge of, of seeing a very new world. A new world where I believe, we'll have more equality of opportunities because we'll be able to provide it to everybody. A world where, probably, you will not be able to or not have to see the kind of distinction that we see today, that a person who has money gets very good treatment and a person who does not get that sort of treatment. A person who is able to afford a very good school gets a hugely superior education, and a person who can't doesn't get it. AI, I think, is something that will be a great leveler for all of these areas.
You said you've gotten used to the idea of working with people who are several generations younger than you. What's been the big learning from that?
Well, the one thing that I love is their energy. And the second thing I love is their awareness. We were never so aware either about our own health or about the environment. Today's youth are so aware about these things, and they know how to channelize their energies into making these things better. I really and truly love that about them.
Arundhati Bhattacharya, it's always a pleasure. Thank you so much for joining us here at Dreamforce in San Francisco. We wish you and Salesforce the very best of luck and appreciate your time here on CNBC TV18.
Thank you, and thank you for coming in and attending Dreamforce.
No, my pleasure,
Thank you.
absolutely. With that, it is time for us to wrap up this CNBC TV18 special from all of us here on the team. For now, goodbye and many thanks for watching.
and welcome to Startup Street. I'm Ritu Singh. With me are Shruti Mishra and Arundhati Ramanan. Here are the key headlines from the startup space. Hundreds queue up outside Apple stores in Mumbai and Delhi as iPhone 16 goes on sale. Lines are blurring between quick commerce and e-commerce as Blinkit, Big Basket and Zepto deliver the new iPhones within minutes.
Delhi police arrest Ashneer Grover's brother-in-law Deepak Gupta, who was the former head of procurement at the parent company of Bharat Pay, in connection with an alleged misappropriation of funds. Further probe against Ashneer Grover and others continue.
EdTech company PhysicsWallah is valued at nearly $3 billion after raising $210 million. This is the largest fundraise in the Indian EdTech sector in over 2 years since a Byju's fiasco cast a cloud on the sector.
MSME lending platform iFinance closes Series G round with 250 crore rupees fund infusion led by Temasek-backed ABC Impact. The fresh fundraise comes within 8 months of the lender closing its Series F round of 310 crore rupees.
Early stage venture capital fund Capital A announces the launch of its second fund with a target corpus of 400 crore rupees. Plans to invest 70 to 20 startups operating in high potential sectors like manufacturing, deep tech, climate and fintech.
Those were the headlines that we're tracking for you this evening. But our top story today, while hundreds chose to queue up outside Apple stores in Mumbai and Delhi hours earlier for their iPhone 16, an iPhone was just a click away for many who got it delivered home within minutes. Quick commerce companies like Blinkit, Big Basket and others cashed in on the iPhone mania, promising to home deliver the phone in minutes. Has the consumer willingly blurred the distinction between e-commerce and quick commerce? Shilpa Rani-Peter joins us now with more. Shilpa?
Well, you know, a Big Basket consumer today, right, ordered an iPhone 16 at 8 a.m. on Big Basket and it got delivered by 8:07. This same consumer last year would have had to wait a day if she had ordered it on Amazon or Flipkart. And this, you know, is the perfect example of how lines are blurring between e-commerce and quick commerce. Now, let's see how each of them stacks up. Now, the biggest advantage that quick commerce obviously has is how quick it is. And that's consumer behavior is changing and the consumer now wants everything in 10 minutes. But e-commerce players currently only offer same-day delivery and that also in just select cities. But it's their presence that is unmatched. Currently, they service nearly 100% of India's PIN codes, while quick commerce has now only just started, sort of expanding into Tier 2 and Tier 3 markets. And Zepto, Blinkit and the likes have been expanding their product range into appliances, into toys, into cosmetics and more. But e-commerce players have a much wider product assortment and they offer much higher discounts and they're also much better equipped to deliver big goods like a TV or a refrigerator to you. But the way quick commerce apps have been ramping up is definitely giving jitters to e-commerce players. Now see, Flipkart for instance, right? It is already testing the model with minutes and it's also ramping up its fulfillment centers. Myntra on the other hand is already testing 4-hour deliveries. Amazon is also looking at a foray and at the same time is also ramping up its storage capacity for faster deliveries. Nykaa for instance is also making its faster deliveries, which is same day and next day deliveries available in 110 cities. And now experts say that, you know, down the line, it's not like one will eat the other up. Both will coexist, where impulse buying will go to quick commerce and planned purchases will continue to stay on e-commerce platforms. But yes, e-commerce players are likely to work on reducing their delivery times to as fast as 30 to 45 minutes. And this festive season, we're likely to see this battle playing out.
Thank you, Shilpa, for those details. Appreciate you joining us today. Moving on, B2B e-commerce platform Moglix has invested $50 million in its supply chain finance platform Credlix. Now, the fresh funds will help Credlix expand into the US and Mexico markets, empowering manufacturing and infrastructure businesses to transform their supply chains from procurement to distribution. Moglix currently supports over 1,000 large manufacturers and 3,000 plus factories with a valuation of $2.6 billion. And to elaborate more on Moglix's future roadmap, joining me now is its founder and CEO Rahul Garg. Garg. Also with me, my colleague Arundhati. Rahul, welcome to Startup Street. Like I mentioned, the fresh funds raised will be used to expand Credlix's presence in the US and the Mexico. Credlix provides fast collateral-free financing solutions to foster business growth. Tell us, how does this expansion align with Credlix's broader vision, which is basically, how does this expansion help you kind of impact to make in these markets? What is the current footprint in these markets and the kind of impact you hope to make in the future?
So fantastic. Thanks for having us. And I think a very interesting start to the news bite today on quick commerce. So,
yes.
So obviously the commerce world is continuing to move with the customer convenience at the forefront of how they are thinking about delivery and how they are thinking about convenience. So Credlix started with a simple mission that we want to enable global trade finance to become seamless, to provide MSMEs in India and across the world access to financing when they need it for working capital, both in country and cross-border. Over the last 3 years, Credlix has already been financing from India the trade supply chains to more than 50 countries. Now, we realize as part of that learning that many of our customers, which might be present in US, Europe, many of the developed markets, they also have supply chains running parallelly from some of the other emerging economies. Mexico became one of the prominent ones because if you look at it, last year, Mexico became the largest supply chain partner to US ahead of China. And with the entire theme that is running today on finding alternate supply chain sources to China, we found India and Mexico as very sweet emerging economies, which play both to nearshore and India shoring
Absolutely.
from the supply chain perspective.
Absolutely, Rahul. Arundhati just quickly jumping in at this point, but if you could sort of, take us through your offerings, how do you plan to provide businesses in both US and Mexico, a stable supply chain and diversified sourcing options, as well as quicker access to quality goods, right? So what kind of challenges are they currently facing?
So the interesting thing is we already have those customers running from our India to US supply chain. And those customers are already sourcing from Mexico, and they want those Mexico suppliers to continue to multiply the supply to those countries in a faster manner without having a restriction of supply chain financing. And that's what Credlix is exactly filling in as a gap for Mexico suppliers who are supplying to US, our own customers of Credlix from India to US, access to this financing at a faster pace. And I think this is a start of something which can become much, much larger than we would envision.
All right. Rahul, you've also addressed a very critical pain point in the B2B business. In August this year, you brought quick commerce to B2B by launching next day delivery service. I believe it's live in 12 major cities, and you're now looking at 40 cities by next year. So tell us, what is the kind of demand you've seen so far? How has it changed your revenues, and are you on track?
So I think it is very interesting because B2B has been like 7 to 8 years behind the B2C commerce in general. But we have always taken a lead and front loading. I think this experiment is going very successfully. We are present across 40 cities already. So our ability to launch is not constrained by our footprint in those cities. We could launch 40 cities in 1 month if we want to. But I think we wanted to experiment very interesting thing. You spoke about what is the assortment mix, what is the delivery time, and then what is the impact of the cost of those faster deliveries. So I think the key thing to understand is B2B customers are far more sensitive to the pricing than a B2C customer who might be willing to pay for the impulse buying. And that's, I think, what we are experimenting in terms of, does the faster delivery and the additional cost that it may entail, are the B2B buyers willing to pay for it? And I think only next few months of experiment will tell us, are the customers ready to jump on the complete quick commerce bandwagon in the B2B as well?
Absolutely. So it's going to take a little bit to figure out that part of the business. But, if you could quickly give us a sense of your current business growth numbers, what's your top line looking like? And what do you anticipate the revenue mix to be going forward? And, how far is profitability?
So I think we continue to grow healthy as a company. I think last year, it was an interesting year for all startups and ecosystem because there is a healthy balance of growth and profitability. We are well on our trajectory. I think in the next 6 to 9 months, we should cross the break-even point. So anytime in the start of the next fiscal year will be break-even positive. And in terms of growth, we continue to grow. We are also investing in a lot of capabilities as an organization, whether it is in terms of the distribution strength, logistics strength, or manufacturing.
To go one final question, picking up from what you just said, I believe you also have plans to go deep into manufacturing now. Elaborate on these plans. What are you looking at manufacturing, and what will be the rollout timeline, and what will be the tech edge for the products that you're now looking to manufacture?
So I think we have realized that we do 150 categories of products. We almost do million SKUs. Now we have realized that many of the categories, many of the products, there is no reliable supply that exists. And that is where we are trying to go from unorganized manufacturing base to an organized manufacturing base, wherever that manufacturing base is missing. There are categories that we are clearly exploring and building on. I think in the next few months, you'll hear more about the categories we have entered manufacturing. But there are at least 5 categories we are looking at actively in terms of expanding our manufacturing base.
So 5 new categories that you're looking at for expanding your manufacturing capabilities. But Rahul, thank you so much for joining us on the show today, and we wish you all the best on this journey going forward.
Yeah, thanks a lot for having us.
Well, we'll stay with the supply chain space, where supply chain fintech startup WeFin has acquired end-to-end digital lending platform Epic Indify in a cash and equity swap deal, which was valued at around 125 crore rupees, marking its 3rd acquisition in the last 3 months. Now, Epic Indify's acquisition, this marks WeFin's 3rd acquisition to date, and WeFin estimates to grow its clientele from 55 to 500 plus by the end of this financial year and add new revenue streams thanks to this acquisition. For more on this, joining me now is Raja Devnath, the chairman and co-founder of WeFin Group of Companies, and also with me is my colleague Shruti. Raja, thank you very much for joining us here on CNBC TV18. To begin with, if you could walk us through the strategic rationale behind this acquisition, what the financial contours were, for Epic Indify, and how much stake will you be acquiring and pouring in capital thereafter?
Thank you. Thanks for having us on the show. And I think it's good we are continuing with supply chain financing. So I just heard Credlix before me. So Epic Indify, the rationale is that this is the team or the 3 co-founders of Epic Indify. Between them, they were running 2,500 people at Infosys. And this is a very, very experienced team. So one of the first reasons why we acquired Epic Indify is for the quality of co-founders that we are getting on. The second thing is that if our module on the lending side, the LOS journey, is a 9 out of 10, Epic Indify is a 9.8 out of 10. So we thought that their product module was better than our product. So over a period of time, we are going to be phasing out our module, and we are going to be exclusively using Epic Indify's product across all our products. And the third main reason is that they have around 35 clients active right now as we speak. So those are new clients who we are able to onboard and then cross-sell the WeFin supply chain finance solutions to them. So This is the third acquisition that we have done, all in line with being in the working capital financing space.
All right. Thank you for breaking it down for us. Raja, this is Shruti quickly stepping in. Tell us, with Epic Indify, you plan to expand your clientele from 55 to over 500 by the end of this financial year. What key factors will drive this aggressive growth, and what makes you so bullish?
So it's not just with Epic, it is with the first 2 acquisitions. So our first acquisition that we did was Tax Genie. Now, Tax Genie is an account receivable and account payable automation company. A very similar structured deal that we did with them. They come in with 300 corporate clients right now. So we have 300 corporate clients, large names in India, a lot of players in the auto space, who now we get access to their invoice data and their PO data, so that we are then able to take those suppliers, those dealers to the banks. That's the way we are increasing the number of clients. So 300 corporate clients come in, who we are then able to sell WeFin to, and take that same thing across to what we have. We have one more product, which is the PSB Exchange. So PSB Exchange is the public sector bank alliance, put together all the 12 banks. They make one single connection to a platform, which is the WeFin platform. And the WeFin platform makes connections to multiple fintechs, B2B marketplaces, accounting service providers in the market. So that is how we are building out the network and the supply chain finance ecosystem in the country.
All right. Raja, this Epic Indify is your 3rd acquisition in the last 3 months. That's pretty aggressive as well. Tell us about, what's behind this kind of an inorganic strategy and how it ties in with your larger goals of being this complete working capital finance platform?
The challenge in India right now is that only 10% of what should be financed, supply chain financing, is being financed. And when we look at the reasons for it, it is because the data is broken. So when I say data is broken, it means that the purchase orders, the invoices are in one silo, the underwriting is happening in some other silo, banks don't have access to the data. So that's where we came in. So we said the first acquisition, Tax Genie, I just explained, gives us access to last year, 67,000 crore worth of invoices went through the platform. Every day, the platform does 20,000 invoices processing. But that's one acquisition which we did. The second acquisition that we did was Nityo. Now, Nityo is a very interesting acquisition because it's a large privately held group, 44 companies across the world, 3 billion top line, and 3,000 employees. So we acquired the India arm of Nityo. So the India arm has 375 people. So 375 people we acquired.
Okay.
What that gives us is the ability of providing access to our supply chain finance solutions to all these 44 different countries.
Sure.
And whenever we require or whenever our clients require support in terms of additional manpower, in terms of L1 support, L2 support, customization, we can provide that.
All right. Raja, the acquisitions will add new revenue streams through digital retail lending across personal loans, green loans, PNPL schemes, credit cards, mortgage loans and SME loans. Many of these segments have been red flagged by the regulator and various banks are showing signs of stress. So will you initially go slow in growing these? And how much additional revenue do you expect them to add over a period of time?
So we as a tech company, so we are different from fintech. We are a tech company. So we never do any underwriting ourselves. So our solutions are white labeled and presented to corporates and to banks. They are the ones who take a decision. So whether they should do BNPL or personal loan, the system is still the same. They can use it. But predominantly, most of our customers are using our solutions for more SME banking and more on the supply chain financing side. So we are safe there.
All right, Raja, we're going to have to leave it at that. Thanks very much for joining us and for your time here on CNBC TV18. We're going to have to take a short break on that note, but stay with us. Up next, IISc incubated space startup Spacefields successfully conducted a hot fire test of India's very first Aerospike engine. We'll put their CEO on the hot seat to find out more.
Barely a few months ago, this spot was bustling with shoppers and your shopping experience was incomplete without being shoved, jostled around or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for Phase 2 of the Chennai Metro Rail began earlier this year.
It's the smaller retailers who have taken the bigger hit. In nearby Badaparani, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
மெட்ரோ வந்ததுலேருந்து ஃபுல்லாக அடி இது மேலே இல்லை எப்படின்னா குறைஞ்சது ஒரு 3-4 லட்ச ரூபாய்.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
கடன் தான் ஏறி.
High street stores have also taken a hit. Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence...
Welcome back. You're still with us on Startup Street. IISc incubated space startup Spacefields has successfully conducted a hot fire test of the country's first aerospike engine. The static test campaign for the 168mm rocket motor took place at the firm's propulsion facility. Founded in 2021, Spacefields custom designs and manufactures turnkey solid rocket propulsion. Joining me now to discuss this further is Apurva Masood, the CEO of Spacefields, and also with me, my colleague Ritu. Apurva, thank you so much for joining us on the show today, to sort of discuss this. So, as I said, the IISc incubated startup Spacefields has successfully conducted the hot fire test of the country's first aerospace rocket engine, right? If you could just, talk to us about what this engine is and what does it do?
Sure. Thank you so much, Ritu and Arundhati, for having us here. If you would be familiar with most of our launch vehicles that put satellites in orbit, they are multi-staged, right? So they are 4-stage or 5-stage, and they use typical bell nozzle engines. These bell nozzle engines are inefficient, and they are, attuned to a certain pressure regime. As the rocket climbs altitude, the stage has to drop, and the next bigger engine of the next stage has to take up. So while the aerospike engine itself is an altitude compensating engine, so it can self-adjust and improve its performance across a range of pressure regimes. So it can perform excellently well across altitudes. That makes a single stage to orbit or a 2-stage to orbit, possible. And what that means is you can deliver much more payload and much more satellite for the same rocket, or you could reduce the stages of manufacturing of the rocket.
Well, hi, this is Ritu stepping in. For those of us who are not very familiar with how all of this works, if you could tell our viewers, what does this test process involve? Walk us through what exactly happened on the day. Spacefields is a solid propulsion focused company, and we are incubated at IICICI Bangalore. So we have co-set up a propulsion testing facility at IIC's Challakere campus. And we have been working on this for almost 3 to 4 quarters now. Cold flow tested the rocket engine before that within IIC's propulsion facility. Had to custom develop the test beds first for the rocket motor to be fired. And then, we traveled from Bangalore 220 kilometers to Chitradurga, where we conduct this test campaign early morning. A lot goes into this test campaign, in terms of performance as well as safety, as well as data acquisition. After giving the command, it was, of course, there was some initial instabilities, but then the engine performed nominally. It was the first ground testing of India's first aerospike engine. And hopefully we will continue to do some more tests and move onwards for a flight test soon.
Right. So from what I can understand, there's quite a bit of tests that need to go into this as well. But one of the things that I understood from what you said is that these aerospike engines are essentially more efficient than traditional rocket engines, right? So if you could give us some kind of use cases, what will it help in? And what's the eventual go-to-market strategy?
Sure. So the aerospike engine is a space-specific offering. So it's a space orbital engine, basically. So it can put satellites into orbit and replace typical Bell engines. For us, the go-to-market strategy is pretty horizontal in the sense we are a propulsion company, but dual use, so focused on both military and civilian applications. We have already standing orders in terms of pyrotechnics, gas generators, igniters, anything to do with solid propellant systems. While space is, of course, the final frontier that keeps us excited.
Okay, let's talk about Spacefields. Then you custom design and manufacture turnkey solid rocket propulsion. You said, you work horizontally across civil and military clients. What kind of demand pipeline do you have?
Currently, we have ongoing paid engagements and development contracts with defense PSUs, the services, as well as a couple of other military drone companies. So we custom develop a lot of these solutions for them, depending on which platform we are going on to. the platform could be a UAV, it could be a gas turbine engine, or it could be a missile itself. Apart from that, we have a very active pipeline of refurbishment, of rocket propellants, because India is the world's largest arms importer, and we, at Spacefields hope to overturn this trend in the next coming years.
All right. So, speaking about that, can you elaborate on where exactly your revenues are at right now, and what are the targets for this year? How much do you want to grow by?
We are growing healthily. We have a multi-crore order book. Revenues have started coming in. Of course, these are milestone-linked payments, as per deliverables and milestones that are co-frozen with the users. Next year we are also planning to realize at least 5 to 6 crores in top line, and parallelly we are expanding ourselves as well, setting up a manufacturing in Uttar Pradesh. So yeah.
All right. Just a final question. Earlier this year, you had raised about 6.5 crores. Take us through how you deployed that fund, and how much of a runway do you have before you look at your next fundraise?
All right. So yeah, we raised 6.5 crores. We also raised a smaller strategic investment last month. It's not yet announced publicly, but it was led by defense-focused funds, Jamwant Ventures and Samarthya Investment. We have enough runway for almost 2.5 years. So the runway is not a constraint, concern, because we have parallel accruals from our customer engagements. Ritu and Arundhati, we are more like motivated by the BrahMos missile. We can cruise long range, but we like to fly under the radar, focus more on heads down execution, and we believe we have the resembling ability to deliver a precise and killer impact. So yeah.
All right, Apurva, thank you so much for taking time out and being here with us on Startup Street today.
Thank you so much for having us here.
And with that, it's almost the weekend. Shruti, you have all of the deal action for us right now. So take us through that.
Absolutely, Arundhati. The weekend is almost here, and it's time to take a look at the funding picture in this startup space. According to Venture Intelligence, Indian startups saw a total of 18 deals valued at $436 million. Some notable ones included Tech Physicswala that raised $210 million in a Series B round led by Lightspeed Venture Partners and others. SaaS startup Whatfix bagged a whopping $100 million from SoftBank and Warburg Pincus at a valuation of $830 million, while InsurTech company Onsurity secured $45 million, led by Creaegis, IFC, Nexus Venture Partners and Kuona Capital. That's not all. Hyperlocal news platform Way2 News attracted $14 million from Westbridge and others. Last but not the least, fintech company Kaleidofin bagged $13.8 million from Flourish Ventures, Michael and Susan Dell Foundation, Okayo Credit and Omidyar Network. And in 2024 so far, startups saw 588 deals worth over $7.4 billion.
So lots of action there, Shruti, from the startup space this week in terms of deals. But with that, it is a wrap on this edition of Startup Street. From Shruti, me and Ritu, goodbye and many thanks for watching.
Infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars, or come in and access the stores.
Hello and welcome to this special program. I'm sitting down with someone who is was regarded as one of the world's foremost equity strategists. I'm sitting down with Christopher Wood at Jefferies, and what a day to sit down with him from the sidelines of the Jefferies Investor Conference here in Gurgaon. Chris, great to have you with us here. Thank you very much for your time. I said what a day to sit down with you because we're sort of coming out of this 50 basis point rate cut from last night. What do you make of it? I know you were expecting 25, but here we've got 50.
No, I'm genuinely surprised by the size of the rate cut because it's contrary to the messaging of the Fed going into the meeting, which is that the economy is okay and the employment market is weakening, but only gradually. So, yeah, if you talked to me yesterday, I would have said 25 basis points. I think there was an article in the Wall Street Journal suggesting it might be 50 at the weekend. So that was probably the clue that they were going to go bigger. But bottom line is contrary to the messaging going in. But the key point here is what the Federal Reserve believes is the neutral rate. So my guess that is probably in the 3 to 3.5% range. So even if the US achieves the soft landing, so to speak, we're probably going to be at between 3.5 by the middle of next year. But in terms of the short term, I'm surprised I'm surprised it's 50 basis points.
Do you think it's got a political angle to it as well, with elections in November?
My guess, given the fact that whatever they might argue today is quite, anybody who can read and listen is contrary to the messaging going into the meeting. So my guess at the margin is political, because it's pretty clear that probably the vast majority of members of the Fed would prefer Donald Trump not being elected.
I see. And
I'm sure the Republican candidate will view it as political.
But does it help at the margin?
Maybe. I'm not sure it does help. Maybe at the margin.
Okay. I want to come back to the US political sort of elections season in just a bit, but we don't see 50 basis point cuts without a crisis. Either very apparent or, I mean, something which they're worried about. But
there could be conspiracy theories that they know something and the economy is much weaker than which is a risk of them cutting 50 basis points yesterday, actually. But my guess is they actually genuinely believe the economy is okay. So that's why I think the motivating factor is political. And there clearly are some members of the Fed who are very political. Their former New York chairman, Bill Dudley, has been calling aggressively for a 50 basis point rate cut. If I remember correctly, he was the guy who once wrote an article calling on the Fed to manage monetary policy in a way that could stop President Trump being re-elected in the previous election. So I think there have been quite a lot of people calling aggressively for rate cuts, saying the Fed's behind the curve. But that's not the message transmitted by the Fed chairman, Mr. Powell.
Do you believe the economy is solid?
I believe the economy is obviously the economy is okay right now, but I still believe there is a risk of a US downturn because of the big lags in monetary tightening in this cycle. So if you look at a chart in my presentation I gave this week, there's a chart of M2 nominal GDP growth, which had a huge explosion back in 2020 when they printed all that money in the pandemic. And actually, while the M2 growth has slowed sharply in the intervening period, while the Fed has been tightening, if you draw a trend line from 1997, the M2 to nominal GDP ratio has only just gone below the trend line, which is a long-winded way of saying that in liquidity terms, the monetary tightening is only just beginning to bite. And you know, the labour market is weakening. All we need for the Fed to be cutting 50 basis points every meeting is one unambiguously bad labour market
data.
Yeah.
And you get another 50.
Yeah, but then the market will be discounting 50 basis points every meeting.
Okay. The Fed themselves in the dot plot is saying that there'll be two more 25 right, this year in 2024. At this point, that seems likely. I think it'll be more than that.
Yeah, but I don't really pay any attention to the dot plots. What's important is the data.
Okay.
I mean, the dot plots are important in the sense of what the Fed think, but I wouldn't invest any money on the dot plots.
Okay. So let's assume that it's a normal kind of an economy, maybe a little slowing at the margin, but no crisis, nothing panicky. And you have these rate cuts which have started. Let's just assume it's 50 now and then maybe another 50 through the end of the year. What does it mean for asset classes like equities?
Well, it's good news it should be good news for emerging market equities, because in most emerging markets, particularly here in Asia, central banks all year could have cut rates for their own domestic reasons based on the level of real rates and inflation. But in the vast majority of the cases, they chose not to cut rates because they were worried that they might undermine their own currencies. And in the specific case of Indonesia, which has the central bank has a currency stability mandate, they actually raise rates despite very high real rates. So basically, all these central banks will now have room to cut rates, and hopefully their currencies don't get hit. So far, basically, the dollar has been in an increasingly clear weakening trend. So that's basically good news for emerging markets.
So EMs more than US?
In my view,
in an easing cycle?
Yeah, in my view, yes. Because in the specific case of the US, the interesting point is how resilient the US listed companies have been to the Fed tightening cycle. And that is explained by this extraordinary statistic that the net interest payments of the US non-financial corporate sector have declined sharply in this Fed tightening cycle, which is counterintuitive, but it's the reality. And that's because the big tech companies have been earning 5.5% on their cash, where they used to earn 0. And it's because the investment-grade corporate sector in America did a very good job locking in bond yields when they were low, refinancing their debt. So if the higher rates actually were positive for them on the out, it's not, where the lower rates will help is the SMEs, because they don't issue bonds. And that's the big surprise. SMEs in America have been paying between 9 and 10% to borrow money for the last year. And that's why I'm genuinely surprised how resilient the labor market has been. Yeah, because they employ most Americans.
What about India, Chris? I mean,
well, in the case of India, the RBI can cut rates like
later this year.
Well, I mean, all Asian central banks can cut rates today, including the RBI. But my colleagues here, we believe the RBI is not, not going to be aggressively cutting, counter-cyclical, because they've been doing these preemptive regulatory measures as regards the banking system. And so I would assume the RBI will cut rates once before the end of the year, but I could be wrong.
Okay.
And they can cut rates because...
That's the consensus. First cut by December of this year. I
think the RBI would be coming under criticism if they haven't cut rates by the end of the year, because if you look at the level of inflation, particularly core inflation, is below the level of rates. So you have positive real rates. But obviously with the stock market at all-time highs, huge domestic flows going to the stock market, the RBI doesn't feel under massive pressure to cut rates today.
Yeah, absolutely. Chris, what about flows into India? Because the market here has been marching to the sort of drumbeat of local investors putting in money, and that number has sharply increased. It's about $4 billion regularly a month coming into mutual funds. It was about $2 billion a month before elections. So actually post-elections, the number has gone from $2 to $4 billion a month. I remember you were surprised when the market here, barely shrugged in response to the election.
That was a big surprise. That was a big surprise to me.
And of course, after the capital gains.
Well, that's actually the biggest surprise to me was the second.
Yeah.
So after the election, clearly it was only one-day sell-off. But then I think the market's reaction was explained by the fact when I came to Delhi shortly, it was clear that everybody believed this government could last 5 years with the two minority parties. So that became more explicable to me. But I have to say, I'm genuinely astonished by the resilience to the capital gains increase, which is quite material, most particularly as a week before I met many domestic institutional investors, and they were not expecting the capital rate gains tax increase. So I find that...
and many of them were very vocal that markets will be hurt.
Yes, I would have been too. So we've all been completely wrong. So the only explanation is that the domestic households who are investing through these monthly installment plans have become convinced, in my view correctly, that India is a good long-term equity story and don't want to be scared out of the market. That's the only... And the big story of India this year is these domestic flows.
Yeah. But what about foreign flows? You said that easing cycle is great for EMs. India is an emerging market. Foreigners have stayed away. I mean,
but on a relative basis, if you're investing, if you're an EM fund manager, after this 50 basis point rate cut yesterday, the markets you're going to want to add positions to are places like Brazil, which have 11% nominal rates, 5-6% real rates, so huge potential to cut rates. Markets in Southeast Asia, like Indonesia, Philippines, which are traditionally very sensitive to lower US rates, weaker US dollar. So India is not the obvious place to put your money in today because, one, it's expensive, and two, the RBI is in no hurry to slash rates.
Well, Chris, stay with us. We'll take a quick break here. Stay with us because we got a lot more ground to cover with Chris Wood of Jefferies on the other side. You've been at the conference, you've been speaking with a lot of foreign investors who are here. What's the sense you get about India? Yeah, it's expensive, but it's been expensive. You could have made the same argument 3 months, 6 months, a year ago.
The people who are, obviously the people here are already invested.
Right.
And so their issue, they're not too hung up on the valuation. I mean, they're all concerned about the valuation.
No, we're talking about incremental flows into the Indian market. I mean, what's the sense you get on that? I mean,
well, my sense is yes. The problem for the foreign fund managers as a whole is that they are underweight. Based on our latest data, based on the top 30 global emerging market equity funds, they're now marginally underweight, which is not where they want to be, because most of them would agree with me that this is the best long-term story. But they're underweight. They've become underweight from a de facto standpoint. One, because they've been reluctant to pour money in because of the high valuations. Two, because this is a very important point, the neutral benchmark weighting of India has just gone up a lot, which has made them become underweight by market performance. But there's an additional issue. There are two sectors where foreigners have traditionally most invested in India have ironically been underperforming, i.e. IT services and banks. So in the last year, many foreign investors, particularly value-orientated investors, would have gone into the banks for the first time because they came within their valuation range. But they're not the hot areas of the market. The hot areas of the market in India have been areas like industrials, infrastructure, real estate, energy, defense. These are the areas which have been driving the market. That's not the area traditional emerging market investors have been investing in.
So you don't think that foreign investors are going to come back to India in a big way?
Not in the immediate term, but the good news about this is the really positive point to take away is any major correction in India, like say 10%, in my view, will be viewed by foreigners as the opportunity they've been waiting for to add.
Are you still expecting a 10% correction?
No, I'm not. I'm just saying that's...
someone said 5 is the new 10 and maybe 2 is the new 5.
No, in my view, I've got a greed and fair long in the India portfolio. I'm not going that defensive in it.
Okay.
So, because the point is I can afford a correction. I've got very good performance. But my portfolio is heavily in energy, real estate, capex plays, but I have got the bank, so that's, I suppose, the conservative part of my portfolio.
Okay.
But the real issue for foreigners, I think the more foreigners know about India, the more specialized they are in the market, the more relaxed they are on the valuations. It's just the generalists are the more concerned. And global investors, as opposed to global emerging market investors, barely own Indian equities at all. So I'm talking about global funds.
Right. Not EM funds, but global funds.
They barely own India at all.
At all?
Yeah, literally. They don't own India.
So it's a strange kind of a position, right? I mean, because you're saying is the best long-term story.
So many global investors will agree that India is now the best story, but there's a practical issue that if you only invest in India via ADRs, you have extremely limited choices. Because of the lack of ADRs quoted offshore. Unlike in China, there are many ADRs. And the second practical issue is you want to invest in India in a sort of more real manner, you have to get FII approval. And that is a regulatory obstacle, right? That requires a real commitment. So most global funds have not got FII status.
Is that such a big issue? I mean,
yes, that's an issue. Don't underestimate that.
Yeah.
So a big fund management company could have their global emerging market fund with FII status, but their global fund may not have it. And then this capex increase, or capital gains tax, will now become another. Will now put them off.
You know, in your note, I think the last but one note, you did mention that you put in that capital gains, and you said, well, that worries you.
Now, that personally, I don't believe in capital gains taxes on equities because people have already earned the money and they're risking. They should be encouraged to invest in equities. Now, obviously, you can deduct the money you lose, but that's just a philosophical point. So, obviously, the government's raising.
No, but did you mean that in the context of where India is in terms of the political?
Well, no, that is an issue because in most Asian markets, you do not pay capital gains tax. But be you domestic or foreigners. But there's another technical issue where if you're running a dedicated Indian fund, or you have to make a provision for that capital gains tax, apparently, even if you haven't sold the stock. You see what I mean? So if you're a fund manager, you're kind of starting behind the benchmark.
Because of this?
Yes.
Okay.
So that is actually a negative, yeah. That's a negative for people trying to do dedicated Indian funds offshore.
So do you think this, I mean, India's weight has gone up, right, in the benchmarks, but do you think foreign funds will stay underweight for some time? I mean, that underweight position can actually even widen if local investors continue to put in money and the market continues to do well.
The direction of travel is foreign ownership is declining relative to domestic ownership. Fundamentally, this domestic flows are just extremely positive. And we estimate Indian households have 6% of their assets in equities. Though none of us are expecting the recent pace of flows to, by every law of logic, they should slow down. As you say, it's remarkable they've picked up since the election.
I mean, it's $4 billion a month now on a regular basis.
But from a macro standpoint, at this conference last year, we were arguing that we were in the early days of a capex cycle, but you couldn't really show data comprehensively proving that. Actually, the best evidence we were in the early days of a capex cycle a year ago, 15 months ago, was that capex stocks were rallying.
Sure.
But there wasn't the actual data. But now there's real data highlighting that the capex, private sector capex cycle's underway.
But do you think, in a lot of ways, across sectors, I mean, stocks are already pricing a lot of this in India? I mean, capex stocks, for example.
So tactically, you would be a bit more cautious.
You would be.
Yeah. But I'm not. I've got these long-only portfolios, and I believe this. See, the last time India had a capex cycle, which I would say was like from 2002 to 2009, India massively outperformed the rest of Asia in that period. I remember it clearly. So, if this capex cycle is happening structurally, I want to remain invested in the stories,
even if they go through periods of underperformance, but eventually it'll. I mean, it's a great story.
Plus, we have the residential property story, which
you've been very bullish on.
Yeah, and we don't think there's
You did highlight that last quarter there was a bit of a slowdown, but
but that I would view all that as a pause to refresh.
Okay.
So we've got good news of if there's a weakness to the residential property story, which has been dramatic here, right? And if there's a weakness, is very much focused on what they call the high end. Which I suppose in the US, well, it depends what city you're in.
The premium end has done very well.
Yeah.
You're saying that perhaps sees some...
Well, what I'm saying, if you're going to criticize it, you will say it's very vulnerable because it's just the high end going up.
Okay.
But I would say, in response, well, I would have to admit that's true. I would say that's normally how property cycles work. They start with the high end and they gradually trickle down. And in that sense, rate cuts would help because if you go under 200 to use dollars, if you go under $2,000 for a unit, you're probably going to get to levels of more rate-sensitive buyers. And so if rates go down 200 basis points here or 150 basis points, that's going to increase the number of people who can afford it.
Right. So for
I've heard that I think I heard this week that inventory in the top 7 cities is at a 14-year low.
Yeah.
So if that's true, we can definitely keep going for another 4 years.
In terms of the cycle, in terms of real estate build-up?
Yes, because we've just entered our 4th year of an upturn.
Okay. So you're saying another 4 years?
Obviously, we take it a year as it comes, but given the fact that we had a 7-year downturn, given this multi-year inventory low, given the fact that India builds far fewer residential units today than even China, given its current problems builds, there's no reason to think why this suddenly blows up.
So, tell us the sectors or places that you're most bullish on now, Chris. If somebody is trying to put fresh money to work here, what would you?
Put it in today. So I'm not taking out. I've got 19% in real estate stocks in my India portfolio.
Okay.
Now,
what else have you?
If I was starting the portfolio today, I might be a bit nervous putting 19%. But given the fact I have 19% that done well already, I'm not going to actually reduce them.
Okay.
But if I want to have a more cash, let's say I can't own cash, but I want it to be more tactically cautious. Because I've got more short-term tactical considerations, and you want to own the stocks which are more neo-cash proxies, which I would say are like the banks or the consumer staples.
So, I mean, there perhaps there's a little bit of underperformance. I'm not sure. Banks have valuation comfort. Consumer staples maybe not so much.
No,
so,
no, but there's still, because we've got. I think we have evidence now that the rural economy is finally picking up, right? So I can see a case for adding to those tactically.
But if you were looking at slightly beyond the very near term?
Looking beyond the near term, I'm sticking with my current portfolio.
Okay.
So the issue...
So which is 19% real estate, what else?
No, it's big in capex plays and energy.
Okay.
And if any real correction in those areas, I'd be looking to add.
Okay.
Because I'm quite heavy in the banks, but we are the whole infrastructure story here in India, the energy story, these seem to be at the center of the action, at the center of the capex cycle.
Sure.
It's just very positive for an economy if you have both a residential property upturn and a private sector capex cycle going on. So the way I look at it conceptually is that the government in the last 10 years has spent a huge amount at the central government level building capex, which has been the big driver of the fiscal deficit as opposed to transfer payments.
Sure.
So that has that's been the enabling factor for the economy, which should give the private sector confidence to invest. And we are now, in the last year, seeing that actually happening.
Absolutely.
Yes. So whereas a year ago, talking to people in the government, they were saying why isn't the private sector investing? So I was saying, don't worry, the private sector capex stocks are going up.
Yeah.
But obviously, if you're a government official, the stocks going up is not. You don't trust the evidence.
Absolutely. Chris, just one last point. You were cautious, right? You're telling me you're a bit cautious. We've got another round of elections, state elections coming up. Are they going to be important? Have you heard that as feedback from investors? They're watching it closely.
On the big stage. Obviously, we're seeing handouts, right?
Right. Across states, I mean.
Yes. So that's obviously. I mean, that's another reason to maybe add to consumer staples. Tactically, long term, that's not so great, but that just means maybe the incumbent has a chance of winning where everybody thought they were going to lose.
But would it make a difference? I mean, even if the ruling party were not
so
much...
that would create some negative noise.
Because, I mean, some argue that the general elections barely caused a bump, so why should this matter?
Well, I kind of agree with that.
You do?
My message, what I picked up talking to government-related people this week is rather than passing lots of laws, the bigger focus seems to be on doing away with a lot of these regulations, which are a legacy of the what they call the license Raj. I think there's clearly a case for a bonfire of regulations to promote business.
That sounds like Elon Musk in America.
Yes.
Who wants to do the same?
Yeah, that's exactly right.
Absolutely. Chris, it's wonderful to speak with you. Thank you for sitting down with us. Appreciate your time here on CNBC TV18. It's a pleasure.
Thank you.
Thank you. Hello and welcome to this special program. I'm sitting down with someone who is was regarded as one of the world's foremost equity strategists. I'm sitting down with Christopher Wood at Jefferies, and what a day to sit down with him from the sidelines of the Jefferies Investor Conference here in Gurgaon. Chris, great to have you with us here. Thank you very much for your time. I said what a day to sit down with you because we're sort of coming out of this 50 basis point rate cut from last night. What do you make of it? I know you were expecting 25, but here we've got 50.
No, I'm genuinely surprised by the size of the rate cut because it's contrary to the messaging of the Fed going into the meeting, which is that the economy is okay and the employment market is weakening, but only gradually. So, yeah, if you'd talked to me yesterday, I would have said 25 basis points. I think there was an article in the Wall Street Journal suggesting it might be 50 at the weekend. So that was probably the clue that they were going to go bigger. But bottom line is contrary to the messaging going in. But the key point here is what the Federal Reserve believes is the neutral rate. So my guess that is probably in the 3 to 3.5% range. So even if the US achieves the soft landing, so to speak, we're probably going to be at between 3 and 3.5 by the middle of next year. But in terms of the short term, I'm surprised yeah, I'm surprised it's 50 basis points.
Do you think it's got a political angle to it as well, with elections in November?
My guess, given the fact that whatever they might argue today is quite, anybody who can read and listen, is contrary to the messaging going into the meeting. So my guess at the margin is political, because it's pretty clear that probably the vast majority of members of the Fed would prefer Donald Trump not being elected.
I see. And
I'm sure the Republican candidate will view it as political.
But does it help at the margin?
Maybe. I'm not sure it does help. Maybe at the margin.
Okay. I want to come back to the US political sort of elections season in just a bit, but we don't see 50 basis point cuts without a crisis. Either very apparent or, I mean, something which they're worried about. But
there could be